Particular up by 0.4%. We've got a lot of set-piece events coming through this week. We've got the NVIDIA earnings story. That comes tomorrow, doesn't it, Tom? That's going to be an area of focus for us, all building up towards Kevin Walsh later on in the week.
On some individual names, and thinking of Germany as well, given the futures call on the DAX, we are focused on VW. It's a big week there for leaders of that auto company as they try to impress upon the labour unions, in particular, the need for restructuring. Labour workers telling some of their employees they could be facing up to 140,000 job losses. So VW is in focus. The CEO will be speaking to members of that company and staff as well later today. Siemens Energy in focus, apparently working with Goldman Sachs on potentially looking to sell a majority stake in its steam turbine business. So we're watching Siemens Energy. And Airbus on reports out of Spain that Spanish employees are set to start an indefinite strike. So Airbus also in focus, Anna.
Yeah, Volkswagen, Siemens Energy, Airbus all in focus, adding in Gerresheimer, Prysmian, some of the other companies that maybe have been getting a little bit of the news flow ahead of the market open this morning. So where will the market open take us? We are expecting to be a little bit more positive then this morning. How long that lasts, we'll wait and see. Will today be a day of waiting for the next big catalyst? And maybe that comes in the shape of the technology earnings coming from NVIDIA. That's due tomorrow, of course, those NVIDIA earnings. So maybe a little early for that. But we've worked our way through what Scott Besson had to say around Iran. That hasn't left too much drama in the markets, at least, even if it makes life much more difficult for many in Iran. But we will see where that one goes. To what extent is China caught up in that? That would add to the scale of the market response and the market's appreciation of that narrative and that story, perhaps. But for the moment, things have been quite quiet on that front. We're working towards those NVIDIA numbers, working towards Kevin Walsh at the end of the week, Tom. And so with all of that in mind, a lot to wait for. We see a little bit of upside on these European markets, up by 0.2% on the FTSE 100 this morning. For example, Tom, what do you see in the sectors?
Yeah, the CAC current is having a strong session in the first few seconds, up 0.6%. Across your sectors, travel and leisure led the gains yesterday on an otherwise flat session. And a similar picture is evolving in terms of travel and leisure being the top performing sector, at least for now, with gains of 0.8%. Tech is also performing well, having been one of the laggards across your sectors yesterday. So tech is up 0.6%. We're seeing Nasdaq futures firmly in positive territory after a run of selling around the semi space through the last few days. That sentiment seems to have changed. Maybe some pre-positioning around NVIDIA with the earnings out tomorrow, of course. Food and beverage amongst the biggest losers right now. 4 sectors in negative territory. Food and beverage down 0.5%. On some of the individual names, as we look at what's happening in tech, but also the miners with some softer commodity prices in the session today, you're seeing some losses coming through for the likes of the tobacco names. Interestingly, ITV is also down 1.5%. No big standouts in terms of significant individual moves right now. There's a little bit of upside coming through from Abivax, of course, in the healthcare space, up 3.4%. Swatek, in terms of the software and IT space, is up 2%. So a couple of individual names there. But across your sectors, it's industrials gaining 0.8, travel and leisure up 0.8%. But it's food and beverage with the biggest losses across your sectors right now, Anna.
Yeah, and industrial goods and services, the best performing sector, as you mentioned, and Prysmian is the best performer there, up by just over 3%. So perhaps there's something in it that if US-China tensions weigh on your competition, that perhaps that makes things easier, at least at the margin, for some European businesses. But we'll watch that as a narrative, albeit a short-term one. Let us talk to Shanti Kellerman, Co-Chief Investments Officer over at 7IM, with us on set this morning to take stock of where we are on global equities and much beyond. Shanti, really nice to see you this morning. So you have a small overweight, I think, in US stocks, European stocks, Japanese stocks. We're sort of in low volume markets right now. Stocks not doing too badly, but in low volume markets, watching the bond market developments very carefully. So what's the overall picture of resilience that you're investing into at this point?
Yeah, so I think the economic outlook still looks solid, if not amazing. A lot of the capital investment we're seeing businesses do, that's clearly feeding into global trade and investment there. And consumer spending is still holding up fairly well. It was a bit lower in July for the US, but in the UK it's been pretty strong, and also UK economic growth. So I think a lot of those signs are good. On the bond market, obviously having a bit of a wobble there, but I think it also, on the other hand, makes it much easier to manage those lower risk portfolios. Yields are at a very high starting level, so even if you have a little bit of a capital loss, the yield cushions a lot of that. So we're not worried about a kind of 2022 style losses in bonds. And I think those issues have been there for a long time. It's nothing really new. Right. We had a focus on this week, but none of the policy we've had this week or the announcements really changes anything.
Okay, so yes, I mean, it just seemed like the US Treasury became more worried about something that has been gradually building over a period of time, the fiscal deficit, perhaps. Shanti, on the bond story. Are you worried about what bonds do to stocks, though? Because we haven't necessarily seen that dynamic play out much, and I wonder whether it should.
Maybe. I think, obviously it depends a bit on if it's, the more longer duration stocks, the shorter term ones. I think stocks can perform well in kind of moderate inflation and moderate yield environments, and because companies have the ability to raise prices as we've seen them adapt. Only where I get worried if we're more at kind of like 6-7%, because that's where it really does start to hurt company margins, and also the trade-offs with the returns. But I think now we're in an okay place.
So stocks could perform 5% on the 10-year. Stocks could weather that level of yield?
I think so.
Yeah? Okay. Where are you finding safety in this environment? What role does Europe play? How are you thinking about hedging some of that cautious, constructive optimism that you have?
Yeah, well, we probably have a bit more in UK and Europe equities than some of our peers. We have a little bit less than market weight for the US. I think Europe earnings have actually been kind of quietly quite good, even though we haven't had as much focus on them. And if you look at returns this year, like Europe, the US, the UK, they're actually fairly similar, no huge winners and losers. So I think that's part of it. Diversification. And then also we do a lot in alternative strategies. Some of those have been really strong this year, like equity factor, long shorts, some of the FX value strategies. Those are always good to have as insurance, that things that kind of can perform in different conditions.
But you have a level of confidence that the earnings strength for Europe can continue in the quarters ahead?
I think it can. You're seeing, I think rates are at a healthier level in Europe. Consumer spending is still strong. We do have issues like the France deficit, which arguably is maybe even harder to solve than the issues in the US. But I think Europe is in an okay place.
So Europe's in an okay place. And you mentioned some of the other strategies, for example, factor investing. Interesting what happened to momentum then, because momentum was such a driving force earlier on this year and then really collapsed. Is that to overstate it in early summer? Where do we stand on that sort of momentum trade? Or is there a different momentum trade now to watch?
Yeah. So I think a lot of what's mattered in how you do momentum trading is what are the rules that are attached? What periods are you following? What we found was that some of the, the really sharp moves, obviously those hurt momentum strategies, but some of our strategies that worked across multiple asset classes did a lot better than simply focusing on just equity momentum, because you had more sustained periods of momentum in some of those other areas like commodities or foreign exchange. So I think with all these strategies, it's the actual rules and kind of the detail under it that really determines if they work or not.
I mean, does it tell us anything useful about tech and where the benefits, where the gains in tech, or where the benefits will accumulate within the tech landscape? Do you think the fact that we saw that momentum collapse in the early summer?
I think we've probably reached peak earnings growth and peak margin growth. And I think that is something that will be a little bit challenging for equity markets going ahead, because just the rate of change we've had is really high. But on the other hand, people have been complaining so long about how it's not a broad market and there's not a lot of breadth. And kind of by definition, if we start having more breadth and we bring in growth in things like consumer staples, you're going to get a bit lower earnings growth rates because those are areas just can't grow as high.
If we're past peak earnings growth in the United States, then does that just feel like a negative, a headwind for stocks, or can the breadth compensate?
I think the breadth can compensate because there is a lot of breadth to go after.
Yeah.
You know, it was a really narrow market. And I think it does make it a bit more challenging to have the same rate of growth in H2 as we had in H1. But I think there's a lot of positives the market will look at, and there's a lot of areas where valuations aren't that challenging.
As you talk about margins, I'm thinking about Nvidia and that 75% margin and whether they can preserve that with the earnings tomorrow. How do you position around an Nvidia second quarter earnings story?
Yeah, well, we don't do single stock positions, no. so I can't comment on that directly. I think
as a macro event.
Yeah, I think part of the thing is the expectations around some of these companies have gotten so elevated. A lot of what we saw in Q2 was companies would, even slightly beat expectations and people would sell the stock. And I think we've gotten to the point where there was so much optimism, it was almost impossible to win. So I think Nvidia still has very strong products in the market, still has a great ecosystem around it. I think it's still in a very strong place in terms of competition, but we'll see what the numbers is, and the reaction may be different from the numbers.
You don't seem that positive on the tech space broadly, Shanti. I mean, you're overweight, I think, energy and financials, which sounds as if you're leaning very much into that broadening and indeed to other geopolitical themes rather than the tech narrative.
Yeah, we have about a usual weight in tech. It's not underweighted. And I'd say even stuff like the financials is actually a bit connected to tech because all of the IPO money and a lot of the trading that's come through that. Energy is something that's had really strong momentum and strong earnings, and we also see it as something where you've had like all the AI demand is kind of creating more demand for that energy. So we're no way negative on tech, but I think everyone has a lot of tech, so you need to look to other places for outperformance.
What's looking undervalued to you right now? Yeah. On a sector basis or regional basis?
So we still think the UK is undervalued. I think it's better. The UK is better managed than people perceive it to be. And you look at stuff like,
is this FTSE 100, FTSE 250, or is it fixed income?
I think the fixed income picture is better than people realize because you look at places like France or the US, and there's almost no effort to deal with some of those deficits. In the UK, at least, it's recognized as an issue and that there are constraints that need to be, we don't always stick to them.
We've recognized that we have a problem.
We've just recognized we have a problem.
Which is the first step.
And then I think if you look at some of those big UK, if we look at like FTSE 100, a lot of those are quite global companies delivering good earnings. The financial sector has been really strong there. But the easiest way to start an argument with anyone is say the UK is doing well. So
it's quite triggering, it seems, although we're quite good at therapy then, if we understand the problem. Let me ask you about China, and, well, actually, it's more about what we've heard from the United States over the past 24 hours with regards to Iran, which takes us to China, because we've got the foreign ministry briefing taking place right now. China saying it opposes unilateral sanctions, warns they worsen conflicts, says the priority is to de-escalate tensions and return to talks, which I think is interesting, because if the US has been trying to bring China into this, it sounds as if they are not looking to escalate from those words. I mean, does that give risk assets some comfort?
I don't think the U.S. has the backbone to really escalate things with China. All the actions they've taken have been moving away from that, and things like critical metals, rare earths, I think that's shown they just don't have the tolerance to go there, which is a good thing for the world. We don't want that or need that. So I would hope that's more a threat than something that actually comes through. I think the sanctions on Iran, sanctions lose their effectiveness over time, and if you actually thought they were effective, why wouldn't you have done that first rather than invading? So I think that's a bit of a non-event to me.
Okay. A bit of a non-event. Shanti, thank you very much indeed. The US does not have the backbone when it comes to targeting China over Iran, and the UK is looking good. Shanti Kellerman, 71M Co-Chief Investment Officer. Thank you for your insights this Tuesday morning. Let's check in on the Core 6 right now to see how they are reflecting across the equity story. You're seeing some decent gains for ASML in the tech space, and tech is a sector that's performing this morning, having been under a bit of pressure yesterday and, of course, overnight in the US. ASML is up 0.9% then. Schneider Electric also gaining 1%, adding close to 3 points. We're watching that stock for various reasons. Nestle is currently down by 0.4%, and a decent gain as well for Novo Nordisk, of course, in the pharma space, up 2.5%. Let's check in on some of the individual individual stocks, some other names that are on the move. Chloe Melly watching those. Chloe?
Good morning, Tom. We're seeing a decent move there for Siemens Energy after it was said to be working with Goldman Sachs on this sale of a majority stake in its steam turbine business, which is a unit that could be valued at more than 10 billion euros and could attract interest from a lot of those big private equity players like Bain, KKR, CVC, EQT, etc. And so it seems that the progress on this M&A process is driving that stock. We're up about 1.6%. Moving on, but staying within this sort of AI power equipment market, we've got the Italian cable company Prysmian up quite strongly this morning. We're up about 3% after UBS mentioned that the trade tensions between the US and Canada could actually be quite beneficial for the company. So that is driving that stock this morning. We are also in the green for the defense company here in the UK, Melrose. We're up at about 8%. This is a company that dealt with a storage tank incident back in May at a facility in California that has led it to pause its buyback. But then today, it said that it would actually resume the operations at the facility at the end of September. So it seems that this is kind of removing this overhang on that stock. It's kind of putting this behind it. And so that is driving those shares quite strongly this morning. We are also in the green for the house builder Vistry. Also here in the UK, we're up about 10% as the house builder is getting a funding award as part of this social and affordable homes program that was created by the new UK government. So that is going to be very beneficial for the company. And finally, let's end on a negative mover. We've got the packaging company Gerresheimer down quite strong. We're down about 6% after it said that its interim CEO would be stepping down. So this creates a bit of management uncertainty, and that is really weighing down the stock.
Chloe, thank you very much indeed on some of the stocks on the move this Tuesday. Chloe Melly with that take. Coming up, the US threat of an economic D-Day against Iran puts it on a collision course with China, potentially. We've had some Chinese reaction to what we've been hearing from Scott Bessent. We'll bring you more context and more details after the break. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Mumbai. This is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Chinese banks have often been talked about being targeted, but we don't see any of those institutions targeted here. Is that something that is coming in this campaign, or is the very delicate trade truce with China something that could prohibit you from going that far and taking that very big step?
We want to make clear here today that no one is above the reach of U.S. sanctions. That if they facilitate transactions and are part of the ecosystem that turns Iranian oil into money, into repression, they will be targeted. We find that the best way to engage with countries is through quiet diplomacy, and we are level setting with every country to tell them our expectations. We know who they are, they know who they are, so when the hammer of U.S. Treasury actions falls upon them, they will have no one to blame but themselves.
U.S. Treasury Secretary Scott Bessent speaking there, talking about the way that China gets brought into the latest sanctions around Iran. Bessent's threat to unleash a, quote, economic D-Day against Iran risks setting the U.S. on a collision course then with China, Tehran's biggest trading partner. China buys 90% of Iran's oil exports. The potential move comes just weeks ahead of a meeting between President Trump and Xi Jinping, who is set to travel to the United States. So where does that leave us? Let's bring in Brendan Murray, who leads Bloomberg's global trade coverage, and we can start by thinking about where this leads the US-China trade narrative. And we've had some pushback from China this morning, Brendan, saying that China says its cooperation with Iran shouldn't be undermined, but says that the priority is to de-escalate tensions, return to talks with Iran. It doesn't sound like China's looking for a fight. I mean, how did you interpret what we heard from Bessent yesterday, the extent to which he wants China to be included in this mission against Iran?
Yeah, exactly. So Secretary Bessent has really been the point person for the Trump administration on U.S.-China relations, and he was very careful yesterday not to name China to identify China by name. He said, we're going to do this quiet diplomacy strategy, but you don't have to read between the lines to see that this is really targeted at China, and we'll have to wait and see what Beijing's response is. But China will clearly not want to be punished for its trade relationships outside of the U.S. The summit between Xi and Trump takes place in less than a month. We now have a trade war going on with Canada, so the U.S. administration right now is scrambling, trying to untangle the geopolitical situations that they've got going on in Iran with the trade disruptions that they're causing with tariffs. And so it's a very complicated situation, but Secretary Bessent sounded pretty firm at his press conference yesterday that this was something that they were going to leave no country untouched by the reach of U.S. Treasury sanctions.
He didn't rule it out, did he? So if, and it remains a sizable if for the reasons you've outlined, if the U.S. was to implement measures targeting China's banks, China's state-run oil and energy companies, what would that look like? What would the implementation look like? What tools do they have in their kit if they were to go that far?
Yeah, I mean, look, China proved to the world last year, whether you were in Brussels or in Washington, that they have some levers that they can pull, the critical minerals, the rare earths situation. They can really bring some economic pain to bear. So we're heading into sort of uncharted waters with these secondary sanctions and the financial implications on the Chinese banking system that could come with it, but China has demonstrated, and Secretary Bessent would be the eyewitness to it all, that they can punch back as well.
The other big story in trade, of course, is between the US and Canada, and you mentioned that already, Brendan. That is an area of focus. Let's just listen to what we heard from Prime Minister Mark Carney yesterday. He was talking about one of the objections he has to the way that these negotiations have been conducted.
An attitude at the negotiation table that Canada is a subsidiary of the United States, that Canadian industry is going to be disadvantaged relative to American industry. That we're going to set up terms so that over time, Canadian industry is going to face constant headwinds. That's not something we're going to accept. And that's before you get to constraints on our ability to do what the rest of the world wants, which is to sign trade deals with Canada. And that's before the very fundamental issues on culture.
So many areas of disagreement there. The cultural reference there at the end to do with the use of French language, it seems, but the attitude behind the US administration is something Canada objects to. They didn't like the way that they thought the small print had changed what they'd agreed to earlier on in this process, and some of the language is really heated now. It doesn't sound as if this is going away, Brendan.
Yeah, this feels different than the other trade disputes that we've had over the past 18 months. Remember, the Trump administration has gone to Japan, to South Korea, to the European Union, to the UK, and said, congratulations, here's your new tariff. Canada has finally said, you know, we're not going to stand up to it, and there seems to be a real groundswell of Canadian patriotism, a sort of survival instinct that says, you know, we're going to hunker down here. There's going to be some government support programs announced in the coming days to help businesses that will be hurt by these tariffs. So the rhetoric is really heated at the moment. Ultimately, the U.S.-Canada trade relationship has to work out. The supply chains are too integrated. They will take too long to readjust them and to reshore them. And so eventually the lawyers are going to sit down and figure all this out. But at the moment, we have a real intense squabble on our hands where, you know, the name calling is going back and forth pretty quickly across the border.
Yeah, the bad blood is real, isn't it? The auto sector obviously firmly in focus as well when it comes to this trade dispute. Brendan Murray will stay on that topic. Brendan Murray, thank you very much indeed, our trade czar, with the details there, because Volkswagen as well, over in Germany, of course, Labour representatives there warning that the car maker's planned cuts could eventually affect as many as 140,000 jobs as management prepares to take its restructuring pitch to workers today. To discuss, we're joined now by Bloomberg Auto's reporter William Wilkes. William, what exactly then is the CEO, Oliver Bloom, trying to achieve with this restructuring of the business?
Well, he's trying to boost the margins at Volkswagen to 8 to 10%. And that's because Volkswagen is being squeezed from several directions. Costs in Germany are very high. Factories are underused. The group remains extremely complex, and competition from China is intensifying, just as Volkswagen has to spend a lot of money on electric cars and software. And also at the same time, the Porsche Piaff family, its controlling shareholder, is under pressure from weaker earnings and dividends and wants management to move faster. So Bloomer is now trying to accelerate a restructuring program that demands better returns, but it's clashing against unions who are really determined to protect jobs.
Yeah, and he needs to bring unions and the state, Lower Saxony, isn't it? He needs to bring them along with him, doesn't he?
Yes, and that's yes, Anna, and that's what makes this so difficult. Labour representatives hold half the seats on Volkswagen's supervisory board, which is the body that has to approve this package. And Lower Saxony, which is a German state that has a shareholding in Volkswagen, has then an effective veto power over job cuts, because if they vote with Labour, then you can't pass anything against them, against that blocking majority. So Bloomer can't simply, unlike many other CEOs, can't simply impose a restructuring package from the top. He needs to win over the unions and also Lower Saxony, or both, which means the final package could look very different from what's being proposed today.
Okay, lots still to come on this then, William. Thank you very much. There's William Wilkes setting us up for what is an important day for VW, and in a wider context, a really important day for the auto sector in Germany. How will VW make the sums add up? Coming up on the programme, one of Scott Bessent's early mentors comes out swinging against his bond buying plan. We will discuss this more with David Rees, who joins us from Schroders. We'll talk about the US economy and the bond markets a little further. This is Bloomberg.
my old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
This is the opening trade. It is Tuesday. It's a Tuesday towards the end of August, though. Are we dealing with some fairly light volumes in the markets? Tom has the answer to that in a moment. Certainly that was part of the narrative yesterday. We do have a lot of news flow, macro news flow at least, themes to deal with, and earnings news coming tomorrow in the shape of the Nvidia story. For the moment, then, that leaves the markets moving a little bit higher this morning, up by 0.3%. Sentiment towards tech through the Asia session has improved just a little bit, and that's left the way clear for a little bit of movement higher. The oil price is a little weaker. That means some of the airlines can go a little bit higher. We have some weakness in the auto sector, but all in all, making modest gains on a fairly quiet Tuesday. Tom, what do you see?
Yeah, volumes are a bit lighter, Anna, given where we are, of course, in the summer, down around 30% versus that 20-day average. In terms of individual names, you are getting the majority in positive territory, despite those lowest volumes, up about 390 stocks gaining so far. On the downside, about 189 with losses. Let's paint the picture and point out some of the individual names. On the leaders' side, we've been talking about this cable maker then gaining close to 3%, listed over in Italy, seen as benefiting potentially, in fact, from the trade spat between Canada and the US. So maybe some further demand there for that company into the US market. Swatek, that ties into the tech story that Anna was highlighting for us. The chip story has turned around. You're seeing the NASDAQ, currently NASDAQ 100 futures pointing higher. Swatek is gaining 3.2%. You've seen ASML in positive territory as well. So the changing sentiment after a number of days of losses within the chip space, it has adjusted, and Swatek is benefiting from that. Novo Nordisk, this is an upgrade from JP Morgan around its price target for Novo. It sees an upgraded view in terms of the sales outlook, so it's raised its price target, JP Morgan, for Novo, and Novo is benefiting on that, up currently 2%. Let's flip the board, and Anna was touching on the pressure that's coming through for the auto sector. It's modest, but VW is there. We know that executives are going to be talking to Labour, unions as well, about the restructuring plans. That's happening today. VW is currently down 0.3%. Renault over in France is off by 1%, and Kering in the luxury space, the consumer space, feeling a little bit of a squeeze in the session as well. Kering is currently down 2.5 points, down 1% so far. Anna.
Let's get an update then, Tom, on some of the other news flow we're covering this morning. Bitcoin has climbed above $80,000 for the first time since the middle of May. It comes as optimism returns to the crypto market amid a mix of bullish signals that force the liquidation of billions in leveraged bets. Bitcoin has rallied 23% in the 7 days to Sunday, the biggest weekly jump in about 3 years. Still, the token remains well below its peak of $126,000. That was reached in October. Canada is set to unveil its response to US tariffs later today. According to a government statement, ministers will hold a joint press conference to announce new measures to protect and support Canadian workers and businesses. It comes after President Trump threatened to double levies on Canadian autos to 50%. And Treasury Secretary Scott Bessent has threatened economic punishment against any country doing business with Iran as part of what he called an economic D-Day campaign to isolate Iran. The move marks the latest US bid to force capitulation from Tehran, which has refused to bow to US demands despite months of US bombing that began in late February. Tom.
Meanwhile, Scott Bessent's early career mentor, Stanley Druckenmiller, has suggested his former pupil is making a mistake by wading into the bond market. The billionaire investor said, quote, governments defending prices against fundamentals always lose. The only variable is how much they spend before conceding. That in an op-ed for the Wall Street Journal. Let's bring in at this point David Rees, head of global economics at Schroders. David, good morning.
Morning.
Is this a Treasury Secretary and a US Treasury that is losing credibility?
Oh, well, I wouldn't go so far as that just yet, but clearly intervening in the market to try and keep yields down. We know that generally intervention in any kind of market against strong fundamentals doesn't last very long, and you can end up spending a lot of money trying to do it in the process. So are we losing credibility? Not yet, but, you know, we're kind of inching towards more extreme policies like yield curve control.
And the biases for yields higher from here, do you think, given those fundamentals?
I think so. Look, you get wiggles in the bond market, clearly, but if you look at the fundamentals, you've got extremely loose fiscal policy in the US, you've got a bit of concern about inflation and the Fed's reaction function, and you've got a lot of demand for capital in the credit space as well. You put that confluence of factors together, it all points to higher yields over time.
It was interesting. Stan Druckenmiller's pushback points to another reason for those higher yields. He says they're kind of justified by growth. They're justified by the growth story in the US. Is that the case, David, or is it more about those negatives?
So I think so, but the growth story is a function of the fact that policy is very loose, and that's created inflation pressures, and you've got high nominal growth. So it's all part of the same equation. Growth is strong, and in that environment, you would expect interest rates to be relatively high.
And it's interesting that you put quite a lot of emphasis on inflation. We had one guest on yesterday who I think was steering us away from worrying too much about inflation, saying, look, actually some of the readings over the last couple of weeks have seen a bit of a disinflationary force. We've got PCE, I think, out of the States this week, haven't we, as well? We'll see if that continues. But you are more concerned about inflation. Why are you continuing? I mean, it's above target. Is that simply the reason?
You're above target. You've got a positive output gap, and you've got an economy that's absolutely booming in the US. So you will always get wiggles in the data, and you'll get some funny things going on. But ultimately, this is an environment that will generate inflation pressures over time. The place to be looking for that is things like core services. Core services still elevated. Most of the leading indicators say it will go higher. And so that is the kind of underlying inflation pressures building.
A lot of our guests are talking about wages, watching wages, and that wages have not appreciated to the point that it becomes a concern for entrenched inflation. What is your pushback? Do you have a pushback to that?
No,
is how much the wage dynamics? How central are they?
So I think that's promising in that you're not going to get those second-round effects immediately through wages re-accelerating.
But do you think they come?
But if you keep running an economy above potential, employment's quite high, jobless claims are low, and if you keep running the economy at this kind of rate of growth, then you are going to start to see some increase in employment in the future. You've already seen tentative signs of bottoming at a slight turn at weak levels, let's be clear. But if you run that on another year, then you could easily see the labour market starting to retighten and wage growth re-accelerating. So what we're saying is that at the moment you haven't got runaway inflation. It would be prudent to raise rates to get ahead of that and snuff out the risk of much higher inflation.
The Fed is behind the curve at this point?
I think so, yeah.
So do you think we get a rate hike in September, or do you just think they should?
I think they should have hiked in July.
Right.
So therefore I think they should hike in September. I suspect the softer data are going to give them cover to not raise rates. But clearly, the market is questioning the credibility of the Fed, and that's one of the reasons why you're seeing pressure on long-term yields.
As that inflation dynamic does soften, then why has the market become so? Why do you think they should focus more on inflation if that's what the data is showing us? That softening in inflation.
Because I do think that the growth story is still strong. The economy is still booming. Demand is strong. Services inflation, core PCE is up, 3.5%, and it's probably going to inch higher or certainly not come down significantly. So inflation is too high versus any measure of target.
What are your expectations around the inflation dynamics across the Eurozone? Is Europe better placed, or is it more vulnerable given the shocks coming through from Ukraine?
So it's a somewhat better place, but what we're seeing 3 waves of supply inflation ripping through the global economy. We're already seeing the energy wave of inflation, which will last at least until Q2 next year. Then we've got manufactured goods inflation. It looks like it's going to start coming through now-ish. Next year, it looks like a slam dunk that food inflation is going to be rising again. So you take those 3 waves of supply-side inflation that keep coming and rolling like that, and the more times you hit an economy with supply-side inflation, the greater risk that it sticks. Now, the biggest risk it sticks is in the US. The Eurozone somewhere in the middle. The one with the best chance of getting away with it and not raising rates is the UK and the Bank of England.
Okay, and the BOJ then, there's still expectation there that we get further hikes. Do they come with a more rapid cadence than we've seen in the past,
so
David, or no?
So that would be my assumption. I mean, Bank of Japan's on a different trajectory, right? It is reflating from decades of deflation. It's kind of understandably cautious about raising rates too quickly. You take that kind of behavioural bias of central bankers. They don't want to be the one to end the party. But growth's pretty good, inflation's pretty strong, and they should be raising rates faster than the market anticipates.
What gives the BOE cover to stay on hold at this point?
Well, the labour market's still quite loose, right? So there's some signs of stabilisation, but unemployment's still quite high. It might edge a bit higher. Wage growth is trending down. So the near term, that gives you some cover not to raise rates.
If they hold this year, do they raise next year?
Well, that's an open question. I think a lot of that depends on what happens with fiscal policy. So we're now really focusing on what's going to be trailed ahead of the budget. If we see more expansionary fiscal policy, that could rapidly tighten the labour market and get rate hikes next year. That's our forecast.
Okay, David, thank you very much. Thanks for joining us. David Rees, Head of Global Economics at Schroders. Interesting conversation there about where the US economy goes then. And let's pivot to what's going on in the Middle East. Now to the situation there where the closure of the Strait of Hormuz has exposed the risks of relying on one of the world's most important energy choke points. Despite disrupting roughly 20 million barrels of oil a day, the market has proved more resilient than many had expected. We've seen a special report from Bloomberg Intelligence that's been examining how the world has adapted and whether the crisis marks a turning point for global supply chains. So it's been no secret the world has relied hugely on that Strait of Hormuz to get oil. And have we maybe been more resilient in our ability to deal with the closure of the Strait of Hormuz, finding other workarounds, for example? Let's speak to Will Hares, Senior Energy Analyst over at Bloomberg Intelligence, who brings us the report now. Will, good to see you. So talk us through the current state of flows through the Strait of Hormuz, because I know there are workarounds, there are other ways of doing it. That's something we can talk about. But just in terms of how much is getting through the Strait, is it possible to say, with all these transponders off and blockade upon blockade?
Yeah, so the Strait of Hormuz is neither fully closed nor fully open at the moment. We have reports from U.S. government officials claiming that up to 10 million barrels a day is flowing through the strait. We view that with a healthy degree of skepticism. It's not supported by publicly available vessel tracking data. And as you mentioned, all of these trackers have been turned off. So what it does suggest, though, is that more oil is flowing through the strait than we were previously seeing in the last weeks. And there's some degree of success that the U.S. Navy, military support, and convoy escorts are having on easing some of this crunch.
Okay, how are the oil majors adjusting to the shock of Hormuz? And yes, there are flows, but significantly reduced is the takeaway. How are the oil majors adjusting to that as they try and ensure they have supply?
So the oil majors have responded very, very well. The European majors have significant operations within the Gulf, roughly about 10% of upstream and their gas operations. But the price impact, the extraordinary refining margins we're seeing, and the volatility which has been captured by their trading units has proved to far more than offset the operational impact that they saw in 2Q. So the energy crisis flowing from the Iran war has really showed the value of the integrated model for these very large companies. And so we think that they are very well placed to continue benefiting, although probably on an easing basis into 3Q.
Are we beyond peak disruption then, do we think? Because we've seen, Will, that these workarounds have involved a pipeline over to the other side of Saudi Arabia and boats picking up there in the Red Sea. We've also seen other workarounds that involve sending things through the UAE to Oman and ships not having to come through the Strait of Hormuz. So are we moving to a world now where the Strait of Hormuz is less essential?
So yes, but I would argue that peak disruption, no. You can see from Tehran's recent comments that they don't want a single barrel flowing through the strait. I would argue that peak dependence on Hormuz we have hit in 2026. As you mentioned, companies, countries, all the Gulf states are moving very rapidly to diversify, de-risk, and detach their reliance on Hormuz through pipeline expansions, increased storage, new ports on the Fujairah coast, as you mentioned, in the UAE. So we think that Iran's leverage is probably at its peak right now, and it's only going to deteriorate and decline as this goes on and more diversity occurs from these companies.
How does that all change geopolitics then of the region and of Iran's trading partners?
Well, so you mentioned the trading partners and Besant's threats to some secondary sanctions. We personally think that it's unlikely to be implemented. I think that this is a case where the behavioral outcome is induced just by the threat on China. So the geopolitical outcome,
You think China starts to reduce its purchases of Iranian oil on this, on the rhetorical threat?
So I think it could happen, yes. From the large Chinese state-owned companies, yes. Less so from the independent teapot refiners. More broadly, on the geopolitical outcome here is the state of the strait is anticipated to be intermittent. This is what most of the comments from the U.S. majors and European majors have said. This is what they expect moving forward. So that suggests that something like 5 to 10 million barrels a day may be going through the strait moving forward, but nowhere close to where we were before.
Okay, this is this changed new world that we now live in, and the details, the analysis, of course, being brought to us by Will Hares and the team. Will, thank you very much indeed. Really, really fascinating, leading our global energy coverage at Bloomberg Intelligence. Coming up, switching focus because London's luxury property market faces a growing threat from rising temperatures. More on that story next. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest. And this is Bloomberg.
Welcome back to the opening trade. We are 48 minutes into the Tuesday session, and you are modestly risk-on across European stocks, up 0.3%. US futures also in positive territory. Nasdaq 100 is up 0.5%. Anna.
So that's where we are on the markets. Let's step away from the equity market story to property. A property company owned by Britain's richest aristocrat is warning that rising temperatures and planning regulations are threatening the appeal of its properties in London's Mayfair and Belgravia. The Grosvenor Group wants the government to relax planning requirements to allow for basic cooling features. Let's get more details with our Bloomberg climate reporter, Olivia Rudgard, who's with us. And let's focus in on what's being argued here by Grosvenor Group. But this does translate to other properties as well, to some degree, doesn't it? So what's stopping these older properties then in the UK from installing cooling measures, whether that's shading or air conditioning? What's the hold-up?
So there could be many layers of bureaucracy. In Grosvenor's case, a lot of those buildings are listed, which means that there's a very high level of protection. Actually doing something without permission can be a criminal offence, so it's a really, really serious thing. But even for more ordinary buildings, a lot of which are in central London as well, you could be in a conservation area, and then there are sometimes some quite strict restrictions on what you can do to the facade, to the outside of your building, anything really that affects how it looks. So yes, shutter shading, etc., would come into that. And that means that in some of these central London areas where a lot of buildings are covered by those areas, you really have to ask permission to do anything, and that can take several weeks and cost quite a lot of money.
So the regulatory authorities, the local councils and others, they have to change, they have to adapt. Is that happening?
In some cases, yes. So actually, Kensington and Chelsea, they have been very clear about this, which is more than can be said for some other councils. So they have put out a document with some really nice examples of awnings and shutters and what they could look like. But they do still say that you need to ask permission in most cases. So, there is some movement there. With what's happening with Eaton Square, which is one of the areas owned by Grosvenor, is that they have agreed with Westminster Council to have a local listed building consent order, which basically means that one of those bureaucratic hurdles that you'd have to get over to be able to do this has been taken away. But what Grosvenor is saying that there are still too many things in the way for that area and for others as well.
Yeah, you've got a nice quote that illustrates just some of the bureaucracy that sort of confronts people even before they start. One of the people in your story is saying the idea of even starting a project, making an alteration to the external bit of the flat, would involve at least 3 different people who wouldn't respond to my emails, which just sort of illustrates the uphill struggle that it would appear to be from the outset. More broadly then, really hot weather over the summer in London and beyond. We talked about this in the whole European context, but how is this affecting London's property market, London's property values?
Yeah, so I think moving away from maybe overheating specifically, one of the ways in which you see it really affecting property is subsidence. So this is this phenomenon you get when you have buildings built on clay, and especially older buildings that don't have particularly deep foundations, and you get these really alarming cracks basically appearing in buildings, and that means sometimes a pretty hefty insurance claim, and it can really damage the value of a property, and we had a record quarter for those claims in the last quarter, so that's another aspect. You get that shrink, swell, drought and heat combined with periods of really heavy rainfall that can really affect property values as well.
Still waiting for the rain. Olivia, thank you very much. Bloomberg's Olivia Rudgard.
Okay, let's look ahead to what else we are watching throughout the day. Oman's foreign minister is expected to visit Tehran. We'll watch any lines there in terms of whether or not those two countries are getting closer to some kind of agreement around the Strait of Hormuz at 9 a.m. UK time. Coming up, of course, Germany's IFO Business Climate Survey at 1:30 p.m. UK time. On the central banking side, Hungary's central bank rate decision will cross at 4 p.m. UK time. Canada's government officials there set to hold a press conference to unveil a range of measures in response to Trump's tariffs. And continuing through the day, Volkswagen's CEO will be addressing staff on cost-cutting plans, expected to face some pushback from that significant restructuring that is planned for VW. Let's turn back to the markets now, though, with Adam Linton from our Markets Live team. Adam, it seems like sentiment around stocks has turned a little bit more positive after a pretty significant run of sell-off that we've seen around semis. Nvidia coming through with earnings tomorrow. How are you thinking about the Nvidia role in terms of how we should be thinking about stocks, given the typical performance post earnings is a sell-off for Nvidia? Maybe this week, maybe this time is different.
Yeah, I mean, I think you had Mark on your show earlier saying that the expectations for Nvidia this time around actually seem relatively low relative to historical norms. So I think potentially less pressure, we could actually see a bit more reprieve for Nvidia after. But obviously, there's a lot of moving parts. The earnings will be scanned particularly thoroughly for what it means across the AI stack and how that demand holds up. We saw in the most recent earnings season, it was relatively robust. Let's see how that plays out. I think for stocks more broadly, I do think that we are in a bit of a holding pattern. If you look at markets like Europe, yes, we're a little bit higher today, and yes, we had that multi-session sell-off, but the size and scope of it was minuscule. I mean, we're down about 1% from all-time highs. I don't think anyone's really panicking. We've kind of got through this Q2 earnings season now, and in terms of short-term catalysts, as you said, Nvidia, that could be a differentiator, particularly for Europe. It has more of like a pro-cyclical value tilt. Then going forward, it does feel like there's a little bit of a holding pattern now for earnings. In Europe, we had Q2 hold up well. It's now about delivering on Q3 and Q4.
And what's driving the euro at the moment then, Adam? Because I was reading just this morning about risk reversals favouring euro calls against the dollar, but then you're adding into the mix the higher energy prices, or at least we're above $90 still on oil, and gold and gas prices have been trending higher over recent days. What does all of that add up to for the euro?
Yeah, I mean, the euro-dollar is clearly on the ascendancy, but if you look at it, it's a dollar story at the moment. We've seen that scaling back of Fed rate hikes. We've seen some of the dollar credibility undermined, whether that's by the July FOMC or some of these interventions from Besson. And the tailwind of that has been enough to detach the euro from nat gas prices over the past few weeks. We've seen nat gas prices rise and euro in tandem. So that correlation is now positive, or has been positive. It's now flipped negative again. So the velocity of the moves we've seen, nat gas is about 30% from its August low. That's kind of tilting against euro. And as we saw in March, when nat gas prices rose significantly, I think it's about 59%, euro-dollar had its worst month of the year. So yes, euro-dollar can keep climbing, but it's just a question of whether the euro is the best expression against dollar weakness. Do you potentially prefer, likes of Aussie, Norwegian krona, which don't have that commodity overhang?
It's interesting in the context of Europe that we're seeing GDP out of Germany coming slightly stronger than expected. So that data dropped at the top of the 7-hour. GDP out of Germany rising by 0.3% between April and June. So that's up from a previous estimate of 0.2%. So it's evidence that maybe there's some green shoots in the German economy. To what extent could investors be disappointed by Wash on Friday?
So I think you had Mark earlier on your show saying it could be a bit of a non-event. I think typically in years gone by that would be the case if Wash didn't say something. But I think
you're suggesting you don't agree with your boss?
In the most polite way I possibly can, yes.
That's actively encouraged.
Yes, definitely. But I just think that after July FOMC, when markets were just left so confused, okay, what is this Fed reaction function? How are we going to get through this? They're not looking to have their hand held and told exactly what the next decision is, but they kind of want to learn a bit more about the reaction function. So him saying nothing is potentially saying a negative. He does have this opportunity to restore his messaging and a bit of a floor against the dollar and cap longer-term yields. If he doesn't say something like that, I think it could be a bit more of a negative than it otherwise would be.
We have at least 3 mornings more of this week, Adam, to talk about this. So we will continue to do that, whether it will be a disappointment or not. We will certainly get a lot out of this story.
Yeah, the build-up is there.
Yeah, the build-up to Nvidia as well. That's what we're also working on.
Those earnings dropping after market tomorrow, of course.
Yeah.
Stateside.
Absolutely. So we will get the preview tomorrow on Nvidia. NVIDIA, and we will get the aftermath on Thursday, European time. That is it for the opening trade. We will leave you with the pulse. That is up next. And heading towards the US session, European stocks are just on the front foot. US futures pointing higher. NASDAQ futures up by 0.4%. E-minis up by 0.2. Have a good day, everybody. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Risking a collision with China, Treasury Secretary Scott Bessent threatens to unleash economic D-Day against Iran and its trading partners. Tentative optimism. US futures point higher with easing pressure on tech stocks ahead of key earnings this week, including AI bellwether NVIDIA. Plus, could an extra 40,000 jobs be on the line? Unions fear cuts at Volkswagen could balloon to 140,000 jobs as the CEO prepares to address the company later on today. Well, a very good morning. Here's how markets are shaping up this Tuesday. Futures pointing higher stateside, up 0.4% on NASDAQ futures, looking to build on the gains that we've already seen in the Asian and European sessions, drawing a line under that pressure on tech stocks that we saw yesterday. Euro dollar is at, if we just check on euro dollar, we are looking at it currently flat at 116. We're keeping an eye on the EFO numbers. 88.8 is where we come in, so beating the estimate there for German business confidence in August. But the Bloomberg Dollar Spot Index pretty steady. Brent is a touch weaker, down 0.4%, just shy of $92 a barrel. We have had a bit of detail on Washington's plan for Tehran's economic asphyxiation, but we'll get more on that, hopefully. Bitcoin extending its rally, but actually just now shy of 80K. We are up for the third day, but still well below its $126,000 a token peak. Now, let's take a look at how European markets are shaping up this morning. And we have the Stock 600 broadly up 0.25%. A lot of green on the screen this morning. But, of course, it's August, so volumes are a bit lighter, despite the fair amount of news flow for this time of year. The FTSE MIB in Italy is one of the leaders this morning. But on the back foot, we have the Amsterdam index just down nearly 0.1%. Those are your markets. Let's get started.
Newsmakers and market movers. This is The Pulse.
Good morning and welcome to The Pulse. I'm Lizzie Burden in London. US Treasury Secretary Scott Bessent has threatened economic punishment against any country doing business with Iran. It comes as part of what he calls an economic D-Day campaign to end nearly 6 months of war.
Today, we are launching Operation Economic Outcast to foreclose every other option available to the Iranian regime. Treasury has mapped every node, every facilitator, and every network that Iran has used to smuggle oil and evade sanctions. Beginning today, the actions of Treasury and other agencies will tighten the noose and block every potential source of revenue that funds the IRGC and the evil Iranian regime.
The move risks setting the US on a collision course with China, Iran's main trading partner, of course. So let's bring in for analysis Jill Desis, our managing editor in Hong Kong, and Brendan Murray, our global trade czar here in London. Welcome to both of you. Jill, I want to start with you because this felt more like a warning shot from Bessent. There was no timeline, no specific punishments set out. Is there a sense that Iran's more likely to retaliate militarily, perhaps, than to capitulate?
Yeah, I think at this point, Lizzie, you've heard some very, very strong language out of the United States. Economic onslaught, I believe, was also, part of that language there. At this point, we did hear a bit from Iran just before Bessent spoke. I'll read you the quote from their lead negotiator with the U.S. saying, Americans know that no one buys their bombast. The United States is not in an economic position to further restrict its relations with other countries. And so I think that does tell you a little bit about, how Iran is thinking about some of this language here. The other thing that I'll note with all of this, Lizzie, is that, at this point, again, a lot of this is very vague. As you mentioned, there's not a whole lot of timelines here. There are some entities in China and Hong Kong that the U.S. government did target. A lot of that's sort of smaller companies involved with tech procurement, that kind of thing. So despite, some of this, you're not seeing yet, specific targets on, say, major Chinese banks or major, secondary sanctions that could conceivably impact, China's trade with Iran when it comes to oil, for example. So I think that that's really where, more of that economic pain would really come into the equation. And at this point, it still does feel, as you mentioned, that idea of that warning shot rather than something that really, may, be that sort of next level of aggression.
Well, yeah, because Bessent didn't mention Beijing by name, but he did say that nobody is above the reach of US sanctions. How much does it just crank up the tensions ahead of the Trump-Xi summit?
Yeah, I think that that's a good point, is that we have this summit between Donald Trump and Xi Jinping expected next month in Washington, D.C. I'm not sure that Washington necessarily wants to upset the prospect of that meeting upcoming. We did actually hear from China's Ministry of Foreign Affairs just about an hour ago, some boilerplate language from there about, opposing sanctions and that kind of thing. So nothing too surprising out of China, at least at this point. I will also say, Lizzie, that one other consideration that may be entering the U.S. equation equation right now is they've got this trade truce, for the better part of a year so far with China. Some questions about whether or not they're sort of looking to alter the trade relationship. But I do think that's another thing, that if you're trying to make this meeting between Donald Trump and Xi Jinping happen in just about a month's time, risking upsetting that relationship is something that, potentially they're very sort of cautious to. So we'll have to see whether or not, the U.S. does come out with something that feels a bit more aggressive. If they do something like, again, target a major Chinese bank as a result of these types of sanctions, upping this economic pressure on Iran. But at this point, we're still kind of waiting to see whether or not that actually bears out.
All right, Jill, thank you very much. That's Bloomberg's Jill Desis. And Brendan, I want to bring you in here because talking of China, we also understand that the US is set to impose a 7.5% tariff on Chinese goods. This is over allegations of excess manufacturing capacity. Do you think it's likely to actually come into effect, or is this the sort of negotiating ploy that we've seen from Trump before?
So this is part of a negotiation that the U.S. trade, an investigation that the U.S. Trade Representative's office is doing in parallel with one that they already did regarding forced labor. So they put 12.5% tariffs on China and some other countries, and if you add the 7.5% for the excess capacity, then you get to the 20% that the second-term Trump administration has put on China. So this was a level that China has accepted more or less from the ceasefire dating back to November of last year, and so the calculus from the Trump administration's perspective is that this will maintain a bit of stability. No country wants extra tariffs, but China has accepted the 20%. And so we don't have the investigation released from the USTR yet, but this is what our sources in Washington are telling us. And here we are, less than a month now from the Xi-Trump summit, and there'll be a lot of jockeying, a lot of negotiations behind the scenes to figure out what the deliverables will be for that summit. But this is one that the U.S. administration thinks that China will accept and will sort of keep the pressure on the U.S.'s trading partners to do the kind of reshoring that the Trump administration is trying to accomplish.
So just kind of rebuilding the tariff wall rather than adding to it. We also had Trump vowing to double tariffs on Canadian autos to 50%, and this is from January the 1st. Obviously, that could significantly disrupt the supply chain. Let's just take a listen to what Mark Carney, Canadian Prime Minister, of course, had to say.
The goal of our trade negotiations with the United States has always been to get the best deal for Canadians, never a deal at any price or on any time frame. Well, we made progress. We did make some progress in recent weeks. In the end, that momentum reversed, and we could not accept what the U.S. had offered, nor could we give what they asked.
Is there hope, though, that there could be negotiations if the deadline's January 1st, if they put it off to all that way away, and they said they might not do any talks until after the midterm? Surely there's a window of hope there.
Yeah, absolutely. Look, things are pretty ugly now between the two economies. The politicians are calling each other names, but ultimately the U.S.-Canada trade relationship has to work for both countries. It will be detrimental to both economies if things fall apart and tariffs start escalating. And so what we're seeing the point at which the two sides are kind of yelling at each other, but ultimately the lawyers on both sides are going to sit down and hammer things out, close these differences, and figure out how to make sure that they don't disrupt either economy. The thing that Canada has going in its favor are the political costs that this could come to bear on the Trump administration in the midterm elections. There are a lot of border states with close Senate races that Republicans don't want to lose, and so we'll have to see how the political pressure makes its way to the White House. But we're already hearing from some folks in Michigan and Wisconsin and other areas that are going to be affected by this, that the U.S. doesn't want to get into a full-blown trade war and punish Canada in the way that the threats are flying around right now would suggest.
Yeah, you talk about that ugly language. Clearly, the auto tariffs targeted at Ontario, and we know that President Trump hasn't taken very kindly to Doug Ford in that area. Brendan, thank you so much. That's Bloomberg's Brendan Murray. Well, Treasury Secretary Scott Bessent, in those Iran comments, refrained from giving any further signals on how he's going to revamp US debt management. It follows a report that his department could draw down some of its cash pile to fund buybacks of longer-dated bonds. I'm joined now by Karen Ward, EMEA Chief Market Strategist at JP Morgan Asset Management, for more on this and everything else that's been going on in the market. Karen, are you worried, let's start here, about the risk that this Treasury intervention is going to weaken the dollar, cheapen exports, and then fuel inflation?
I certainly think the currency will be the valve. I mean, we've seen this play out very clearly in Japan. When the market is uncomfortable about what's going on in the policy space, and usually that's a judgment on the combination of fiscal and monetary policy, but there's quite a determination from the central bank to try and keep the bond market under control. That distaste from the market comes through in the currency, and that is what we've seen over this last week with the US intervention. The market is watching. Again, it's the combination of fiscal and monetary policy and how they may interact, and the valve is the currency. So I think keeping an eye on where the dollar's going, your exposure to the dollar, because we know most people are overweight the US in general. When you add in currency exposures, it's pretty significantly overweight. It's something to be aware of, for sure.
Well, because of this, some people are talking about the debasement trade having to come back. You're seeing Bitcoin, it has been over 80K this morning. I'm not sure it is just, you might be just shy of that right now, but isn't it a sign that the debasement trade's coming back, partly because of what Bessent's doing?
I mean, I think it is, yes, is the answer. But I think it's not just about the US. I think the markets are judging that this is structurally where we are. I mean, for everything you've been already talking about this morning, we are just in a world where governments are under tremendous pressure to spend a lot more. They're onshoring, again, all their activities, whether it's defense or energy infrastructure or technology and manufacturing. So if governments are going to be spending more, they're going to really would like their central banks to, in whatever way, help them out. And I think the pressure on Japan, the pressure on the US, the pressure on governments in Europe, it's a general perception by the market that I just need to insure myself against this going too far. You know, I would say that generally for risk assets, this is great. This is everybody spending money trying to get growth going. The risks, history tells us you can push that too far, but you need to be a little careful, because when it goes wrong, it ends up in either in inflation or it ends up in a misallocation of capital. So that's my key advice to people at the moment. Enjoy it. Forget all of this daytime, you know, what's been said, who's tweeted what today. This is going to be very positive for risk assets, but have your insurance in place, being mindful of those risks.
But can we forget about it? It's been an absolute pile-on of criticism for the Treasury Secretary. Citadel Securities saying it's financial repression, what he's doing with the buybacks. High-frequency economics says that he's trying to usurp Fed independence. Is all of that going too far, or is his credibility actually being undermined here?
I mean, all the debt management offices, finance ministries, they are all playing a similar game of trying to work out how the heck they're going to get all this issuance out there, and which parts of the curve are going to absorb it. So we've seen already in the UK, they're really terming in their debt to the lower end of the curve. We've seen that happening in Japan. This is different, I must admit. I feel a little bit more uncomfortable about, rather than reprofiling your issuance, actually buying back in the market, because when the central bank does it, they're anchored by an inflation target for their decisions. We don't know what the anchor is for the Treasury Secretary other than to try and keep interest rates low. So it's certainly not something I would completely ignore. But again, for me, when we're thinking about how do you allocate long-term money and not get caught up in this constant news flow, it's about remaining risk on, but having my assets in place that are going to insure me in case, you know, inflation really takes off. And that's your core infrastructure, transportation assets, your real assets.
OK, and are you positioning for a Fed hike in September? Of course, we're going to hear from Kevin Walsh on Friday at Jackson Hole, and there's another credibility question there.
There is. I mean, I think at the moment, no. ultimately, the US wage growth data tell me the Fed should not be hiking. It's undoubtable that across the West, headline inflation is elevated, cost pressures are picking up. But whether that becomes a sustained inflation problem depends entirely on the labour market. If workers don't feel good enough about their job security to go in and ask their boss for more pay, that's where inflation stops, because then you have to just cut back on your spending on other things. And the US labour market is just not giving any indication that there's that job security, that workers are going to be asking for more pay. I think what the market wants from Kevin Walsh is just a little bit more clarity about how they see the world. You know, does he agree with that framework that I've just set out of this depends on the labour market and the labour market is too weak? What the market wants to hear is, what is your view of the economy? What matters here? And if he can get that right on Friday, I think that's going to ease a lot of concerns. But I don't think the Fed should be hiking.
Is that too much to ask for, Kevin, really? We just want a bit of clarity. Karen, thank you very much.
Pleasure.
Karen Ward there, EMEA Chief Market Strategist at JP Morgan Asset Management. Well, coming up on The Pulse, having made his first foreign trip to Ukraine as Prime Minister, Andy Burnham is now planning to visit the US next month. We'll discuss his agenda next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
UK Prime Minister Andy Burnham says that he and other European leaders plan to travel to the United States next month to lobby President Trump on Ukraine. Burnham's comments came as he visited Kyiv on his first international trip since taking office. Let's bring in Piotr Skolimowski, who leads Bloomberg's coverage for Central and Eastern Europe. Piotr, good to see you. What does Burnham actually want from Washington, and is he likely to get it?
Good morning. So indeed, Andy Burnham yesterday told our reporter, Alex Wickham, in an interview that on the way back from Kiev, that he's planning to go to New York next month, when there's a meeting of UN General Assembly, together with other European leaders. He's planning to lobby Donald Trump to send more Patriot missiles to Ukraine. That's an important declaration. Obviously, Ukraine is looking for ahead to winter, and it's really running out of those Patriot missiles that it needs to shoot down Russian missiles. And Patriots are basically the only weapon that's out there that's capable of shooting those ballistic missiles. So Burnham is trying to lead that effort. Obviously, he told in an interview as well that the problem with Patriots is fixable. That it's a big ask from Zelensky. He says he needs 300 of those missiles to survive winter. At this point, it's very difficult to get those weapons for a simple reason. There's a war in Iran, and those stockpiles are running low, not only in the U.S., but also across all the other countries, and that leads to some countries basically hoarding their stockpiles because they're otherwise facing a delay in supplies. So it's a tall order for the Prime Minister. It's going to be his first meeting with Trump. So how it's going to work out, whether he's going to achieve that, that's obviously he set himself up for quite a difficult task. But definitely that's essential for Ukraine to survive, to get those Patriots to the country in time for winter.
Yeah, it's a huge, tall order when there's already a big question about how Trump and Burnham will get on. You talk about weapons, though, and we're also reporting that while Ukraine's defence industry is innovating fast, it's also rapidly running out of workers to keep up. What can Kyiv do about that when, you know, it needs manpower both on the battlefield and in the factories?
Yes, indeed. So obviously the development and how Ukraine has developed its defense tech over the last few years has been one of the big stories of this war. Obviously, it helped Ukraine to sort of offset this imbalance between, you know, the amount of manpower that Russia has in terms of sending people to the front line, and in some cases actually allowed Ukraine to kind of freeze the battlefield on the ground at least. So what we're seeing right now and what we're reporting this morning is that this defense sector is facing huge problems with manpower. The main, obviously, in terms of employment, this sector has seen incredible growth, over 50% growth in terms of employment over the last year, just last year. And what representatives of the sector are telling us is that, you know, what we're actually seeing is, as one of them described it, internal cannibalism, in the sense that one company is poaching engineers from the other company, offering 3 times the salary and other perks. So the sector is developing very fast, and it's running out of people. Obviously, it's a lot of issues down there. It's a question of skills, which is engineers that they don't have or they have enough. So the companies are dealing with it in different ways. Obviously, one approach is all hands on deck. Basically, it doesn't really matter whether you're HR, whether you're an engineer. If there is a need, if there's an order, and they really need a lot of those drones, all people are working, which is obviously not great for the work-life balance for people working for these companies. But they're also trying to ramp up just training. Obviously, it's very difficult. There's huge demand on students, but also the companies themselves are trying to train those people. And I guess the Ukraine companies are also looking for money from foreign partners. That's one way of kind of helping to develop this sector when they team up a little bit more with European, with US partners to continue building this out.
It's really interesting reporting on the economic side of all of this. Piotr, thank you for bringing it to us. That's Bloomberg's Piotr Skolimowski. Well, now let's dive back into the Middle East situation, specifically how the closure of the Strait of Hormuz has exposed the risks of relying on one of the world's most important energy choke points. A special report from Bloomberg Intelligence examines how the world adapted. And we can speak now to Will Hares, senior energy analyst here at Bloomberg Intelligence, who's been behind this report. So, Will, what's the current status of flows through Hormuz, and where does it leave the energy majors? Because it seems like they've been doing pretty well in Q2.
So the Strait of Hormuz is neither fully open nor fully closed. We've had recent reports from U.S. government officials stating that up to 10 million barrels per day was flowing through the strait. We are skeptical of that account. It's not supported by publicly available vessel tracking data. We estimate it's somewhere around 5 million barrels per day. But the key takeaway here is that more oil is flowing through the strait. more than Tehran wants, and it's showing a degree of success that the U.S. Navy, military support, and the convoy escorts that they're completing around the southern Omani corridor is having.
So that's quite encouraging, actually. Are we past peak Hormuz disruption then?
So I would argue that not peak Hormuz disruption, because Tehran has actually recently threatened further attacks on merchant vessels within the strait. But I would say that peak Hormuz dependence, absolutely, we have hit this year as countries, Gulf states, companies are exploring every avenue they have to de-risk, to diversify away from the Hormuz dependence.
So surely that takes away some of Iran's political leverage, geopolitical leverage.
Well, yes. So we argue that they still have leverage over the strait because they do not need a full closure of the strait. They need sufficient threats and of damage, of potential casualties on merchant vessels. However, that leverage is diminishing day after day after day because of the diversification and the strong incentives that these companies and Gulf states have to diversify away from the Strait of Hormuz.
Okay, really interesting on how that leverage is changing. Will, thank you very much for bringing us the report. Senior energy analyst at Bloomberg Intelligence, and that report, Peak Hormuz, available on the terminal for subscribers now. Well, coming up, billionaire investor Stanley Druckenmiller says the US Treasury Secretary's bond buying plan is a mistake. We'll discuss next. This is Bloomberg.
Kieran, where are we right now? What are these things?
Right now, this is the solvent yard. So it's not a very exciting part of the whole park. But we are kind of moving up to the fermentation facilities.
And you can smell the fermentation.
Yes.
And, you know, it's funny because people always think fermentation is simple, it's easy. It's not.
No, it's very complex. And we have two types of fermentation. One is microbial fermentation, and the other is mammalian cell culture. I mean, I basically could have used yeast to make beer, but now I use yeast to make insulin. So,
amazing. I think that's cooler than using yeast to make beer.
Well, both are cool.
Yeah, but one, you're saving lives.
Yeah, but the other is also a great beverage.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning and welcome to The Pulse. I'm Lizzie Burden in London, and these are your top stories. Risking a collision with China, Treasury Secretary Scott Bessent threatens to unleash an economic D-Day against Iran and its trading partners. Tentative optimism. Nasdaq futures extend gains with easing pressure on tech stocks ahead of key earnings this week, including AI bellwether Nvidia. Plus, could an extra 40,000 jobs be on the line? Unions fear cuts at Volkswagen could balloon to 140,000 jobs as the CEO prepares to address the company later today. Well, billionaire investor Stanley Druckenmiller has suggested that his former pupil, US Treasury Secretary Scott Bessent, is making a mistake by wading into the bond market to push down yields. Druckenmiller argues that policymakers should let the bond market do its job. Joining us now is Maria de Mertzis, an economic policy professor at the European University Institute, and we can get the European perspective on all of this now. So, Maria, thank you so much for joining us. In your eyes, is Bessent losing credibility? And what signal does what he's doing with the bond market send to European policymakers?
Well, I mean, any finance minister or treasury minister has the right to come into the markets and buy back bonds. So the question is this an effective way of affecting the price yields, and how does this interfere with the central bank intentions? I mean, we're expecting the Fed to increase rates at some point. I mean, this is what markets are expecting. So the idea that the Treasury, the finance minister, is intervening somehow contradicts the ability of the central bank to achieve its objectives. So that already creates some confusion into the economy in terms of where we're going with yields in the future. And that is why we've seen some reactions coming to this. Now, when it comes to Europe, I don't think that interferes much with the ability of policymakers in Europe to make their own decisions, be them finance ministers or indeed the European Central Bank, the ECB. However, I will say that to the extent that the interference by the Fed to affect bond yields in the US reflects some concern about the viability of the US debt, that's not good news for the European economy or indeed the world economy. US assets, and treasuries in particular, are the asset of last resort. They are the safe asset. And to the extent that there is some worries about the viability of the safe asset, then the whole world needs to watch very carefully, because it will affect the European economy and it will affect the world economy. It's so systemic to the holdings of insurers, of pension funds, of banks, that, you know, it is really worrying to see something happening to US yields.
Well, yeah, Karen Ward was on the show earlier, and she was making the point not just that, you know, treasury markets affect all bond markets, but also that everyone's got their fiscal woes at the moment. So lest we forget the fiscal woes here in Europe, Maria, what can be done on the continent for Europe to grow its way out of debt?
Yeah, indeed. Europe has always had, certainly in the past 10 years, has always had worries about the sustainability of its own debts as well, particularly for big countries. When big countries have fiscal debts and deficits that are high and increasing, then of course that is a sign of concern. Markets don't seem to worry about the sustainability of European debts, but they remain high, and it is important that the productivity agenda, let me call it the Draghi agenda, really advances, because that is the only way to grow out of high debts, and that is absolutely crucial. And I hope that we continue to make the right investments, productivity investments, reforms that are going to remove some of the idiosyncrasies and the problems of the European economy. So the Draghi agenda, in my view, remains priority number one. But of course, we have the issue of economic security as well in Europe. Crucial that we advance with economic security, because otherwise we remain vulnerable to coercion from players outside our borders.
But is Europe meaningfully implementing the Draghi agenda, or is it just talking about it?
Well, no, I think that we are meaningfully advancing with it. From the simplification agenda all the way to energy union, there are steps that the European Union is taking to advance with that. But Europe is slow. It's not just one country that is taking decisions. It is 27 different countries, and of course, coordinated action at the European level. So that, of course, delays progress, and that has always been the problem of the European Union. It is true that we are not advancing at the speed that we ought to be advancing, but there you are.
Well, yeah, when it comes to common European debt, without the political will there to make that case, is it going to take an existential crisis to get it over the line?
It usually does take existential crisis to make advancements in Europe, and that is very unfortunate, but we have done it when we had to. The issue of debt, the case for a common European debt has never been stronger, given the urgency of implementing investments on European public goods. However, again, we are very slow to advance in this regard. I would be watching the discussions on the next European budget, the multi-annual financing framework, the MFF. President Costa is visiting European countries to try and push over the line to agree on a rather ambitious new budget. That is not common debt, but it is in the right direction in terms of financing European public goods, and hopefully the first step to greater spending at the European level when it comes to the urgent problems.
I wonder if you've seen the IFO numbers this morning. Germany's business outlook actually improving for a fourth month. You've got a boost from public spending. What's your read on the general health of Europe's economy at the moment, given all of the heat waves, the Freudian slip there, the tailwinds that the headwinds that we're seeing at the moment, the heat waves, the wars, tariffs as well?
Well, I mean, despite all this, as you say, huge shocks from climate all the way down to wars, the European economy remains actually resilient. We've seen it also on the inflation side, but also on the growth side. Admittedly, growth in Europe is rather weak, but we have seen that the European economy has managed to deal with the volatility of it all, which means that we are doing the right things to try and preserve some stability in our economies, which is good. It's great to see the German economy that actually suffers to do well for a number of months now, which means that the implementation of investments and the huge commitment to investment is beginning to show some positive news. So I think I will be watching to see whether this is sustained, and if the German economy is moving, that of course takes the European economy with it. So on the whole, I think stability is good news, and let's see the fruits of some of the investments that we've already committed to.
But how worried are you about European gas prices heading into the winter? Because we were talking about the geopolitics in the Middle East earlier, and it seems the situation's only going backwards.
Well, that is indeed a vulnerability problem. We have seen also that the storages of energy are actually a little bit lower this year than they were last year, which means that our buffers are smaller to begin with. If the winter is cold, that will be a problem. However, you know, that is a problem that the European Union has had for the past 4 years since the beginning of the war in Ukraine, and it remains a vulnerability point. But we are advancing with the energy union, we're advancing with the green transition, again at the speed that Europe usually advances. But we are moving in the right direction. We are hoping for a little bit of luck this winter, so that we can deal with the volatility of prices that is coming through energy. But there you go. We have had this problem before. We dealt with it. I hope we can sustain it this winter as well.
Just finally, we were also talking about how the US is set to reimpose tariffs on Chinese goods ahead of the Trump-Xi summit. To what extent is Europe exposed to that crossfire?
Well, it is exposed, but quite frankly, I don't think that is the biggest problems we have today. We have our own issues with China and how to deal with them. I think that's much more important for the European Union. We will continue to see tariffs coming from the US, and not only tariffs, but also the unpredictability of tariffs. This economically is not a big issue, but politically it is. We have seen it now for 2 years, and I think the European Union is able to deal with this. The response to US tariffs has been, in my view, correct. We should not escalate when we don't have to, but we have to deal with underlying problems, and that is primarily China and how to deal with unfair competition that is coming in that direction.
And do you think that where you've got Canada standing up to the US and China as well, perhaps that would encourage Europe to do the same?
Look, the European Union is exposed to the US primarily when it comes to the war. we need the US to help us support the war and to help us end the war. So I think the exposures that the European Union unfortunately faces, and that's why I raised the issue of economic security, we need to do something about that. They are not the same as other countries. And I think this is an escalation game, and we should not fall into the escalation trap. Up till now, I think the European Union had the right position when it comes to this trap of tariffs. Let's hope that we continue to cooperate with the US for the sake of ending the war as quickly as possible, and also for the sake of economic outcomes. Even if we impose tariffs, to the US, this will not benefit the European economy. They don't call it a trap for anything, and we should not escalate.
Okay, cooperation, not escalation. Clear message from you there, Maria.
Indeed.
That's Maria de Mertzis, Economic Policy Professor at the European University Institute. Thank you very much, as always, for joining us. Well, the Volkswagen CEO, Oliver Blume, will be presenting his restructuring plan to workers at the company's giant Wolfsburg factory later on today. The proposals could wipe out as many as 100,000 jobs. Joining us now for more is Will Wilkes, our automotives reporter out of Frankfurt. So, Will, what exactly is the CEO trying to achieve with this restructuring then? And why is the pressure on Volkswagen just so intense right now? Remind us.
Good morning, Lizzie. So what he's trying to achieve with this restructuring plan is to get Volkswagen's operating margin from just below 4%, where it is now, to kind of between 8 to 10%. And that's, he thinks, is necessary to make it still an investable company while it's tackling the shift to electrification and the shift to cars as kind of rolling computers, both of which technology shifts require huge investment. And the reason it's becoming more urgent is because Volkswagen's being hit left, right, and centre by different problems that are also hitting other automakers, like the decline in the China market, fierce competition from Chinese manufacturers in Europe, as well as the lingering impact of US tariffs. So Blume is trying to push ahead with this restructuring package, which the unions say is not necessary. And they say the geopolitical environment makes his targets. The head of the IG Metall Metal Workers Union last week said those were cloud cuckoo land assumptions that Volkswagen can get to margins between 8 to 10%.
Well, how much power actually does the Labour side of the argument have to block his plans?
Actually, different to lots of companies, even in Germany, the Labour side is able to effectively block the plans. Under German corporate law, supervisory boards need to sign off on major strategic decisions like a package like this. Also, by German corporate law, supervisory boards are made up of 50% seats to Labour. In Volkswagen's special case, the German state of Lower Saxony, where several major Volkswagen plants are located, also has a vote. So if Lower Saxony groups together with the unions, they're able to block job losses and plant closures. And I met with the minister-president of Lower Saxony last night in Hanover, and he was saying we can't accept work closures without any future plans for them, and we can't accept compulsory job losses. So it's stuck, and Blume needs to try and get these two factions to back his plan. And from the way things look with the meeting next week, that looks very difficult indeed.
OK, well, we'll keep an eye on the VW shares throughout the day then. Will, thank you for the update. That's Bloomberg's Will Wilkes. Now, let's come to the UK, because a property company owned by Britain's richest aristocrats warning that rising temperatures and planning regulations are threatening the appeal of its properties in London's Mayfair and Belgravia. The Grosvenor Group wants the government to relax planning requirements to allow for basic cooling features. We all like some of those. Joining us now for more is Olivia Rudgard, our climate reporter. So, Olivia, this is a sore spot for many of us living in beautiful listed properties with no aircon. What's stopping older properties getting these features that do something good, keep residents cool?
Yeah, so especially if you live in a listed building, there are some pretty strict restrictions on what you can do to anything that affects that building, actually inside and out, but especially on the outside. So things like air conditioning are really difficult. What Grosvenor actually wants to allow or encourage is more like passive features, so things like shutters and shading. And those also, you might think they'd be easier to get, but they also require permission if you have a listed building. And actually, even if you don't, you may well need to apply for planning permission from the local local council if you live in a much more ordinary building. So there are these layers that you have bureaucracy that you sort of have to get through, and it can cost several £100s and take quite a few weeks to obtain.
Okay, so it's not just that we're used to cooler climes, it's also that we're trying to protect the integrity of these buildings. So how might this affect property values in London? Let's say that this is the new normal, that summers just get hotter and hotter and hotter. If we can't have aircon, what does it do to prices?
Yeah, so I think what Grosvenor is really saying is that these buildings, they'll be maintained and looked after if they're lived in, if they're up to date, if there's something that's practical and actually being used. And buildings fall into disrepair when they are being neglected because they're just not up to date. And so what they want to be able to do, both in terms of keeping them warm in the winter, so adding insulation, double glazing, things like that, and then also being able to keep them cool in the summer, is keep those buildings in use. And then the idea is that stops them from falling into disrepair, and then that could affect their values as well.
Okay. I, for one, think it's all a ploy to get us to the office for longer hours to make the use of the aircon. Olivia, thank you very much. That's Olivia Rudgard, our climate reporter. Well, coming up on The Pulse, we'll be looking ahead to NVIDIA's earnings with Adrian Cox of Deutsche Bank Research. That conversation next. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. This week, Bloomberg is live at the Jackson Hole Economic Symposium. Tom Keene and Lisa Abramowitz, along with Michael McKee, will bring you news and interviews with Fed leaders, policymakers, and economists shaping global monetary policy. Tune in for continuing coverage and a special episode of Surveillance, August 28th at 9 a.m., including full coverage of Kevin Warsh's first speech to the conference. The Jackson Hole Economic Symposium on Bloomberg. Context changes everything.
This is The Pulse. I'm Lizzie Burden in London. Now, NVIDIA shares have posted their longest losing streak since 2022 amid a global sell-off in chip stocks. The chip giant's earnings tomorrow will be a key test of confidence in the AI trade. And joining us now to discuss the wider tech sector is Adrian Cox, thematic strategist at Deutsche Bank Research. Adrian, great to have you around the desk this morning. So we're reporting that NVIDIA's earnings will be showing likely a doubling in data center revenue from a year ago. Just generally, when it comes to the tech space, expectations are so high right now. Is there anything that the likes of NVIDIA can report that could impress a market like this?
It's very difficult at the moment to impress anyone.
Yeah.
And we've obviously seen this in the last few days with NVIDIA falling by, about 7.5% in the last 7 trading days. So evidently the market is looking at these infrastructure stocks, the picks and shovels, which have really outperformed everyone else over the time since ChatGPT was launched, and trying to find where the edge is. And it's not clear whether they can still maintain that. Obviously, what is going to be key for NVIDIA and other stocks is going to be, number one, the guidance. Number two, is there going to be evidence of a kind of swapping from one supplier to another? So instead of NVIDIA, it might be some of the other chip producers making ASICs, for example, their own sort of custom chips. And also the implications of things like export controls and whether that's going to perhaps damp the sales going forward.
Okay, but we report that some of NVIDIA's biggest customers have been told the prices of its AI servers are going up more than 15%. Now, in your notes, you've written that cheaper AI will likely boost spending. So this is the opposite. Is that sort of tactic by the likes of NVIDIA actually not very wise right now?
Well, really, I think what's going on, if you just take a step back, is this distinction that's going on in the sort of format wars between the open source models on the one hand and the proprietary models on the other. And what the open source models have shown over the course of the summer is that you can really perform most of what you need to perform at a very much cheaper rate than is being performed by the proprietary models. So if you have the biggest proprietary model at the moment, then it's going to cost you or sort of the open source kind of equivalent for something which is more or less the same is going to be about a quarter of the price if you're using a Chinese open source model. If you want to use something where you can just take a little step down in quality, you can get something for maybe 1/10 of the price. And so I think the bigger picture that we're seeing is this kind of shift where there are more models out there available, and therefore it gives the chance for producers like NVIDIA to sell more AI, even if that is to the disadvantage of one or two of the proprietary model makers.
Yeah, because you've got OpenAI building its own chip, Anthropic building its own chip, Meta signing deals with seemingly everyone, Amazon saying that its in-house chip business would generate $25 billion in revenue as a standalone. When you've got the hyperscaler chip arms race going on like that, how does it hurt the likes of NVIDIA?
Obviously, every new competitor is going to be good for the market, I guess, because that means that consumers have choice of who they can refer to. One of the most important things really about open source actually is that it's not just a cost play and a sort of an opportunity for consumers, enterprises to choose which model they want to use, but it also means that there's more competition out there, which means that there's competition not just for the models, which are the kind of commodity side of things, but also actually more up and down the stack, because there's less kind of lock-in for a specific chip.
Okay, and then also if we talk about CapEx, you've got NVIDIA becoming the bank of last resort effectively for the AI trade overall. Do you look at that web of CapEx, and Bloomberg's got some fantastic maps of this on the terminal. Do you look at it and think it's just trying to do too much, it's all too dangerous?
Well, I think at the moment we're still really looking at very, very strong demand. So by some forecasts, there's at least another 4 or 5 years before current demand will actually be matched by supply. So even though obviously there is going to be quite legitimate examination of the kind of funding structures that all of the different hyperscalers and the model providers and everyone else are engaging in, and questions about the opacity of that, the bigger issue is the fact that really there's just no stopping this demand. And until demand begins to dry up, then all questions about, the sort of the short to medium term sustainability of the financing are somewhat moot.
So these levels of investment continue for 4 or 5 years?
It looks like it, yeah. I mean, if you imagine that maybe only 20-30% of companies are really using AI, and very often those are mainly just kind of pilots at the moment. Just imagine all of those companies using AI more extensively and more companies overall using AI extensively, that gives you an enormous runway for greater demand to grow.
And how do you think about the threat from Chinese AI?
Well, China's been playing a really interesting role in all of this, and I think obviously we had the DeepSeek moment at the beginning of last year. If you look at what's happening in EVs, actually, it's quite an interesting analogy. So EVs now, about 75% of global production is Chinese and about 5% is American. So the Chinese overtook the US in about 2015 and have been growing very fast ever since. And in a way, this should be a wake-up call for the US that shows that just because you have the kind of the start of the technology doesn't mean that you can necessarily expect to continue that. And in the case of the Chinese, they took a disadvantage, which was not really being able to compete on the internal combustion engine, but having very strong capabilities around batteries, and then turning that into a successful model around cars. And I think we're potentially seeing the same limitations being the mother of invention on open source models too.
Just because you're the first doesn't mean you'll always be the best.
Absolutely not. And you really see this actually in the history of AI, where one not only model, but also kind of model has just overtaken another over the last few years.
It's a really interesting comparison. Adrian, thank you for joining us this morning. That's Adrian Cox, thematic strategist at Deutsche Bank Research. Well, before we wrap up the hour, let's just check back in on these markets. And we are looking at NASDAQ futures up now 0.6%. They've got the wind in their sails this morning. The dollar is steady against its major peers. Brent is now weaker by 2% at $90 a barrel, and Bitcoin shy of the 80K level it had surpassed earlier. But coming up this evening, we'll be hearing from the Premier of Canada's Ontario province, Doug Ford. We talked about him earlier. He's found himself at the centre of a war of words with President Trump. So that coming up on Balance of Power at 10 p.m. London time. We'll pass you to the brief now. This is Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Today, Wayfair sees immense potential in brick-and-mortar stores.
When we got into physical retail, our view was that, even if the market continued to grow for e-commerce, probably a large chunk of the market in the space would stay offline.
Kate Gulliver showed me around Wayfair's new 150,000 square foot Atlanta flagship store.
When customers who have seen us online come into the store, they're generally a bit surprised by actually the breadth of what we offer. Often if you're going online, maybe you're looking for something particular. But when you come into the store, you walk in, you see, the market square, you see all these pillows, you see the decorative accents. So what we're seeing actually is that in store, we do really well in some categories that online are, less a percentage of the total.
How does technology help in kind of making it seamless online to store?
I think
and vice versa.
The biggest thing is for the customer on the front end, that she can be in the store, that she can actually shop here, go back home, complete that purchase. And if you look at these sort of price tags and everything, they're all these digital tags. That's because they're the exact same prices they are online. So you're not going to be surprised that you saw something in the store and then you decided to purchase it online, that it's somehow different and that the offering is different. It's actually very consistent, but when she's here, she can have her app open and everything that she's doing here can be very similar to what she's doing at home. And I think that consistency is quite important.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's 5 a.m. in New York City, 10 a.m. in
London, good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A risk for Sino-US relations. China defends its cooperation with Iran and warns against any disruption after the US threatened Tehran's economic partners. Another response to Washington's trade pressure. Canada set to announce a range of measures to protect its citizens from 50% US tariffs on certain goods. And growing criticism of Secretary Scott Bessent's bond buying plans. His mentor Stanley Druckenmiller publicly now calling it a mistake. Let's get a check on markets around the world. First off, Winnie Su is in Hong Kong for us. Winnie.
Yeah, good morning, Bonnie. Well, we did see Asian stocks fluctuating quite a bit today. Now the benchmark is trading in the green after erasing some of its earlier losses. It does seem like a bit of a calm before the storm, if I could say. We are still closely monitoring those moves in terms of the Iran sanctions as well as the trade tensions between the U.S. and Canada as well as U.S. and China. Well, we do see oil prices coming back down a bit, so perhaps that is also helping the overall rebound in the regional stocks, especially with Kospi index here trading ended in the green after having reversed as much as 4.3% of losses earlier today. Now flip the board, you take a look at one market that actually is still trading in the red and under some pressure, which is a Chinese market. We are seeing both offshore and onshore stocks in the red, and that is coming as the tech stocks still facing some pressure. When it comes to XPeng, it is down about 10%. We did see earnings missing estimate for the both second quarter earnings as well as the third quarter outlook. So that overall weighing on tech stocks in Hong Kong with the gauge now trading at its lowest level in 7 weeks.
All right, a difficult week for tech stocks. Winnie, thank you so much. That's Winnie Su in Hong Kong. Europe, meanwhile, is choosing to look on the bright side. So we have the general stocks Europe 600 index up about 1/3% now. Broadly positive across the board. In London, we have the FTSE 100 up about 1/10%. This is mainly on lower oil prices, which we've been seeing now for a couple of days after oil hit a 2-week high. And then the euro, pretty stable right now, 116.68 versus the US dollar. It has been strengthening, though, all month as this debasement trade takes hold. So we do want to keep an eye on that. But let's move to the United States, because we've seen several days of declines for chip stocks. Yesterday, we were down more than 2.5% on the stocks. The NASDAQ end of the day down 1%. And we've been seeing days and days, 7 consecutive of them, of lower prices for NVIDIA before earnings tomorrow. That's one of the catalysts for this week's trade. Before that, we are seeing a little bit of a rebound today for NASDAQ 100 futures. Not as much for S&P and for Russell 2000, which have been lagging the NASDAQ in the session, but we are seeing those in the green. So NVIDIA has to say. And then, of course, at the end of the week, we have Jackson Hole. And we have markets continuing to respond to the Treasury's moves. Now, to that point, today we have the most public excoriation that we've got yet of Scott Bessent's plans. Stanley Druckenmiller, noted billionaire hedge fund trader for decades now, worked with Soros and Bessent and has been very involved in sovereign markets and, of course, in FX markets, coming out and saying this is a mistake. The 30-year yield and that bond market is the only fiscal disciplinarian left that we have. And he has put all of his thoughts into the Wall Street Journal. Very unusual move for Stanley Druckenmiller, usually fairly private. So we have the 30-year yield, though, down about 3 basis points today. And as you can see, crude lower, gold just off a touch, but it's still high up there. And Bitcoin very near 80,000, which it did top. 82,800 and change is the next level that we are looking at. All right, let's get to some individual market movers now. For that, we'll go across to London and Chloe Melly.
Good morning, Bonnie. We're seeing chip stocks rebounding, finding a bit of a steadier footing ahead of those NVIDIA earnings. Of course, NVIDIA being this bellwether for the AI trade, and it seems that there is some enthusiasm in that sector ahead of those very important earnings. So very much green across the board there. Moving on to Dick's Sporting Goods, which is also in focus this morning ahead of the earnings, and investors are really looking for signs that the turnaround for Foot Locker is working, and it seems that there is some cautious optimism ahead of those earnings this morning. We're up just slightly in the green. And finally, over in London, Melrose Industries had some issue back in May with a manufacturing facility closing. Now it is saying that the operations will resume by the end of September, and clarified some of the costs around that closure. And that is really driving the stock this morning, reassuring investors, and we're up about 9% here in the UK.
All right, that is the top performer in the FTSE. Chloe, thank you so much. Chloe Melly there. Coming up, we're going to be speaking with Henry Allen of Deutsche Bank on what he's calling an unstable market equilibrium. Washington's latest plans to isolate Iran's economy hitting dozens of businesses in China and Hong Kong, putting potential further consequences in the spotlight. Beijing is Iran's main trading partner and the buyer of 90% of its oil. China earlier reiterating its opposition to the sanctions placed on dozens of Hong Kong and China-based entities. None of its major financial institutions, at least as of yet. Joining us now is Bloomberg's Jill Desus in Hong Kong. So the Foreign Ministry a couple of hours ago, Jill, basically saying we're doing all of what we do with Iran in coordination with international norms. There's nothing wrong with this. We're going to continue to do so. That's a pretty strong response. Would it suggest that there's more to come if there are more sanctions placed on China institutions?
Yeah, look, Bonnie, I think at this point, we're still really waiting to see whether or not there's a really big hit here. I mean, you did have that language coming out of China's foreign ministry. I will say a lot of that is sort of reiterating things that we've heard from China before. So obviously, you know, they stand at the ready for any kind of a retaliation. But I mean, let's take a look at what Scott Bessent actually announced, right? You've got, you know, sanctions on these dozens of firms in China and Hong Kong, but you're looking at a lot of sort of smaller firms, the tech procurement kinds of, you know, aspects. I think, you know, when we're talking about what would really, really hit China, what would be a really, really aggressive move, despite, I will say, some pretty strong language coming from the U.S. Treasury Secretary here, I think what you'd have to see is, you know, sanctions on maybe a really large Chinese bank. We did hear some hints from Scott Bessent. He was pretty vague. He didn't mention anyone by name, that maybe there is something more potentially coming. But I think that kind of sanction or other types of secondary sanctions on China that would really hit them, you know, when it comes to, you know, that oil trade in particular. I mean, that I think is maybe a little bit too far of a bridge for Washington to cross here. But I do think that at this point, a lot of the retaliation, or sorry, a lot of the response that we've seen from the United States at this point is still fairly mild compared to, you know, the full toolbox here. It's still a big question as to whether or not Washington would actually want to go that far, though.
Well, and we know that China can create substitute entities pretty quickly for sanctioned entities if it needs to, right? But that wouldn't be the case if a major financial institution were to be sanctioned. Now, Scott Bessent has threatened it. China is obviously saying, don't undermine our relations with Iran, so it's not going to do anything proactively. Is Bessent boxing himself into a corner here? Will he have to sanction some kind of major China institution?
I mean, you've certainly heard a lot of rhetoric from the United States. You know that Donald Trump himself is very frustrated with how long this war has gone on and is looking for ways to inflict more economic pain on Tehran specifically. I do think, though, that the limiting factor when it comes to China is the fact that we've got this upcoming summit between Xi Jinping and Donald Trump that's supposed to be happening in Washington, D.C. in just about a month's time. And I mean, you know, there's a lot of questions over how much, you know, the United States would actually want to jeopardize that meeting, this relationship between the world's two economic superpowers. You've got, you know, a lot of questions over the status of maybe the trade truce between the United States and China, which was signed, you know, just under about a year ago. You know, they've got all of these sort of considerations going into this meeting in Washington, D.C. next month. I mean, does the United States actually want to jeopardize a lot of that? I think that's a really, really valuable question here to ask. But at the same time, you know, if you're the United States, if you're Donald Trump, you want this war to end before the U.S. midterms in November. It's becoming deeply unpopular with the United States, the American public. And, you know, it puts the United States in really a bind here.
Well, to your point there, Jill, that one-year trade truce is set to expire November 10th. And we're also hearing reporting that the U.S. is set to impose a 7.5% tariff on Chinese goods. This is the 301 tariffs. We're waiting on results from the investigation, but they should come soon-ish. Is this all leverage before the Trump-Xi summit?
Yeah, I think, I mean, this is an interesting one. So this is people familiar with the matter telling us that they're looking at imposing the 7.5% tariff as it relates to some of their concerns over China, over capacity manufacturing. This is related to, again, as you mentioned, those Section 301 tariffs. I think this is really part of the Trump administration trying to rebuild elements of its tariff regime that was struck down by the U.S. Supreme Court. I think if you were to look at the calculations in terms of what's being considered here, we're not really looking at an implementation of tariffs that would be above, you know, a threshold acceptable to Beijing, at least when it comes to upholding the status of that trade truce. So we'll see what ultimately happens there, whether it's some posturing ahead of that summit. But yeah, I'm not sure that it's going to move the needle substantially at this point.
All right, Jill, thank you so much. Bloomberg's Jill Desus for us in Hong Kong. Here in the Americas, Canada is set to announce a range of measures to protect its workers and businesses in response to 50% U.S. tariffs on $20 billion of Canada's annual exports. A press conference expected at around 11 a.m. New York time. Let's get more with Bloomberg's Brendan Murray. So we're supposed to hear what Canada is going to do for its own citizens. Brendan, will there be any repercussions for U.S. citizens in what's announced today?
Yeah, it sounds like what we're going to get are things like additional jobless benefits and support, maybe loan support for businesses to help them weather this trade storm that Canadian businesses are about to go through. But what we've really seen over the past 24 hours is a real uptick in the rhetoric and the tone and the trust level between Ottawa and Washington. This is the result of the breakdown in the talks that headed into the weekend, and so we've seen President Trump and Prime Minister Carney lob insults at each other, and this really isn't an environment that's conducive for both sides coming back to the negotiating table anytime soon. That said, the amount of economic activity that's hit by these tariffs is still relatively small. The escalatory talk would hit more economic activity, but at the moment we're really just in a war of words rather than one where supply chains would be severely impacted by tariffs on a broad scale.
So, according to our reporting, Howard Lutnick really collapsed the talks sort of last minute. He was unhappy with any deal for metals producers. But what does this change for those producers, Brendan?
Yeah, I mean, what we have inside the administration are the hawks and the advisors who are not so hawkish about the whole reshoring issue. And you know, as you've mentioned, we're coming up on 2 months before the midterms, and there are some key battleground states where members of Congress on the Republican side don't want to lose those seats. And so what they're trying to appeal to here is that the administration is bringing jobs home, reshoring production, and the White House is looking at those production lines in Canada and saying, Canada's got something that we want, and we are going to put tariffs on Canadian imports until those incentives realign for auto manufacturers to make cars in the U.S. and trucks. So what we're seeing is part economic posturing and part political posturing. Right now, Canada thinks it's got some leverage on President Trump because a trade war against Canada is not as popular as a trade war against China, and we'll see how that plays out in some of the border states in the weeks ahead.
To your point about it being a political situation as well, Trump basically endorsing somebody for the Oklahoma's governor's race, using the planned aluminum plant there as leverage really for his endorsement. That's the thing though, are there aluminum plants planned all over the country, Brendan? Or how are we supposed to come up with the aluminum if there isn't enough aluminum in the US?
Yeah, exactly. I mean, the investment pledges have been made in some cases, but it's, you know, it takes years to build these kind of facilities, and it takes a lot of power, and that's why Canada has the big aluminum capacity, is because of the hydropower that it provides. And so these are the things that are not going to be resolved with some tariff threats over the next few months. But ultimately, the Trump administration is trying to make this case that they are pressuring the U.S.'s main trading partners with tariffs to try to reshore some of those national security-related industries that they're trying to bring back to the U.S.
All right, Brendan, thank you so much. We'll hear more at 11 a.m. at that news conference. That is Brendan Murray, our trade czar. Now to other top stories trending on the terminal this morning. Stanley Druckenmiller calling Treasury Secretary Scott Bessent's plan to suspend billions buying back U.S. bonds a mistake. In a Wall Street Journal op-ed, Druckenmiller argues that policymakers should let the market do its job and said governments defending prices against fundamentals always lose. Druckenmiller mentored Treasury Secretary Bessent in his early career as a hedge fund trader. Volkswagen Labour representatives warned that the automaker's planned cuts could eventually affect as many as 140,000 jobs. Management has outlined cuts that could eliminate as many as 100,000 positions. Union officials say another 40,000 could go if certain factories close. Volkswagen CEO Oliver Blume is taking his restructuring pitch to workers at the company's main factory today. Bitcoin has climbed above 80,000 for the first time since mid-May, extending that sharp rebound. The cryptocurrency rallied more than 23% last week, its biggest weekly rally in about 3 years. Coming up, a deep dive on how the closure of the Strait of Hormuz could reshape supply chains and energy markets. That's next. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Mumbai. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. This week, Bloomberg is live at the Jackson Hole Economic Symposium. Tom Keene and Lisa Abramowitz, along with Michael McKee, will bring you news and interviews with Fed leaders, policymakers, and economists shaping global monetary policy. Tune in for continuing coverage and a special episode of Surveillance, August 28th at 9 a.m., including full coverage of Kevin Warsh's first speech to the conference. The Jackson Hole Economic Symposium on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. The closure of the Strait of Hormuz during the war with Iran has exposed the risks of countries and economies relying on one of the world's most important energy choke points. However, the market has proved more resilient than many expected. Bloomberg Intelligence examines how the world has adapted and whether it marks a turning point for global supply chains. Will Hayers of Bloomberg Intelligence joins us now for more. So, Will, have we seen peak Hormuz now?
So peak Hormuz we are viewing in the terms of dependence on Hormuz. We are seeing a very quick movement and adjustments from the Gulf states and companies to diversify and de-risk from the Strait. And this is coming primarily via pipeline expansions, storage facilities, and new port construction in and around the Strait and to bypass the dangerous waterway now.
Is it still necessary? I mean, all these choke points that we have around the world, and now we're finding ways around them. The UAE has a workaround, and Aramco is now operating a pipeline running across Saudi Arabia. If there were the possibilities for those before, then why did it take so long?
Well, so it's really a system of de-risking. So we're looking at a multifaceted approach to reducing the risk of that waterway. We're seeing some of that being within the strait itself. The U.S. Navy is conducting some convoy escorts and to varying success. We have seen reports of up to 10 million barrels per day being achieved from some U.S. government officials. We think that's probably a bit lower, but it will really be a multifaceted approach from pipelines, from some vessels transit, from some demand destruction, and a little bit of production increases outside of the Gulf.
We're basically pretty much through the quarter for the energy majors. What would you say would be a good summary of their comments about Hormuz, the state of Hormuz, and is there a consensus on strategy for dealing with it?
So the consensus from 2Q comments from the European energy majors was that they expect a intermittent Hormuz transits moving forward, and we think this is a pretty reasonable approach. It's not going to be anywhere close to where we were pre-war at 20 million barrels per day. We think somewhere around 5 million barrels per day. You might have some days that it pops up a little bit more, but their approach is going to be one of diligence and resiliency and discipline. They have removed all 3Q operational guidance from the Gulf. However, they're still doing very well in this environment. The operational impact that they sustained, this is Shell, BP, Total, really pales in comparison to the commodity price capture that they saw in 2Q, the trading gains that they made, which are very high, and of course the extraordinary refining margins that are flowing from the disruption of the downstream facilities within the Gulf.
All right, well, it is a fantastic report from Bloomberg Intelligence. I would urge everybody to read it, the current state of play, how Gulf countries have been adapting, increasing bypass capacity and so on to the Strait of Hormuz. That is Will Hares of Bloomberg Intelligence. Coming up, UK Prime Minister Andy Burnham planning for a trip to Washington. A look at what's making headlines in your front page news next. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Brief. I'm Vonnie Quinn in New York. Time now for your front page news. First up, the Financial Times reporting U.S. grain farmers in the Corn Belt are facing their worst crisis in 40 years as the Iran war sends costs of inputs from diesel to fertilizer spiraling. Heartland farmers already struggling after years of low grain prices. This pain all coming ahead of midterms that will determine control of Congress. Next up, the Washington Post on the Supreme Court easing a path for an executive order from President Trump that would impose sweeping new restrictions on mail-in balloting. The Post says it could inject fresh uncertainty into the already high-stakes midterm. Now returns to the lower courts. And Bloomberg reporting UK Prime Minister Andy Burnham plans to travel to the US next month to lobby President Trump to let Ukraine access some of its Patriot air defense missile stocks ahead of winter. Burnham told Bloomberg that European leaders are considering holding another coalition of the willing meeting around the UN General Assembly. Let's take a look at markets. We are seeing Nasdaq futures higher. The 30 lower, but more criticism today from Stanley Druckenmiller, no less, in the Wall Street Journal of Scott Bessent's plans. Gold holding on to gains for the most part, but just off its highs. All right, coming up, we're going to speak about all this to Henry Allen of Deutsche Bank.
Being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it, you know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A risk for Sino-U.S. relations. China defends its cooperation with Iran and warns against any disruption after the U.S. threatened Tehran's economic partners. Another response to Washington's trade pressure. Canada set to announce a range of measures to protect its citizens from 50% U.S. tariffs. And growing criticism of Secretary Scott Bessent's bond buying plans. His mentor, Stanley Druckenmiller, publicly calling it all a mistake. Let's take a look at futures. Nasdaq 100 futures bouncing right back. We've had 7 days of declines for NVIDIA, but it looks like the tide might be turning, at least on sentiment for tech stocks after a really down session yesterday for chips, with Nasdaq 100 futures pointed that much higher. It's across the board, though. S&P futures, Russell 2000 futures also rebounding. Let's take a look at yields, though. An absolute slap in the face for Scott Bessent today with a public op-ed in the Wall Street Journal by Stanley Druckenmiller suggesting that everything that Scott Bessent is doing is wrong-footed. Now, we do have the 30-year yield below 521 right now, down another basis point, down about 5 basis points from this time yesterday morning. Take a look at the 2-year yield, though, which is where everybody will be looking before we get Fed Chair Warsh's comments at Jackson Hole. Is at 422 and change. Now, we're also getting some positive sentiment feed through from crude prices being lower, down about 3%. Even Brent is below $90. But gold is still up there above $4,600. And Bitcoin topped $80,000 as this potentially debasement trade continues. Let's get to some individual market movers now with Chloe Melley.
Good morning, Bonnie. It is green across the screen for those chip stocks after some recent weakness. This is ahead of those NVIDIA earnings, of course, very important given that the company really is a bellwether for this AI trade. And it seems that there is some optimism, some enthusiasm there around this AI sector. And we are seeing the likes of Intel, Micron, and AMD also quite firmly in the green this morning. Moving on to Dick's Sporting Goods, which is also in focus ahead of earnings today. We had seen the shares slightly up. Now they are slightly down. The real focus for investors is going to be around the turnaround for Foot Locker. So there seems to be a little bit of uncertainty around what the company is going to report. And finally, let's go over to Poland, where CD Projekt, the video game maker, is down quite significantly this morning. The worst performer on the European benchmark, down about 6% after delaying the release of its latest game, The Witcher 4. And so we are seeing that really weigh on the stock with that delay.
All right, Chloe, thank you so much. Chloe Melley there in London. Billionaire investor and the early mentor of Treasury Secretary Scott Bessent, Stan Druckenmiller, saying his former pupil has made a mistake with his bond buying strategy. Druckenmiller writing in the Wall Street Journal, markets aggregate information no committee possesses, and prices are how that information reaches decision makers. The long-term Treasury yield is the most important price in the world. It is also the only fiscal disciplinarian the US has left. Every basis point of artificial yield suppression is a subsidy to procrastination. Joining us now is Henry Allen, macro strategist at Deutsche Bank. Wow, that is a slap in the face, Henry. Each sentence that I read there, and I would suggest there's even a veiled criticism of the Warsh Fed here too, suggesting that you don't need to tell markets that they need to make up their own mind about the data. Markets are the aggregators of information that tell you what to do. What are we to make of this op-ed today, Henry, and the idea that Scott Bessent's plans are just all wrong?
Well, it's certainly a striking piece. And in terms of what the Treasury have done, clearly there are always risks if you're moving in that kind of direction of almost like financial repression, really. And we've seen, obviously, even as long-term Treasury yields came down, there was a reaction in the price of other assets. We saw, for instance, the dollar depreciate. We saw investors move into gold at the same time as well. So it's clear that investors are concerned about financial repression. But at the same time, to be honest, I don't think you're in a world of debasement. I think that there's been too much of a narrative that there is this debasement trade that's back. But much as gold prices have risen, you're not seeing a reaction in long-term inflation swaps at the same time. If people truly believe that some debasement scenario was on the cards where the Treasury were going to inflate away the debt effectively, you would start to see long-term inflation expectations, particularly at like the 30-year horizon, move higher. That's something we haven't seen at all so far.
And as Bessent himself said, there hasn't been a single bond bought yet, right? This has just been announced. So the whole way this is playing out is really fascinating. If we take a look ahead to Jackson Hole, you're saying that there won't be that much that will come out of Jackson Hole. What would be the best case scenario for the market?
Well, I think the market is kind of craving certainty at the moment in the sense that Warsh has clearly steered away from forward guidance. He's been clear that he thinks there are downsides to that. So we're seeing more volatility introduced, whereby we're going into the next meeting with markets, just like in July, very unsure what the Fed are going to do. So that's introduced a regime with higher vol, and we know that more vol on the rate side has traditionally also led to more vol on the equity side as well. So from a market point of view, I think what a lot of people would love is the kind of steer that Powell gave us in the last couple of years, where he implicitly signaled that rate cuts were ahead. But given Walsh's very much, decried forward guidance, says how it locks the Fed into actions that might not be appropriate given later data, I think it's unlikely we're going to get that.
So with that and the core PCE, which we already sort of have an idea of how it's going to come in this week, that's two major risk catalysts out of the way, Henry, and we're in a low volume environment. But what happens to the markets then next week? Can we settle in and is it plain sailing for a little while then?
Well, I think it all depends how the incoming data comes in, because when you get into September, the kind of back-to-school season, we still have another CPI print and another US jobs report on the horizon. Some of the recent data has been on the more dovish side, but clearly, market pricing is still in the balance. So anything that risked a hawkish lean, I think would see that pricing start to tick up again. And one thing that we've pointed out is the risks definitely lie in the hawkish direction. If you look at the starting conditions for where the US economy is right now, in particular the fact that CPI and PCE inflation are both above 3%, in the past that's often been consistent with 100, 150 bits of hikes when you enter a hiking cycle. So it's clear that markets risk being caught off guard on the hawkish end, given we're in an environment of above target inflation, very robust growth data, very strong earnings, and very accommodative financial conditions right now.
Could we have some kind of a tantrum, either in the bond market or elsewhere? Christina Hooper of Man Group also saying today that, Washington becoming adversarial with its closest allies, levying tariffs and so on, with everything else that's going on, the US is just becoming a little bit less attractive and maybe even more unstable.
So we saw those similar themes around Liberation Day last year, where you had, not quite capital flight, but you had a situation where US equities, bonds, and the currency, the dollar, were all falling at once. And certainly what we're seeing is more policy uncertainty being introduced. But that's been a theme throughout the second Trump administration. That's not a new theme that has just burst onto the scene. So yes, tools like the Treasury buyback operation were definitely unexpected, but I don't think this is the start of some big sea change in economic policy making in the United States.
You do think the current equilibrium is inherently unstable, though, and you're sort of talking mainly, I guess, about the macro situation in the sense of if growth remains strong, then risk assets remain buoyant, and that creates its own problems, and then vice versa. If growth doesn't remain strong, that also presents a set of problems. Which is the more likely outcome?
I think the main risk is, fortunately, on the upside, where growth remains strong, earnings have been very buoyant, but the byproduct of that, if we see this buoyancy in markets, this strength for risk assets, accommodative financial conditions, is that inherently puts pressure on the rate side, which is kind of what we've been seeing a bit more in the last week or so, where investors are upgrading their future growth expectations. Companies, including in AI sectors, feel more confident to borrow. That increases bond supply, and you see that upward pressure on yields. You see that pressure on the Fed to hike. And we saw in the last hiking cycle in 22-23 how markets were caught off guard repeatedly by the extent of their hawkishness, and I think that's very much a risk again this time.
What about the US dollar weakening? I mean, we've seen about a percentage point of weakening versus the euro. It's definitely not anything extraordinary, by historical standards, but there is a signal being put out there by dollar investors and traders, right?
For sure, and if effectively the US Treasury are buying back long-end treasuries, pushing yields down, what you're seeing for foreign investors, who obviously buy a lot of US Treasuries, is effectively the FX-adjusted price of those is falling anyway. So even as treasuries rally with the yield falling, what you're seeing then is the dollar fall as well. So in FX-adjusted terms, that adjustment is taking place through the currency rather than through the price of the bond itself. So it's always hard, a bit like that article was saying, it's always hard to kind of beat the market because there'll be some other way in which the adjustment happens anyway.
Yeah, there's no bully like the bond market, right? Henry, what is the trade then? If all of what you just said comes to pass, even in the most benign scenario, what's the best way to take advantage of that?
I think the main risk is that growth remains strong. Well, clearly that's a good risk to have, but I think then the risk is that the Fed and other central banks are forced into a more hawkish hiking cycle than anticipated. So I think the risks are very much that they do end up hiking at the next meeting in September. We saw how negative the reaction in markets was to Walsh's last press conference, where he struggled to explain why the Fed hadn't hiked. I think the Fed won't want a repeat of that. So given the incoming data, given above target inflation, given that growth and earnings remain very strong, I think the risk is very much that the Fed are led into a more hawkish tightening cycle.
All right, Henry, thank you so much for joining us this morning. That is Henry Allen of Deutsche Bank. Now to other top stories trending on the terminal this morning. The SEC has sent subpoenas to major Wall Street banks regarding the hedge fund situational awareness. According to sources, the information being sought is related to the hedge fund's trading activity. A spokesperson for the SEC declined to comment. The Trump administration is proposing a regulatory process that would charge roughly $103,000 for each candidate a company sponsors for a new H-1B visa. The move comes after a federal court struck down in June an attempt to put a $100,000 fee on those visas. Smart ring maker Oura and some of its backers are looking to raise as much as $3 billion in a U.S. IPO. According to sources, the offering could come as soon as September. It would value Oura at more than $16 billion. The company filed confidentially for an IPO in May. Coming up, we know the rules of the game. A stark warning from Iran after the U.S. threatens its economic partners. We'll get the latest next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the skill set that you would advise every aspiring CFO to develop?
Psychology. I think analytical skills are important. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance. It's sort of like a recipe for disaster if you don't like numbers.
Not only for the CFO, but also the company's management. That's a communication and the collaboration.
I spend a lot of time figuring out how to take the complex and make it simple, and then finding a way to be able to communicate that both internally and externally.
I think it's relationships, whether it's working with investors, bankers, with the senior management team, with the board. Having your head down is one thing as a finance person, but keeping your ears open is super important as well. And I think that all of that is what kind of builds out being a successful CFO.
Watch Chief Future Officer only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Today, we're launching Operation Economic Outcast to foreclose every other option available to the Iranian regime. Treasury has mapped every node, every facilitator, and every network that Iran has used to smuggle oil and evade sanctions. Beginning today, the actions of Treasury and other agencies will tighten the noose and block every potential source of revenue that funds the IRGC and the evil Iranian regime.
That was U.S. Treasury Secretary Scott Bessent. Well, Iran's economy minister hitting back on those threats on state TV, saying, quote, "The U.S. wants to launch an economic terrorist attack against us, but we have our own tools and we know the rules of this game. This time, they should not think that our approach is purely defensive. They should also expect an attack from our side." Joining us from Dubai is Bloomberg's Abir Abu Omar. Little cryptic, Abir, what might this possibly mean?
Yeah, good morning, Vonnie. Unclear for the time being, but I mean, everyone feared a conclusion where if the U.S. were to establish those economic isolation plans that were laid out in Scott Bessent's press conference yesterday, that Iran may retaliate in some fashion. Now, there were some analysts that were saying that if Iran was essentially suffocated by this economic pressure, that it may retaliate against Gulf countries, taking us back to a scenario similar to what we saw at the end of February this year, of course, when this war started. But for the time being, you mentioned that Iran's economy minister comments. He also said that Iran is fully prepared to any scenario that the U.S. has when it comes to those sanctions. He said, actually, he gave a time frame. He said about 2 years, Iran can withstand those economic sanctions. And the sanctions that Scott Bessent had announced yesterday, of course, Vonnie, were widely expected. We widely expected secondary sanctions against Iran for countries that continue to do business, financial, trade transactions with it, namely, of course, China, despite the fact that Bessent did not name China. And we have reported, of course, that some of the sanctions may catch up with some Hong Kong-listed companies, but the U.S., of course, fell short from announcing any sanctions on major financial institutions within China that facilitate those trades. But then let's just remember that at the heart of all of this, we don't have clarity on what exactly those secondary sanctions will catch up with. We have an aggressive response from Iran, and then the issue on the ground remains, and that is the Strait of Hormuz. Both countries still have a chokehold over it. The U.S. maintains its U.S. naval blockade, and Iran still poses that threat on vessels that make their way through the Strait of Hormuz. And so let's just remember that despite oil prices not moving, or moving downward actually after that press conference when it comes to Brent crude, at the heart of the whole issue is the lack of movement in the Strait of Hormuz, that if it lasts for a while, will create more elevation in these oil and energy levels. And so that is the situation that is most pressing for the time being, aside from the back and forth remarks. And then the latest we have, and finally what we have, is the Pakistan Army chief was in Tehran, and there is a statement from some Iranian state media suggesting that there may be a fruitful conclusion to that visit. We don't know what exactly that means. They said wait for more details soon. So, of course, we'll watch out for that development and update as soon as it comes, if it comes.
Well, and of course, Abir, just on these potential secondary sanctions, we had China's foreign ministry saying earlier that it conducts Iran cooperation within an international framework and that its cooperation with Iran shouldn't be undermined. Is Iran quite confident, and I know you can't see inside any administration, but is there a quiet confidence there that China needs Iran, needs its exports, and no matter what the U.S. does, there will be some kind of workaround for Iran?
Perhaps that's where the confidence in the Iranian statement comes from, Vonnie. Let's again remember that China purchases about 90% of Iranian crude exports, and then you have the foreign ministry spokesperson in China saying that both countries operate within an international framework that does not essentially take any side, or that kind of ignores the U.S. And that, so you have from the Chinese side some pretty adamant statements about what looks like the fact that they will continue this relationship with Iran. And then we have to also bear in mind that the U.S. response to all of this came a little bit shorter from what analysts had been expecting in the lead up to it. Again, Scott Bessent did not name any country. He actually refused to name China when asked about it. And so perhaps there's a little bit of confidence in that statement. And then when you see what the narrative is from the Iranian side, it maintains that it will continue to do business as usual, and then it maintains that those crude exports will continue. But again, the situation on the ground, there is the reality, and there's a distinction to be made here. The situation on the ground for the time being is the fact that Iran's exports of oil have come to a near halt because of that U.S. blockade. So it remains to be seen.
All right. With the latest, as always, we have Bloomberg's Abir Abu Omar. Thank you. In Germany, Volkswagen CEO Oliver Blume telling thousands of workers earlier that half the firm's additional job cuts are going to need to happen within Germany. Bloomberg's Will Wilkes joins us now. It's a fascinating story. Oliver Blume trying to turn around Volkswagen as CEO, and this could now mean up to 140,000 job cuts. But he can't just order them, Will. What is he supposed to do? He has to get, leaders on board, Lower Saxony leaders and so on.
Yeah, exactly, Bonnie. He's not able just to order job cuts. Under German corporate law, the supervisory board of a company has to sign off on major strategic decisions. And on the Volkswagen board, the union and, as you say, Lower Saxony effectively have a blocking block where they can kind of frustrate Blume's plans. And they've just had this meeting, which is finished around an hour ago, and what seems to be coming out is there's a lot of heated words. The Labour chief is saying trust in Blume has been damaged. Blume is saying we have to press ahead with cost cuts. But there does seem to be potentially some landing ground around voluntary redundancies and finding alternative plans for the plants in question.
Yeah, it's fascinating because Volkswagen operating at a 30% cost disadvantage, let's say, to its rivals if this doesn't happen. I mean, even if this does happen, Will, and I don't know how you operate in the meantime, how is it going to get back into any kind of shape competition-wise?
Yeah, Volkswagen's got a difficult few years, which the union leaders are also pointing out. The idea that Volkswagen can hit margins of 8 to 10%, the union leader called Cloud Cuckoo Land thinking. Volkswagen, is facing US tariffs. It's got competition from new Chinese manufacturers in Europe, and it's also got declining sales in China. So it looks like for the next few years, Volkswagen, and as with many other global automakers, it's not just Volkswagen that faces these challenges. It's going to be very difficult for them to lift margins substantially. But Blume said it's urgent. We have to try. We need to push ahead with these cost cuts.
So at what point do we start seeing people calling for the German government to step in some way? And, what would that look like? Because it's clear Volkswagen can't continue, if it wants to be a global player in the future, it can't continue with this number of workers, right? And also the family is pushing for the cuts also because they want to maximize their dividends, and they haven't been doing that.
Yeah, well, it looks like the family has quite a major problem. These are the Porsche and Piech families that are Volkswagen's largest private shareholder. We've seen that the value of their holding is declining. They're under a lot of financial pressure. And I think more for workers and maybe more for the German state, this is an urgent problem for them. And that's why you're seeing kind of a pressure from them to Blume to crack on with the program. I think the German state is already part of Volkswagen through Lower Saxony, and what the German state wants is the best possible outcome for jobs. Obviously, German politics is very heated up at the moment. There's a regional election coming up where the far right might make a major breakthrough, and what the German government really wants to see is solutions found for workers that does not kind of heat up politics anymore.
All right, well, it sounds like a lot of cobwebs right there. William Wilkes, thank you so much. Fantastic story about Volkswagen. All right, coming up, the Treasury auction and Fed speak on deck. We'll have your day ahead next. This is Bloomberg.
The global economic playbook is being rewritten and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now look at what's ahead today. We do have some more retail earnings. We get Dick's Sporting Goods before the bell. And then we get some Fed speak. Richmond Fed President Tom Barkin speaking at 8 a.m. and also 4 p.m. Eastern Time. And there's a U.S. Treasury auction. The U.S. will auction $69 billion worth of 2-year notes at 1 p.m. Eastern. This is your macro picture going into the Wednesday session. Let's look at the 30-year yield. We are down another couple of basis points. We're actually below 520 now, though. All the conversation today around the water cooler likely to be about that Stan Druckenmiller op-ed in the Wall Street Journal, though, where he basically tells Scott Bessent to respect the bond market for what it is and the signals that it's giving you. This is it for Bloomberg Brief. Surveillance is next.
We actually just expanded the set of customers that have access to Mythos. I think it's about an additional 150 organizations around the world in 15 different countries. And really our approach to Mythos has always been, there's a time component to it. So we released it initially to cyber defenders. So some nonprofit groups, some governments, some organizations that are critical infrastructure for protecting against potential cyber attacks. And just like in any kind of security vulnerability situation, you have to give the defenders a head start. The technology, AI models are going to keep advancing. If it's not us, one day releasing a Mythos level model, another AI company will. But it actually matters who you give access to first and how long they have to patch some of the vulnerabilities that Mythos was capable of revealing. And so we're taking this very cautious, very tiered approach, which I know in some ways is frustrating because people really want access to the model. But I think, again, as a company that's founded on these principles of being ethical, being responsible, we felt it was important to give access to the organizations that were capable of really helping us defend against some of these risks, and then slowly widening that circle to more and more critical infrastructure until eventually we feel it's safe to release it more widely.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
The market's still far too complacent.
The markets are highly fragmented and stratified.
Investors are still underestimating the scale and scope of the AI revolution.
The big story here from the market's perspective is the largest companies in the world are still raising capital to increase that CapEx more, which is driving an unprecedented earnings cycle.
The productivity will come, but it's really hard to bridge that gap right now.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, firing warning shots.
Every country, every entity should know that they should be prepared to face U.S. sanctions. No one is above this. We are going to hold everyone accountable. No one should test our resolve.
The Treasury Secretary providing plenty of threats but minimal follow-through as Druckenmiller is pushing back against intervention in the bond market, and Canada is gearing up to unveil its response to 50% U.S. tariffs. The tension still rising.
And keeping this sort of uneasy calm in markets, you aren't necessarily seeing implied volatility pick up, but certainly the volatility in the rhetoric is escalating as ultimately we kind of build up to what's going to happen on Friday. This is ultimately a question of who is in charge here. Is it the market? Or is the market wrong? Is it going to be Scott Bessen's view of the 30-year Treasury, or is it going to be Kevin Warsh's view of the 30-year Treasury? Ultimately, right now, markets are watching with bated breath. How will Kevin Warsh respond, if at all? And in the meantime, yes, the threats and the stakes are rising.
Let's get to the pushback. Stanley Druckenmiller with this quote in the Wall Street Journal this morning. If the 30-year must trade at 550 to clear, that isn't a crisis, it's an invoice. Then do the only thing that durably lowers long-term yields, address the primary deficit. Let's park the AI. Sounds a lot like AI. Let's just run with the message. The message pretty clear from the former mentor of the Treasury Secretary.
Yeah, hey, Scott, what are you doing? I mean, ultimately, that was the message coming out of this opinion piece, and I love that. Let the bond market speak with AI, but either way, it was a very clear message. The point that you are making is a really salient one, and from that same piece, the long-term Treasury yield is the most important price in the world. It is also the only fiscal disciplinarian the U.S. has left. Ultimately, this points to the $40 trillion of debt the U.S. has, with the interest payments that are getting that much bigger as interest rates rise, and frankly, that much less productive since this debt is already spent. It's not going to some kind of engine of growth in the United States. Given the pushback, the question is why? Given the fact that Stan Druckenmiller worked with Scott Besson at George Soros' firm back in the day, they both started their career there. These are people who know each other well. To have this fight out in public is interesting.
There's one other name he worked with too.
Yes.
His name is Kevin Warsh, and he runs the Federal Reserve. Let the bond market speak sounds a lot like we're trying to get an unfiltered message from markets. The words of the Federal Reserve Chair, Kevin Warsh.
We had talked about who's correct. You have Kevin Warsh on one side saying, we'd like to hear what the bond market says, unfiltered. And then you have Scott Besson coming out and saying the market's wrong. And ultimately, it is being yippy or whatever. He didn't use that language. But we need to come in and sort of right-size some of the volatility. Well, it seems like Stan Druckenmiller is very much leaning on the Kevin Warsh side of things. Does it give him a little bit more space on Friday? And ultimately, you know, Scott Besson's a smart guy. What is he doing? I mean, there's nobody who's come out and said this is a good idea. Not one person have we spoken to. So I have to ask, why is he doing it? What is he hoping to accomplish?
There's a sense that maybe the president pushed him to go out there and do something. I don't know. But ultimately, the conclusion on Wall Street is as follows. Structural problem requires a structural solution. These are the words that jumped off the page for me in the Journal this morning. Democracies don't repair their finances because the budget office publishes a table. They repair them only when the cost of inaction becomes visible and immediate, when mortgage rates bite, when auctions tail, when the political price of a rising long bond finally exceeds the political price of touching spending. I'll make that very, very short. This needs to get worse before it gets better. It needs to get worse
before Washington starts to act.
It has to really affect people before it can become a campaign issue. There's a reason why my grandparents talked about the deficit and then everybody rolled their eyes for 2 decades, 3 decades, because it wasn't relevant, because it wasn't a concern given the balanced budget and then the fiscal overhang from really low interest rates. It's going to have to get worse before it gets better, and essentially, Stan Druckenmiller saying, let it.
Yields getting better this morning. We're down by 2 or 3 basis points, just about sub 520 on 30s, 10 at 467, 2s at 421. Coming up this hour, we'll catch up with George Concalves of MUFG with Treasury buyback plans facing a stark warning. General Karen Gibson of Academy Securities as the US launches Operation Economic Outcast against Iran, and the former Trump White House trade official Kate Kalukowicz as trade tensions heat up with Canada. We begin this hour with stocks higher and bond yields lower as criticism builds against Treasury Secretary Scott Bessent's buyback plans. Billionaire investor Stanley Druckenmiller writing in the Journal this morning, the government's defending prices against fundamentals always lose. Let the bond market speak. George Concalves of MUFG joins us now for more. George, good morning.
Good to be on.
Do you agree with Stanley Druckenmiller this morning?
I look at the bond market, and market forces should always kind of dictate where things head, and I think that is the right sort of course of action. But this is complicated. This is going to be a story that we're going to have, and we've had for years. We're going to have this into this election, into the 2028 election, into 2030. Like, our deficits are not getting any better, and yeah, this is a time to kind of reflect on it. It's not just the Treasury, right? This is a government-wide issue. We're spending too much.
You can't find fundamentals, seems to be the takeaway, and that's the argument so many people have made. 520 on 30s, is that the right clearing price? Do you also need to go higher than that?
Look, I mean, there's like a lot of different arguments about like what do rates reflect ultimately, and that you could say there's a fiscal term premium. There's a lot going on within like the composition of real rates are very high. But if you think about it, like inflation expectations are actually relatively contained. And that's the part that's really interesting to me. We're commanding a higher real cost of capital, which is, that's the clearing price. It's the real rate that matters more. It's a function of the AI spending. So that's almost like quasi-government infrastructure spending that's competing now. We have competition for capital, which we have not had for 20, 30 years. Sovereigns have not had to deal with a private sector that's competing for just as much capital as they are. And you combine all the things and you're like, what do rates really reflect? And they reflect that we do have a nominal issue. Our nominal growth is high because of the fiscal connection. It's not about fiscal term premium. Like, what's going to be interesting is, will the Fed ever come out and call that out? Will Kevin Warsh say that we have a fiscal issue that's driving the inflation side? It's not the private sector, really. A little bit from the private sector, but this is largely government spending.
My guess is he won't say that, particularly on Friday. I'm just going to throw out there and go out on a limb. I do think it's notable, though, how much Neil Kashkari and others have said the 30-year yield is fine. Where it is right now is totally normal with respect to where growth rates are and where other benchmark yields are. And ultimately, it isn't constraining the economy in an undue way. So why should the Fed care at all? What do you make of those arguments?
Yeah, so we're trying to think about what can happen on Friday. And ultimately, the Fed in the 1978 sort of version of its mandate does have this third mandate, which is stable long-term rates, right? If you really look at it closely, it's price stability, full employment, and stable long-term rates. Do you argue these are stable long-term rates? Are they volatile? Are they too high? I think any conversation around that on Friday could be market moving. So if Kevin Warsh comes out and says, look, we're watching the back end of the curve, I think that's interesting.
The fact that people are even speculating about this is the reason why the dollar has fallen out of bed in the past couple of weeks, the reason why Bitcoin seems to be flying, and the reason why people are all buying gold once more. I just wonder, to what degree do you pile into that, and to what do you think that the debasement fear is overblown at this point? Because we haven't heard from Kevin Warsh, and frankly, the Stan Druckenmillers are kind of his whisperers out there saying, maybe not so fast, guys.
In general, this is not QE, right? We have to really draw the distinction of what is happening from the Treasury perspective is not QE. And we like to conflate that because we've had this narrative for 15, 20 years that whenever there's a government intervention, therefore it's printing money. And that's wrong in our view.
This is the words of Druckenmiller that jump off the page to me too, Bramo. The 10-year yield, even after the summer sell-off, sits at or below the economy's nominal growth rate. We're running 6% budget deficits right now in this country, with above target inflation, and still funding ourselves at roughly the rate the economy grows. I'm paraphrasing Druckenmiller again this morning.
The bond market wasn't being a vigilante. I think we can agree with that. This was a major pushback in fixed income. Arguably, as he wrote, the bond market finally started to clear its throat, and even that was enough to get this Treasury to act. That's slightly disconcerting, isn't it?
Well, right, because what happens when they actually get a cold, right? What happens when the bond market or bond vigilantes actually do wake up? Frankly, what we have seen is almost accommodative, not exactly restrictive. And that's the other point that he was making if you take a look at the issuance. So at what point can things get restrictive before you have policymakers truly get nervous?
George, we'll have a list of things we'd like Kevin Walsh to say on Friday. What do you expect him to say on Friday into the weekend?
I do think this is an opportunity to, like, as I've been saying, flipping the script. I mean, Kevin's overall sort of approach has been keeping everything close to the vest and not really disclosing as much, not wanting to offer forward guidance. But there's task forces that are in place. They're collecting information. There's metrics. What is the progress on that? Give the market some meat, and I think you can kind of stabilize things. If you just kind of hide behind, we have nothing to say here, we're not really ready to, have a view on things, that's not going to cut it.
I'm sitting here this morning saying I'm quoting Druckenmiller, but I feel like I'm quoting Claude/Gemini/ChatGPT at the same time.
We had this discussion, does it matter? I mean, it's funny, but this is actually what we keep hearing about. I was thinking yesterday, I was having a conversation with someone who said one of the top people who we all listen to does all of their speeches through an AI agent that they have that talks to other of their AI agents in their voice and presents a speech. You start wondering, what's then proprietary about it, right?
Yeah, I don't know.
I'm not sure what the answer is.
I don't know how I feel about it. I just have to say it was a tough read. So I think it's important he signed off on it so that I know that they are the thoughts of Druckenmiller and he approves them. But at the same time, it feels like someone else has written it. And it feels like everything else I've read before, because there is no style difference. Do you know what I mean? Like, I don't feel like I'm reading and hearing Druckenmiller speak to me as I'm reading through the op-ed.
It felt like a petition that a group of economists publish in a major newspaper, and then they all sign it.
With no voice.
With no voice, but that ultimately is expressing a view. And in this case, I think the viewpoint is more important, which is that one of the luminaries of the field is going after his friend, Scott Bessent, and saying, cut it out, this makes no sense.
With some signature AI voice to it.
There was some beautiful poetry. I think that Claude is actually a poet.
If that means he really cares or doesn't care that much.
Maybe it was just expediency. I'm going to give him the benefit of the doubt. I actually think Claude is quite a good writer. There were some really good sort of turns of phrase in there that were unusual and poetic.
George, it's good to see you. Thank you. George Goncalves of MUFG. If you get to read the piece, it's insightful, important information there, important messenger in this conversation, but certainly it sounds a lot like AI in the Journal this morning.
Yeah, I would agree with that. I think that a lot of people ran it through filters and said 100% AI.
I saw the same thing, yeah.
And they all said, so students get dinged for this. That's okay for a hedge fund manager. It's like, this is acceptable, and maybe this is acceptable.
I saw a tweet from Citrini, a post earlier on this morning that said something like, Claude, criticize the Treasury Secretary, make no mistakes. And this was the piece.
Is that what's the relevant thing? Criticize the Treasury Secretary coming from him?
I think the relevant thing is the message, and the message is coming across loud and clear from Stanley Druckenmiller this morning. Let's give you an update on news worldwide. Let's get to your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. The U.S.-Canada trade war is escalating. President Donald Trump raising tariffs on imports of cars, trucks and auto parts from Canada to 50% starting January 1st. The president posting on Truth Social that Canada has been, quote, ripping off the U.S. for years. Canada is expected to announce retaliatory tariffs later today. An NVIDIA employee has been charged in Taiwan for illegally smuggling AI chips into China. 9 people were charged for allegedly selling advanced chips to Chinese customers, according to the Financial Times. Of the 130 servers, more than half were ultimately shipped to Chinese customers. Billionaire investor Stanley Druckenmiller pushing back on Treasury Secretary Scott Bessent's bond buying strategy. Druckenmiller, who mentored Bessent early in his hedge fund career, is saying policymakers should let the bond market, quote, do its job. And that is your Bloomberg brief. John.
Vonnie, thank you. Vonnie Quinn there with the latest. Up next on the programme, Operation Economic Outcast.
Why not impose the sanctions today?
We are giving everyone the opportunity to remedy bad behavior. Why would I want to blow up the global financial system?
The clock is ticking. General Karen Gibson of Academy Securities joins us next, live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Later this morning, 10 a.m. Eastern Time, we'll get a read on consumer confidence. Look out for that a little bit later. And then tomorrow morning, PCE data. Tomorrow also, after the closing bell, earnings from NVIDIA. NVIDIA, 7-day slide heading into results. Over that period, down by 7.5%. Over that period, it's losing more than $400 billion of market cap on that single name. Still a monster, but less of a monster after the last 7 sessions or so. Elsewhere in the equity market, we look like this. We're bouncing back on tech, on NASDAQ futures this morning. We're higher by almost 1%, on the S&P up by 0.5. In the bond market, 2s, 10s and 30s. Yields shaping up as follows. Yields lower by 2 or 3 basis points. 10s at 466, 30s at 520, and some pushback continuing to build across Wall Street.
Yeah, although a real question about why the Treasury Secretary would have to go with this type of measure, given the fact that a lot of the gauges that we've seen related to inflation have been going lower, right? Ultimately, how much is this really tied to Iran, to the prices of oil, and what happens there? And ultimately, if oil prices come down, are we not talking about record prices on the 30-year Treasury yields in the past 3 decades? Because ultimately, it really does come down to the backdrop of inflation.
It would certainly help if we could get crude prices lower. We're down by 3%. A break of 90 on Brent crude, 89.40 this morning, 82 on WTI. Under surveillance this morning, Operation Economic Outcast.
You described this as an economic D-Day, and the U.S. didn't give a timeline to Germany. So why not impose the sanctions today?
We are giving everyone the opportunity to remedy bad behavior. Why would I want to blow up the global financial system? We believe that it is important to level set and give people a cure period.
So here's the latest this morning. The Treasury Secretary, Scott Bessent, revealing his economic D-Day plan for Iran, threatening economic punishment for any of Tehran's trade partners while allowing time to shut down ties. Bloomberg's Tyler Kendall has more. Morning, Tyler.
Hey, John, good morning. Well, this marks the latest bid by the White House to pressure Iran amid these stalled talks. The Treasury Secretary went on to say that the U.S. has privately outlined defined timelines for individual trading partners to cut off all financial ties, saying if they don't, they'll face so-called secondary sanctions related to 5 critical areas, including technology, digital assets, gold, aviation, and shipping. He did say the Treasury is already working to sanction at least 60 individuals, entities, and vessels, and to expect a major financial institution to be sanctioned by the end of this week. Though, as you heard, he did acknowledge the apparent risks of moving too aggressively, saying that the U.S. is trying to give countries this time to remedy their bad behavior. It is, though, raising questions about whether the U.S. will hold China accountable, as it remains the top importer of Iranian crude to the tune of 90% of Iran's oil exports. And, John, we're now less than a month away from Chinese President Xi Jinping visiting here in Washington, and Beijing is already threatening retaliation. New this morning, we heard from China's foreign ministry saying that if the U.S. takes action, China will, quote, take all necessary measures to firmly safeguard its own interests.
Tyler Kendall with the latest in Washington. Tyler, thank you. Just to sit on that language, this is really important. There's quite a big tell in that very short exchange between the reporter and the Treasury Secretary. Why not impose the sanctions today, Bramo? The Treasury Secretary says, why would I want to blow up the financial system?
There's a lot of question about how far this administration is willing to go, especially when the main trading partner with Iran is China. Less than a month now before Xi Jinping comes to the United States to meet with President Trump on September 24th, exactly how far are they willing to go? Because ultimately, all fingers point there. And China issued up a pretty vociferous defense of their engagement with Iran with no plans to stop earlier, or at least overnight. So this is going to create a real issue for this administration.
Let's build on this. General Karen Gibson of Academy Securities writing, without coming down hard on China, the president's plan is unlikely to produce the kind of coercive economic shock he seeks. General Gibson joins us now for more. General, welcome to the program. Based on that exchange, how far is this Treasury, is this government, this White House willing to take things?
That's a great question, Jonathan. It's really the question of the day because, you know, as I noted previously, without imposing strict sanctions on China, we're not going to achieve the kind of economic strangulation or asphyxiation that the administration has threatened against Iran. It is very rare in any kind of campaign that your economic equities, your diplomatic investments, and your military strategic objectives are totally aligned. There's always some kind of tension and some kind of trade-offs that you have to make internally, and this is a tremendous illustration of that difficulty.
Overnight, General, we heard from Beijing saying that China's cooperation with Iran has always been conducted within the international framework and should not be interfered with or undermined. It went on to say China is closely monitoring relevant developments and will take all necessary measures to firmly safeguard its own interests. How do you read that in terms of the level of tension and how much it's rising?
Yeah, so it's interesting. All of these things are threats. So the U.S. is threatening to impose sanctions if other nations don't come on the line. China is threatening to preserve its own interests, and Iran has also threatened to retaliate. So really, with the exception of these 60 entities that have been identified for additional sanctions, we haven't seen real action yet. I think if we looked at what would China be willing to do, we should cast back to their threats or what the strong leverage that they had prior to the last Trump-Xi trade talks. And really there, it's largely still their control of rare earths, or I should say that's a very powerful disincentive for the United States at this time to rattle the cage or to really, you know, come in hard against China. Without China, we will continue to degrade Iran's economy. The blockade is having a significant effect, I think. Iran has an economy that's been built around sanctions evasion, but we are, you know, tightening the noose, so to speak. But again, that ability to completely cut them off, we just can't do it without China.
General Gibson, it strikes me that this is a pretty slow process, that Iran can withstand quite a bit of financial pain, already has for quite a period of time, but hasn't changed course. Does this just mean that the prices of oil and kind of the state of play in the Middle East is the new normal and is kind of what we can expect for the foreseeable future?
I certainly think over the near term, I would not predict a change. Any kind of economic measure that you impose on another nation takes a long time. The lag time before you start to see an effect, it's typically much longer than harsh, strong military action. I would say, you know, let's not forget, we will continue to sustain the blockade. We will continue to have this credible military presence in the Gulf. But yes, it's going to take time to see some kind of change with Iran. One other thing I'd point out, though, is that the diplomatic track does not appear to have been abandoned, even though both sides say they are not talking to each other. Iran is preparing to receive senior military leadership from Pakistan as interlocutors while they continue to work through what the relationship between the U.S. and Iran might look like going forward, how the strait will be administered, and again, ultimately, why we started this war in the first place, what happens with Iran's nuclear program.
General, I don't want to throw around reckless language, so by all means sanitize whatever I'm about to say. Is the U.S. in a Cold War with China? And is this regional conflict in the Middle East looking more and more like a proxy war?
Yeah, so I don't think so, actually. I think there are a lot of key differences between the Cold War that we had with the Soviet Union and the complex relationship with China today. The world economy is far more interrelated, although you could see some of those aspects fraying right now. Whereas during the Cold War, you had two very distinct spheres, NATO and the Warsaw Pact. The U.S. and its trading partners, and the Soviet Union and communist nations. We are much more integrated with China globally than the relationship that the U.S. and the Soviet Union had, although we are increasingly asking nations to choose sides, much as we had during the Cold War.
Do you think then that might be the direction of travel?
It's really hard for me to imagine such a bipolar world as we had during the peak of the Cold War. Again, there's so many ways that the world is integrated, both economically, digitally, information-wise. It's hard to imagine something as stark as that Cold War. And that's certainly not something that trading partners want, especially those in South Asia or Southeast Asia being asked to choose China or the United States.
And the Europeans for that matter too. General, appreciate your time. As always, thank you. General Karen Gibson of Academy Securities. There were plenty of threats into Monday. Plenty of threats. All the articles, the FT op-ed in the morning of yesterday morning talking about economic D-Day for Tehran. The Treasury Secretary stopped short, and there's a reason why. And it's the kind of integration that the General's talking about, particularly in a financial system.
It's a reason why the market doesn't believe this is going to escalate into something that truly is a Cold War, that could potentially even be a conflagration that is a hot war. People don't believe that it will escalate to that because it's sort of mutually assured economic destruction, and nobody wants that. So how much can these threats actually make a difference if people aren't buying them in the same degree that they might have maybe a year ago?
Let's hope we don't go that far.
I think everybody would agree with that.
We all share that view. Equity futures this morning on the S&P positive by 0.5. Up next, the former Trump White House trade official Kate Kalukowicz as trade tensions heat up with Canada. Plus, Yahira has your morning movers. NVIDIA looking to snap a 7-day losing streak, the longest since September 2022. The stock up this morning in the pre-market by a little more than 1%.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC. Africa CDC is the leader in terms of public health in Africa.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Stocks this morning bouncing back from yesterday's losses, up by 0.4 on the S&P, high by about 1% on the Nasdaq. For all the drama, the S&P still within 2% of all-time highs on the S&P 500. Those record highs coming earlier this month. In the bond market, 2s, 10s and 30s, lots of attention still on the long end of the yield curve. More data still to come in the next 24 hours. Consumer confidence later this morning at 10 a.m. tomorrow morning. PCE, the preferred gauge at the Federal Reserve. I should say, we think it's the preferred gauge for inflation at the Federal Reserve. Maybe that's changing.
Yeah, it could be that that's now less relevant because it's more dominated by AI-related spending, and now they're going to go to a mean adjusted CPI of some sort that is significantly lower. They're also rejiggering a lot of the data, so potentially we could get a lower print regardless.
These are things that if you're going to do, you've got to spell out really clearly and not just flirt with the idea of doing it. At a time when people are questioning your commitment to the inflation mandate, it's one of the errors that the Fed chair has been wrestling with, I think, in the past few meetings.
You know, it is true that when there is an absence of information, people fill it, and usually they try to make it sound as dramatic and juicy as possible. And the more sort of banal something can be, and the more you can kind of spell it out at this moment, probably the better, given all the conspiracy theories out there.
520 on 30s, actually stable through the month so far. Pretty stable, yields are lower on the month. That's all I can say. I know lots of things have happened to keep it there, but yields are lower on the month.
Yeah, well, the data's actually been disinflationary. So
retail sales,
all things being
PPI,
equal, jobs number, yeah, exactly. If all things being equal, we wouldn't even be talking about this. And ultimately, you could argue that the market is getting a reaction function and is actually gauging appropriately that September is probably a lot less likely.
Some people have criticized the Treasury action because it's put a spotlight, to your point, right there on 30s, when 30s aren't actually that important to the borrowing of this nation anyway.
They're a small portion of the overall maturity distribution in the U.S. government debt profile, but also they aren't as relevant to the U.S. economy. If anything, they're relevant to the U.S. housing market, which has been in the doldrums, has not exactly been a stimulatory aspect of the U.S. economy.
I think 30s, I think 20s and up is about 12% of the outstanding stockpile of debt. 50% is like 2s to 10s. About a fifth is T-bills. It's something like that. 30s really is not that important in the grand scheme of things. You wouldn't know that based on the action we've seen in the last week.
That's why I have to wonder if it's performative. If this is for another type of demonstration that doesn't necessarily speak to markets as much as something else. Because ultimately, Scott Bessent has to know this.
Yields down this morning by 3 basis points, lower across the curve. 3 hours away from the cash open. Let's get you some morning movers, some single names. Yahara has more. Hey, Yahara.
Hi, John. We are seeing NVIDIA shares moving higher this morning, up nearly 1.4%, looking to snap a 7-day losing streak ahead of its earnings tomorrow, and the bar is incredibly high. Analysts expect revenue to have nearly doubled from a year ago to about $92 billion, but even blowout results have not been enough for this name. NVIDIA shares have sold off after each of its last 4 results. Meanwhile, the risk on mood you were just talking about is extending across the entire AI trade, with the memory names and Intel rising after a rough sell-off yesterday. But the big test will, of course, come tomorrow with NVIDIA's results, especially for those memory names, since those stocks are pricing in a very tight market as memory prices have surged. So NVIDIA will be a key, its outlook will be an important test of the demand behind that tightness. And we are also seeing that risk on mood with SpaceX shares up nearly 2% in the pre-market after Elon Musk gave a more specific timeline when it comes to those data centers in space, saying that the first AI satellites are expected to launch on the 4th quarter of next year and scale significantly in 2028. And all roads lead back to NVIDIA, because remember, it is also a big part of this. Elon Musk has said that SpaceX will exclusively use NVIDIA technology for any space-based AI infrastructure. John?
Yahara, thank you. Thanks for the update. More from Yahara in the next hour. On our radar this morning, Stanley Druckenmiller calling Treasury Secretary Scott Bessent's bond buyback A mistake. Besson's former mentor writing in the Wall Street Journal, governments defending prices against fundamentals always lose. And elsewhere, the US launching Operation Economic Outcast against Iran.
Every country, every entity should know that they should be prepared to face U.S. sanctions. No one is above this. We are going to hold everyone accountable, and this is economic asphyxiation of this regime.
Besson sharing countries will have a specific timeline to shut down ties with Iran or face unilateral U.S. punishment. The U.S. set to impose a new tariff on Chinese goods, citing allegations of excess manufacturing capacity. Sources telling us here at Bloomberg, exact rates have yet to be finalized and negotiations are still underway. Things are getting interesting ahead of this meeting in a few weeks' time.
So some speculation is that that's about a 7.5% tariff on Chinese goods that are tied to excess manufacturing capacity, which would bring up tariffs to about that 20% level that China said is consistent with a trade truce with Washington, D.C. I just have to look through this in the lens of what we always see before Xi Jinping and President Trump meet, which is a ratcheting up in the tensions and the leverage nodes to try to get some sort of upper hand ahead of that meeting. Again, performative versus action. You don't see the pushback from this as much as you do other things. And so for this, it does seem more like a leverage issue than it does some sort of real hardening in the ties between these two countries.
Bramo didn't get up early to come in and talk about China and tariffs. Just for the record, Lisa wasn't even meant to be on the program at 6 a.m. Eastern time this morning. She saw the Druckenmiller Wall Street Journal op-ed and said, I'll have a piece of that. This is where Lisa's going to be a little bit later, 8:15 Eastern time, catching up with Scott Kirby of United Airlines. Thanks for giving us an additional Bramo hour to go through the Druckenmiller piece as well, Bramo. Looking forward to this later this morning.
Thank you. I am very curious to hear how he's seeing the path of travel since oil prices and crack spreads for jet fuel really have not come down. So how much the path of travel really is going to be continuing to be difficult for the airlines, and also some new destinations, and they're destinations you might be interested in.
Okay, what have we got?
Be great. I can't tell you yet.
Okay, that's actually quite exciting.
It's actually exciting, and it all points to a very different landscape for the airline industry going forward, which potentially could foster more vacation time.
Are you suggesting I might be switching airlines?
I'm suggesting that you might be mapping out future vacation plans.
Maybe.
But, you know, that's all up for a discussion later.
Asking me wants to buy the long bond, all right? I think we've got to just ask every single guest, do you want to buy the 30-year?
Yeah, I think that's a great idea.
Do you want to buy the 30-year bond yield?
Yeah, would you fly to Europe on a 30-year bond yield?
There we go. Looking forward to the conversation. 8:15 Eastern time, Scott Kirby of United Airlines catching up with Lisa a little bit later this morning. Lisa, thank you.
Thank you.
Safe travels. Let's talk about the president vowing to double the automobile tariff on Canadian vehicles and parts starting next year, escalating the spiraling trade war between the two economies.
If President Trump escalates, Canada needs to be ready to do the same. Everything needs to be on the table. We need to use Canada's many points of leverage to create maximum impact, targeting deep red states and making sure that America's economy feels the pain.
To dig deeper into this conversation, Bloomberg's Brendan Murray joins us from London now for more. Brendan, welcome to the program. I've got a simple question. I'm still waiting for a coherent answer. Why are we doing this? Why is the US going after Canada? Why are we in this fight?
Yeah, I think it boils down to a couple of things, really. One is that the president is about 2 months away from these midterm elections where there's a lot on the line, especially in border states with Canada, when it comes to sort of blue-collar jobs and creating manufacturing jobs. And so some of this has this political undertone of, look, we're standing up for our auto workers and our steel workers, and we're trying to reshore this production. That's part of it. The other part of this is Canada is really one of a very few number of countries that has basically said no to the Trump administration, which has gone around from Japan to South Korea to the European Union and the UK and said, you know, here's your tariff, congratulations, this is your deal. Canada has basically drawn a line and said, you know, we're not going to do that, particularly because the U.S. has as much to lose in some cases as Canada does. with these supply chains that run across the border. And so the answer to the question is, Canadians would say, why are you picking on us? You have China coming to Washington, the leader of China coming to Washington in less than a month now. Shouldn't your trade negotiators be focusing on the much bigger issue of China? But instead, Washington has picked this fight with Canada, which isn't backing down, or at least hasn't shown any sign that it's going to back down, and in fact is going to roll out some support measures for consumers and businesses today to help them absorb the shock of tariffs that took effect over the weekend.
So, Brendan, we got this fight. Lisa's calling it somewhat performative. You've alluded to some of that ahead of the midterms. How does it inform your outlook, influence your view of what negotiations, renegotiations around USMCA might look like?
Well, look, right now we're in this war of words, and the actual economic impact that's being hit by tariffs or threatened to be hit isn't that great. The President Trump has said, that these new tariffs will take effect the beginning of the year. That's a long time. There's plenty of time for the two sides to get back to the table. At the end of the day, the U.S.-Canada trade relationship has to get back to a stable level for both economies. The industries behind the fallout from these tariffs are going to go to their representatives and say, look, let's get back to the negotiating table. Eventually, the politicians will stop bloviating, and the lawyers will sit down and work this out.
Brendan, it's good to see you. Brendan Murray out of London this morning. To build on this, the former Trump White House trade official Kate Kalukowicz writes the following: this marks a considerable setback for the US-Canada relationship and creates further uncertainty for the USMCA review. Katie joins us now for more. Katie, welcome to the program. It's good to see you. Haven't seen you in a while. Do you think this is noise, or do you think this is genuinely news?
Well, I do think it's news. I think, unlike other tariff actions, we have a president who calls himself the tariff man. I think actually in this instance, he didn't want more tariffs with Canada. We saw a lot of developments last week that signaled that we could perhaps have seen a real outcome in these negotiations. And this is a surprise, I think, to the U.S. side, which was prepared to offer Canada real concessions. The Canadians, I think, have decided from a domestic political stance that it's more important to show some backbone to the United States. But I think in reality, the White House was prepared to make a deal with Canada. So now we really do risk this spiral, which could be a very big setback for the relationship, at least in the short term.
Well, let's deal with the starting point. So 50% sounds like a really large number on some goods. How much of the trade are we talking about that actually falls outside of USMCA is going to see a 50% tariff?
Well, it's a really good question, and it is, I think, the question about the impact of these tariffs. The tariffs that the United States has imposed cover roughly 5% of bilateral trade, so we're talking about a relatively small amount of trade. The Canadian Prime Minister, of course, has said he will hit back dollar for dollar, so we can expect Canadian tariffs to hit $20 billion of U.S. trade. So, we are tiptoeing toward a trade war. This is not a full-blown trade war, and I think that's important to remember as we think about the impacts.
Okay, the Treasury Secretary was asked about why he didn't go as far as he could go with sanctions on Iran, and his response was, I don't want to blow up the financial system. And I wonder if the same applies to USMCA. Are they really willing to blow up USMCA and blow up some of these industries at the same time?
I think the answer is no. And I think that both sides recognize, despite these very, very strong political tensions, how important and integral the U.S.-Canadian economic relationship is to both sides. So I think we will continue to tiptoe toward a bit more tension between the two sides. But I feel relatively strong that USMCA as an entity, as a system of rules that really helps the bilateral and trilateral relationship with Mexico continue, will remain relatively solid while we try to work this out directly with Canada.
Okay, out of interest, what do you think it will come down to? What is Trump Volume 2 unhappy with what Trump Volume 1 originally negotiated?
Well, I think these sectors that you saw the president identify in his Truth Social post yesterday are the sector of interest, which namely is automobiles, but of course the importance as well as some of the metals. The president has been very concerned and has articulated a view over time that USMCA is fine so long as we don't see third parties accessing the United States. So he will very much want to tighten what are called content requirements so that if a car enters enters the United States without a tariff, it really should be made from parts from the North American trading partners, not China. So as we move forward, a USMCA agreement really does need to include these content requirements to ensure that Canada and Mexico are the primary beneficiaries, not third parties.
Kate, it's good to see you. As always, no doubt we'll be catching up again soon. The former Trump White House trade official, Kate Kalowitz, there on the latest. If you're just joining us, welcome to the programme. Equity futures still elevated, bouncing back from yesterday's losses, positive by 0.4 on the S&P. With an update on news worldwide, with your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. U.S. diplomats evacuated before and during the war with Iran may be sent back to their posts in the Middle East. The New York Times reporting that the U.S. State Department is preparing to return the officers as soon as this week. Documents obtained by the Times may signal the White House doesn't expect fighting with Iran to reach previous heights. The U.S. Securities and Exchange Commission has reportedly subpoenaed major Wall Street banks over hedge fund situational awareness. Sources telling us here at Bloomberg, the SEC is seeking information on its trading activity after the fund was forced to liquidate positions amid last month's AI stock rout. Apple gearing up for its latest launch. Sources telling us here at Bloomberg, Apple plans to launch its first Mac Mini in 2 years. The updated machine is part of a wave of new products coming in the second half of the year. The new desktop is set to debut in the coming days. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. Thanks for the update. More from Vonnie in the next hour in about 30 minutes' time. Up next on the programme, Operation Bond Buyback.
We haven't bought a single bond yet. The next time we have an operation is September 9th. So we will see on September 9th.
Up next, Kick Juice of SocGen, live from New York City. You're watching Bloomberg Surveillance.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We are risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Here's the bounce this morning, up 0.4 on the S&P 500, by 0.9 on the NASDAQ 100. Within the NASDAQ, NVIDIA 7-day slide, the longest since September 2022. Going into earnings tomorrow afternoon. That's the equity story. Here's the bond market picture on the month so far. 30-year bond yields actually lower on the month by close to 8 basis points. Down another 2 this morning, 520 on 30s. What's notable, what's instructive here is not the level, not just the level, but how hard we're working just to keep it here at 520, and that's encouraging this move elsewhere. Gold so far this month, double-digit move. Could have the biggest monthly move for gold so far, going back to 1999. Down this morning, Bitcoin still positive. Bitcoin has absolutely been surging ever since we had that intervention from the Treasury Secretary, through 80K briefly and through to 3-month highs, back down to 79 this morning and positive on the session by 0.5. Under surveillance this morning, let's talk about it. Operation Bond Buyback.
We are going to continue with our regular program of auctions, so you will be hearing from us again at the beginning of next quarter. We haven't bought a single bond yet. The next time we have an operation is September 9th, so we will see on September 9th.
So here's the latest this morning. The U.S. Treasury Secretary Scott Bessent giving investors few details on further U.S. debt intervention as his former mentor Stanley Druckenmiller speaks out on buybacks in a Wall Street Journal op-ed calling the operation a mistake. Kit Jukes of SocGen writing, it's fair to conclude he isn't a fan of the Treasury interfering in the Treasury market. Kit joins us now for more. Kit, welcome. It's good to see you, buddy, as always. I've mentioned it a number of times. The takeaway for me is how hard this Treasury is willing to work just to keep Treasury yields where they are. How much harder is he going to have to work into year end?
They'll probably have to continue working. I mean, I think certainly one of the points that was fair to make is that Treasury yields aren't scary high relative to inflation and growth at this point in time. So if they want to keep them down, they'll probably have to keep working pretty hard. And we're going into a period over the next few years where inflation's going to be harder because the world's getting more split up. Less sort of unified on all sorts of fronts, so trade's more difficult. We've got populations which are aging less well than perhaps we thought, and that's going to give us increased healthcare costs and fewer excess savings floating around. So I think they've got a problem with the large deficits and large debt burdens that we all have for several years to come. And if you can't get inflation down and make investors really comfortable, then you're going to pay more for debt. I think that's a global problem, but the U.S. is, if you like, at the epicenter of it, and working hard. And I guess part of the point was, should you be fighting too hard to get bond yields too low relative to where your economy is?
We'll get to that point, and Druckenmiller alludes to it. Nominal growth is running at 6%. Budget deficits have been persistently at 6%, even though the backdrop for the economy has been good and unemployment's close to 4%. Kit, there is a view here that ultimately this bond market has barely sneezed yet, that at 520, that's not a major issue. That's hardly significant bond market pushback. Kit, which begs the question, what do you think is motivating the Treasury to act this early, this quickly, to intervene?
Well, part of it in my mind is that they want to keep control of it, and so far they're not doing anything very much. I mean, let's remember, this is management of the market rather than yet something that you might call intervention in the bond market. So, we'll have to see how it goes. I tend to think they're sending me a fairly clear signal that they'd like a weaker dollar. I think that's the signal that I'm getting from them that doesn't suit my forecasts or my assessment of where their economy is. But they've been successful at that. So I see this as just another way of getting a stronger yen, a stronger euro, a weaker dollar.
That's where the adjustment you'd think would have to take place. Kit, you called it a global problem. The dollar's a relative story. FX is always a relative story. Is pushing on the dollar the right way to deal with this from an investor standpoint?
It's a way, and I certainly think that it's probably something that suits America. It doesn't solve the problem for everybody else, but the dollar is overvalued on sort of long-term fundamentals. So that, you know, it's not the dumbest idea to be pressing on the. At least I'd prefer you were trying to push the dollar down than you were really trying to rig the Treasury market, which seems to me quite dangerous. But yeah, this is a policy the United States have. They've got the world's best economy of the major economies, and they've got the strongest currency, and they don't want the strongest currency. This is a way of doing it. I would view it more that way. It's difficult to navigate what it means going forwards from here, but they have a challenge if the rest of the world is going to be less keen than it used to be to hold quite as many U.S. assets.
So, Kit, what do you think the next step is for corrective action? We've had the announcement of doubling the buybacks. The buybacks haven't started yet. They'll begin in September on the 9th, I believe, the Treasury Secretary said. Kit, what do you think the next step will look like?
Well, if there is a big next step, it's when it becomes more overt intervention in the bond market rather than, if you like, duration management or management of the portfolio in the sort of normal operation of the Treasury. In other words, something that's unequivocally a step to intervene in the bond market that I would take as being dollar negative. That hasn't happened yet. And we'll have to watch and see if it does.
So we're waiting for the next quarterly refunding announcement. Potentially we're going to see them trim long-end issuance. That's the call for many people into November. November feels like a lifetime away. Before we even get to September, we've got to deal with Jackson Hole, Kit. What do you expect to hear from the Fed Chair Kevin Warsh after the controversy surrounding a few of his news conferences so far?
Probably, in his mind, a reaction to that in terms of something that's much more sort of articulating but possibly the need that, the economy's in good shape, it's in a good place, inflation's high but not out of control, they still think it's a temporary problem, rates aren't super low, that they're comfortable at this point with keeping rates where they are and being alert to how things develop and raising rates if they need to. If he sends out a message that is more about that than about how he wants to manage, if you like, FOMC meetings and the information we receive from it, then I think you take the focus off him. But I do think that we make a lot of fuss about it. What he hasn't scared yet are break-even inflation rates. So the market's not viewing the Fed as the problem here at this point in time.
Kit, it's good to see you, buddy. As always, Kit Juice there of SocGen out of London this morning. 30-year bond yields this morning down by 2, 10s are down by 3. Your 10-year at the moment at about 4.67. Up next, we'll catch up with Lisa Shallard of Morgan Stanley, Henrietta Trays of Vader Partners, Ted Mortensen of BED, Megan Swiber of Bank of America, and Danny Berger dropping by to run you through to the opening bell. We'll catch up with Danny in just a moment.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
What is a good speech out of Jackson Hole on Friday? I think everybody agrees that they want something from Warsh.
If he gives any commitment to keeping a lid on inflation, I think that would be very well received.
He needs to talk a bit about how he's going to approach reform.
Not talking isn't really working.
The best thing that he can do is to give some type of reaction function.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your price action scores look like this. Equity futures bouncing back on the S&P, higher across the board, up by 0.4 on the NASDAQ, up by 0.8 in the bond market. Yields drifting lower, down on the month by some 8 basis points on a 30-year yield, down by 2 basis points so far this morning at 5.20. Are we letting the bond market speak? The words of Stan Druckenmiller this morning in the Wall Street Journal: let the bond market speak. Some pushback against his former colleague, the Treasury Secretary Scott Bessent. Danny Berger joining us around the table. Danny, weigh in on the controversy.
I actually took another angle to this, that the bond market is speaking today. This was one of the analysis also from James Atkin of Atkin Advisors. If you have the ultimate bond market guru coming out and speaking against one of his accolades, and it doesn't sell off, maybe there's signal in that itself this morning that perhaps who is left to sell long-term bonds? If you have this dynamic brewing, if you have someone coming out and warning about something people have spoken about over and over again, maybe doing it through AI slop. I know you and Lisa spoke about it this morning.
It certainly looked like AI slop this morning, didn't it?
It does, but maybe there's signal that Druckenmiller is taking out of the market, that he can come out and speak about it this way, and bonds are rallying this morning. Maybe there is no one left to sell, and all the bad news is priced in.
Look, we're going into the buybacks in a few weeks' time. There is a sense that corrective action is just around the corner of the quarterly refunding announcement in November, and there might be more to come. I'm not sure how far you want to push this going into Jackson Hole. The next stop for this trade is really the Fed chair and Kevin Warsh, and Kevin Warsh is a few days away.
It is remarkable how many people want Kevin Warsh to come out at Jackson Hole and give some grand policy pronouncement, but it's always important to keep in mind that Jackson Hole has never been about that. Jackson Hole has always been big picture. So wanting details from Kevin Warsh might be a fool's errand at this moment. Maybe he will use it as an opportunity to clean things up, but again, Jackson Hole tends to be that big picture piece. So will we really get that from Warsh? I think it's unlikely.
Jason Thomas of Carlisle with this piece this morning. It reads as follows: will bond investors get their tour guide back at Jackson Hole? There is some doubt that that tour guide will return in a few days' time at the annual get-together in Jackson Hole, Wyoming. Stan Druckenmiller with this to say about the politics in Washington, and I endorse this view. He says democracies don't repair their finances because a budget office publishes a table. They repair them only when the cost of inaction becomes visible and immediate, when mortgage rates bite, when auctions tail, when the political price of a rising bond finally exceeds the political price of touching spending. The view there is a view I share. This has to get worse before it gets better. It has to get worse before Washington decides to fix it.
Well, wasn't that part of the issue with the Treasury Secretary acting anyway? Is there asymmetry that he knew about, that we didn't know about, that things are actually worse? And that's why he had to take the action he was going to. He inadvertently basically delivers the message that we are seriously worried about this, even if the rest of the market is not, but has no serious monetary or fiscal plans to actually take care of it. So he's dressing an asymmetry that he says is out there, but perhaps it's the way against him, that it's actually worse than we realized.
So 30s are at 520. We're down on the session by 2 basis points. We're down on the month by close to 8. To your point, yields have been coming in, and they have. The thing that we stated continuously on this program is just how much harder we're working over at the Treasury to keep them here, both in negotiations with Japan to give them access to a vehicle of the Federal Reserve so they don't have to sell dollar reserves, to intervene by announcing you're doubling the buyback. And the market's taking attention, taking note of when the Treasury Secretary acts and why, and how hard they've got to work to keep yields here, and it's pushing elsewhere. Bitcoin through 80K briefly, 3-month highs. Gold having a massive month, potentially the biggest month of gains on gold since 1999.
It's remarkable that the debasement trade has come back. And maybe you could also pair this with the actions in Iran, too. It's been said before, many times ad nauseum, especially post Russia's invasion of Ukraine, when you weaponize the U.S. financial system, you have this inversion effect where you basically get people to move away from the U.S. financial system. So this is not obviously what Scott Bessent wants to see by pushing these sort of actions, but it is the net effect of basically sacrificing the dollar and making gold stronger and Bitcoin stronger in its path too.
Gold this morning coming down by about 0.25% on gold. Your week ahead shaping up as follows. I mentioned Kevin Walsh speaking on Friday, some data in between, consumer confidence later this morning, PCE tomorrow. Then on Wednesday, NVIDIA. Danny, this will be a big story for you into the opening bell. Yes. 7-day losing streak on NVIDIA, the longest since 22.
Yesterday was especially painful, sold off nearly 3%. There was this narrative over the weekend that started to shape up. Sam Altman, I don't know if you saw this, gave an interview basically admitting that AI had been adopted less than he expected. The FT out with a piece that the highest ranking model from Anthropic, Fable, was being adopted less than they thought it would because people want cheaper open source modeling. So this narrative started to emerge of maybe this thing isn't being adopted as quickly as we thought, and the promise isn't there. And that could be bad news for NVIDIA. So when NVIDIA reports, it has to correct a market message that AI is growing and it justifies the amount of spending they're doing. It justifies them becoming the bank of NVIDIA. That's a tall order for them, but they have delivered stellar earnings in the past, so they could do it again.
NVIDIA reporting tomorrow afternoon. NASDAQ futures so far this morning higher by 0.8. Coming up this hour, we'll catch up with Lisa Shadid of Morgan Stanley as Treasury Secretary Scott Bessent leaves the bond market in limbo. Henrietta Trey's of Veda Partners on the escalating trade war between the US and Canada, and Ted Mortensen of Baird with NVIDIA enduring its longest losing streak since 2022 going into earnings. We begin this app with stocks inching higher and yields slightly lower. Lisa Shadid of Morgan Stanley writing, we suggest benchmark neutral duration positioning focused on 3 to 7 year bonds. Consider rebalancing fixed income as we expect policy-related volatility to remain above average. Lisa joins us now for more. Lisa, welcome to the program. The words of Druckenmiller this morning in the Wall Street Journal, I imagine you share them. Ultimately, it's a view shared by so many that we have a structural issue, it needs a structural solution. Do you see the intervention from the Treasury Secretary as simply just a Band-Aid?
Absolutely. Look, I think that a lot of what we're hearing from Treasury right now is absolutely politically motivated. I think there have been, comments already about, the strange timing of this announcement coming 2 weeks after the official Treasury refunding announcements, 3 weeks after the yen currency market intervention, and ending exactly 1 day after Election Day. So, look, jawboning can get us, just so far with regard to squeezing out the shorts, if you will. Secretary Bessent is a former hedge fund manager, so he knows about doing battle with trading desks. But I just don't think it's enough when you're talking about the global Treasury market.
Lisa, we've got some issues in the Treasury market. Do you think it's a problem for stocks or not?
Well, it hasn't been. And that has been, I think one of the surprises here. We've forcefully come through 4.5% on the 10-year Treasury. It really hasn't stopped stocks. And that was really for the past three and a half years of this bull market. That had been the sensitivity point. Folks are now resetting that bar higher, saying, well, maybe it's 5% on the 10-year. I mean, what's extraordinary about this cycle and the AI CapEx that's powering it is how interest rate insensitive that CapEx spending is. And so thus far, we have not seen rates put a brake on these equity markets. I personally do think that the reckoning around at least multiples, valuation multiples, is coming if in fact this 10-year pushes forcefully through 4.75 on its way to 5%.
Lisa, well, the irony of that infrastructure spending continuing is the fact that these are long duration stocks. Tech always has been, with the promise of future cash flow, and you just extend your duration. If you're making a lot of infrastructure investments, those tend to not do as well in a raising rate regime. Does that mean that when that reckoning happens that you talk about, Lisa, you would specifically be worried about these hyperscalers and the tech ecosystem?
So I want to be very clear. For many of the hyperscalers, they deserve to be interest rate insensitive because they've got balance sheets that are just rock solid. I think the broader tech ecosystem and even some of the small caps, that resilience, I think, is fragile. And I think a lot of the valuations that we're seeing in small cap land, that we're seeing in unprofitable tech land, that we're seeing across some of the semiconductor makers is quite fragile. I think it's one of the reasons that, over the last couple of weeks, we've had some tough days with momentum trade, with, some of the very high value parts of the market. That's where the vulnerability is. The hyperscalers actually, when all is said and done, have much more humbled valuations in aggregate versus the rest of the market and can probably continue to hold up here.
Lisa, does that mean that that part of the AI ecosystem, setting aside the hyperscalers for a moment, that they didn't have their moment of reckoning in the past month? That when all the selling happened, when situational awareness had their downfall, that wasn't a clearing event?
I don't think it was a clearing event. I think, as I said, I think it was maybe a clearing event for semis, which have struggled to regain former highs back to the June levels. But look, hyperscalers have been repriced as they've continued to spend. That repricing vis-a-vis earnings at the moment, for the most part, seems pretty reasonable. Remember, the Googles, the Microsofts, the Amazons of the world are extraordinarily cash flow generative. And so I think that they're going to be able to continue to spend, and their stocks are probably going to continue to be able to grind up even in the face of higher rates.
Lisa, some pushback in the credit market starting to emerge across some single names. We had a great piece on the Bloomberg terminal yesterday on Broadcom. Just gauges of credit risk on single names. Last year it was Oracle. Into this year it's still Oracle, but others are joining that list too, Lisa. What do you think the signal from credit is?
Yeah, so one of the things we've talked about that we've been cheered about is the return of risk premiums, right? So the market is being rational and starting to discriminate around the quality of balance sheets. The credit market is starting to signal concern about the rate of spend, even for some of these hyperscalers. And so I've been encouraged that there's been some very good discipline. And I think part of what we're seeing in the Treasury market, just to bring it back around to the original question, is price discovery and price discrimination across private capital.
Lisa Shannon with the latest out of Morgan Stanley. Lisa, appreciate your time. Thanks for jumping on this morning. On the Treasury market, the intervention from Besson and the pushback from Druckenmiller. There's a piece from Peter Buchweier out this morning, and the title is just wow. That's all it says. Wow's the headline. And on the substance, I've pointed to the same thing this morning. Many people will cover the relationship between Druckenmiller and Besson. I think they need to spend some more time thinking about the relationship between Druckenmiller and Walsh, who also were together. And this is Peter Buchweier's view. He says the following, that this piece tells me that Kevin Walsh is not on board either with the Treasury attempt to intervene in the market last week. And if this comes out on Friday in any way, shape or form, that's going to be more than noteworthy.
It absolutely will. I've seen kind of this connection made before, that Besson is more of a disciple to Druckenmiller, whereas Warsh, not exactly a peer, but something closer to it. So maybe the two are more aligned in their viewpoints. Does the Fed need to say something about 30 years? Maybe they do, maybe they don't, but it is this awkward thing where Warsh says, the market is giving us signal. What yields are doing are important. We're heeding it. Maybe it means we don't need to hike rates. Whereas Besson is saying something is wrong. They are too high. We need to bring them back in. So there's already a disconnect between the two, and maybe Druckenmiller just puts a bold understatement underscoring to that disconnect.
Detached from fundamentals.
Right.
That's the Besson view. That's not the Druckenmiller view. And this is what Warsh wanted to see, an unfiltered message from markets. And arguably this morning, he's not getting one. We're down 2 or 3 basis points on 30s to 520. Let's give you an update on news worldwide with your Bloomberg brief. Vonnie Quinn drops by. She's got more. Hey, Vonnie.
Good morning, John. The U.S. launching Operation Economic Outcast against Iran, targeting dozens of China and Hong Kong-linked entities to cut Tehran's financial lifelines. Treasury Secretary Scott Bessent is warning countries to cut ties with Iran or face U.S. punishment. China responding it will maintain its relationship with Iran. The U.S. Supreme Court delivering President Donald Trump a temporary victory on mail-in ballots ahead of the midterms. The High Court issuing a hold on a federal court ruling blocking key parts of Trump's executive order to limit distribution of mail. California Governor Gavin Newsom vowing to challenge the decision. The tech company behind Aura, the smart ring, is reportedly seeking to raise up to $3 billion for a U.S. IPO. Sources telling us here at Bloomberg that the initial public offering could debut as early as September, with a value of over $16 billion. The devices are used to track health, fitness, sleep habits, among other things. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. Thanks for the update. Up next on the programme, a trade war heating up.
An attitude at the negotiation table that Canada is a subsidiary of the United States. That's not something we're going to accept.
Prime Minister Mark Carney pushing back. We'll get the reaction from Henrietta Trays of Veda Partners next. Live from New York City this morning. Good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Stocks this morning positive by a third of 1%, bouncing back from yesterday's losses, following a week of losses last week, snapping a three-week winning streak. We're higher this morning by 0.75% on the Nasdaq, with Nvidia very much in focus, going into earnings from them in 24 hours' time. In the bond market, 2s, 10s and 30-year bond yields lower across the curve this morning. We're down by 3 on 10s, down by 2 on 30s, sub 520 on a 30-year bond yield this morning of 5.19, following the intervention, the verbal intervention from the Treasury Secretary a week ago. Risk appetite at the moment is still strong. Nominal growth is solid. We have every reason for higher rates. That seems to be the takeaway, the message from Stanley Druckenmiller in the Wall Street Journal this morning, echoed by Mike Wilson of Morgan Stanley. He's saying this: high rates are more of a function of strong nominal growth as opposed to anything else. And nominal growth, as Druckenmiller pointed out, Danny Berger's close to 6% and pretty buoyant.
Citi Global Economic Surprise Index at the highest since April of 2022. You could argue that this is very much so a good news story, and that's why yields are higher. I still really like the conspiracy theory that this was Druckenmiller testing the market to actually seeing if there were more sellers out there. And if that's the case, the verdict is that they're not. I'm quite entertained by that idea. And why not use AI if that's all you're trying to do?
I know, seriously, a serious ChatGPT/Gemini/Claude feel to the piece.
A lot of the it's not X, it's Y.
Do you care about that? Does that matter to you?
So I was thinking about this a lot this morning. It's not unusual to have high-profile people have ghostwriters for them, or to use an editor to really remake the language. So maybe it's more just efficient to use AI. I think you put it well with Lisa, though. It's kind of sad because you don't get the voice from the person, and that's the joy of reading something.
It just sounded like ChatGPT. 520 on 30s this morning, down by 2 basis points. Under surveillance, let's talk about trade. The trade war heating up.
We did make some progress in recent weeks. In the end, that momentum reversed, and we could not accept what the U.S. had offered, nor could we give what they asked. An attitude at the negotiation table that Canada is a subsidiary of the United States, that's not something we're going to accept.
So here's the latest this morning. Canada expected to announce retaliatory tariffs against the U.S. today after President Donald Trump vowed to escalate auto levies on the country to 50%. Tyler Kendall has the latest. Hey, Tyler.
Hey, John, good morning. Well, the threats keep coming as Canada is vowing to retaliate dollar for dollar after the U.S. moved to implement tariffs on $20 billion worth of goods amid the collapse in the talks. Today, Canada's actions are expected to hit U.S. sectors like steel, dairy, appliances, and electronics. And the country is also going to roll out a domestic aid package, which I bring up in part because a good signal that the government is preparing for the long haul, as it appears that we are moving in the opposite direction of progress. President Trump threatening this 50% tariff on autos after our understanding was the deal was poised to slash auto tariffs from 25 to 15%. As it appears, the nuances of that relief in particular, including that the U.S. didn't want to see it extended to medium and heavy-duty vehicles like trucks, ultimately led to an end in the talks. Now, Bloomberg News is told privately by some sectors, including U.S. aluminum and steel companies, that they are actually pleased with the collapse, as people familiar with the matter say that last-minute pressure from the U.S. Commerce Secretary Howard Lutnick, whose department oversees those sector-specific tariffs, ultimately helped to derail this process, though John, a White House official, does dispute that notion.
Tyler Kendall with the latest in D.C. Tyler, thank you. Henry Chase of Vader Partners has this to say: President Trump is escalating the threat in the hopes of causing de-escalation. A 50% tariff on automobiles and parts is extreme. Henrietta joins us now for more. Henrietta, welcome to the program. Noise on News. It's been a big part of the conversation for us this morning. What is the guiding light? What is guiding the administration in this fight with Canada?
Well, I think there's two different sides. On the U.S. side, I think there's a couple things. Number one, this is a great way to not be talking about the fact that gas is $4.09 a gallon. This is a great way to talk about the fact that we are at a 6-month point in the war with Iran. But it's also a great way to galvanize Republicans, voters, the MAGA base, the union voters, the steel workers, who have migrated away from, say, a Sherrod Brown-style Democrat in the state like Ohio towards this very confrontational, very aggressive attacks on global allies, global foes, whoever it may be. And they really very much like that. And the Trump administration is trying to turn out and galvanize those voters. So one of the data sets that I think is fascinating is to look at American approval of Canada. It used to be at 91%, right? Everybody in America liked Canadians. Now it's at 80%, and that drop is entirely MAGA Republicans who've dropped to a 62% support rate for Canadians because they like the fact that the president is being really aggressive. So this has an audience of one. It is the MAGA base. It is steered towards the steel and aluminum industries and also being confrontational to win an election.
Are we best friends after the midterms, or do you think this endures?
I do not think that we are going to be best friends after the midterms. Indeed, I believe that there are going to be another round of Section 301 investigations on excess capacity, as Bloomberg broke yesterday, and we'll start to see tariffs rise back up to their IEEPA rates. So if we're at maybe a rough net global rate of 7 or 6% right now, we should be back up into about a 17% range after the election. That's going to be the back half of Trump's term, and we should all prepare for higher tariffs.
Henrietta, you laid out the political motivation on the U.S. side to maybe be doing this now. What about on the Canadian side for Prime Minister Mark Carney to take a stronger hold against this president? We've seen in the past in places like Mexico where approval numbers politically can go higher if they do act out in a way against the president. Is part of that going out here that for Mark Carney, it actually benefits him politically to stand strong against the United States?
Yeah, Danny, you're nailing it. I mean, I talked with folks in the Carney administration. I talked with business lobbyists. I talked with the business groups that aren't even lobbyists, but just represent the, Ontario demographic of business owners. And they are saying we are behind Carney 100%. Quebec has elections coming up, and they're standing on principle for a two-language nation, standing up for that French heritage. This is gangbusters for Carney, and it's really more of a wartime mentality. Carney uses that kind of phrasing when he speaks publicly as well, saying, this is a war, we were attacked, we're coming in hot. And you can see the coordination with Doug Ford, for example, two guys that aren't necessarily always on the same playing field, and they are unanimously in support of what Carney is doing here. Walking away is just boosting his profile, rising his own political stature, and you can see it in the polls in Canada.
Henrietta, it's good to see you, as always. Henrietta Trace there of Vader Partners. The politics of this, it started in Davos, Switzerland in the last year. Back in January, you could see that Carney was going to take a very, very different approach to trade negotiations compared to other medium-sized countries.
And he gave that speech in Davos, which was all important about the middling nations coming together, various events, be it in the Middle East or these tariffs, have sort of enforced that idea of how important it might be. But to be clear, we have yet to completely see that. Throw in China as an issue, too, that a lot of these middling nations have been turning towards China, and the Trump administration wants them to cast it out. So there's a really complicated picture at this moment. But to Henrietta's point, politically, it does work well for Prime Minister Mark Carney to take this tact.
For both sides, for that matter.
True.
Up next on the programme, Ted Mortensen of Baird with NVIDIA, enduring its longest losing streak going back to 2022, going into earnings dropping tomorrow afternoon. Plus, Yohara has your morning movers. Shares of Dick's Sporting Goods falling after an earnings miss. That name is down in the pre-market by more than 14%. Live from New York City, you're watching Bloomberg TV.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story. This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
Pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Equities this morning positive by 0.4 following yesterday's losses on the tech side of things. 7-day slide on Nvidia, the longest since 2022. Chips had a difficult 24 hours as well. The Nasdaq bouncing back by 0.8%. In the bond market, 2s, 10s and 30s. A quick check of what's happening with the 30-year for you, settling down by another 2 or 3 basis points. Sub 520 this morning at 519.83. As we count you down to the cash open, 2 hours away, let's get you some single names. Some morning movers. Yahara has more. Hey, Yahara.
Hi, John. Dick's Sporting Goods earnings just out, and shares are plunging nearly 15% in the pre-market after it cut its full-year outlook. And the problem here was really Foot Locker, which it just acquired last year. Dick's itself had a very solid quarter. That was due to strong sales from the World Cup, but over at Foot Locker, comps fell 3.6% as the sneaker market became more promotional. As I said, it was a name they bought just last year. It was struggling then, still struggling now. Meanwhile, we are seeing Ferrari shares lower, down 1.7% after a sell-side downgrade this morning from buy to neutral from an analyst over at Banca Akros in Milan. The analyst says he sees limited upside after its recent run. This name up 16% year to date. Interestingly, this is the same analyst who upgraded Ferrari after the initial negative reaction after that Luce model came out in May. And the risk-on mood that we are seeing in the market is extending across the AI trade, with Intel and the memory names rising after a rough sell-off yesterday. But the big test will come tomorrow with NVIDIA results, particularly for those memory and storage names, since those stocks have been pricing in a very tight market as we've seen memory prices soar this year. So NVIDIA's outlook could be an important test of the demand behind that tightness. John?
Yahara, thank you. Thanks for the update. More from Yahara in the next hour. On our radar this morning, Stanley Druckenmiller, one of Scott Besson's former mentors, calling the Treasury Secretary's bond buying plan a mistake, writing in the Wall Street Journal, quote, governments defending prices against fundamentals always lose. Elsewhere, the president raising tariffs on imports of cars, trucks and auto parts from Canada to 50%. The president posting that the country has been, quote, ripping off the US for years. Canada is expected to announce retaliatory tariffs against the US later on today. And finally, the SEC is reportedly investigating Wall Street banks regarding the near collapse of situational awareness. Sources telling us here at Bloomberg that investigators are seeking information regarding the fund's trades and communication with lenders.
You would hope so. It's usually almost like 100% certainty that when a hedge fund blows up, that the SEC would do something like this. For them, it's going to be about going to their prime brokers and saying, look, you lent tens of billions of dollars via leverage to this fund, or you were interacting with that much. Were you appropriately pricing risks? Was everything right-sized? This is something you want the SEC to do, but if anything, it just underscores the amount of leverage that was being used in this trade and is commonly used in this too. You see it globally, from hedge funds to single-name investors to retails. But again, this, I think, should be viewed as a good thing, not an alarming thing.
They were long hardware, short software with tons of leverage, and things went the wrong way coming into the summer. It blew up. when it happened, people started to look at it as a clearing event. The Citadel had stepped in and we could reload everything and get long the chip again. Then we learned that Citadel actually took the opportunity to use the bounce to sell much of that portfolio back into that bounce. And I wonder whether that was actually a clearing event or not.
I think many people would say no, and the appetite is still there to really reload again for everybody else. There have been a lot of hedge fund appetite for these types of stocks to maybe create a mini situational awareness 2.0. I've talked to people about that, to go back in. So it's not like the Uber bulls have kind of been calmed and said, okay, this is a more reasonable market, let's ride this out. We just kind of climbed back up, and maybe the leverage climbed back up with it.
The next stop for this tech trade, Nvidia, looking to snap the stock's longest losing streak since 22 before reporting earnings tomorrow. Ted Morrison of Baird writing, component growth and pricing for AI infrastructure is inflecting with lead times. The street is worried about shortages starting in the fourth quarter of this year. Ted joins us now for more. Ted, good morning.
Good morning.
It's good to see you. So much to talk about. Is that a good problem to have?
It's a great problem to have. I mean, they've got pricing leverage and they've got more demand than they can fulfill. And I think you're going to see that in the NVIDIA report. I mean, most of the street is above 92 billion and 209 for EPS, and I think they're going to surprise the street on some very robust earnings and commentary.
So should we just reload and get long hardware?
Well, I think so. I mean, what I've seen, and I talk to PMs all day, is you've seen sector rotation. If you look at energy up 43%, healthcare up, that's where people are going. And the mutual funds have actually instituted a play of sector rotation that's based on inflation, and that comes at the expense, unfortunately, of semiconductors and in the whole scheme of things with the stocks, blowing through the 100-day moving average.
Ted, just how out of the ordinary is that to have mutual funds, perhaps this level of activity that you've seen in that type of rotation that they've undergone?
I've been doing this for a couple decades. The turnover on the mutual fund side, on the trading aspect, has been very much elevated because they're chasing attribution. Whether, I don't care if it's technology or healthcare or whatever, they've got to be very aggressive in moving in and out of certain sectors.
What does that mean in terms of what's mispriced in this market? If some of it looks more structural, of them trying to chase gains and fend off losses, are there parts of this market then that look fundamentally mispriced because of the behavior of the funds we've seen so far in the past few months?
I think the macro that NVIDIA is going to talk about, you're looking at $1.1 trillion of spend next year. That's up 40%. We haven't seen, that's historic. Look at this year, that's historic. So I think if you look at the AI trade, we're going to need a hell of a lot of components.
I asked you about tech, and quite often you quote the bond yield back to me. And it's interesting to hear that from a guy who covers tech, to be looking at what's happening with fixed income. How important are those developments in the Treasury market?
I think it's very important because when you have to fund, look what Broadcom just did, $100 billion. Look what Alibaba's doing. Look, everybody in the food chain has got to raise hundreds of billions of dollars to equate to a $1.1 billion spend next year. There's going to have to be funding. So with that, I think the cost of capital is, from a return on invested capital, is an issue. And that's why I've said, that I would not be surprised if the 10-year goes through 5%, because what I see is inflation on every single call. Look what NVIDIA just raised prices on Vera Rubin by 15 to 17%. It's everywhere.
Treasuries have repriced. Spreads are still tight.
Right.
On a single name basis within credit, you have started to see some pushback, let's call it that. Do you expect to see more pushback?
Listen, I'm a tech guy, so I'll watch the Treasury moves and the 30 and 10-year. I try to just focus on the fundamentals in tech, and they are robust. And quite frankly, I would not be surprised if you see a snapback in the stocks.
We're just trying to work out whether the capex cycle, which is increasingly funded by the debt market, is going to be compromised or undermined by what's happening in the Treasury market. And that has powered the profit cycle to some extent through this year too.
There's a new dynamic, and the new dynamic is political, and that's the midterms. And that's what people are really worried about on data center, not in my backyard. So if the Trump administration loses, control of both Congress and the Senate.
So just to jump in, the constraint won't be the cost of capital, the constraint might be the politics.
Yeah. And they, quite frankly, I think they're living on a different planet on reality. So.
Well, I had a conversation, I remember, with Brookfield about this big energy project they did, and they specifically did it on federal land. And I asked them, is that a coincidence? And basically the answer was no. Is there enough support they can get from the federal government to get around this, or are localities pushing back enough to derail this project of capital expenditures and data center construction that they're undergoing?
I think the whole political stuff is pretty much noise. I think we're very myopically focused on the U.S. only.
Right.
This is a global build. I mean, we haven't even started with sovereign builds yet. Look what's happened in the Middle East. I mean, they've got more free cash flow from oil than if this conflict would ever be rectified. They're going to build, and they're going to build hard in AI.
Ted, I'm going to be honest, when you say that, what comes to mind is China, a government that can have data centers built and not care about what the local politics of it might be. Does that also exacerbate the arms race going on right now between the U.S. and China, if China has the advantage of being able to build these data centers?
The biggest thing is access to power, and China's way ahead of the U.S., and that's our Achilles heel, is regulatory and political shenanigans.
Have your PMs had a summer? Are they rested?
No, I haven't taken any time off.
It's been brutal, hasn't it?
It has been absolutely brutal.
What's changed? What makes this so different?
I think that if you look at a portfolio manager, both from the hedge fund and the mutual fund, they have different models, right? And the mutual funds look over the long term, and the hedge funds are more near term. And I think the volatility in certain segments in tech has been so dramatic that they cannot take a time off. They have to be at their desk and looking at their core positions. I mean, look what happened to optical yesterday. I mean, we're going through one of the most defined secular moves from copper to optical, and optical just got absolutely obliterated yesterday, and nobody can figure it out. So that's what they're up against. It's a bad Ouija board at this point.
No rest.
No
rest at all.
No.
Ted, it's good to see you.
Good
Thanks for
seeing
being here, sir. One of my favorites, Ted Morrison there of Bed on Tech, with a long trade there, long chips. Looking for that bounce.
Can I just say, I think this idea of the cost of capital, even if it's not the most important, is really interesting. Also because you have NVIDIA essentially acting as a central bank and lowering the cost of capital for all these tech giants, which allows the spending to continue, which has been remarkable to see.
Broadcom doing something similar, offering some of these deals an IG wrapper in many ways. We've seen a bit of that over the last few months. And you're starting to see the credit market push back at single name levels, just increasing a dialing up the cost of insuring against some of those companies.
Of course, part of the problem, though, is a lot of this debt is increasingly being raised off balance sheet by private capital players. So you're not actually seeing what the price of that is and just how much debt is fully out there and appreciated by this market.
It's getting harder and harder to track, let's put it that way.
Yep.
Futures this morning positive by 0.4 on the S&P, with an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. The Trump administration is proposing charging more than $100,000 for many skilled worker visas, raising costs for companies using the H-1B program. The Wall Street Journal reporting the plan would cover more foreign workers already in the U.S., while exempting some universities and hospitals. UK Prime Minister Andy Burnham is planning to travel to the U.S. next month. Burnham will reportedly lobby President Donald Trump for Ukrainian access to Patriot missiles. Ukrainian President Volodymyr Zelensky is also looking to allies to replenish stockpiles ahead of this winter. A labor union is rejecting a tentative deal with Korean memory maker SK Hynix. The deal would have raised salaries and paid part of bonuses in company shares. According to a Korean news agency, 50.08% of union members voted against the deal. Negotiations are expected to resume. And that is your Bloomberg Brief. John.
Vonnie, thank you. Thanks for the update. Up next on the program, reshaping U.S. debt.
We haven't bought a single bond yet. The next time we have an operation is September 9th. So we will see on September 9th.
We will see in a few weeks' time. Up next, Megan Swiber of Bank of America, live from New York City. You're watching Bloomberg Surveillance.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years when I first became a congressman. It takes you a few months to learn the business and to make your connections, the network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Coming up later this morning at 10 a.m., we'll get some consumer confidence data for you. See if that bounces back with crude declining somewhat this morning, a break of 90. We need to see a lot more of that to help that and this PCE data coming out on Wednesday morning. Inflation, a major part of the story with regards to crude and regards to the bond market as well. Speaking of the bond market, the Fed chair speaking on Friday, Kevin Walsh, that's just a few days away. The price of bonds looks like this. Yields lower by 2 or 3 basis points on 30s this morning to 519.50. Your 10-year at 466. With those moves, equities elevated. We're higher by 0.4% on the S&P 500. On the Nasdaq this morning, higher by 0.9. Encouraged by this move in crude, it's a break of 90. We're at 89 this morning. Brent crude down by 3%. WTI, Danny Berger, WTI down to about 82.
There has been this idea that economic warfare means we won't have literal warfare anymore. And that is a boon to this crude market, to this oil market. There's also New York Times reporting out this morning that the U.S. is sending its diplomats back to the Middle East. So what you get is this picture of someone who declared D-Day but didn't act in a way that would suggest D-Day. You have diplomats maybe heading back to the Middle East, and you don't have a restart of kinetic warfare. That's allowing crude to come back in and benefiting the rest of the market.
The Treasury Secretary juggling a lot of things right now, and in some ways they're all connected. They're all connected to the price of US debt, whether it's Japan, the war, or intervening in the Treasury market directly.
And also especially crucial to the US dollar. I think this is what has gotten people worried, and the debasement trade come back up where you buy oil, where you buy gold and Bitcoin too. Is there a credibility issue here by using the US financial system in order to try to pursue these tasks, whether it be trying to bring back bond yields in, or be it to try to influence others to avoid Iran and not buy their barrels of oil? So you have this in an inverted effect where you try to protect the U.S. and you weaponize the system and you hurt the very system itself.
Crude down this morning, yields lower too. We're off by 3 basis points at the long end. Your 30-year about 520. Out of surveillance this morning, attempting to reshape U.S. debt.
We are going to continue with our regular program of auctions. So you will be hearing from us again at the beginning of next quarter. We haven't bought a single bond yet. The next time we have an operation is September 9th. So we will see on September 9th.
So here's the latest this morning. The Treasury Secretary, Scott Bessent, leaving markets in the dark on his plans to intervene in the US bond market. His former mentor, Stanley Druckenmiller, pushing back against intervention, saying policymakers should, quote, let the bond market speak. Megan Swiver of Bank of America writing, Bessent's buyback announcements may be only the first of several steps the Treasury could take to help lower longer-term rates. Megan joins us now for more. Megan, good morning.
Good morning, John.
Have you seen enough so far to get long the long end?
You know, John, I have been thinking back to the start of my career at the markets group of the Federal Reserve. And at the time, we were using buybacks really as just a test operation. And it was something that was used years ago to buy back debt if the U.S. government was running a surplus. We've certainly seen a very notable pivot from the use of that tool really only very sporadically and only in those cases to now it not just being a liquidity provision, but as Stan was talking about this morning, but to control longer term rates and market perception of that. We do think that rather than this being a full-on duration trade where you want to be long 10s or outright long 30s, the better way to do this is by being long 30-year swap spreads or 20s on the fly.
Just explain that and why.
Yes, yes. So when we think about supply dynamics in the market, there's a couple of ways to dimension this. And we can use Fed rules of thumb in terms of QE frameworks, thinking about we've got a stock of debt, we take a certain amount out, we should be able to see yields rally a certain degree. And we can run some of these frameworks. We're just looking at some of these numbers last night. And certainly when we think about reducing the amount of duration supply, that should bring 10s down. That's usually how policymakers think about this. But what Treasury's doing is very different. It's different in terms of the market signal. This is not changing markets' outlook for Fed policy and actually indirectly maybe supporting a more aggressive Fed. And it also creates a lot of this uncertainty from a fiscal policy perspective. Do investors now actually need to demand more compensation for owning the back end of the curve? If this is really just Besant's pet project and is not something that's going to have staying power from the next administration?
If there is an idea that vigilantes are out there, and I guess we could debate whether they are or not, there is some degree of elevated shorts in the CFTC, not crazy by historical standards, but they certainly exist out there. What would it take, and would it be possible for this Treasury Secretary to make enough announcements that it would scare people from shorting the long end of the curve?
So I think there's definitely steps that they can take, Danny. And when we're thinking about this, right, buybacks are now being used as this tool to reduce longer-term borrowing costs. But what Treasury could do much more directly is cut issuance at the back end of the curve. And this is actually something that the market, and we had been writing about over the past year in terms of looking at the fact that the weighted average maturity of Treasury debt outstanding right now is quite long. Treasury does have these tools and the ability to reduce issuance at the back end of the curve. I think that would send a more impactful signal to the market rather than just these buybacks. But the question is this more of a short-lived impact? And will it actually reduce 10-year borrowing costs? And when we think about the impact for the real economy, is it really the 30-year part of the curve that Treasury should care about, the 20-year part of the curve? It really is much more so related to the 10-year part of the curve, which really anchors mortgage rates, more so borrowing costs for the rest of the U.S. economy.
It's a great point. And that brings the question of why use this tactic anyway, and why do it outside of a normal quarterly refunding announcement too, when part of their function is to try to be more reliable. Is there signal in that itself, the timing of this message and the way they approached it?
And I think there so much so is because we're not really looking at a market that was seeing liquidity disruptions. It was much more so, in our view, a reflection of long end, reflecting higher real policy rates, reflecting higher uncertainty around what the Fed's going to do, what the fiscal landscape looks like. This was not disorder. This was not illiquidity. And the fact that we see buybacks, which were a stated tool by Treasury to manage that liquidity, is really taking this into a whole new world for thinking about how Treasury is going to be managing its issuance strategy.
I attempted to ask Mary Daly of the San Francisco Fed what this would mean for Fed policy, and she didn't bite. I imagine you will. How might this influence monetary policy?
So, John, all eyes are going to be on Warsh on Friday, and we know he's going to be talking. He gave us some wishy-washy guidance on that at his last press conference. He may focus on more longer-term, bigger policy themes. He may just kind of directly answer the question that the market wants to know, which is, what is it going to take for you to hike? What are some thresholds for thinking about inflation? How closely are you watching inflation? What metrics do you want to see there play out that would prevent you from hiking rates this year? I think if Warsh sends a signal to the market that he is focused on inflation, is going to be credible in his commitment to bring PCE, core PCE, back down to 2%, that really is going to also help flatten the yield curve. It will take out some of that risk premium that we've seen the long end trade with ever since that July press conference. So we are expecting much more of a strong message from Warsh, a clearer message from Warsh, I should say, that will help anchor those longer term yields and suggest that we do have this working together between Besson and Warsh to accomplish those goals.
Do you think they are working together? Because it feels like they're working against each other.
Yeah, you know, I think it's a great question. We don't know, but it almost kind of doesn't really matter, right? We've clearly seen Besson draw the line here and implement policy and make policy changes, make huge shifts in terms of how the market's thinking about what Treasury's role is. You know, historically, we've thought about Treasury as regular, predictable issuance strategy, and they're certainly changing that materially. And now it's really going to be on Warsh. Is he going to be sending a message of credibility, which will also help work with Besson on getting those longer-term borrowing costs down?
Work with me here, though, because there's another way of looking at this. To what extent do lower long-term yields, if Besson is successful, contribute to easier financial conditions?
And yes, and this is also complicating this fact, right, that Warsh is telling the market, I want to look at longer-term yields to give me information about how I'm setting policy rates. So to your point there is kind of this push-pull between what Warsh is looking at, what Besson wants to accomplish here, and it does reduce some of that information signal to Warsh in terms of the back end.
I only wish there was a Q&A on Friday, and unfortunately there won't be a Q&A. You know, when they go for that little walk together, they go for a walk and they get to the fence and they stare at the fields. I've been there, I've watched it happen.
Yeah.
It's a beautiful view. I understand why they do it. Need Bramo to run over to Kevin as it's happening and just ask
with
him.
Tom Keane in tow, yelling questions.
TK's not going to keep up.
Yeah, you're right on that.
Get over there with a microphone.
Lisa's a fast runner. I believe in her.
Bramo
I think
is
she could do that.
very
I think she
fast.
could get it done. Yeah.
Very, very fast. Megan, it's good to see you. Thank you. Megan Swiver there of Bank of America. Our coverage in Jackson Hole kicking off in a few days' time. Coming up next, Dan Suzuki of iCapital will catch up with the United Airlines CEO Scott Kirby. Bramo on the ground in New Jersey at Newark Airport, catching up with Scott in about 20 minutes' time. Look out for that. We'll speak to Rob Socken as well of PGIM, Dan Greenhouse of Solos Alternative Asset Management. The third hour of Bloomberg Surveillance just around the corner.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We are risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the skill set that you would advise every aspiring CFO to develop?
Psychology.
I think analytical skills are important. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance. It's sort of like a recipe for disaster if you don't like numbers.
Not only for the CFO, but also the company's management. That's a communication and the collaboration.
I spend a lot of time figuring out how to take the complex and make it simple, and then finding a way to be able to communicate that both internally and externally.
I think it's relationships, whether it's working with investors, bankers, with the senior management team, with the board. Having your head down is one thing as a finance person, but keeping your ears open is super important as well. And I think that all of that is what kind of builds out being a successful CFO.
Watch Chief Future Officer only on Bloomberg.
News whenever and wherever it happens. I'm Haslinda Amin in Mumbai. This is Bloomberg.
The market's still far too complacent.
The markets are highly fragmented and stratified.
Investors are still underestimating the scale and scope of the AI revolution.
The big story here from the market's perspective is the largest companies in the world are still raising capital to increase that CapEx more, which is driving an unprecedented earnings cycle.
The productivity will come, but it's really hard to bridge that gap right now.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your price action scores look like this. Equity futures bouncing back from yesterday's losses. In many ways, the week begins tomorrow. PCE data in the morning, and then NVIDIA results after the closing bell. In equities right now on the tech side, up by 0.9. On the bond market side of things, yields coming in again at the long end of the curve, down by 3. 519 on 30s, down 4 on 10s to about 465. The mood in crude is helping. It's a break of 90 earlier on in the session. 89 and down about 3% so far today. On WTI, 81 handle now and down by 3.6. Heading into this, I talked about what's going to take place in the next 24 hours, and then it's on to Kevin Warsh on Friday, the chairman of the Federal Reserve. His view on this economy, on monetary policy. We certainly heard from Stanley Druckenmiller and got his view on the Treasury market and the intervention from Scott Besson.
And maybe it's a view that Chair Warsh shares, that it is not the way that this market should behave, considering he sees signal, fundamental signal, that he is heeding in long-term rates. What will we hear from Kevin Warsh? It was just at the last presser, John, that he even said himself, I don't know what I'm going to say. I don't know whether this is going to be big picture. I don't know if it's going to be about policy for the rest of the year. He wasn't clear on that either. Jackson Hole traditionally has been big picture, but will it be different this time, considering the market reaction and the market commentary reaction to his performance at the July presser?
It was widely criticized in that news conference, and the fallout was so great that there was a cleanup act in the Financial Times where sources close to the Fed chair had to clarify his position on a number of things. Does he think that was sufficient, or does he feel the need to do it on the record in a big speech this Friday in Jackson Hole?
You'd have to imagine that maybe he takes a different tact, but his whole thing has been no forward guidance, less communication to this market. Maybe he feels a need to explain that more. I'm not sure, but if he didn't do that, that would be such a huge vibe shift from Kevin Warsh. It would be quite surprising, again, in a speech that's usually reserved for big picture talk. So we might get that from him, or a lot of people might be very disappointed that he still holds back from this market and how he's thinking about forward guidance.
He wanted an unfiltered message, his words, from the bond market. It's filtered now. The Treasury Secretary has intervened and told you that he wants to buy back debt to help get yields lower. That's the message, the signal from the Treasury Secretary in the last week. If the Treasury Secretary is successful and we see what might be perceived as an unwarranted easing of financial conditions off the back of that act, is that something that makes the Fed's life a little bit more difficult?
You'd have to imagine so, considering that this chair said that the market was doing some of the work for them and was helping to ease financial conditions. What happens when it's not doing that anymore, and doing so because this market moved based on what the Treasury has done? But are they talking together? Are we going to hear something of a Treasury-Fed accord? It could be more benign. It makes sense. Claudia Sahm was speaking about this yesterday, that you have an enormous pile of debt, so maybe it makes sense for there to be some conversation. Or is it less benign? And this looks something more like fiscal dominance. It's a question that we've been asking globally, considering the debt piles, but that just grows those concerns with the most recent action from the Treasury.
Does not look like they're on the same page right now, let's put it that way. Yields are lower this morning. Once again, we're down by 3 on 30s to 519. Coming up this hour, we'll catch up with Dan Suzuki of iCapital, with markets awaiting the US Treasury's next move. The United Airlines CEO, Scott Kirby, with the company embarking on its largest expansion in its history, and Rob Sockin of PGIM still expecting 3 interest rate hikes this year. We begin this hour with stocks rising and yields easing. Dan Suzuki of iCapital writing, the Treasury is fixated on lowering yields that its own administration's actions largely caused. Dan joins us now for more. Dan, good morning.
Good morning, John.
Has the Treasury done enough? Do you expect them to do enough to get yields lower?
No, I mean, what have they done? I mean, they told you saw what happened with yields last week. I mean, basically, they went down by 10 bips for a day and then went back to right where they are. I think, first of all, the sizes that you're talking are minuscule. You know, $64 billion a year. I mean, you got to put this into context. When we were doing QE, you're doing $120 billion a month, right? So we're talking about small percentages. They're still issuing like $100 billion of debt and then buying back 2 or 4. These are really small numbers. It's more symbolic than anything. And the thing with the TGA rumors, right? If they're going to use the TGA and draw that down, what does that mean the next time we have a debt ceiling issue? If you have less buffer at that point, the market's going to be more worried, and so you're going to put a bigger premium into the term premium. So.
That was clearly a story that was leaked to try and influence financial markets.
Yeah.
I've got no idea how much they draw down the general account. I don't think anyone really knows, maybe 100, 200 billion over what period. I still don't know. And at some point, you'd have to refill it and use T-bills to do so at some point. Is it significant to you that that story was even out there in the last 24 hours?
Well, I think it's a lot of like job learning. What can we do to sort of signal to the market that we care about this with actually not really doing anything? And I think this is another example of that. And so I think, I think Druckenmiller is right. I mean, this is all very temporary. The market's going to perceive it temporary. And, 6 months from now, they're going to look back and say this didn't really have an effect unless they really ramp things up, which would be a big change.
Dan, is there a risk in the ramping things up that we go full-on emerging market, we do yield curve control, we crush the dollar, we ignore CPI, run it hot, and try to grow our way out of the deficit?
I mean, incrementally, that's obviously the direction that we've been going with all of the sort of policy, and I think that's what the issue that you're dealing with is the market doesn't really like that, right? And so your bond vigilantes are back for the first time in decades. And on the top of that, you have bond vigilantes, you have AI vigilantes. I mean, it's a tough time with the amount of supply that's coming to market. Yields are going higher, and I think we're just in a higher for longer yield environment. The good thing, though, I think as we get to the back half of the year, given how much yields have run, I think there's a decent chance that yields will actually come back down, presuming that the Hormuz at some point Strait of Hormuz starts to open up. If you don't get that, then I think it's like anybody's game. We could bust through 5%.
I mean, the inflation data has been cooperating. Things
now,
have started to look weaker. You think that that's just temporary then?
I think the biggest swing factor with inflation in the near term is going to be what happens with oil prices, right? And so we don't know what that's going to look like. But if oil prices stay close to $90 for another month or two, I think inflation will start to come back, move higher, and then the Fed's going to have to start hiking rates at some point.
You said it. It's in your notes. Great note, by the way. There's a higher structural floor now for inflation.
Yeah.
To extend that, is there a higher floor for bond yields too?
Yeah, I think they're very tight at the hip, right? And so, and this is right. You have to separate the structural from the cyclical. Like I think the growth is going to slow. If it slows more than expected, then that's going to be a nice pull down for yields and inflation. But barring that, I think the structural forces between deficits, inflation, deglobalization, demographics, all these things are putting a structural floor on inflation and therefore rates.
So if you're looking at equities eat nominal growth. Right, nominal earnings. Is that a good backdrop for stocks?
It can be to a point, right? But I think, clearly, if you look historically and you just ran stocks versus rates, you'd be like, oh my gosh, stock returns are great when yields are higher. But that's because of the growth element. If you get the worst case scenarios like moderate growth and higher rates, that's not a good scenario for stocks. And that's kind of what you risk with sort of the secular forces for inflation. Next time we get a slowdown, you get more of a stagflationary-like scenario.
What does that mean then if stocks start to take a hit at the very time that you start to see the cost of capital creep up and you have all of these big tech giants needing to issue into the market in order to fund this project that they're undergoing and all of their future growth is now pinned to?
This is all very chicken or the egg, right? I mean, what's causing what? I mean, the amount of supply, I mean, Besson talked about this, the amount of supply coming from the AI funding is also what's driving yields higher, causing, you know, all these inflationary impacts. So, yeah, this is all coming to a head, and if this continues, the market's telling you that there's going to be pushback from, again, the AI vigilantes and the bond vigilantes. They're getting married.
Can you explain the concept of the AI vigilantes a little bit more? What exactly you mean by that?
I mean, you had a little glimpse of it in 2022 with the metaverse, but like you're seeing it front and center now. You know, you can't just spend with no abandon, right? The market wants to see real evidence that the spending is it's getting return. It's turning into margins, turning into profits, turning into free cash flow. And so that's what companies are starting to realize, that that's what the markets wants. And you're seeing them sort of adjust how they communicate and how they budget CapEx going forward. That's the CapEx vigilante story. Because if they just start spending with no return on that investment, you're going to see the stock prices punished. And you saw that during parts of earnings season as well.
Dan, it's good to see you. Yeah, always good to catch up. Thank you, buddy. Dan Suzuki there of iCapital with NASDAQ futures bouncing back 0.9 this morning. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. U.S. diplomats evacuated before and during the war with Iran may be sent back to their posts in the Middle East. The New York Times reporting that the U.S. State Department is preparing to return the officers as soon as this week. Documents obtained by the Times may signal the White House doesn't expect fighting with Iran to reach previous heights. The US-Canada trade war is escalating. President Donald Trump raising tariffs on imports of cars, trucks and auto parts from Canada to 50% starting January 1st. The president posting on Truth Social that Canada has been, quote, ripping us off for years. Canada is expected to announce retaliatory tariffs against us later today. Volkswagen's union is warning the automaker's job cuts could reach 140,000 as CEO Oliver Blume pushes a major restructuring in Germany. The cuts aim to lower costs in order to compete with electric vehicles and Chinese rivals. Labour leaders continue to threaten strikes over possible plant closures. And that is your Bloomberg brief. John.
Vonnie Quinn. Vonnie, thank you. Thank you for the update. And thank you, Danny Berger.
Thank you very much for having me.
Get you up to speed for the opening bound in about 50 minutes' time. Danny, thank you. Up next on the programme, we'll get you some morning calls. Plus, we'll catch up with Bramo. She's on the ground, catching up with the United Airlines CEO, Scott Kirby, as the company announces the largest expansion in its history. That conversation up next, live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
What's extraordinary about this cycle and AI CapEx that's powering it is how interest rate insensitive that CapEx spending is. The market is being rational and starting to discriminate. The broader tech ecosystem, that resilience, I think, is fragile.
That was Lisa Shallard of Morgan Stanley weighing in on this market in the CapEx cycle a little bit earlier on this morning. Your price action this morning, and good morning to you, looks like this. Equity futures bouncing back by 0.4 on the S&P, on the Nasdaq higher by 0.9. On the Russell, the small caps higher by 0.7. That's the equity price action. Here are your morning calls. Your first call from Mizuho, cutting its price target on Micron, citing multiple compression from memory constraints. That name's still firmer in the pre-market by close to 3%. Your second call from Susquehanna, raising its price target on Marvell, expecting strong earnings driven by AI networking strength. That name is up by 3.5%. And your third and final call from Raymond James, raising its price target on NVIDIA, saying its CPU business is gaining traction and will boost revenue. That name is up this morning by 1.3%, following a 7-day slide, the longest since September 2022, going into earnings in about 24 hours' time. That right there, 3 of your morning calls into the opening bell. Elsewhere, United Airlines announcing its largest expansion in the company's history today, unveiling new destinations and debuting its latest aircraft. Bramo has a special guest, and she's over in Newark. Hey, Lisa.
Hey, John. Yeah, since I left you, I came over here to Newark, to the hangar with a new XLR plane. And of course, Scott Kirby, the Chief Executive Officer of United, announcing 10 new routes. And I was looking at these routes: Ibiza, Bilbao, Toulouse, Okinawa, Valencia. I mean, it's a list of where in the world might you want to go. Is there a renewed emphasis on international and vacation types of destinations for United?
Yes, there is. I wouldn't. It's not just renewed. We're the largest international airline from the U.S. by a pretty wide margin, and we're continuing to grow. What we've realized is, as we built a brand loyal airline at United that customers love and that customers want to fly, it allows us to open up new destinations to Americans around the globe, and it's been really successful. It's an exciting day for us. 10 new destinations around the globe in a single day. I don't think any airline in history has done something like that. And it's going to be a great summer ahead for our customers and our employees next year.
In the past 5 years or so, there has been this huge expansion in the total revenue that United derives from international relative to domestic. Do you expect that to be the path of travel going forward? That will continue?
Yeah, I think our growth rate internationally is going to be, significantly higher than domestic. We have great hubs for it. We were born on third base for international expansion. Newark is a phenomenal hub. It's the best hub for flying across the Atlantic. And now that the FAA, has really taken steps with slot controls and staffing, Newark is now the most reliable of the 3 New York airports. First time that I know of that's happened. It really enables this kind of expansion.
Regardless of traffic patterns, you're still trying to expand at JFK. And I have to say that trying to get out there these days with the traffic is a notable feat. But you are planning to continue the expansion there with the JetBlue partnership. And even beyond that, how's that going? Kind of where are you in the process of that?
We get our slots next year to get back into JFK. It'll probably be the second half of the year. We've got aircraft delivery delays also, so we have to wait for Airbus to get the deliveries in time to have lie-flat seats on all those aircraft. But we're excited to get back into JFK and fly the transcon markets sometime next year.
Last time we spoke, you have been talking about the resilience of the U.S. consumer and how much people have adjusted, continued to want to fly premium. That's been one of the fastest growing areas for the network. Has that continued, or have you seen any shift in that?
Yeah, demand is strong really across the board, from premium all the way to basic economy. We really haven't seen any cracks in demand. And the economy, every time I talk to you, I say the economy is held up better than the pundits would have thought, and even than I would have thought, given everything that's happening in the world. But consumer demand is really strong. We are a very good real-time indicator of what's happening with the economy and how people feel about the economy. And demand is strong. I looked at the bookings for yesterday, this morning. Demand is strong all the way through yesterday.
So if you put your economist hat on,
Yeah.
do you have a sense of, or how would you characterize things? Are things heating up? Are they slowing down? Are they staying at sort of a stable, strong level?
I'd call it stable. I think the economy is not, I really don't see any places of weakness. But, it feels a little tentative, when you think about some people worried about, is AI, a bubble, fuel prices, like, all interest rates, all of that sort of, it feels a little tentative, but the party's still going and people are booking. Demand is strong. It's business demand, it's leisure demand, it's premium, it's economy, really across the board.
One thing that we have seen is jet fuel prices came down briefly, and then they've been going back up. And even though crude prices haven't necessarily remained as elevated, jet fuel has.
Yes.
Are you still on track to offset any increase in oil prices through price increases for fares through the fourth quarter of this year?
I believe we are. And the good news for us is, really since mid-March, this is what we've been planning for. We said back in mid-March that we thought oil had a good chance of being higher for longer. It seemed hard to me to think that the Straits of Hormuz were going to be reliably and sustainably open. I continue to think that. I continue to hope I'm wrong. But that are getting oil out of the Gulf and from other places to the market. And so given the closure of the Straits of Hormuz, I think oil has, while it's elevated, has been less elevated than it could have been. And I think we'll continue to see that, at least I hope, we'll continue to see that trend going forward. More and more oil getting to the market through other means.
So do you think that jet fuel prices where they are seems about normal at this point and can be sort of the path of travel?
I think they'll probably trend down from here. I don't know. Obviously no one knows, but I think they're likely going to trend down, spikes up and down. But I think the trend is down. I don't think we're going to get back to where we were to start the year, at least through the end of 2027. I think they're going to be elevated, for at least another year.
Shift increasingly international. How much have some of the international conflicts affected travel patterns, whether it's to and from the Middle East, whether it's from Canada to the United States, given some of the tension that we've seen between those nations?
It does have an effect. We're the biggest global airline. We fly everywhere, so every time something happens anywhere in the world, it has an impact. The Middle East was probably one of the biggest, specific impacts. But it mostly just wound up with travel going elsewhere. Instead of going to the Middle East, customers went somewhere else. And so I'm not sure that it was a net as big of a negative as it would have appeared because of that. We see less demand from Canada, when stuff like this week, my guess is this week we'll see less demand. But it came back. We saw it a year ago when the first tariff stuff started. We saw it fall off, but then it had gradually come back, and we may see it again this week. But with all that's happening around the globe, like those tend to be blips in the grand scheme of things for how big we are.
Have you seen European travelers come back to the United States?
Yes, but it's smaller. I think it's more driven by their economies aren't doing as well, because I think that's driving it more than any don't want to come. In fact, the World Cup, I loved the World Cup. That was awesome. But I think the best thing about the World Cup to me was all the stories about people from around the world coming and saying America is awesome. I mean, America is awesome. And when people come here, I think they realize America is awesome. But I think the economy in Europe is not nearly as robust as it is here in the United States. That probably drives more of the demand equation than...
John and I have joked about having a travel show, along with our former co-host Tom Keene, going around the world, depending on currency differentials. It would be fun, and I'm sure that you would really enjoy partnering. But there is this question about how much currency differentials are driving travel. I think about the Japanese yen, and suddenly Okinawa is on your destination list. I mean, how much is a currency differential driving certain traffic patterns?
I think Japan is the one place where it actually is driving traffic. Mostly it's at the margins and doesn't really drive much, because we carry people both directions, If it's good for U.S. citizens to go to Japan, it's harder for Japanese citizens to come to the U.S. So those have a tendency to balance out. Japan is the one place that I think currency has made a difference. And Japan is hot for demand now. I mean, the number of people I know, go to school with my kids that have gone to Japan for vacation is off the charts. And, we've now added Sapporo and Okinawa. It's pretty amazing flying to all those cities in Japan.
How fungible are these routes? Are these routes going to be permanent fixtures, or are they potentially sort sort of test runs and then can be shifted to other places or substituted?
Well, the golden rule of an airline is don't fly places that lose money. A lot of airlines violate that rule, and that's why they're in trouble. But we don't fly places that lose money. So I think probably all of these routes will work. I would certainly bet that at least 9 out of the 10 other routes work. But if they don't, we won't fly all 10 again. But all the growth that we've had in the last few years, I can only remember one destination which didn't work. And we flew it 1 year, and then we stopped.
Do you plan to cut any domestic routes later this summer to potentially offset some of this?
No, this is really, a lot of this, the aircraft are different first, but a lot of this, this push is so big this year because Boeing and Airbus have started to catch up on our delivery a little bit. And because we got more, we would have started some of these routes earlier if we'd have had the aircraft. But as we're getting the aircraft now, it allows the big push.
You're celebrating 10 years at United. You've been the
On
CEO.
Saturday.
Yeah, on Saturday. It's going to be your 10-year anniversary.
Yeah.
Are you going to fly anywhere of these new routes to celebrate with your family?
I think on Saturday I will probably be my family's Uber driver and shuttling kids to soccer games, parties, baseball practice.
Okinawa, soccer
Saturday's
practice.
going to be a normal day of shuttling kids around.
Scott Kirby, wonderful to spend time with you this morning. Thank you so much for your time.
Yeah.
John, I'll send it back to you, and maybe I will come back, and maybe I won't.
Lisa, I think we've found a sponsor. That's the good news. Bramo on the ground in Newark, New Jersey, a sponsor to sponsor our program going to Okinawa and then on to Sardinia next May when those flights begin. That was Scott Kirby of United Airlines catching up with Bramo over at Newark, New Jersey. Equity futures this morning on the S&P 500 firmer by 0.4, call it 0.5 on the S&P. It's a bounce back in equities. On the Nasdaq, we're higher by 0.9% going into earnings from NVIDIA tomorrow. NVIDIA on a 7-day slide, the longest losing streak going back to 2022. Over that period, shaving off more than $400 billion of market cap from one of the biggest companies on the planet. In the bond market, 2s, 10s, and 30s, yields lower and coming with plenty of controversy. Down this morning by 3 basis points, 519.52. Some real pushback, not from the Treasury Secretary, but from the Treasury Secretary's friend and former mentor, Stan Druckenmiller, in the Wall Street Journal, pushing back, saying, let the bond market speak. The Federal Reserve Chair, Kevin Walsh, also looking for an unfiltered message from this bond market, and right now, not getting one. Yields lower across the curve, going into data later, consumer confidence at 10 a.m., then on to tomorrow morning when we get PCE. Up next, we'll talk about these issues. We'll catch up with Rob Sockin of PGIM, still expecting 3 interest rate hikes later this year.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
"60 minutes out from the opening bounce. Stocks are firmer so far this morning. Throughout much of this morning, we're positive by 0.5 on the S&P and up by close to 1% on the Nasdaq. Let's give some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. We are seeing big sporting goods shares plunging in the pre-market, now down more than 18% after cutting its full-year outlook. And the weakness is really coming from Foot Locker, which it just acquired late last year, because Dick's itself had a solid quarter. Comps were up 5% due to strong sales during the World Cup. But over at Foot Locker, comps fell 3.6% as the sneaker market became more promotional. And that negative read-through is spilling over to Nike, with those shares down 3%. Meanwhile, we are seeing NVIDIA shares higher, up 1.3%, looking to snap a 7-day losing streak, its longest since September 2022, just ahead of earnings tomorrow, where the bar is incredibly high. Analysts expect revenue to have nearly doubled from a year ago to $92 billion, but even blowout results have not been enough for this name, with the shares selling off after each of its last 4 earnings reports. We'll see what we get tomorrow. But the enthusiasm over the AI trade is back. It's risk on this morning, with Intel and the memory names rising after a rough sell-off yesterday. But the big test will come tomorrow with those NVIDIA results, particularly for memory, because we know that those stocks have been pricing in a very tight market as we see memory prices soar this year. So NVIDIA's outlook will be a test of the demand behind that tightness. John.
Yahara, thank you. A better tone this morning. Tech bouncing back. You see that in the Nasdaq and at some single names as well. Chip stocks doing better. NVIDIA looking to snap that 7-day slide. You see it in the commodity market, happy to set the tone for fixed income. Crude pulling back by more than 3%. And across the curve, 2s, 10s and 30s, yields retreating. Lower across the curve by 2 to 3 basis points this morning. Down about 3 on 10s at 466. On 30s this morning, down 3 to around 520. The Treasury Secretary, Scott Bessent, weighing in on recent moves, failing to deliver further signals for the bond market.
We haven't bought a single bond yet. The next time we have an operation is September 9th. So we will see on September 9th.
The billionaire investor and former mentor of Bessent, Stanley Druckenmiller, writing in the Wall Street Journal, quote, "Governments defending prices against fundamentals always lose. Let the bond market speak." Bloomberg's Mike McKee joins us now for more from Jackson Hole. Mike, in some ways, Druckenmiller sounded like Kevin Walsh a few weeks ago. What did you make of that pushback in the Journal this morning, Mike?
Well, I think if we were the old newspaper Variety, you might see a headline like Bessent lays an egg, because he's being criticized all across Wall Street for this. And the Stan Druckenmiller one is interesting because, of course, Druckenmiller was his mentor at Soros when they helped break the British pound, and he worked alongside Stan for many, many years. So this was quite an indictment by Druckenmiller of the move by Treasury. But he's not alone. Ken Griffin's group was out early yesterday with a paper saying that this may backfire, that it was a bad move. And both of them asking, why did you do this? There were no disorderly markets that required any intervention, and leaving questions. Are you going to continue this? Are you going to keep doubling the amount of buybacks? What's the outlook ahead for this? And again, why? And then after the leak of the Treasury general account spending down to maybe do this, the question became, are you going to use that? Are you going to rebuild it? Are you going to leave it smaller? A lot of problems for the bond market in what Bessent did yesterday, and it's leading to the conclusion by pretty much everybody, including Druckenmiller this morning, that he's trying to manipulate the market. He's not trying to stabilize any markets, as he said. And they point to a phrase from Bessent's news conference, or from Bessent's announcement the other day, where he said, "We believe that yields don't reflect the underlying fundamentals," which means yields are too high for the president and for me. And Steve Stanley at Santander probably put it best. As a very sophisticated financial market participant throughout his career, Bessent should know better. Now, this obviously does raise some issues for the Fed in terms of what its portfolio is going to look like. But as you said, John, one of the first problems for Kevin Warsh is that he wants the bond market to speak for itself, as Stan Druckenmiller does.
He was looking for an unfiltered message. Mike McKee, there is a filter now, and that filter is provided by the Treasury Secretary. Mike, as the Treasury Secretary said, the bond buying hasn't started yet. The financing of that bond buying is still open to negotiation and debate, I think, Mike, and we can have that conversation right now. The Treasury General Account, Mike, just go through the numbers we're talking about here. How much they could use that as a tool, as a funding source to do these buybacks, and whether inevitably we will just see higher T-bill issuance in the future.
Well, as of last Thursday, there was $935 billion in the Treasury's general account, which they built up to that level because they say they want to have enough cash on hand to meet all the Treasury's obligations for a week. This all started back when we were having government shutdowns and there was a fear they might not be able to pay their bills. So they could use some of that, but then the question becomes, do they want to rebuild it up to the level that it is now to have that kind of cushion, or are they just going to spend it down and make it smaller, which would have implications for Treasury issuance and implications for folks in the bond market? If they don't do that, then one assumes they're going to have to sell bills or something else on the short end to make up for the money that they're spending to buy back the bonds. And that will have major implications for interest rates at both ends of the curve and for issuance. And so there's going to be a lot for bond markets to digest if they go ahead with this.
Mike McKee with the latest. Mike, thank you, buddy. Out of Jackson Hole, ahead of the annual get-together in Jackson Hole, Wyoming for the Federal Reserve, the annual symposium of the Kansas City Fed in a few days' time. Rob Stockin of PGIM writing the following: a more active and interventionist Treasury looks here to stay, but its tools and their effectiveness for influencing deficits and yields are limited. Rob joins us now for more. Rob, good morning.
Good morning.
Have they done enough, and do you expect to see more?
Well, I think that we're in a world where this Treasury is going to continue to try to do things to cap yields, and we've heard that the administration is going to put forward a plan to consolidate deficits. But I think on both fronts, they're very limited in what they can do. You know, without Congress, where we can debate if there's going to be appetite for lowering deficits, they really can't change the picture too much. And in the bond market, you know, we've seen with the bond buyback program, this is very small compared to the market itself, and could have the opposite effect of actually showing that the Treasury is very concerned about yields at the moment.
When we saw Yellen blink back in 2023, it was through the quarterly refunding announcement. This feels slightly different, but it feels like we're heading in the same direction. That was a green light to buy the long end of the curve, and we saw a massive rally into year-end off the back of that. Is the backdrop now just less forgiving? Do you need to do even more? Is it different to 2023?
I think this is a much less forgiving backdrop. You know, we've seen over the last few years even kind of concerns bubble up in the Treasury market, only to see them subside over time. But here you're getting hit with a range of factors. It's not just large deficits as far as the eye can see. It's the AI build-out that's competing with capital for governments. It's more price-sensitive buyers. You have less central banks and others in the market. And it's concerns about the Fed and price stability. And there's an inflation risk premium being built in there. So, you know, the room for error is just much smaller. And this is a much different backdrop than we were even a few years ago.
Would rate hikes help?
You know, it's a big debate. I think we saw after the July FOMC meeting where they didn't hike rates, and we had a press conference where they didn't fully explain why they didn't hike rates, and yields moved up significantly there. So I look at that and I say, well, there's a lot of concerns about whether the Fed is going to hit its inflation target. So, you know, if the Fed does hike as we expect, you know, typically that does lead to some pressure in the long end, just mechanically, but, you know, maybe over time, it actually could push down yields because it shows that the Fed is willing to do what it takes and bring inflation back down to target.
The answer to that question, I think, depends entirely on why you think yields are up here in the first place.
Yeah.
If you believe yields are up here because we're running an economy right now at 6% nominal growth, with inflation above target and risk appetite pretty buoyant, there's a reason to sit here and say, yes, yields should be higher at the long end of the curve. That's all about the fundamentals, and maybe rate hikes would help undo some of that.
Exactly. I mean, we're looking at a very hot nominal GDP environment, and that's something that's been one of our themes throughout the year. You have GDP growth, real GDP growth in the back half that we think is going to run around 2.5%. That's well above trend. And you have inflation that's running above 3%. And I think we need those rate hikes to cool some of those pressures. And so that's the real backdrop, as you said, that people are looking at the economy and they're saying, well, why isn't the Fed raising rates? You have an unemployment rate that's almost at 4%, and you have nominal GDP that's almost at 6%. You know, this is a backdrop that doesn't need accommodation.
You're expecting some restrictiveness. You're expecting 3 hikes.
Yep.
The calendar's interesting, and you know where I'm going with this.
Yes.
You've got 3 hikes this year. There's only 3 meetings left: September, October, December. October is somewhat controversial. Many people believe the Fed would skip that because of the politics of November. Why do you see it differently?
Yeah, absolutely. And actually, at PGIM, Greg Peters, Robert Tipp, and I were having this exact discussion yesterday. And so I think if they move in September, which is still our base case, and I admit that's a close call, I think the August CPI and PPI data that we get right before the meeting is going to have a big weight in that decision. But ultimately, I think this ends in rate hikes eventually. If they don't start in September and they were willing to wait that long, I think that the probability they start in October is very low, just because it's so close to the midterm elections, and they might as well wait till December. Now, if they start in September and it's a path of rate hikes from there, I think they're fine with that, and that's a different story. But I agree, if they hold in September, I think the probability of October, just for optics and just to see some more data, I think is pretty low.
How do you think they frame those hikes? Are we taking back insurance, introducing restrictiveness? What do you think they're doing?
I think they would frame the rate hikes as saying that inflation is too high. And I don't think they're going to frame it as saying that we're just undoing the prior 3 rate cuts, because we do have 3 rate hikes. I think it's going to be more about we're looking at the economy and we have little confidence that inflation is going to move back down to 2% in this backdrop. You've heard that from some of the hawks in the committee, like Lori Logan. They said inflation is going to moderate, but we have no confidence in this backdrop. It's going to moderate back down to 2%. And as Chairman Warsh has said, 2% is the goal. There's no soft target.
Rob Salkin of PGIM. Rob, thank you. Looking for 3 hikes starting in September, another one in October, just a week or so before those midterm elections in November and the politics of November, then another in December. Rob, thank you. Appreciate it. Yields lower across the curve this morning. On 2s, we're down about 1 basis point. On 10s, we're down 3 to 467. On 30s at the long end of the curve, we're moving south. We're down by 3 also. It's a break of 520 to about 519. Contributing to that move has been this move in crude. We're down by more than 3%. It's a break of 90 this morning, about 89 on Brent crude through much of the session so far. Let's give you an update on news worldwide. Let's get you some top stories. Your Bloomberg Brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. The U.S. is reportedly preparing new tariffs on China ahead of a summit between Presidents Donald Trump and Xi Jinping next month. Sources telling us here at Bloomberg that the administration is eyeing a 7.5% tariff on Chinese goods over allegations of excess manufacturing. The move would effectively restore Trump's 20% duties on China. The U.S. Securities and Exchange Commission has reportedly subpoenaed major Wall Street banks over hedge fund situational awareness. Sources telling us here at Bloomberg the SEC is seeking information on its trading activity after the fund was forced to liquidate positions amid last month's AI stock rout. United Airlines is expanding its long-haul network with 10 new destinations across Europe and Asia.
As we built a brand loyal airline at United that customers love and that customers want to fly, it allows us to open up new destinations to Americans around the globe. And it's been really successful. It's an exciting day for us.
Scott Kirby talking to Lisa there. United will use the Airbus SE's new long-range narrow-body planes. The routes will begin next year and make up the, quote, largest international network expansion in company history. And that is your Bloomberg Brief. John.
And Vonnie, thank you. It's a very cool list that includes Sardinia, Delta and Ed Bastian already heading over in that direction, Catania as well in Sicily, Okinawa, Japan. Ramo went through some of the names a little bit earlier on this morning. Up next on the programme, we'll set you up for the day ahead, plus we'll catch up with Dan Greenhouse of Solace on why AI is still the most important story for markets. Equity futures, positive by 0.3 on the NASDAQ, up close to 1 percentage point. Higher across the board.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world, right here on Bloomberg. Context changes everything.
The market wants to see real evidence that the spending is it's getting return. It's turning into margins, turning into profits, turning into free cash flow. And so that's what companies are starting to realize, that that's what the markets wants. And you're seeing them sort of adjust how they communicate and how they budget CapEx going forward. That's the key CapEx vigilante story.
That was Dan Suzuki of iCapital weighing in on the tech trade a little bit earlier on this morning. The price action shaping up as follows going into the cash open. Some 43 minutes away. Equity futures positive by a third on the S&P, on the NASDAQ higher by 0.75%. As we count you down to that cash open, your trading diary shaping up as follows. We get some consumer confidence data later this morning at 10 a.m. Tomorrow in the morning, PCE data. In the afternoon, earnings from NVIDIA. Thursday morning, another round of jobless claims. On Friday, some more sentiment data, plus the main event, Fed Chair Kevin Walsh speaking at Jackson Hole, Wyoming, the last big event heading into the weekend, arguably the last big event for the month of August. Let's talk about this equity market then. Chip stocks bouncing back as Nvidia aims to snap its longest losing streak since 2022. Dan Greenhouse of Solace Alternative Asset Management writing the following: the AI story is more important than rates, the Fed, the economy, etc. Dan joins us now for more. Dan, good morning.
Good morning to you, sir.
Does one inform the other? Are you starting to see the rate story inform the AI story?
Yeah, I mean, they're all connected. I mean, that was only a couple of words, but it gets to the question that we've all been asking, or at least discussing on television, if not elsewhere: what's more important, the Federal Reserve or AI? And a point, the view I've espoused and been supportive of for quite some time now, I'm not alone, is just the AI story is so dominant, so independent of rates and regulation, et cetera, that it is the driving factor throughout markets. And again, it affects stocks in the obviously technology income services group, in the materials group, in the industrials group, et cetera. And it's just independent of the Fed. And so as long as that story remains unchallenged, and I think thus far it does, this is separate from valuations or rotations, money flows. But as long as that build-out continues, that demand story continues, I just don't know why that's not the most important story.
That's the piece of it that I think is really interesting. The competition for capital that underpins it, I think, is the overwhelming, most important story for me, at least right now, because it could undermine the tech trade in equities. When you start to see the crowding out of treasuries and yields reprice, I think the good news right now, at least, is the credit spreads have remained really, really tight. The repricing we've seen almost exclusively has come from the Treasury side.
Yeah, on the credit, I mean, I'm sure most people don't follow the credit markets that closely, but both IG and high yield spreads are extremely tight. In the case of high yield, you could make a case that they're even tighter than the headline because there's a couple of tail lower rated credits that are dragging out the overall index. I mean, I forget the exact number, but some 3/4 something of the high yield market is trading tighter than the headline spread. So you don't see any real stress in the equity market. Again, not just tech, but 8 sectors. Just so many stocks are 3/4 of the market's above the 200-day moving average. A bunch of sectors are beating the index this year. So there's broad strength in the stock market. The spreads are very tight. And on the economy side of things, it's not great. 1.5%, 2.5% growth, but it's perfectly good enough. Obviously, the labor market is holding in there. The consumer's doing well enough. Walmart, Dick's maybe throw a bit of a wrench in the works, but you have Ross Stores and TJX and BJ Wholesale that say that comps are pretty good. So when you put the totality of the evidence together, it's just the word I come up with, or the phrase I come up with, is just status quo.
6% nominal GDP. Yeah. That usually gets it done for equity.
And this is an important point that Stan Druckenmiller was making in the Journal op-ed, which is that while rates are higher, when you consider where nominal GDP is, they're not that high. They're higher. They're not, quote, too high. And I think when you talk about, at what level do rates break, you've got the 10-year called 470, the 30-year at whatever highs, however many decade highs. And this, getting back to the point, the stocks are still at a high, spreads are still at a tight. They haven't mattered yet, and there's no indication that the next 5 or 10 basis points, even if it were higher, are the 5 or 10 that will break it.
That's probably my favorite piece of it all. That ultimately, the backdrop for risk appetite is really buoyant right now. Nominal GDP is at 6, unemployment's effectively has come out and said he doesn't think things are okay. Well, he doesn't think the price of treasuries are okay.
Yes, they are clearly upset by the. I mean, listen, you've got $1 trillion plus annual cost and interest costs. I would be worried about it as well. I think the position I would take is a little more simple, which is maybe don't run $2 trillion deficits. Maybe put together a Boskin Commission type thing or a Greenspan Commission type thing. Google those if you don't know, where you come up with some solution for some of our problems. It's the typical Wall Street, Washington thing to do, come up with a bipartisan commission. But listen, as I'm talking out loud, I'm reminded during the European debt crisis, a friend of mine was on TV. She was out in Greece, and she was talking to politicians there, and she came on air, and she said something that stuck with me now, even 15 years later.
Go on.
She said, I've spoken to the Greek politicians. They know exactly how to solve this problem. None of them know how to get reelected once they've done it. And that has always stuck with me, and I think it is the truest way to think about these types of environments. Whether it's entitlement reform or discretionary spending, you don't, I mean, for unelected bureaucrats, you could put me and 5 other people with Chinese food over a conference room for lunch, and I could solve this problem. This isn't particularly difficult. The government puts out a report, ways to fix the deficit. I mean, that's basically the title. It's not as, and so all the options are there, and the costs and the benefits, et cetera. And so this isn't really a problem. Don't manipulate I'm not saying he's manipulating the bond market, but don't intrude in the bond market. Just, cut spending. Raise revenue.
In the depths of the debt crisis, I remember the time that we were suggesting that maybe they should be paid in debt.
Sure.
And they might do something about it.
Part of the trouble now, I think some people are speculating, I know, that some adversaries of the U.S. might be paid or might see their interest costs cut. They might not be paid interest from the administration. I don't know if that's obviously true or not. I have no information. But those are the types of things that people are thinking about right now that might be putting upward pressure on yields.
Final word on Walsh into Friday. What do you expect to hear? Not what do you want to hear. What do you expect to hear?
Look, listen, I think I expect him to not move an inch on the forward guidance side of things. Could he provide some context around the reaction function, how the Fed responds to data? I think that's a legitimate call from markets. That is a legitimate thing for markets to say, yeah, you don't want to tell us. And I forget who it was. Someone, a Fed president or governor was on TV yesterday making a similar point. Yeah, it's okay. We're not going to tell you where we're going to be in 3, 6, 9, 12 months, but maybe we'll tell you a little bit more about how we're thinking about Warsh, how I'm thinking about the interaction, the interplay between the data and my assessment of the rate market. He could give you a little bit on that. I mean, the problem is you have the commissions that are not going to have decisions until the end of the year, and so the bias is probably to wait until then.
Let's hope he doesn't talk about the commissions, the task forces.
Sure.
Dan, it's good to see you.
Always my pleasure.
Thank you, buddy. Thanks for dropping by. Dan Greenhouse there of Solace Alternative Asset Management. The opening bell about 35 minutes away. Equity's doing better, bouncing back by 0.4 on the S&P 500, on the Nasdaq high by 0.8 in the bond market. For all the controversy or the drama, yields down on the session, down on the month. We're down by 4 basis points. To break of 520 on 30s, 518.69 on a 30-year, on a 10-year this morning at 465. Yields lower by 4 basis points. Tomorrow, we'll catch up with Andrew Bors of PIMCO to weigh in on this bond market. Sarah Kunz to Clio Capital as we count you down to that NVIDIA earnings report after the close tomorrow afternoon. We'll catch up with Conrad Ducotras of Citi Wealth and Mark Lehman of Citizens Commercial Bank. From New York City this morning, good morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one.
The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
What a week it's already been, and it's 9 a.m. on Tuesday. S&P futures head higher 30 minutes ago until the start of trading. I'm Danny Berger.
And I'm Isabel Lee. Bloomberg Open Interest starts right now.
Coming up on the show, NVIDIA tries to snap its losing streak ahead of earnings while software stocks face a gut check.
And Scott Bessent faces pushback from his former mentor. Stan Druckenmiller calls the Treasury bond buying a mistake.
Meanwhile, Bessent's Iran strategy risks putting Washington on a collision course with Beijing.
Let's look at some stocks, Danny. And you're right, it's only Tuesday. You've had a long morning, but we're getting there. More to come, more to come. So we're looking at green on the screen in pre-market trade, and tech sentiment is starting to rebound, with chip stocks leading the recovery after yesterday's sell-off. You see NVIDIA higher by 2.5%. Micron up also, as well as SanDisk Corp, all into green. Tomorrow, of course, we're going to be having the NVIDIA earnings, and investors are going to be buying the dip ahead of that, which could actually be the next major test for the AI trade.
Yeah, what a run of losses it's been for NVIDIA these past 7 days. We're also looking at Dick's Sporting Goods this morning after they reported results struggling to maintain growth after the World Cup. They lowered their full-year outlook due to weakness at Foot Locker, the sneaker chain it bought last year for $2.4 billion. Nike sells off in sympathy. Dick's now down nearly 19%, Isabel.
But let's begin with the bond market, Danny. So Treasury Secretary Scott Bessent's former mentor says he's making a mistake. In an opinion column in the Wall Street Journal, Stanley Druckenmiller writing, quote, "Governments defending prices against fundamentals always lose. The only variable is how much they spend before conceding. Let the bond market speak." Let's discuss with Bloomberg macro strategist Michael Ball. Thank you for joining us in person. So is this bond buying a mistake? What do you discuss in your MLive team?
Yeah, I think Druck's point is right. You can do this for a certain amount of time, just like the yen intervention, but eventually market forces are just too large. And if there's a real problem, which we kind of all know there is, the deficit story, the excess supply now from the AI CapEx build out, and the global picture more broadly is also a huge amount of supply. Curve kind of has to steepen. We have to see greater term premium. People have to be compensated for that risk. And yet, and unfortunately, what's going on at the Fed, where we don't have really clarity on Warsh's particular reaction function, although we do know from the committee, and obviously it's committee-based, but we want to hear more from the leader who's going to set the tone at the committee meetings. So it's like a little bit of a perfect storm. And Druck's coming out and basically just saying, look, you can put a Band-Aid, but this probably needs surgery, and it's going to take multi-decades to get us out of a problem that took us multi-decades to get into.
It's probably important also to underscore the relationship between these three men.
Yeah.
Bessent, Druckenmiller was something of a mentor to him, so probably it's especially painful to have this come out. Warsh may be closer to a peer of Druckenmiller. Do you think to some degree this op-ed reflects the viewpoint of Chair Kevin Warsh?
Yeah, I mean, it's a great question. I think, you know, Warsh doesn't want to be bottled in here with Bessent actually last week coming out and saying that, you know, there are plans as far as the Treasury is concerned to align debt issuance with the composition of the Fed balance sheet. I mean, that's not something that is just kind of thrown around these days. So effectively, we're saying there's going to be a new Treasury Fed Accord. That changes the whole story. And that's why we've seen sort of this debasement trade come back up with a weaker dollar, with gold really going off to the races. Crypto's had its own unique kind of stories with regulation, but also lots of the digital gold been benefiting from this as well. The worry would be that, again, we're going to loosen financial conditions through this kind of Treasury Fed Accord, and that's going to get away from what the front end of policy rates will do, and then you're going to have some sort of a split, and the market's going to be very confused by that.
Of course, there's this other question, which we were talking about on surveillance this morning, of was this thing just AI slop? I don't know if you've seen the commentary.
We have seen.
There's a lot of stuff in the op-ed that's like, if it's not X, it's Y.
Yeah. that shocked me a bit because one would think he would have a team of editors or like the Wall Street Journal also. Why
See,
would they
this was my argument that it's like everybody always gets their stuff edited. Sometimes important people get their pieces ghost written. Does it matter if it's AI?
Look, put the tin hat on. These guys all know each other. There's a larger group of financial titans here that have a big stake in the game. They may be playing sort of a coordinated game to calm markets down. You shouldn't do this. It's going to work, but we're going to look at a longer-term thing.
I want to go more into the tin hat.
Yeah.
So there's a theory in which Jock here was perhaps working in concert with Besson, or this was to benefit him?
No, but I don't know. I'm not saying that. What I'm saying is if you kind of take this to logical conclusion, it is a strange op-ed because it was written in that form.
Yeah.
Perhaps there's more to this, and perhaps, again, we're trying to have the dialogue put pressure on almost the administration to address the fiscal issues, and this is just one other avenue for that. Who knows? Markets and zero hedge and all the world can go to that place, so I'm not here to say any of that, please.
I wish you would. It's fun to go to that place, whether it's true or not. Of course, we always have to be fair and balanced. Michael, thank you very much for joining us. Always appreciate Michael Ball from our MLive team. Let's turn to another busy part of Scott Besson's day yesterday, his Iran strategy. The Treasury Secretary threatening economic punishment against any country doing business with Iran, part of what he calls an unprecedented campaign to isolate Tehran from the global economy. He spoke yesterday.
Every country, every entity should know that they should be prepared to face U.S. sanctions. No one is above this. We are going to hold everyone accountable, and this is economic asphyxiation of this regime.
Let's get more with Bloomberg Washington correspondent Tyler Kendall. Tyler, it's interesting to call this D-Day, but instead of take action, only issue a threat.
Right, Danny. At this point, we heard from the Treasury Secretary, Scott Bessent, there outlined that the U.S. has contacted individual trading partners and given details and individual timelines for them to act in order to cut off these financial ties with Iran. He didn't specify what those timelines would look like, but did give us some insight that his department, the State Department, President Trump himself, are all calling these countries to say that you have to do this or else you are going to face this threat of so-called secondary sanctions related to these 5 critical sectors that we saw the Treasury Secretary outline: digital assets, technology, gold, aviation, and shipping. He did say that the Treasury Department is already working to sanction 60 individuals, entities, and vessels, and that by the end of the week we should expect the Treasury Department to sanction a major financial institution. But the fact that there is this lull in the timeline does raise questions about whether the U.S. is going to follow through, in particular when it comes to China, which does remain the top importer of Iranian crude. And Danny, we did hear from some Chinese officials earlier today, new this morning, China's foreign ministry essentially saying that Beijing is ready to retaliate if the U.S. does take action, saying in part, quote, China will take all necessary measures to firmly safeguard any of its own interests.
Tyler, what about Canada's government? On Tuesday, they said they will announce a range of measures to protect and support Canadians. What's the latest on that, and when will Canadians actually see the money?
So at this point, Isabel, we had heard at first from the Canadian Prime Minister Mark Carney saying that they will go tariff dollar for dollar on the tariffs after President Trump had put forward and implemented tariffs on $20 billion worth of goods since those talks did collapse. We've since had a more measured response from the Canadian Prime Minister saying everything is on the table, but it may not be dollar for dollar, but that they are expected to hit U.S. sectors, including dairy, electronics, as well as steel and appliances. The country is also rolling out this domestic aid package geared toward helping companies that could be hit by the tariffs, which does signal to us that the government is potentially preparing here for this to be the long haul. Because at this point, we're moving in the opposite direction. We've already heard from President Trump earlier today ramping up the threats on Canada. Yesterday, saying a 50% tariff on autos. Danny and Isabel, that's moving in the wrong direction since we had thought this deal was going to lower those tariffs.
Tyler, thank you for that. That's Bloomberg's Tyler Kendall in Washington for the latest. Up next, chip stocks are leading this morning's rebound in equities. Semiconductor shares are no longer rattled by news that some of NVIDIA's biggest customers were told about AI-related price increases above 15%. That's all ahead of NVIDIA's earnings tomorrow. But bulls are getting punished in the run-up to NVIDIA. The stock has fallen for 7 days, its longest run of losses since 2022. For more, let's bring in Bloomberg Tech host Ed Ludlow. Ed, what do you need to hear tomorrow to convince investors that maybe the best of AI still isn't priced in?
Yeah, I mean, the stock reflects that the market has stopped putting a premium on NVIDIA's future growth, which is interesting because no matter what the numbers are that are posted, the market always looks to Jensen Huang to say, this is what will happen for the next 5 years. The net result of that longest streak of decline since 2022 is that NVIDIA is up 11.8% year to date, in line with the S&P 500. It has seen a pretty severe valuation compression on a forward PE basis, basically in line with the S&P 500. And it goes into earnings, still with a high bar. It's going to be really interesting to see which piece of this moves the needle. It's not just, sheer revenue. $92 billion is double what it was a year ago. Adjusted earnings will probably be double what they were a year ago. It's the idea that Jensen Huang has to make the definitive case that the status quo remains. Demand is far outpacing supply when it comes to AI demand, running ahead of compute supply. And it's really hard for him each quarter to keep that story going.
There has been digital ink spilled, both by our team and other analysts, on the rising credit risk that more parts of this ecosystem are seeing. The latest victim seems to be Broadcom, with CDS spreads blowing out recently. Ed, is this a market that has been pushing back against the funding, whether it be in corporate bond markets or some of the action that NVIDIA has taken to continue to provide financing for this ecosystem?
Yeah, I mean, there is a distinction between the credit underpinning of the infrastructure build out. Lots of people would say the reason this is okay, it's different to the dot-com bubble 2000 or 2008, is the balance sheets of these companies are completely different. And from a free cash flow basis, they can temporarily enter negative territory. The circular financing bit is the part two. It's completely different. And while people are more vocal of their concerns of circular financing as an underpinning of an entire industry, they also are sort of sanguine about the idea that NVIDIA is a leading role in capital markets. And that, NVIDIA's argument would be, this allows stuff to happen more quickly. If we make these kinds of financial arrangements, actual data centers can get built, and there are loads of people that subscribe to that.
Hey, Ed, thank you so much for your work this morning. Looking forward to Bloomberg Tech at 11 a.m. That's Bloomberg Tech host Ed Ludlow. Let's get a check on your markets with that big event happening in just over 24 hours. For now, it is calm in this market, a rebound from an AI-driven sell-off yesterday as the NASDAQ outperforms. Your 10-year yields down by 4.5 basis points, despite a warning from Stan Druckenmiller. Brent crude, that's down 3.5% as this administration pursues economic warfare over kinetic warfare, in a New York Times report that the U.S. would send diplomats to the Middle East. Isabel, let's look at some of the individual movers on our radar this morning. This is a fun one. United Airlines making its biggest ever international network expansion in 2027, adding destinations in Europe, Asia, using newest jets from Airbuses. New locations include Ibiza, Luxembourg, and Marseille. Isabel, we going to Valencia after the show?
Why not? Actually, when we talked about that in our chat, I was like, it all sounds like tourist destinations I would love to go to, but we would need more vacations.
I wonder if people go to Luxembourg for a tour. I feel like that's for because you have a fund out there because you don't want to pay taxes.
I was going to say you wash something there, but I mean, why not? I would love, you wash clothes there.
Yes, clothes, sure. By the way, I just want to point out we will have more of that interview with Lisa and the CEO of United, Scott Kirby, in the next hour.
And let's also get to the digital asset world. Crypto stocks are rallying. Actually, no, it's kind of mixed there. Coinbase higher, or I guess Coinbase is flat. Oh, now it's red on your screen. Coinbase Strategy Circle, all in the red, and that's after Bitcoin touched $80,000 for the first time since May. Chatter around the debasement trade is helping drive inflows as U.S. Treasury steps up bond purchases.
Some more earnings for you after the bell this morning. That will be Zoom and Intuit. It's a test for the software space that has been heavily scrutinized by the rise of AI. So Zoom, Intuit, Salesforce, all those down ahead of the bell. We're also going to get CrowdStrike earnings and Salesforce later this week. But first, coming up, we're going to talk about real-world earnings. Dick's Sporting Goods lowers its full-year guidance after Foot Locker results fall behind. You look at the retailer coming up next. This is Open Interest.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Kieran, where are we right now? What are these things?
Right now, this is the solvent yard. So it's not a very exciting part of the whole park. But we are kind of moving up to the fermentation facilities.
And you can smell the fermentation.
Yes.
And, you know, it's funny because people always think fermentation is simple, it's easy. It's not.
No, it's very complex. And we have 2 types of fermentation. One is microbial fermentation, and the other is mammalian cell culture. I mean, I basically could have used yeast to make beer, but now I use yeast to make insulin. So,
amazing. I think that's cooler than using yeast to make beer.
Well, both are cool.
Yeah,
in the
but one, you're saving lives.
Yeah, but the other is also a great beverage.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Now to high interest, a look at what's making headlines around the world. Volkswagen CEO Oliver Blume telling workers that roughly half of the car maker's additional job cuts will need to happen in Germany. The cuts aim to lower costs and compete with electric vehicles, software shifts, and Chinese rivals. Blume's comments coming as labor leaders warn of possible strikes over the restructuring plans. And Apple is gearing up for the launch of its first new Mac Mini in 2 years. Sources telling Bloomberg that the new desktop will debut as soon as the coming days. It's part of a wave of fresh products coming in the second half of this year, including new Apple Watches, AirPods, and a smart home device. And Dick's Sporting Goods lowering its full-year outlook due to the weakness at Foot Locker, overshadowing sales gains from World Cup. The chairman pointing to U.S. consumers who have become more choosy amid rising costs. The retailer bought Foot Locker last year for $2.4 billion. Danny?
Isabel, let's get more on that story. We are joined by Lindsay Dutch. She is a senior retail analyst at Bloomberg Intelligence. Isabel was just laying it out there, Lindsay. Does this mean that we should look, with the benefit of hindsight in this earnings report in hand, the buying of Foot Locker as a mistake for Dick's Sporting Goods?
Hi, Danny and Isabel. Thanks so much for having me. And I think that your point about it potentially being a mistake is what investors are worried about and the reason for the market reaction today. This quarter was the quarter for Dick's to prove that it had what it took, the brand relationships, to make the assortment better, to turn around the Foot Locker business. The goal was to do that by back-to-school season. We should have seen evidence that the turnaround was coming to fruition, and it had been going better than expected about 3 months ago, but the results today say that there's significant challenges in making that turnaround happen.
What does the Foot Locker weakness tell you, Lindsay, about the consumer? Are they finally saying no to maybe $150 sneakers?
Yes, that price point is definitely $150 now. And I think you're right in that we have to delineate between the two businesses. So the big risk for Dick's going after Foot Locker is really lifestyle footwear. It's not really driven by sports-focused demand. You know, it's not people going out there running. Running shoes are trendy, but you're still relying on discretionary demand and people just wanting to wear those shoes because they're trendy. And I think this quarter we saw that the Dick's management was not fully prepared for a rapid swing in that demand and a rapid pullback in this second quarter from consumers.
Lindsay, when I think about well, to be honest, both Dick's Sporting Goods and Foot Locker. Where I tend to see the most is in malls. I know that's the case with Foot Locker. Dick's Sporting Goods has a big presence there too. Is that footprint an issue that they also need to be addressing, Lindsay? Just their reliance on mall shoppers coming in and visiting their stores and purchasing items?
Yeah, it's an interesting point, and I do think part of the Foot Locker acquisition was for real estate. There's really no new retail shopping centers being built anymore, so if you're a retailer looking to expand, you have to find space in existing centers. And for Dick's, buying Foot Locker, it added over 2,000 stores, and it really expanded their reach to different consumers. And I think that was a real piece of their interest in the business. Dick's is both off-mall and on-mall. With their House of Sport location, which requires huge boxes, they're actually leaning more into malls, and they're taking some of those empty Lord & Taylor boxes, empty Sears, because they need that huge space for that House of Sport concept that they're building. I don't necessarily think where the store is, whether it's off or on mall, matters, but the off-mall traffic has been building since COVID. It is very steady, and a lot of retailers like that off-mall presence just because you have a grocery store or a weekly needs-based retailer that consumers are going there anyway.
Lindsay, thank you for that insight. Lindsay Dutch of Bloomberg Intelligence. Maybe, Danny, we do need to wear cheaper sneakers from here on out. I have upgraded my sneaker starting this year.
The problem is that I've tried to take my health more seriously, so I'm actually doing things like working out and running and playing tennis.
No, it's really health.
Yes, no, it's health. And you need shoes that are sturdy and can sustain that. So you can't necessarily buy the cheaper shoes out there, or else they'll disintegrate on your feet.
That's true. My mom has plantar fasciitis, which I don't know why I'm talking about that, but yes, she does invest in good sneakers.
I don't know if she's Foot Locker's target audience, but point taken, Isabella.
Thank you. Coming up, we have Crossmark's Bob Dahl, who says the Treasury's attempt to sway yields are destined to fail. He joins us next. This is Bloomberg Open Interest.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Sorry. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Crossmark CEO and CIO Bob Dahl says, quote, attempts to limit or even reverse the rise in U.S. Treasury yields will ultimately fail. Dahl argues that the upward pressure on interest rates and bond yields will only reverse once global economic activity weakens and/or inflation pressures recede, neither of which are likely in the near term. So pleased to say that Bob joins us now. Bob, I would take it that Stan Druckenmiller agrees with you, considering his piece in the Wall Street Journal this morning. It has been widely criticized, the move that this Treasury has made, what Bessent has done, someone who had been a mentee to Druckenmiller as well. So what do you make of the steps themselves? Why even pursue this line of tact, given that it is a market that is pushing back both via where bond yields making near a round trip and commentators saying that it was a mistake?
And Scott Bessent is extremely intelligent, so be careful how much I criticize. But I think what has happened is a player, the U.S. government, a big player, is trying to say we don't like interest rates rising. Let's see if we can slow it down and or stop it and or reverse it. And my view is the market's going to go where it's going to go. And if inflation remains problematic, it's going to be difficult to get interest rates down.
What about Treasury yields? So to Danny's point, they've been pushing higher even as the economy remains fairly resilient. Do you think that they're now the threat to the bull market?
Yeah, eventually they are. What level is really hard to say. I mean, if you had told me that the 10-year and the 30-year would be where they are today at the first of the year, I would have thought the equity market might have had some more trouble. But so far, tolerant. Part of it's the pace at which rates have moved up. It's been slow, and I think the equity market has said, yeah, but my earnings are phenomenal, therefore I'm not going to worry about interest rates. We'll see how long that lasts.
One could even make the argument that the reason that yields are moving higher is because this economy looks strong. The Citi Economic Surprise Index is its high since 2022. So, Bob, what happens in a world where it seems like this administration perhaps has inadvertently sent the message that they are worried about 30-year yields, a yield that even Kevin Warsh says that he's not concerned about? Is there some signal to be gleaned from that it does seem like it's an administration that's so concerned about long-dated yields?
Yeah, they have to be with, I'll repeat, inflation where it is, oil prices, I mean, they're down today, but they're higher than they were at the start of the year. And then, of course, the debt and the deficits crossing that $40 trillion mark, $1 trillion on interest. That is problematic and is part of the reason the bond vigilantes are out there saying enough is enough, and interest rates have been creeping higher.
Bob, you're going to stick around with us. We have the opening bell to get through. That's Bob Dole of Crossmark as your equity futures rally just moments away from the opening bell. We'll have that on the other side of this break.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are. where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Let's get your trading day started. This is Bloomberg Open Interest. I'm Danny Berger alongside Isabel Lee. Matt Miller is still out, and it's an equity market that is rebounding this morning as yields come in, as the price of oil drops, as some of the AI scaries abate, at least for today. We have NVIDIA to get through tomorrow. So the NASDAQ outperforming. Down at the New York Stock Exchange, very cool. We have the government of Puerto Rico and the governor ringing the opening bell. I'm not quite sure why, but Bad Bunny did just finish his historic tour with 2 nights in Puerto Rico. So I'm going to just say that they're there to celebrate that because that's pretty cool. Anyway, NASDAQ. Down there you have Vanderbilt University, the chancellor ringing the opening bell. They have opened a new campus in New York City, so they are celebrating that. I'm assuming some of the people wearing the T-shirts are students of Vanderbilt. How cool to get to go and ring the opening bell down at the NASDAQ. Certainly never had the opportunity to do that. Isabel, what you looking at this morning?
I did not see the Bad Bunny reasoning coming. I have a lot of friends who were so happy watching the concert. I didn't watch. I'm not a concert goer.
Yeah.
Did you
I mean,
watch?
I didn't go, but I definitely would have wanted to. He's excellent. Yeah.
No, I'd rather save my money for a $150 pair of sneakers.
Okay.
On our deck this morning, our tech stocks. Of course, tech sentiment is starting to rebound this morning with chip stocks leading the recovery after a sell-off yesterday. You see green on the screen, NVIDIA higher by 1%. Of course, NVIDIA reports tomorrow, and you're really probably going to see investors buying the dip ahead of the earnings. Micron higher by more than 2%, and SanDisk up by also 2%. Again, NVIDIA tomorrow, and maybe it could be the test, Danny, on whether AI trade has more to go.
Another set of earnings we were watching this morning. Dick's Sporting Goods down by the most in 3 years, dropping 20%. It's been struggling to maintain its sales growth from the World Cup. The company also lowered its full-year outlook due to weakness at Foot Locker, the sneaker chain it bought last year for $2.4 billion. So we're almost through the bulk of earnings season, just NVIDIA to really play for. Let's bring back in Crossmark CEO and CIO Bob Dahl. Bob, in just over 24 hours, we'll get NVIDIA. And then to round out the week, we'll have Jackson Hole with Chair Kevin Warsh. What to you is a bigger risk event for this market?
Probably the Kevin Warsh comments or lack thereof. Not that NVIDIA is unimportant. It's obviously a bellwether. The stock is pretty cheap relative to earnings, according to most people. I would agree with that. So let's hope they can come in with acceptable earnings and buoy the whole group for a while.
If Kevin Warsh is the more important event, as Danny pointed out, and as you pointed out, what are you looking to hear from him? Will we even hear anything from him? Sometimes they're starting to think whether his lack of communication is a liability or an advantage.
Yeah, great question. I think the uncertainty and the unknown still has investors a little bit spooked. The question is, will he tip the hat to the more bullish, hawkish folks on the Fed that are concerned about inflation, or will he just stifle and not say much at all? I think the latter. Markets won't particularly appreciate that.
And this maybe brings us back around to where we started, Bob. Just how much has his life been complicated by what the Treasury is embarking on?
Great question. Certainly, that's an issue that he's got to deal with. Look, I think he's trying to buy some time till the 5 committees he set up can come back and report here in the next few months, and then maybe he'll chart a course that we can understand and get behind.
What about earnings? To Danny's point, we're almost at the end of it. I think around 87% of the S&P 500 companies have reported. Earnings are strong, but why do you think stocks aren't rewarding the beat so much?
That's a great question. First of all, the amount of the beat remains strong, but I note that the 2027 estimates, next calendar year, As of July 1st, the estimates were up 17%. Only up 13% now. That's still a good number, but you don't like the direction. I think the market's starting to say, how much stronger can earnings get? And then back to what we've been talking about, if interest rates are going to continue to creep higher, can I sustain a multiple of 20 or higher?
To that point, Bob, do we need to start paying attention to the cost of capital for all of these tech giants who have started to spend more? Whether it be the direction that treasuries are moving in, be it Broadcom seeing their CDS spreads blow out. Does this represent a challenge for them as they embark on this path of not just spending, but of borrowing?
Yeah, great question. And I think the answer is yes. We do need to keep our eye on it. Look, a year or so ago, they were financing all this out of cash. And then it was bonds, and then it was stocks, and then it was, we call it circular financing, and then it was, trust me, I'll find the money. So yeah, I think we have to watch carefully at how much these companies are borrowing to support, in some cases, sales from other people of their own products.
Going back to where we started, you argue that attempts to cap treasury yields could ultimately weaken the dollar. What would be the catalyst in your view that would bring bond vigilantes back?
So my view is they're already, they're warming up, if not already singing a song. There's no question that with the level of debt and the level of accumulation of additional debt, the level of interest rates, the bond vigilantes have to be waking up and not be happy.
To what degree are there even vigilantes, though, at this moment, Bob, considering all the fundamental pillars to why yields are moving higher? Is this not just a market that perhaps instead of vigilantes, it's just underscored by more price-sensitive investors when central banks and even the Fed have pulled back in their involvement in this treasury market?
Now, I don't disagree with you at all. I think there is a key part of what's going on in the market that's looking at those very things. Decent economy, inflation that's not down to the Fed's level or looking like it's going to get there anytime soon. Oil prices stuck at much higher levels than where we started the year. And then this incredible cost to maintain our debt. That's all got to lean on fundamental fixed income investors and say, how much of this paper do I want at these interest rates?
Let's go to inflation. Inflation has cooled, but you point to liquidity, bank lending, and government spending as reasons it could remain sticky. What, in your view, is the market missing?
Oh, I think the market is right on about inflation. Look, the market wants to believe, let me say the stock market wants to believe that the Fed's going to get inflation back to 2%. I think if the market really believed inflation was going to be 3 instead of 2, we'd probably lose a couple of PE points on the market. So the stock market is giving the Fed and the environment the benefit of the doubt that inflation is going to get down to 2.5, 2.25, 2%.
We have had recent inflation readings that have looked benign, Bob, and you also had retail sales, which looked not as strong as they have been in the past. We'll get a read of the consumer in just under 30 minutes' time. Is the direction of travel not a comforting one, or is this still an inflationary environment that needs to get the attention of both markets and the Fed at this point?
You know, look, I think the Fed, probably some of them wish they had never said 2% as our target. They can't back down on that. But you're correct. You're pointing out the consumer's not as strong as it was. I'm not going to say weak, but maybe weakening a bit. Consumer confidence points to that. But the capital side of the economy, CapEx, as well as the manufacturing side, still seems pretty robust. And that, of course, is a big user of capital and reason all the demand for funds.
Bob, good luck to you for the rest of the week. I think we're all going to need it. We really appreciate you joining us. That is Crossmark's Bob Dahl. Let's get a check on your equity market now. We're just about 8 minutes into your trading day, and we are up about 0.4%. The breadth ain't great. About 300 stocks are down. So majority of stocks are down. But the reason that this overall index can do well is because we're seeing a bounce back in the AI sectors. Again, they were harmed a lot yesterday. I mean, assign whatever narrative you want. NVIDIA raising prices. Sam Altman saying things weren't being adopted as quickly as he had hoped for. But it's rebounding today. We'll see whether NVIDIA's earnings can cement that tomorrow. On the downside, no surprise to see energy performing poorly. You do see some consumer staples and discretionary names not doing well. To Does Dick's Sporting Goods hurt things? That's part of the reason that Nike is down so much. But just a reminder, it is the summer months. You can get these outside swings. Dick's Sporting Goods, again, I think down like 20% in the day's trade. So just looking at some of the sectors, again, energy, the worst one, followed by consumer staples. You saw Walmart wasn't having a good day. Infotech, industrials, those are having a good day. And that's enough, Isabel, to get us to a gain so far this morning, just about 10 minutes into your trade.
That's right, Danny. It's summer and things can swing back and forth. But then to your point, the retailers are actually, they had good earnings and it shows that consumer spending is still remaining healthy. But we shall see more to come on that. Coming up, we're seeing a turnaround in sentiment with chip stocks. But NVIDIA's earnings tomorrow face a high bar. We discuss with Mandeep Singh next. This is Bloomberg Open Interest.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Time now for a top call. Some of the analyst action and focus this morning. First up, Wolf Research upgrading Moderna to peer perform. Wolf pointing to the company's successful melanoma vaccine trial results last week. You see the shares there pop by more than 8%. Next up, Loop Capital downgrading 5 below to hold. Loop Capital saying it's looking for a more attractive entry point with its bullish view already priced in. And you see the stock there down by nearly 2.5%. And finally, Raymond James upgrading AMD to a strong buy from Outperform, saying the company offers, quote, the strongest combination of direct earnings leverage, given the data center positioning and market share gains. You see the stock here pop by 3.5%. Danny.
More broadly, we are looking at chip stocks moving higher ahead of NVIDIA earnings tomorrow. They were down sharply yesterday. Many of the AI stocks were. Sentiment started to turn, whether it was because of NVIDIA hiking prices, be it some negative commentary-ish from Sam Altman saying that things weren't speeding ahead as quickly as he thought they were and others, but tech does appear to be improving ahead of NVIDIA earnings. Let's bring in Bloomberg Intelligence Head of Global Tech Coverage, Mandeep Singh. So we just logged 7 straight days of losses for NVIDIA, the longest running streak since 2022. How tall is the order of NVIDIA to prove that this AI boom is racing forward?
Well, I mean, like every quarter, they have to beat and raise, but more important here is what kind of upside they get from someone like SpaceX announcing a target of $100 billion in ARR by the end of the year and really pulling forward some of their targets that they shared during the IPO. So SpaceX has said going forward, they will be only using NVIDIA chips. And they are being very aggressive about ramping up live capacity. And SpaceX has shown a proof point that they can rent out that NVIDIA compute for probably the most premium pricing that is out there. So from that perspective, if SpaceX is the big customer, new customer among the hyperscalers, then what does it do to NVIDIA's estimates for the back half of the year and 2027? I think that, for me, is the key in this print.
Is NVIDIA's biggest constraint still supply, or is demand finally changing?
Well, the demand-supply mismatch remains. Everyone wants more compute. So I think what investors care about is, do the Blackwell chips make a difference in terms of the quality of the models that are being trained? Because remember, Anthropic has the best models, but so far they were using TPUs. They weren't even using NVIDIA chips. So from that perspective, now that Anthropic is a customer of NVIDIA, does that make a difference in terms of the throughput that Anthropic is getting and what it does to their model quality? All these things will play a part in terms of how investors will look at the earnings print.
Mandeep, does that mean that when Anthropic becomes a public company, the correlation between their performance and NVIDIA just becomes really intertwined, that you need to see Anthropic making announcements of improvements in their model in order for NVIDIA to continue to rally?
Well, so NVIDIA serves OpenAI and all the frontier models. But at the same time, you're right. I think if Anthropic attributes some of their model quality improvements to the chip provider, whether it's TPUs or NVIDIA, then yes, it will move the stock. At the same time, what NVIDIA wants is a much bigger ecosystem. They want open weight models to do well. They've, in fact, trained their own open weight model, Nemotron, and giving it for free to others. So from that perspective, they want a bigger ecosystem as opposed to a concentrated two-model provider ecosystem.
If we take a step back, are sovereign AI and financing channels becoming a bigger driver than hyperscalers?
Well, so last quarter, they started giving additional disclosure around how much is their hyperscale revenue, which is around 50%, and how much is sovereign and enterprise revenue. And so from that perspective, they do expect sovereigns to be a much bigger portion going forward. But at the same time, I think the near term will be driven by SpaceX, which to my mind is a hyperscaler, given the kind of targets that they have given around their compute ambitions.
We're also going to get a whole host of software earnings coming out too. I've been thinking a lot about the pace of adoption recently. I've mentioned ad nauseum that interview of Sam Altman saying things aren't being adopted as quickly. Even the post from Stan Druckenmiller today of everyone saying it's AI and like kind of pushing back against the idea that he would use it. Almost, Mandeep, seems to be that we're not in this place that we're like widely accepting some of the uses of AI, and I wonder if that's the place that software finds itself in yet. That a lot of noise has been made about legacy systems being replaced by AI, but we're far from that reality.
Yeah, and the market of late has been more discerning among the ones that have been disrupted in terms of growth slowing down versus the ones that have actually seen an acceleration in top line growth. So from that perspective, I don't think we are at that SaaS apocalypse stage we were in earlier in the year, and now it's more about, okay, prove me wrong. If you are showing me sequential acceleration in top line revenue as a SaaS provider, you will get re-rated, and I think we are starting to see that.
In general, are these software companies becoming more attractive for private equity companies? That's really zooming out a bit, but just curious.
Well, we saw that Workday deal, so
Yeah.
from that perspective, it was pretty big in terms of what kind of interest private equity may have. But I think right now we are at a point where you have to figure out which segments of the market are exposed to LLM disruption, and coding agent is a notable example of that. And then you figure out which are more insulated and where they can incorporate their own AI and get a lift. And that's what I think private equity and everyone in the investing world is trying to figure out. Like, these are the pockets where AI will be more of a tailwind, and they're not at the risk of disruption.
So just thinking about that, because it does feel like a lot of PE firms have kind of pivoted away from just like plain enterprise SaaS and are going more into services, or you're like a Vista and going more into chips with Samba Nova. Is that kind of the direction of travel, that services seems like the safer, cushier area to hide out in if you're concerned about AI and software?
Yeah, I think, look, the vertical software names have always had their place in terms of, having some sort of a unique mode. And from that perspective, this feels like more horizontal, like coding agents. It impacts every sector. But vertical is where you need unique data to create your own intelligence, and that's where I think the market will be more discerning. The chip side, I think, is so elevated that it's hard to see any private equity action over there, given how the multiples have gone up.
Mandeep, so great to have you. I'm sure we'll catch up tomorrow ahead of those NVIDIA earnings. Mandeep Singh from Bloomberg Intelligence. Coming up on the show, the SEC is looking into trading at hedge fund situational awareness and the bank exposure to it. That's coming up next. This is Open Interest.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
Minutes into your trading day, and we push higher. That outperformance being led by tech this morning after a rebound of AI-related stocks from yesterday's sell-off. 10-year yields, that is a crucial pillar helping this market, down 3.5 basis points. Brent crude falls under $90 a barrel as the U.S. pursues economic warfare, in the words of this administration, versus kinetic warfare. New York Times report says that we are bringing diplomats back to the Middle East. That helps Brent crude take the pressure off of it. Elsewhere in some of the individual stocks, NVIDIA, off the back of 7 consecutive days of losses, its longest losing streak since 2022, finds firmer ground this morning, up 3%. Dick's Sporting Goods, that is on track for one of its worst days in a few years after it sells off following an earnings. That's also dragging down Nike with it as Foot Locker underperforms. Micron and SanDisk, I mentioned those AI stocks rebounding this morning. Speaking of AI stocks. Situational awareness. Those were some of the big bets that it had made, specifically SanDisk, before last month's sell-off. Now a new turn in the story. The SEC is looking into the fund's trading activity and has sent subpoenas to major Wall Street banks looking into prime brokerages. Here to discuss with us is Bloomberg hedge fund reporter Hema Parmar. Hema, I would just kind of assume like this is what you would want to see and hope to see from regulators after such a monumentous sell-off?
Yes, I mean, the SEC prides itself on really protecting the smaller investors. And if you look at Situational, it had a lot more regular people or founders or individuals investing in it than, say, bigger institutions. So this probe, and we will say that it is in its early stages and it may not result in any actual enforcement, but it does show that the SEC is examining what was something of a pretty huge hedge fund blow-up. The firm still exists, it still has multi-billion dollars, but that decline from 45 billion in assets down to about 10 is something that's kind of wild in our space for sure.
It definitely is wild, and you've published scoop after scoop on this. I mean, we've seen trades blow up. So how big of a deal is this, and how much of an anomaly is this in the industry, or is it just, one of those that are, because it became a headline name that people always look at because of the founder and all of that, and the backers?
So it was something of a pretty sizable anomaly in the space. A hedge fund shouldn't lose the kind of performance it has lost, and it shouldn't also have these kind of gains, thousands or hundreds of percent gains. Both of those things are not typically what you would like to see from a hedge fund in its performance, but we have seen some outliers as well too. Archegos, the SEC looked into Archegos, the SEC looked into Melvin Capital when that fund basically blew up. Not all of them, they took action with Archegos, they didn't with Melvin. And to be clear, both of those firms were a lot more dire situations than situational awareness, because the firm continues to exist and does still have investors.
Well, isn't one of the unique parts of this, Hema, that with those other examples, it did feel like they were kind of in their own universe. There wasn't a lot of correlation. It feels like you and the team have been reporting that situational awareness's downfall, I mean, not ruin, but their downfall has affected so much more of the hedge fund community than perhaps some of those past examples did.
It's an example of leverage, which is the biggest offender when it comes to these sorts of things, because the trades that Situational did were not groundbreaking. They were long a lot of tech companies you would bet on for the AI trend. They were short software. They were in names a lot of the hedge funds were in. But they took on 4 to 5 times leverage and really added that risk. So that is not what investors like to see when it comes to these sorts of actions at a fund.
I mean, Danny, you covered ETF in your past life. They're trying
Feels like a very long time ago, but yes.
Some issuers are trying to go for 4X and 5X, and I mean,
like
so
your
far
3
it's not
times
gonna go
inverse SpaceX fund. You see it in Korea, leverage being really pervasive throughout the entirety of the investment landscape. Hema, excellent reporting as always. Thank you so much for joining us. That is Hema Parmar from our hedge fund team. Coming up in hour 2 of Open Interest, Maria Waitman of State Street talks about tech earnings sustainability. We get the big one tomorrow. In just over 24 hours, we'll hear from NVIDIA. Plus, we're also going to hear from United Airlines CEO Scott Kirby sitting down with Lisa Abramowitz just about an hour ago, talking about expanding its flight offerings. That stock is higher this morning as the overall market rallies, led by a rally in treasuries. All that's coming up in your hour 2. This is Open Interest.
Today, Wayfair sees immense potential in brick-and-mortar stores. When we got into physical retail, our view was that, even if the market continued to grow for e-commerce, probably a large chunk of the market in the space would stay offline.
Kate Gulliver showed me around Wayfair's new 150,000 square foot Atlanta flagship store.
When customers who have seen us online come into the store, they're generally a bit surprised by actually the breadth of what we offer. Often if you're going online, maybe you're looking for something particular. But when you come into the store, you walk in, you see the market square, you see all these pillows, you see the decorative accents. So what we're seeing actually is that in store, we do really well in some categories that online are, less a percentage of the total.
How does technology help in kind of making it seamless online to store?
I think
and vice versa.
The biggest thing is for the customer on the front end, that she can be in the store, that she can actually shop here, go back home, complete that purchase. And if you look at these sort of price tags and everything, they're all these digital tags. That's because they're the exact same prices they are online. So you're not going to be surprised that you saw something in the store and then you decided to purchase it online, that it's somehow different and that the offering is different. It's actually very consistent, but when she's here, she can have her app open and everything that she's doing here can be very similar to what she's doing at home. And I think that consistency is quite important.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Mumbai. This is Bloomberg.
From ABC News, I'm Wayne Cabot, with her supporters outside dressed in pink at the courthouse. As they have been every day of her murder trial, the Lindsay Clancy jury is hearing its last witnesses.
Prosecutors plan to rest their rebuttal case today after calling two final expert witnesses to cast doubt on the claim that the Massachusetts mother was in the throes of psychosis when she killed her 3 children. The testimony comes one day after Clancy's attorney moved for a mistrial due to testimony from a prosecution expert about Clancy's religion and how it might have influenced her decision to kill her children. The judge denied the request but sternly instructed the jurors to ignore any testimony about Clancy's faith. Jurors could begin deliberations as early as tomorrow. Peter Haralambous, ABC News.
The U.S. has its first measles deaths of 2026, both in Lancaster County, Pennsylvania. The Commonwealth's first deaths from that preventable disease in 35 years. Both were unvaccinated. Canada, our traditionally friendly neighbor, is putting up a fence today, announcing retaliatory tariffs after President Trump threatened 50% surcharges on cars and car parts made in Canada. American car makers Ford, GM, and Stellantis operate major plants in Ontario.
President Trump has claimed the U.S. does not need Canada, but nearly 100% of U.S. natural gas imports come from Canada, along with more than half of our imported crude oil. And Trump last night acknowledged the U.S. relies on Canada for aluminum. Trump says Canada has been ripping off the United States for years. Trade talks collapsed over the weekend.
ABC's Rachel Scott on his social media today. Trump said he's considering renaming Lake Ontario Lake America. The Secret Service says it's aware of a threatening video posted by Iran directed at Barron Trump, the president's youngest son. Stocks have opened flat this morning. Autumn has arrived at Starbucks. The pumpkin spice latte, now officially back on the menu today. You're listening to ABC News. Still burning. About 15 minutes outside Reno, the Hawk Fire, less than a third contained. Tens of thousands of people in shelters praying their homes are okay. And now there's an even bigger fire raging in Texas, doubling overnight.
Throughout the night, flames lit up the sky over Palo Pinto County, 40 miles west of Fort Worth. The Ross Fire has scorched 50,000 acres and is only 5% contained, according to the Texas A&M Forest Service.
The combination of high heat, low humidity, and very dry vegetation is increasing the wildfire risk across the state.
The Forest Service's Laura Stevens, people living in the region have been told to be ready to evacuate. Jim Ryan, ABC News in Dallas-Fort Worth.
An Army sergeant's wife is the latest military spouse to be deported, sent to Honduras after 10 years here. Denitza James is president of the group Repatriate Our Patriots.
Our service members are having to fight two battles, one in the forefront, really, because we are a country of war, and at home front, making sure that their families are being taken care of.
DHS says having a family member in the military is not a free pass to violate our nation's laws. Jeffrey Epstein's accomplice, Ghislaine Maxwell, will stay in prison. This morning, a federal judge in New York saying her claims of constitutional violations are meritless and frivolous. She was moved to a low-security prison camp after talking with former Trump lawyer Todd Blanche, now the U.S. Attorney General. Wayne Cabot, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they perform.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in Midtown Manhattan. This is Bloomberg Intelligence. We are broadcasting live. We're also streaming on YouTube as well. Paul Sweeney and Scarlett Fu. Paul Sweeney is off for the day, so John Tucker has kindly stepped in.
Hi.
Hooray. Hi.
I've been here since 3 o'clock.
Okay, so you didn't really step in. You just moved one seat over.
I haven't moved, so.
Well, I'm glad that you're staying for the 10 a.m. to 12 p.m. hours. We've got a lot coming up over the next 2 hours. We're going to check in with our old friend Yelena Shuleyeva. She is senior U.S. economist at the Conference Board on the latest consumer confidence reading that just came in, a decline for the month of August. We're also going to check in with Tyler Kendall, our Washington correspondent, on Scott Bessent and what he intends for Iran. That big threat, obviously, hinging on U.S. willingness to hit China. Also, talk a little bit about Howard Lutnick and his role in the Canadian trade talks. Lindsay Dutch is our consumer hardline senior analyst. Will join us to discuss Dick's earnings that just came out. And Gautam Mukunda is a lecturer at the Yale School of Management. He's also a Bloomberg opinion contributor, and he's written about management and bureaucracy and what Pete Hegseth has failed to understand when it comes to bureaucracy. So all that coming up over the next hour. First, though, let's bring in Charlie Pellet for our Bloomberg Business Flash.
Hi, thank you very much, Scarlett and John. Good morning to you both. Just getting word that U.S. new home sales declined in July to a 6-month low, indicating higher mortgage rates are choking off demand, even as builders trim prices and offer incentives. The Dow, the S&P, NASDAQ, all higher. The Dow holding on to gains, did dip negative briefly. Right now, though, up 33 points to 53,453. That is a gain of about under 0.1%. S&P higher by 19, up 0.2%. NASDAQ up 0.5%, and the NASDAQ 100 index up by 0.6%. We're seeing a rebound today for the stocks. The Philadelphia Stock Exchange's semiconductor index up now by 1.5%. All of this with the VIX just below 16, a 2-year at 4.19%, 10-year 4.65%, and the 30-year 5.19%. Gold is down $30 the ounce now to $46.21, drop there of 0.7%. Major retreat for crude oil, certainly helping lift sentiment today. We've got WTI down 3%, 82.44 a barrel. Brent below 90, 89.50 right now for a barrel of Brent crude, down by just about 2.9%. So what about the overall market backdrop and investor sentiment? Steve Sosnick is chief market strategist at Interactive Brokers, and he was a guest last hour on Bloomberg in Surveillance.
If they don't start in September and they were willing to wait that long,
I think that the probability they start in October is very low, just because it's so close to the midterm elections, and they might as well wait till December. Now, if they start in September and it's a path of rate hikes from there, I think they're fine with that, and that's a different story.
Sources tell Bloomberg Apple is gearing up to launch a new version of its Mac Mini desktop computer for the first time in almost 2 years. Those sources say the new desktop will debut as soon as the coming days. Recapping, S&P right now up 0.2%. Scarlett and John, that is a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet, with our Bloomberg Business Flash. This is Bloomberg Intelligence. John Tucker and Scarlett Fu, along with Charlie Pellet, with you for the next 2 hours. We just want to give you a reminder that if you're a Bloomberg.com subscriber, you can help shape the conversation on Bloomberg Radio by submitting questions for experts and guests who appear on our show. Visit Bloomberg.com/AskRadio. This is an exclusive feature for our Bloomberg.com subscribers as well as terminal clients. Remember, you can visit Bloomberg.com/AskRadio to join the conversation. Let's bring the conversation to Christina Aquino. She is our managing editor for Markets Live, and she has got her eye on some stocks on the move. Christine, what do you have on your list?
All right, Scarlett, let's start with Zoom because they have earnings due after the bell, so all eyes on that. Shares a little bit on the back foot today, so ticker ZM, and those shares are down just over 1% at the moment, but the expectations are quite positive. Second quarter sales are expected to have risen 4.2%, and Bloomberg Intelligence citing their enterprise business as still the main growth engine. So this is the part of the business that makes large and long-term platform deals with corporations, including Bloomberg, looking for gains of 6% there, and the portion of their business for customers spending over $100,000 in trailing 12-month sales. We're also looking for gains there of about 8.4%. So let's see if Zoom lives up to these pretty lofty expectations.
All right, so buying Foot Locker, how did that work out for Dick's Sporting Goods?
Not too well, John Tucker. Those shares today, Dick's Sporting Goods, ticker DKS, down quite a bit. We're now looking at declines of more than 24% at the moment. And yeah, a lot of focus on its Foot Locker business and its acquisition questions there for sure, because Dick's cut its annual guidance for net sales. So that's why we're seeing the shares on the back foot today. But yeah, Executive Chairman Ed Stack saying that they have seen increasingly promotional conditions in athletic footwear. So basically a lot of discounting there that was affecting a lot of the Foot Locker business, given they have greater exposure to legacy footwear. And our own Bloomberg Intelligence analyst Lindsay Dutch definitely highlighting questions and skepticism over the acquisition, given the latest set of results from
also dragging Nike down too.
Absolutely.
It was down, what, 3%?
We're going to check in with Lindsay Dutch a little bit later on in the hour, to talk a little bit more about that acquisition and how it may not have done what it had hoped would achieve. Okay, Christine, you also have a semiconductor name on your list that I'm not familiar with.
Yeah, I don't think a lot of us are familiar with it, but it is Navitas Semiconductor, ticker NVTS, doing well today. Shares are up now 3.9%. It is a chip manufacturer, and it's in the news because of an acquisition. They're saying that they have an agreement to acquire Claros, which is, it's a company that develops power management hardware and software for AI infrastructure. So this is more related, again, to all the power needed to power the AI data center build out and all the infrastructure related to that. So the deal is valued at around $233 million, comprised of about $216 to be paid at closing in a combination of cash and shares of the company's Class A common stock. So for this particular chip manufacturer, it looks like this deal is really all about expanding its data center power portfolio with this acquisition.
It's all about the data centers.
All about data centers and the power.
And the power
is needed for them.
All right, Christina Aquino, thank you so much, managing editor for Markets Live coverage. And you can check out her work on the terminal by typing MLiveGo. And for more conversations like this, subscribe to our Stock Movers reports. These are our 5-minute audio reports on the biggest winners and losers in the stock market. You can find Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Charlie Pellet gave us a rundown of some of the data points that came out today. There's a whole mess of data points that came out in the 8 a.m. and 9 a.m. hour, and of course at the top of this hour. And you guys were all over it in surveillance, weren't you?
Oh, yeah.
Tom Keene had a
the part that I was awake for.
Oh, come on, Tom. Just kidding. Come on, Sean. Let's talk a little bit about the data points that came out at the top of this hour. New home sales coming in and down 10.5%, but consumer confidence also declining slightly for the month of August. I want to welcome back Yelena Shelyecheva. She is senior U.S. economist at the Conference Board. And when we look at the Conference Board's consumer confidence measure, it declined slightly to 89.4 from a revised 90.2. I mean, the direction of travel is down, but this is pretty much staying at a stable level, isn't it?
Yeah, I think that was driven also, I would like to highlight, by a decline in future, in expectations component, and that was offset by a positive movement in the present situation. I think that's probably what people are paying most attention to. The labor differential improved in the months back to the levels we saw in April, kind of erasing the last 3 months of declines. I would be cautious to, view it as some very positive development, which is a start of a new trend. The index, the labor differential, has been declining for quite some time. It has an established downward trend, and the movement today contradicts the negative payrolls and the decline in job openings. So let's see what happens. At least that's what was driving the index movement today. Also, the cutoff date on the survey was the 16th of the month, and a lot of things happened since the 16th of the month.
Okay, what's the history of what the consumer survey says and what the consumers actually do, whether it be spending money or whether it be voting?
Sure. So one thing to highlight is trend-wise, they do move in tandem, month to month, and sometimes over longer periods of times. They, diverge. We have been through a period when they have been diverging quite substantially, right? The spending has, consumer spending has been solid, whereas consumer confidence has been low. Consumers are not happy about price levels, not so much about the way inflation is going. Consumers are telling us that they may have to cut spending on services, for example, and they're still spending. So these are the things that I would like to highlight. I think
they're spending because they're using their credit cards, or they're spending what?
Or, their savings, and wealthier consumers spending on fun stuff, right? So, but one anecdotal evidence that I have, though, is that I went to Orlando last week, and the crowds are not as, it's not that crowded as it was last year at the same time of the year.
Like Disney World? Or?
So, yeah, those parks, that are a lot of fun for kids. So I would say that maybe we're seeing a little bit of a pushback from the consumer in terms of spending against higher prices that we observe.
More selective spending on discretionary items. You mentioned a lot of things happened after the 16th of August, and I assume you're referring to the move up in yields in the bond market and the Treasury's response to all of that. What is your take on how that affects the consumer? Because yields on the 30-year bond were already elevated even before the Treasury took action. I mean, they've been holding at these levels for a while. Now there's more attention on it because the government chose to do something about it, even if the effect was short-lived.
Well, I think the effect will be short-lived, and that's not the solution to a problem. The problem is much larger, right? It's fiscal situation and things that we need to do to address that. Consumers are very well aware of that. Consumers are expecting rates to be higher, even though in the months there was a little bit of a decline in expectations for interest rates. But again, that was in the beginning of the months the survey was taken. So consumers are still think that the inflation expectations are still elevated. So those two things lead consumers to, be slightly more pessimistic, and I think that will weigh on consumer spending going forward.
All right, 10 seconds. Friday, Chairman Warsh chatty. Direction from him?
I think we will. I hope he will address a little bit of a reaction function question. So, like, explain how the Fed will, achieve inflation goal of 2%, but yeah,
He hasn't so far. So
I think it's my hope, and that is not my expectation.
One can hope, in other words. Yelena, thank you so much. Yelena Shelyacheva, welcome back to Bloomberg. She's a senior U.S. economist at the Conference Board, joining us on the consumer confidence data, which showed a slight decline for the month of August. Right now, we have stocks in the green with the S&P 500 up 0.25%, the Nasdaq up 0.5%. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Along here at Bloomberg, I'm Charlie Pell at the Dow. The S&P, NASDAQ all holding on to gains. Oil, specifically Brent, below $90 a barrel, 89.45 right now, down 2.9%. Bond yields lower. Traders are awaiting NVIDIA's earnings after the bell tomorrow for more clues as to whether the outlook for AI remains intact. And of course, Fed Chair Kevin Warsh on Friday. So right now we got the S&P up by 0.2%, higher by 16 points. The Dow up 63 now, up by 0.1%. Nasdaq Composite up 0.5%. Nasdaq 100 also up by 0.5%. The SOX, the Philadelphia Stock Exchange's semiconductor index, higher now by 1.3%. The 2-year 4.20%, with the 10-year currently yielding 4.65%. The 30-year 5.19%. Gold is now down 0.7%, 46.20 the ounce, while crude WTI 82.41 a barrel, down 3%. Barrel of Brent 89.41. Brent crude down by 3%. Uber rolling out a new safety feature that will let parents or guardians view a video live stream of their teenager's ride. Feature uses the selfie camera on the driver's phone and notifies an authorized guardian if a live stream is unavailable for viewing within the Uber app. Uber shares today, right now we are looking at Uber higher by 1%. Rival Lyft, also based in San Francisco, also up by 1%. Again, recapping here, the Dow, the S&P, Nasdaq, they're all higher. S&P right now up by just about 0.2%. Scarlett and John, that is a Bloomberg Business Flash.
So if they know you're watching them, their behavior is going to change.
Absolutely, absolutely. The real question is, do I need to be able to monitor you, John Tucker, when you're in an Uber or Lyft?
Yes, you do.
Actually. Keep tabs on your behavior.
Frank, yes, you do.
Exactly.
All right. Thank you so much, Charlie Pellet, for that Bloomberg Business Flash. This is Bloomberg Intelligence. You just heard John Tucker's voice. I'm Scarlett Fu. Paul Sweeney is off for the day. Charlie was just mentioning how oil prices are lower. The latest when it comes to Iran and the U.S. is that Treasury Secretary Scott Bessent has announced what he calls an unprecedented U.S. campaign to sever Iran from the global economy. He warns that any country doing business with Iran risks facing U.S. sanctions. At a press conference, Bessent said that we should expect sanctions on a major financial institution. He also pledged that countries will lose access to the U.S. dollar if they launder Iranian money. Take a listen.
Today, we are launching Operation Economic Outcast to foreclose every other option available to the Iranian regime. Treasury has mapped every node, every facilitator, and every network that Iran has used to smuggle oil and evade sanctions. Beginning today, the actions of Treasury and other agencies will tighten the noose and block every potential source of revenue that funds the IRGC and the evil Iranian regime.
That was Treasury Secretary Scott Bessent speaking. Let's bring in Tyler Kendall, our Bloomberg Washington correspondent right now. And Tyler, he didn't mention China, but China is definitely a country that is in the mix here, given that it buys around 90% of Iranian oil, doesn't it?
Right. And Scarlett, he was actually asked multiple times specifically about whether the U.S. would apply these actions to China, and the Treasury Secretary didn't rule it out. He said that no country is beyond the reach of these actions, but we are seeing the administration give essentially a timeline to individual countries for them to comply and cut off financial ties. We don't know what China's timeline looks like. He didn't give us specifics there, but it is definitely raising questions about whether the U.S. will hold China accountable. As you mentioned, China remains the top importer of Iranian crude. I have to say that the feeling here in Washington, and speaking to different people, it doesn't feel like the administration is looking for China to fully sever ties with Iran. That would be a major financial step at least, but perhaps the administration could be able to get some concessions from China related to the conflict, whether that is a reduction in Iranian crude purchases or maybe tightening curbs when it comes to Chinese-made dual-use components that could end up in, say, Iranian weapons. So there's a few different threads that we can watch for here as we wait to see which countries fall in compliance to the U.S. Treasury Secretary's threat, because he says that if they don't meet those demands, then there is going to be the risk of so-called secondary sanctions on a range of sectors, including digital assets, technology, gold, aviation, and shipping.
I gotta wonder, Tyler, the extent to which Scott Bessent is trying to wag the dog here to kind of divert attention away from the fact that the kinetic, the military campaign probably isn't as effective as the administration had hoped.
Well, what is clear at this point that the administration wants to get Iran back to the negotiating table, and we have openly heard officials say that they are opting to ramp up the economic pressure to squeeze Iran instead of opting to resume full-scale military operations. Now, privately, reporting has indicated that part of that decision also has to do with the idea that the U.S. needs to replenish stockpiles first, and there's other issues here that the administration has to take into account into how effective restarting wide-scale military operations would ultimately be. We do know that Iran's economy has taken a severe hit since the conflict began. Inflation right now is running at about 80%, yet at the same time, Iran has also weathered waves of sanctions, which has led to these questions about whether the U.S. will follow through with the threats in bringing in these other trading partners, and not just China, we should say, too. We're also closely watching action taken by Turkey, by India. We saw the UAE last week already move to sever financial ties, they say, completely with the country. So a lot of different ways that this could ultimately go. But to your point, the administration has chosen this path squarely because we haven't gotten any indication in recent weeks that the two sides are talking. There were some mediators from Qatar that were in Iran the other day, but we didn't get updates on whether or not we would be getting closer to diplomacy.
And one question before we let you go, Tyler. Speaking of two sides talking or not talking, what is the latest on the Canada tariffs and trade talks? Because we're understanding that Howard Lutnick actually played an interesting role in those discussions.
Yeah, a person familiar with the matter telling Bloomberg News that it was last-minute pressure from the U.S. Commerce Secretary Howard Lutnick that ultimately led to the plans being derailed, that we were very close to getting a deal over the finish line. But we have to keep in mind that tariff authorities in the U.S. are split between agencies. Some fall under the USTR, some fall under the Commerce Department. An array of other organizations also have authority over them. But sector-specific tariffs under Section 232, those national security-related ones, fall under Howard Lutnick's jurisdiction, and appears that, according to our reporting, he did push for greater concessions on the Canadian side. He did not want the U.S. to offer as much relief. Scarlett, the White House, does dispute this notion, says that the Trump team is fully together on all of it.
All right, Tyler, thank you so much. Tyler Kendall, our Bloomberg News Washington correspondent, joining us live from the White House. Let's go back to corporate news because it is retailers' earnings season, John Tucker, and Dick's Sporting Goods is down 25% this morning.
Yikes.
Yeah, pretty painful if you are a shareholder of Dick's Sporting Goods. And this could be because the Foot Locker acquisition has not really done a whole lot for its financials. Lindsay Dutch is our Consumer Hardlines senior analyst, joining us now from Princeton. Is this the verdict of that Foot Locker acquisition, that it really isn't doing it for Dick's Sporting Goods? Or is this kind of a broader trend of people not spending on recreational footwear?
Hi, Scarlett. Thanks for having me. I think it's a bit of both. So Dick's, announced this Foot Locker deal in May of last year, closed on it almost a year ago. They had an aggressive plan to bring Foot Locker, turn that business around, bring it back to sales growth with their brand relationships, fixing the assortment. Everything was going good, until we got the results this morning. And this was really the time that Dick's had to prove that buying Foot Locker was the right move. And there was a lot of investor skepticism about the deal. And that stock is down over 20% because, everyone is very disappointed that that turnaround is not coming to fruition so far.
I'm trying to count the number of retailers who are in a position of a turnaround. Where do they go from here?
Yeah, so, Dick's management is steadfast on, they believe that the acquisition is a good long-term opportunity. I will say that I think there was a pretty abrupt pullback in that lifestyle footwear market and a pullback in the discretionary spend in that category specifically. That's why we saw Foot Locker see same-store sales decline 3.6%, but the legacy Dick's business was really up 4.9%. So there's a big gap between those two businesses. And so, Dick's doing this deal, that's what everyone was worried about, is now you're subject to this lifestyle demand, which can have this rapid swing. And they have to figure out how to get the assortment right and reduce that volatility.
Talk a little bit more about the legacy business at Dick's that's working well, in fact, and whether Dick's can do more to invest in that part of the business.
Right, yeah, so the legacy business is more based in sport. So it's whether, kids or adults are trying recreational sports, and getting the clothes, the equipment, the shoes for that. Or, if you're a big fan, the major league teams, they carry all of the branded apparel for those teams. And World Cup was an advantage in the second quarter for that legacy business. That demand has been a little bit more steady than sort of lifestyle. And same-store sales is slowing down a bit just because they've had strong comps. But Dick's is still obviously seeing growth there. And I think they can continue leaning into sports moments. They're a big sponsor of the LA Olympics in 28. So we have lots of events to look forward to fuel that business going forward.
Hey, I just want to look at the balance sheet there in terms of free cash flow, debt. What does that look like at this point?
Yeah, so the Dick's business had to go through their own turnaround several years ago, and they were successful in doing that, shoring up the balance sheet, getting all the financial metrics in better shape. Foot Locker, the addition of that business adds some pressure. It was already a lower profitability business, so we were expecting, pressure on, the overall consolidated results for the back half of this year, even going into next year. But I think that the results today say that the pressure on profitability for that Foot Locker business, could extend a lot longer than expected. It could be worse than expected, and that's going to be something that Dick's is going to have to figure out, where they're investing in CapEx. Do they have to pull back? How do they get the return on their investments?
Very quickly, Lindsay, is management vulnerable in any way here because of this acquisition and how it's not going as smoothly as they had hoped?
In terms of turnover?
Yeah.
I think we would have to wait and see. I mean, I think for now, it was just one quarter. It was a very important quarter because the turnaround of that Foot Locker business had been promised for back to school season. But I think that, we do have to give some time. It has been less than a year since the deal was done. And there is long-term opportunity. So we just have to see them more aggressively bring the results from that.
Okay, well, for now, investors don't appear all that patient, given that Dick's is down now 26% to $132 a share. Lindsay, thank you so much. Lindsay Dutch is our Consumer Hardlines Senior Analyst. John, do you go to Dick's Sporting Goods at all?
I do not. I'm going to go where the cheap, well, first of all, what am I going to buy at Dick's? A baseball bat?
I don't know, maybe.
No, when I go for footwear, it's the cheapest place I can find.
TJ Maxx? Marshalls? No, not there.
The big...
we'll get into your shopping habits later on.
You don't want my shopping
habits. I do. I'm curious about it. This is Bloomberg Intelligence on Bloomberg Radio. We are looking at stocks give up a little bit of their gains, but still in the green.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, they're all pushing higher right now. Looking at a 15-point gain on the S&P 500 index, up right now by about 0.2%. Dow Industrials up 51, higher by 0.1%. NASDAQ, meanwhile, up 0.5%. The NASDAQ 100 index up almost 0.6%. All of this with the SOX, the Philadelphia Semiconductor Stock Exchange Index. The SOX up 1.35% right now. 2-year 4.19%, the 10-year 4.65%, and the 30-year 5.18%. Spot gold down $16 the ounce, down 0.4%. West Texas Intermediate crude down 2.7%, $82.70 a barrel, and a key round number. We're looking at Brent crude below $90 a barrel now, $89.64, drop there of 2.7%. Consumer confidence fell in August to the lowest level since the start of the year on a deteriorating outlook for business conditions and the labor market. Down under 1 point, though, to 89.4. Yelena Shulyateva is senior U.S. economist at the Conference Board. She was a guest right here on Bloomberg Intelligence.
Consumers are not happy about price levels, not so much about the way inflation is going. Consumers are telling us that they may have to cut spending on services, for example, and they are still spending.
Yelena Shulyateva of the Conference Board. Speaking of consumers, speaking of spending, United Airlines adding 10 destinations in Europe and Asia to its network next year, deploying Airbus's new long-range narrow-body planes, the 321 XLR, to help cash in on demand from people looking overseas for leisure. A lot of new destinations, including Luxembourg, Marseille, as well as Ibiza and Valencia in Europe, also Okinawa in Japan. Scarlett and John, that is a Bloomberg Business Flash.
Those all sound wonderful.
I'm sure Charlie's already been there, or at least planning at this point.
Yeah, for the most part, pretty much. Not Okinawa, but just about everywhere else. But the big news out of this, by the way, was Scott Kirby really giving a ringing endorsement to Newark Airport being back. Remember all the issues they had just a couple of years ago?
Did you just roll your eyes?
Wait a second. Yeah, I did roll my. Has he been there?
That's where Lisa Abramowitz talked to him this morning.
Because I've been there.
And no, but the important thing is you guys obviously remember all of the delays going in and out of all of the disruptions. Newark is back, baby. That's the message from Scott Kirby.
They reduced the number of flights there because they couldn't handle it.
Absolutely, and now that's the key takeaway. Adding flights. We haven't even gotten into the new Airbus plane, but that's another conversation for another program.
United has a lot at stake when it comes to Newark's success. So I guess it's not surprising that he's counting on it to be back.
No, I'm just saying I was picking up somebody, my son, at Newark, and I just thought it was a disgrace.
It was a mess?
Yeah.
Well, I just learned recently that JFK is kind of all over the place because the airlines themselves kind of got to pick wherever they set up their terminal. So there was no logic or organization behind it, and then they had to connect.
Don't get me started on JFK.
Another conversation. Take public transportation. 20 seconds or less. Warm spot in my heart for United, and I'll tell you why. They acquired Continental. Surprise, surprise. I got engaged on a Continental Airlines airplane. So that's another conversation.
Good story, Charlie Pellet. I love that. Thank you so much, Charlie Pellet, with our Bloomberg Business Flash. This is Bloomberg Intelligence on Bloomberg Radio with John Tucker and Scarlett Fu. Paul Sweeney is off for the day. We got to talk about AI and actually how it affects your shopping habits, your approach to businesses and how you interact with businesses. Because whenever we talk AI these days, it has to do with data centers and your electricity bill going up and the companies borrowing money, in the actual day-to-day.
That's interesting because I was just doing a small business story the other day on consumers' expectations, especially of small and medium-sized enterprises, when it comes to AI, their shopping habits. It was a survey heading into the holidays, what they expect from retailers, and there seems to be a disconnect between what the smaller businesses are doing and what the customers expect when it comes to artificial intelligence.
So that's a perfect setup for our next guest, who is here with us in our Bloomberg Interactive Broker studio. His name is Tomas Gorny. He is co-founder and CEO of Nextiva, which is a private company. And Nextiva is looking to solve some of the problems that John just identified, isn't it?
Yes, absolutely. We are. our focus is on small and mid-sized businesses, the Main Street America businesses that very often get overlooked in the AI motion because a lot of the investments going into enterprises, the companies with deep pockets that they have the time and resources to invest into AI. And unfortunately, smaller businesses don't have the same resources and time, and they are bootstrapped. And so our goal is to democratize the innovation in AI, to provide them the tools so they can level the playing field with the larger companies and compete on the ingenuity.
Now, as a consumer, if I'm buying something for Scarlett for the holidays, for instance, I want to compare prices using AI. I want to do all sorts of things that I can do. But it doesn't seem like the business that I'm going to, the small retailer down the street, really has caught on. How do you help them do that?
In various ways. I mean, the smaller businesses, especially, they have to learn to use the AI in the appropriate way. And what I mean with that is that the more time you invest into training you AI tools, the more you get out of this. And those tools you can use as leverage, really, to deliver consumers much better experience. But I will go back on your statement. People like you and I today, we do not compare companies anymore to the nearest competitors. We compare companies to some of the best experiences that we have ever had. And we expect those experiences from everybody. And if we don't get those experiences, we're very quickly to move on. And like I said before, unfortunately, larger companies, they can connect the applications, the AI, the data in one. Smaller companies don't have the benefits, so there is a disconnect between that. But that's what we're trying to do, help them to connect the applications, the data, which lives all over the place, and help them to train the AI tools so they have a leverage in the business. And the way they can do this autonomously, where AI can really deliver the end-to-end experience, or use it as an agent assist, meaning AI is giving the tips and tools for an employee to communicate with the customers and meet their desires.
So you are a serial entrepreneur. You've been through several different tech cycles. I wonder how you think about what this current AI cycle looks like compared to previous cycles where there was a lot of hype and things were exciting for a while and then it kind of faded. What surprises you about this current AI cycle?
First of all, I think we live in very transformational, exciting times. But what I found different about this cycle as compared to the prior cycles is that in the prior cycles, the tech moved approximately at the same speed as the ability for the human and the user to adopt to the tech. Today, the tech is significantly more advanced to our human capabilities to just mentally get around to adopt the tech. And that's why there's so much hype. That's why there's this perceived race. But what I believe that we as humans have the tendency to overestimate the rate of change in the short run and underestimate in the long run. So although there is this big race, I do not believe the world will all, turn upside down within the next couple of years. But in the next 5 to 10 years, we will see AI play a significant role as a leverage, as other tools like software in every business. And there will be winners and losers on both sides. On the provider side, the ones that provide AI, and also on the receiving side, those companies that won't adopt AI quickly enough, they will be left behind. AI will be just another tool like anything else.
In 15 seconds, what's the next step for Nextiva? You're a private company right now. What's the future?
The future is for us to fight for the mid-sized and small companies that don't have the tools, because Main Street America is the lifeblood of our industry, and if something is not done about it, they will be left behind.
All right, Tomas, well said. Tomas Gorny is co-founder and CEO of Nextiva. This is a private company working through how to use AI to help small and medium-sized businesses better communicate with their customers, especially in their interactions and incorporating that into their business practices. Thank you so much for joining us today.
Thank you.
All right, we're looking at markets that have given up a lot of their gains. Still positive, but just barely. The S&P 500 up 0.1%, the NASDAQ up 0.4%, the Dow Industrials unchanged at the moment. Yields, however, remain lower. The 30-year yield at 5.18%, the 10-year yield at 4.64%. From New York, this is Bloomberg Intelligence on Bloomberg Radio.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
This is Bloomberg Intelligence. John Tucker and Scarlett Fu here with you today. Paul Sweeney has the day off. And, you know, there's been a lot of flyovers lately. I don't totally understand what flyovers are for.
Well, it's usually like at an air show,
Okay.
like a demonstration team like the Blue Angels or the Air Force's team, the Thunderbirds, will fly over, crowds watching and, you know, perform.
Oohing and eyeing.
A part of it is, you know, a recruitment effort.
Ah, okay. I mean, I know that Maverick did this in Top Gun, both the original and the sequel, and he was showing off, essentially. So is it to show off?
Did he get in trouble?
Actually, that's a good question. He got yelled at by his superior, and, you know, he lectured him and Anthony Edwards Goose. And then the second one, I don't think he got yelled at. Maybe?
So in real life, is anybody yelling?
That's a good question. Let's bring in Gautam Mukunda. He's a lecturer at the Yale School of Management. He's also a Bloomberg opinion contributor, and he's written a column entitled Pete Hegseth, who's the defense secretary, fails to understand bureaucracy. So Gautam, just take a step back and explain to us the context for flyovers and why this has anything to do with bureaucracy.
So I love a good flyover. In the Air Force, they often say that the sound of a flyover is the sound of freedom, and I've always thought so myself. The issue isn't a flyover. It's an unauthorized flyover or a flyover that breaks safety regulations and actually puts people at risk. And the inspiration for my column was there was a Blue Angels flyover where the Blue Angels team themselves said, we screwed up. We flew lower than we should have. We made a mistake. This was a safety issue. We need to investigate. And instead of supporting them in this, which is a hard thing to do, right? It's a hard thing to look at your safety when you haven't actually killed anyone and say, we made a mistake. The Pentagon killed the investigation, and Pete Hegseth tweeted out, the flyovers will continue until morale improves. That is an incredibly toxic message to send to the military, to the Pentagon, which is the world's largest bureaucracy. And it's sort of emblematic of all of the failures of Pete Hegseth's disastrous leadership at the Pentagon.
So it seems to, if you want to bottom line that Pete Hegseth kind of thinks that the military can do no wrong. And if they do wrong, then there's a really good reason for it.
I think there's part of it, it's they can do no wrong. Yeah, there's that sort of attitude. I think even more, deeper than that is, like, flyovers are cool, right? When you're underneath one, it's impressive. It has an emotional impact. If you're one of the guys who does it, it sounds great. And I think Hegseth, who, experienced people in the Defense Department will often say, acts like a failed junior officer who has never graduated from being a failed junior officer and doesn't have the perspective you need as the Secretary of Defense, is basically doing two things. When he's saying, this is cool, let's keep doing it, without thinking about the larger consequences of what happens when you erode standards, not just safety standards, but all types of standards in a bureaucracy that says we are going to perform the way we should, because maintaining those standards is not popular, and it takes a leader who's willing to be unpopular to do it. And it's pretty striking that that is not Pete Hegseth.
You're saying that is not Pete Hegseth. How should a leader respond to what happened with the Blue Angels saying, we did wrong, we need to look at this more carefully? No one was hurt, thankfully, but we need to hold ourselves to better safety standards.
So he should applaud them for that, right? So that is the sort of culture that maintains safety and standards and discipline that it takes generations to build. In my column, I talk about George Marshall, the man who built the modern American military, who took the American military from before the Second World War, which had fewer soldiers than Romania, and made it 8 million people strong, and the force that crushed, Germany and Japan. That's an incredible achievement. It's probably the greatest organizational achievement in history, right? And one of the ways that he did this, maybe the most important way he did this, is he said, we are never going to relax our standards. When he became Chief of Staff of the Army, he identified officer after officer who could not perform, and he forced them out. In fact, even during the war, he relieved about a third of generals for performance in combat. He said, you are not good enough for my army, you need to go. That's the exact opposite of this, where a mistake is applauded because it seems cool and it'll get some cheap applause from people from people who aren't thinking about the larger picture.
How does this incident, in your opinion, reflect oversight, experience, even maturity from the leadership at the Pentagon?
So it is the worst of all possible forms of oversight because it's toxic oversight. Even a complete lack of oversight and an institution that just wasn't paying attention would be better than this, because the army, the military that George Marshall created, has got a culture of doing things the right way that is being actively destroyed. This isn't just, this isn't someone who's being lackadaisical or lazy. This is someone who is actively destroying the characteristics and culture that make the American military great. And in terms of the larger picture, it's someone who sees the military not as what it is, the guardians of the Constitution. It's someone who sees the military essentially as a thing that he can exercise his whim on because it's cool or it's fun.
And it boosts morale in this case. All right, Gautam, thank you so much. Gautam Mukunda is lecturer at Yale School of Management, also a Bloomberg opinion contributor. And John, I just need to correct myself. In Top Gun, it was not a flyover. It was a Buzz the Tower moment.
Oh, Buzz the Tower. That was the first one.
Do you remember that?
Yes, I do.
It was a high-risk maneuver.
He spilled his coffee.
Yes, he spilled his coffee and he got yelled at.
I recently did see one over the beach in Sandy Hook, New Jersey, where the aircraft was dropping, the military aircraft was dropping flares. I thought it was a flyover. They were trying to warn other aircraft, the banner towing planes, to get out of the area because the president was coming in on Air Force One to presumably Newark Airport for the World Cup.
So not quite a flyover, just a kind of a mission statement.
It was still cool.
A warning sign. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121, which is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research, because the next hour of Bloomberg Intelligence is now.
is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
This is Bloomberg Intelligence. Good Tuesday morning to you. John Tucker and Scarlett Fu here with you for this next hour. Paul Sweeney is off for the day. We are broadcasting live from the Bloomberg Interactive Broker Studio in Midtown Manhattan. We are also streaming live on YouTube as well. A couple of headlines just crossing, which Charlie Pellet will get to in just a moment. Canada doubling tariffs on U.S. steel products to 50% from 25%. We're going to obviously talk about what is going on in the markets right now, especially with a big week in terms of economic policy and monetary policy. Michael McKee, our international economics and policy correspondent, will join us to give us a preview into Jackson Hole. James Seyfert is our BI senior research analyst talking to us about Bitcoin topping $80,000. Net inflows into spot Bitcoin ETFs, the most last week since October of 2025. And you remember what happened in October of 2025 if you were long on Bitcoin. Sid Phillip is our chief correspondent for global aviation, talking to us about United Airlines expanding its long-haul network with a fleet of Airbus XLR jets. Is that enough to get you to fly out of Newark? Maybe not. I don't know. John Tucker will have the answer to that one. And Erin Hudson, she is one of our Muni Bond reporters, on a fascinating story from Bloomberg News this week on elite private schools. We're talking Deerfield Academy and the like, offering financial aid to families who are making $500,000. She'll explain all of that. But as promised, let's go now to Charlie Pellet for Bloomberg Business Flash.
Hi, thank you very much, Scarlett. Indeed, those headlines right now on the Bloomberg Professional Service. Canada doubling tariffs on U.S. steel products to 50% from 25%. Canada also adding tariffs on U.S. farm equipment, furniture, pulp, and paper. Right now, among some of the steel makers, they are actually higher right now. Cleveland Cliffs up by 1.2%. We've got Nucor up by just about 0.6%. Steel Dynamics up by 0.6%. Farm equipment manufacturers, however, trading lower. Case in point, we've got shares of Deere & Company down now by 2.5%. But again, the headline breaking right now, Canada doubling tariffs on U.S. steel products to 50% from 25%. The Dow, the S&P, NASDAQ all holding on to gains as a decline in oil prices sends bond yields lower. Right now, West Texas Intermediate crude down 2.8%, 82.61 a barrel. Brent crude below 90, 89.41 a barrel, down by 3%. Equity markets cheering. S&P up 10, up by 0.1%. The Dow up 0.1%. NASDAQ right now up by 0.4%. 2-year at 4.19%. The 10-year 4.64%. The 30-year 5.18%. Gold down 0.4%. 46.35 for an ounce of the precious metal. Dick's Sporting Goods shares plunging 27%. It lowered its full-year outlook amid weakness at its recently acquired Foot Locker unit, overshadowing sales gains during the World Cup. Lindsay Dutch is a senior analyst with Bloomberg Intelligence.
This was really the time that Dick's had to prove that buying Foot Locker was the right move. And there was a lot of investor skepticism about the deal, and that stock is down over 20% because, you know, everyone is very disappointed that that turnaround is not coming to fruition so far.
Bloomberg's Lindsay Dutch, interviewed last hour on Bloomberg Intelligence. Again, Dick's Sporting Goods down 27.1%. And, of course, sneaker manufacturers also lowered. Nike right now down by 2.5%. Again, repeating the headline from the Bloomberg, Canada doubling tariffs on U.S. steel products to 50% from 25%. John Tucker, Scarlett Fu, that is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. And, of course, we will break down those tariffs that Canada is now imposing on the U.S. with our Michael McKee shortly. But first, let's go over to Judy LaGrue. She's our Bloomberg News reporter, and she has a look at some stocks on the move today. Judy, what are you starting with?
Hi, Scarlett. I'm starting with Dick's Sporting Goods. I think that's definitely the talk of the market today. And of course, we all know that the company lowered its full-year outlook, but I want to talk a little bit about what Jefferies said this morning about the company's earnings. First, ticker DKS, and also the shares are plunging still as much as 27, now nearly 28%. It is on track to have its worst day on record. So back to Jefferies. Jefferies noted that this is a margin event for the company and not a demand event necessarily. They cite management statements, of course, about promotions affecting the company's margins, particularly in Europe and EMEA. But they did note that Nike is still selling their products at full price, so they see this sell-off as, quote, an entry point rather than a thesis break. So Jefferies is quite bullish on the company still. Also moving on this news, Nike, ticker NKE, as much as 4.2%. Deckers, this is the maker of UGG and Hoka shoes, as moving as much as 4.2%, again down. And then On Holdings, ticker ONON, moving down as much as 3.25% on this news. So really interesting day for footwear in the market.
The next stock, I'm not sure that I really want to see my kids in the back of an Uber, what they're doing late night when they're taking rides.
I mean, personally, I'm going to get to my opinion about Uber after I talk about what it's doing. So really, ticker UBER, moving slightly higher, up 1.1%. It's at a 5-day winning streak. It's on pace to reach its highest share price in over 6 months. So we're definitely watching the share price there. But yes, after the company announced that it is rolling out a new safety feature that lets parents look at their teenagers when they're on a ride, just in time for back to school. And for me personally, I would love to see this for adults.
Like Charlie Pellet, after a night out, you can...
Correct.
Can anybody watch Charlie Pellet?
I mean...
Because that would be like a cool channel.
That's a
Charlie
content
Pellet's
strategy,
ride.
if I've ever heard one
Guilty
myself.
as charged. Man, we would have fun.
Absolutely.
Meet Jonathan Farrow, Tom Keene, the back of an Uber. Woohoo, let's go, baby.
That's a TV show right there.
Live stream it immediately. Lyft is up as much as 1.6%, and Lyft, ticker LYFT, is on track to reach its highest price in nearly 8 months. But I do, yes, stand by my comments. I think this feature should be for adults as well.
All right, last stock, Judy.
Of course. So Target, ticker TGT. Shares are sliding as much as 5%, and the company is on track for its worst day in 3 months. And this is coming after the company apologized yesterday for a children's Halloween costume after the costume itself faced criticism that it looked like it was a person in blackface. So it evoked racist images, and there was a lot of online backlash against Target. And the company removed the listing, and in their statement said, quote, "As a company, we know we got things wrong, and we are deeply sorry." This is a really interesting stock just to look at, because yesterday, huge contrast here, Target closed at its highest price in over 2 years. So again, a lot of movement for Target. We're looking at them for sure, just in light of this apology and in light of their stock movement yesterday.
All right, the review, apparently, user reviews of the item on Target's website before they pulled it was 2 stars out of 5 stars with 7 reviews for this.
And the fact that they're selling Halloween stuff now in August.
Yeah, that kind of blows my mind.
The pumpkin spice lattes are available today.
Oh.
So I think it's
still too hot for that.
The gates are open, I think.
All right, Judy LeGroux, she's going to go get her pumpkin spice latte right now. She is our Bloomberg News reporter, and for more conversations like this, subscribe to our Stock Movers Reports, 5-minute audio reports on the biggest winners and losers in the stock market. They're available on Apple Podcasts, Spotify, or anywhere you listen. All right, Michael McKee is out in Jackson Hole, Wyoming. He's getting ready for the Jackson Hole Economic Symposium taking place later this week. Kevin
How does he get ready? He goes fishing? Is that how you get ready?
I don't know. We should ask him that. Michael McKee, how do you get ready for the Jackson Hole Economic Symposium? You read over everything Kevin Warsh has said, certainly, but how else do you get ready?
Well, I do go fishing and make sure my cowboy hat is clean.
That sounds about right.
I don't mean to out
track
you.
of everything
It's just,
that's happening.
Get you in trouble there, Mike. That's fine. You deserve a good fishing rest.
Of course. What you need to do is just keep up with everything that's happening, which is very difficult these days because every minute, including just a few minutes ago, we get some new headlines about that will affect the economy, and this, I guess, about Canadian trade.
Yes, exactly. So Canada struck back, I guess, as expected after the U.S. imposed tariffs. And a lot of people are saying that this is something that's going to do more damage to Canada's economy than it will do good. But Mark Carney, the Prime Minister, has the Canadian public behind him in this, doesn't he?
Yes, and I would say this, Scarlett, and I know you know what it means: elbows up. It's a hockey term, and it means you go into the corners with your elbows up and ready to fight if you need to. And in this case, the Canadian people seem willing to take the hit to the economy. They've just announced that they're going to put tariffs on September 8th, the day after Labor Day, of 15 to 50% on U.S. products. They're targeting things like aluminum and motorcycles and washers and dryers, farm equipment, chainsaws, John Tucker, and even clams and frozen octopus. They're going to raise the tariff on U.S. steel to 50%, which would match what the president is putting on them. But of course, he said he's not going to do it until January 1st. So the Canadians making a strong first statement on what their tariffs are going to be.
Okay, just to clarify, with the heft of the U.S. economy, it's Canada that's really going to feel this.
Oh, yes. It'll hurt the Canadian economy quite a bit because they do most of their trade with the United States. And this is more of a signal than an effort to accomplish anything other than to let the United States know, to let the administration know that they're not going to settle for what the Prime Minister calls a bad deal. And the two sides have, over the last 24, 48 hours, blamed each other for the collapse of the talks between the two. But it's also been noted that by U.S. officials that talks are still ongoing. So while all of this is out there as a warning to the United States and a danger to the Canadian economy, there is a very strong possibility that most or not all of it will take place.
Okay. Well, thank you for bringing us up to date on the latest trade war salvos between Canada and the U.S. Before we let you go, Mike, Scott Besson's one-time mentor, Stanley Druckenmiller, has published an op-ed in the Wall Street Journal that basically says what Besson announced last week in terms of the Treasury increasing its buyback of long-term U.S. bonds is a mistake.
Yeah, that was quite the article by the head of Duquesne Capital, who worked with Scott Bessent under George Soros to bring down the British pound. So when you see something like that, you know that there is a message being delivered, and it's interesting that he delivered it in public. He obviously has the phone number of the Fed chair, and the Fed chair, Kevin Warsh, was working for him until just before he became the chairman of the U.S. Central Bank. So this is a strong message telling him that the markets should make the decisions, which is also the message Kevin Warsh has given. And so the whole Bessent thing with the buybacks could make it harder for Warsh to get the signals he wants from the bond market about where the economy is and where it's going.
Yeah, and remember, it was Soros, Druckenmiller, and Treasury Secretary Bessent who made a lot of money shorting things like the pound because they firmly believed, and it's true, government interventions eventually don't work.
Unless you are sitting on the other side, and perhaps that's where we're at right now. Michael McKee, thank you so much. And of course, we'll be checking in with Mike as he gets ready for the Jackson Hole Economic Symposium. You know, as part of the Treasury buying back some long-term debt, people are calling this, you know, government interference, perhaps messing with the markets, and the dollar declined, yields have been rising. A lot of people are wondering whether they want to be in U.S. dollar assets, like the dollar, like bonds. Maybe stocks not so much, because stocks kind of move to their beat of their own drummer, earnings.
And they're seeing more and more competition from private credit
Yes.
and other avenues to raise money.
Other assets as well. Crypto has done incredibly well over the last week or so. You didn't think I was going to say that because crypto has done terribly since
What's
October.
part of the, or we're calling it the debasement trade?
The debasement
dollar
trade.
debasement.
Yes. James Seyfert is our Bloomberg Intelligence Senior Research Analyst. And James, how much of Bitcoin topping $80,000 is tied to this idea of a debasement trade?
I mean, no matter how you slice it, that's always a narrative. And whatever is happening with Bitcoin, I guess unless it's falling nearly 50% from its all-time high. But this is undoubtedly part of the catalyst of what we've seen. We also seen a lot of movement out of the White House for some hopefully helpful things for the crypto industry around clarity. Trump spoke at the White House and said a lot of positive things about crypto around the same time. So, but I think most of it has to do with, what Bessent's moves are doing around the Treasury that causes price action. But the other thing you can't discount is that there's been tons and tons of bad news for crypto related and generally for some markets, and Bitcoin kind of just refused to go down. It went below 60. It's been in that low 60 range for a long time, and there's a lot of bad news, and it just didn't seem to go any lower. So there's kind of this thing that it happens in all assets, but particularly in crypto. People try to assign narratives to what's going on with price action, and price action was looking pretty good. And obviously it looked like it basically shot out of a cannon around the news with Bessent. So I think we kind of formed at least a near-term bottom, potentially a long-term bottom. And all this news kind of sent Bitcoin rocketing higher towards 80K from those low 60s in just a matter of days.
Where are we on the crypto front in terms of legislation?
Yeah, I mean, it's not looking good. We're going to get a vote, likely sometime in September. I would refer to Nathan Dean, my colleague down in D.C., who pays much more closer attention to this. Things don't look great necessarily. A lot of people involved are still optimistic.
Maybe you can just explain what it is we're waiting for on that front.
Yeah, so the rule is clarity, right? And it really is just providing clarity around what can happen in crypto markets on blockchains, what qualifies as a security. Is the SEC going to cover these assets? Is the CFTC going to cover these assets? And basically, we need to get a bill through Congress to come into law to solidify all this. If we don't get that, we're going to get a lot of rulemaking coming out of the SEC and CFTC. We've already seen the starts of that from the SEC. So there is going to be some level of clarity provided, but it would be much better if we got a bill or a law passed, I should say. The odds aren't looking great. So at least the market right now is kind of mostly expecting this not to pass, and just that these rules, at least for the near term, are going to be decided by these regulatory agencies. But if we do get clarity passed, look for these prices to see another pop, because that would be a tremendous positive catalyst.
But that indicates that none of that is priced in at the moment, and whatever momentum Bitcoin has, would get extra fuel if something does happen legislatively. Talk a little bit about flows into spot Bitcoin ETFs, because they made a huge turnaround last week. In fact, we saw the most inflows since October of 2025, when Bitcoin essentially crashed.
Yeah, I mean, Bitcoin, crypto in general, everything peaked in early October. We had some hiccups with trading and a lot of issues with deleveraging events, liquidation events, and it has been brutal for crypto for the most part ever since then. To be fair, the outflows haven't been tremendous, but they haven't really been seeing inflows. Actually, what prompted the first wave of serious inflows, that $2 billion mark you're talking about, really started after essentially a hardware wallet or a wallet where you normally store your keys to handle cryptocurrency. There was an issue with it. A whole bunch of money got hacked, and tons of people lost their money. It's a very sad story, but what ended up happening is I guess a lot of people decided to turn to the ETF because it is a turnkey solution. It's a lot simpler than trying to handle the cryptography yourself. So that kind of negative event wasn't good for Bitcoin itself. That's another example of one of those things that I was saying, like that happened and it didn't really send Bitcoin to new all-time lows, which is kind of surprising. And so a lot of money came in, and then we're also seeing all this stuff happen. So momentum, obviously, price is following momentum, and money is coming in. So these kind of things tend to be self-referential. They build on themselves, and that's what we're seeing here with the ETFs. It hasn't been great. They had a really bad last couple of months with outflows, and now, like you mentioned, we have the largest inflow week that we've seen basically since the fall. So yeah, we've taken in, the Bitcoin ETFs in the U.S. have taken in almost $2.5 billion since August 17th. Yeah.
Who's buying Bitcoin? Is it mom and pop, institutional investors? This is the realm of whom?
Yeah, that's a good question. The real answer, if I were just to not explain anything, is all of the above, right? One of the big users of these ETFs historically has been hedge funds, but they've actually been net sellers all year. We just got a 13F report, so we can kind of see what a chunk of these, who is using these ETFs, but it only accounts for 25-ish% of the holders of the ETFs. So that means that 75% is largely retail or overseas buyers that don't have to file those 13F reports on who's holding what. But what we're seeing is advisors largely are still allocating. So they were net sellers in the first quarter of this year. despite the huge pullback, advisors were actually net buyers in the second quarter. So we only have this data through the end of June. I would suspect they are part of this buying crowd in this third quarter now that we're seeing these inflows. We won't know that answer until sometime in the fourth quarter because we don't get we get a 45-day delay in the quarterly report. But the answer is all the above. A lot of it is retail. Advisors are long-term buyers. And if that basis trade, so one of the reasons hedge funds are huge users, they like to do what's known as the basis trade. A lot of people know it from treasuries. But essentially what you do is you sell forward a futures contract that rolls every month, and you hedge that position by buying the spot asset directly itself. In that case, they use the ETF for that exposure. And what it is it's a delta neutral position where you have like a risk-free exposure to whatever that basis trade is. When the futures market is going up higher, what's known as contango, where the futures price is higher than the current spot price, that yield, particularly in crypto assets like Bitcoin, can get very high, like double digits, and it's virtually risk-free. So they were using that, but that yield is gone. And so we've seen tons of hedge funds leave. So if we see that basis yield pick up, expect to see Bitcoin ETFs in particular, taking tons of money from that hedge fund trade.
Yeah, the institutional money will come flooding back. James, thank you so much. James Seyfert is our Bloomberg Intelligence Senior Research Analyst. And just a quick note that he and his colleague Eric Balchunas have written a new book that's due out this fall called Both Sides of the Coin. It's available for pre-order now, but it's basically a fresh look at Bitcoin and crypto post the spot Bitcoin ETFs that allows TradFi investors. You know what TradFi is?
No.
Traditional finance investors to better understand crypto.
You speak the lingo.
Yeah, TradFi, DeFi, all of that. James, thank you so much. And let's get a reset of where things stand with the markets. Charlie Pellet is here, and it looks like we've regained our gains here in the major indexes.
Absolutely right, Scarlet Fu. We've got the Dow, the S&P, NASDAQ all advancing right now. And this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. Canadian Prime Minister Mark Carney is matching dollar for dollar the new tariffs imposed by President Trump over the weekend. He also announced support programs for Canadian businesses hurt by the escalating trade war. Canada will double its existing counter tariffs on U.S. steel and aluminum products to 50%. Now, among steel names today, looking at ADRs of Nippon Steel, which happens to own U.S. Steel, up 0.7%. Some of the other names include Cleveland Cliffs, higher by 0.9%. Trading lower right now, Steel Dynamics down by 0.2%. The Dow, the S&P, NASDAQ all higher. Stocks are rising as a decline in oil sends bond yields lower. S&P up 16 to 76.68 now. That is a gain of 0.2%. The Dow up 0.1%. NASDAQ up 0.5%. 2-year 4.19%. The 10-year 4.64%. Right now we got gold. Spot gold down $9 the ounce, 46.42 now, down by 0.2%. West Texas Intermediate crude trading lower by 3.3%. 82.20 on WTI. Brent, I mentioned below 90, right now below 89. 89 even, actually, down 3.4%. John Tucker, Scarlet Fu, that is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet with our Bloomberg Business Flash. John Tucker and Scarlet Fu here with you for this second hour of Bloomberg Intelligence. Paul Sweeney is off for the day. We want to talk a little bit about what's going on with United Airlines because they fly out of Newark, and John Tucker...
Well, that's their hub, right? Their major hub.
That is their hub, although don't they do a lot in Chicago as well?
I don't
Do
know.
they have regional hubs? Is that what's happening?
Maybe our guest would know.
Okay, let's check in with Sid Phillip. He is our chief correspondent for Global Aviation. Sid, United is expanding a long-haul network with a fleet of Airbus XLR jets. How significant is this? I mean, United has a hub in Newark. We know that United had some issues. Was it earlier this year or late last year?
Or
it's been for a couple of months, really.
I'm trying to erase that from my memory.
Yeah, well, it's been for a while. Yeah, and even with additional capacity, the issues at airports like Newark have kind of cast a bad light on airlines that are based out of there. So talk to us about what United is doing here.
So United is basically expanding their international network. They're making a bet that Americans will want to travel overseas. And so that's where the big growth for the industry is going to come from. And so Newark is betting, United is betting on Newark, and they're sort of expanding their international long-haul network from Newark, as well as other airports in the US. But given the fact that Newark is obviously one of their biggest international hubs, this is a significant moment for them. And what they're actually doing is they're using an aircraft called the A321XLR, which gives you the economics of a narrow-body aircraft. So think of the aircraft that typically you fly domestically, and that's the aircraft they're going to use. But instead, this aircraft can fly for 8 hours over the ocean and essentially offer you the same sort of economics that you would get on a narrow-body aircraft without having the risk of having to fill up a big wide-body jet like the 777 or the 787 that they typically fly.
So American is betting that Americans will want to travel overseas at a time when the rate of inflation is rising, when airfares are rising, when the economic outlook is uncertain. Is that a good bet?
So United has a bet on the fact that there is a huge demand for premium as well as leisure travelers who are sort of well-heeled. I mean, they've talked about how the average income for their typical customers is much higher than the typical US airlines. And so United has sort of always bet on these high-paying, sort of more affluent customers. And that bet has paid off because they, along with Delta, are the two most profitable airlines in the industry. And that's the sort of bet that United is looking at, where you can sort of add more international routes, sort of get that FOMO traveler, the traveler who wants to go travel to exotic destinations like Valencia and Ibiza in Spain from America. And that's the customer that they're targeting. And with the A321XLR, you have a much smaller plane, so you can fill up that plane much more easily versus a much larger plane.
Is United going to cut back at all on what it offers domestically, as it provides more options for people who want to leave the country, to travel out of the country?
So they said they will not reduce their domestic frequencies as they expand internationally. They're getting these new aircraft like the A321XLR, which will allow them to increase both their US network as well as expand internationally. But they talk about how the significant growth to their network will come from international.
This is Airbus, not Boeing, right?
This is the Airbus A321, yes.
What's wrong with Boeing?
Boeing doesn't really have a product that competes with the A321XLR in terms of being able to have that range that the A321XLR has. It does. Boeing obviously has the 737 MAX, the MAX 8, the MAX 9, the MAX 10. But obviously the MAX 10 hasn't yet been certified, and it also doesn't have that same range that the XLR offers. And so there is this aircraft that Airbus has in a niche that doesn't really have a rival Boeing product. I mean, the 757 was the nearest competitor, but that was phased out years ago. And so there isn't really a direct competitor that Boeing currently offers to the market.
So with United expanding these international offerings, do you expect a response from Delta, from American shortly? I mean, are they going to come out and boost their offerings?
So American's already been flying the XLR, and they've sort of talked about how they plan to fly that to more secondary cities in Europe. Delta hasn't made a bet on the XLR. They haven't they've expanded internationally. They've added new routes, but they haven't yet made some similar bet like the XLR. And so it remains to be seen where Delta sort of expands to in their network.
All right, Sid, thank you so much. Sid Phillip is our Bloomberg chief correspondent for global aviation, joining us on how United is expanding its long-haul network through this fleet of Airbus XLR jets.
I flew on the big yellow plane, and, that's gone.
Big yellow
it's just
plane?
like the big yellow plane. All the discounts are gone.
I know.
And I'm not the premium flyer like Charlie Pellet.
That's why you're going to stay on the beach in New Jersey.
I'm not going anywhere.
All right, let's shift gears and talk a little bit about private assets. We have our private market segment, which is presented by Franklin Templeton. Looking to give your portfolio an edge? Then look to Franklin Templeton's private markets platform. Learn more at ftprivatemarkets.com. Today, for our private markets segment, we are pleased to welcome our next guest, Wilma Burtis, an equity research analyst at Raymond James, on how the private markets are doing. And Wilma, in looking at your notes, I thought it was really interesting that you said that we're at an inflection point here for private credit. And I wonder what you mean by that, because it feels like we've been in an inflection point for a couple of months now with a lot of redemptions from investors for their exposure to private credit funds.
Sure, and thanks for having me back, and was positive when I was here back in July. Still feel pretty upbeat. Seeing more of those data points indicating the inflection point in 2Q26. We've seen really redemptions start to inflect and go the other way in a good direction, so that's a good thing. And although we're not seeing as much momentum yet on the flow side, inflow side, it seems like we're going to start to see more of that in private credit as spreads continue to expand and the yields on the products are going to become more attractive.
Yeah, as an investor, what does it offer for me? What kind of premium over whatever else?
Yeah, certainly. I think that the current BDCs in the direct lending private credit world are offering in the high single digits type yield. So pretty attractive versus just normal corporate bonds if you have the right risk profile tolerance for it.
And how much competition is giving to something like, I don't know, U.S. Treasuries, for instance?
Yeah, how much competition versus U.S. Treasuries?
Yeah, I mean, is it sapping demand from the Treasury market, for instance? I know it's incredibly deep and liquid, but, you know.
I would say there's generally a lot of interest in credit right now. So there's a lot of different investment types that are pulling people away from treasuries and other things. But you're seeing a very good spread over treasuries. So certainly. It would be
And that's the motivating factor, that spread.
Yes, definitely. Yeah.
In terms of risk, what does that look like right now?
I think that if you're looking at the performance, it's really quite good. We saw about 2% default rates in 2Q. That's versus 2.5% over the long term. So still seeing really good, still seeing very good performance. Of course, the risk is higher, so you have to take that into consideration when you're thinking about that versus something like treasuries, yeah.
Right, but the return is also higher, so that's what you get for taking on that risk. Talk to us a little bit about the sectors, because obviously software is something that caused a lot of concern for investors, the fear of the AI disruption and what that meant for their business prospects going forward. But it's not just software companies, that are getting private credit, isn't it?
So if you look at many of these companies, their portfolios are, it depends on if you look at the BDC or the company, but they do have software exposure. It can be more material within the private credit vehicles, more like 20%. Within the companies, it's more like 10%. So there is that software exposure. We did a deep dive on software, though. We felt really good about it. And we did this back in March when the valuations were super depressed. So we think that that's heading in the right direction, not seeing as much pressure as you heard in the media on software. So we feel pretty good there. But we also think that AI is a very big opportunity for these firms, too. So that's pretty interesting with $6 trillion of capital build-outs to come in the coming years.
Is the AI infrastructure build-out still strong, or is that starting to peter out from your perspective?
I think it's really just building right now. Even we saw a huge $500 million NVIDIA financing, $500 million NVIDIA financing that came out last month. Apollo was involved and others. So yeah, you're seeing a lot more activity there, certainly.
Why are they circumnavigating, away from traditional sources of credit, banks and financial institutions?
Well, they're raising trillions of dollars, so they kind of need to look everywhere. So, and these companies are very good executors too, so they're able to raise these funds pretty quickly and easily. So it can be very efficient for them time-wise.
Do you think the public anger at data centers is slowing down any of the borrowing in any way? I mean, is that having any impact on how the companies move forward?
It's a very sensitive topic, and I think that I spent a lot of time with, for instance, Owl and their data center business, and it's very top of mind. You have to really work with the community. It's a very important part of the engagement, but there are many communities that are welcoming these data centers. It just depends on the particular community and their needs, and you have to really work with the local constituents there.
And the direct lending, sort of a subset, I would call it, of private credit at this point, right?
Yes, yeah. Direct lending is more the traditional, what people think of as private credit, lending to companies that have been acquired by private equity. So other side of private equity.
Private credit has gone through so many stages of evolution.
I can't keep it straight, Scarlett.
I know. Well, I mean, that's why there's this massive industry behind it. Thank you so much. Really appreciate it, Wilma, for joining us today. Wilma Burtis is an equity research analyst over at Raymond James. All right, as we head to, the last half hour of Bloomberg Intelligence, I'm looking at markets and they're not doing a whole lot of anything. We're kind of sitting at these.
But you got to look at the
lows.
volumes too, because summer doldrums, I'll
Yeah, it's
say,
late August.
S&P 500, 23% below the average trading volume for this time of day.
So don't read too much into what we're seeing in the price action. Is that what you're saying?
Yeah.
Yeah, because not a whole lot's
And
going
moves
on
can
until
be
something
exaggerated
does happen.
too.
True,
so.
true. We are waiting for Kevin Warsh to speak on Friday, so I think that's one of the big events. And by the way, a small company named NVIDIA reports earnings tomorrow.
After the close, and we'll have it.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. Canadian Prime Minister Mark Carney is matching dollar for dollar the new tariffs imposed by President Trump, also announcing support programs for Canadian businesses hurt by the escalating trade war. Canada will be doubling its existing counter tariffs on U.S. steel and aluminum products to 50%. We're looking at gains right now for the U.S. equity market with the Dow, the S&P, NASDAQ all advancing. S&P up 16, up 0.2%. Dow Industrials up 39, up 0.1%. NASDAQ up 145, up by 0.6%. The 2-year 4.18%, the 10-year 4.63%, the 30-year 5.16%. Gold, meanwhile, just about flat on the day, up $5 the ounce to $46.57, up 0.1%. Crude, big story. WTI 81.77 a barrel, down 3.8%. Barrel of Brent, the global benchmark, 88.35 now, down by 4.1%. And Bitcoin 79,334, up now by just about 0.5%. Apple shares are trading lower by 0.3%. Sources tell Bloomberg Apple is gearing up to launch a new version of its Mac Mini desktop computer for the first time in almost 2 years. Recapping, S&P up 15, up 0.2%. Scarlett and John, that's a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. It is John Tucker and Scarlett Fu here on Bloomberg Intelligence. Paul Sweeney has the day off. And one of the most widely read stories on the Bloomberg terminal over the last day, John Tucker, is the story with the headline, Elite Private Schools, and here we're talking about boarding schools, secondary schools, high schools, offer financial aid to families making $500,000 a year.
Because they need it?
Apparently, that's what we kind of want to dig into. Erin Hudson wrote the story. She's our muni bond reporter because a lot of these schools do end up tapping the muni bond market, and she's with us here in studio. So do families that make $500,000 need financial aid in order to send their kid to one of these elite private schools?
Well, how much are they charging?
Yes. So part of this is a function of the price, the cost of tuition at these elite private schools. The average across the country is $50,000 now, and at a boarding school, it's closer to $80,000. So that's really at a college level.
Yep.
And for secondary, elementary school age kids, that's a hefty price. And there's a lot of families that was always unaffordable, but it's increasingly unaffordable for even families that typically would consider themselves high earners.
So the fact that they're doing this like giveaway, financial aid or whatever, indicates to me that these schools are growing desperate for students, or what?
Well, so the schools we spoke to, what they tell us is that they're noticing a change in their applicant pool. So they're noticing that they're getting applicants from either the children of very wealthy people who can afford these prices,
without blinking,
or they're getting kids from low-income backgrounds that need full tuition, full rides. And they're missing the middle. That's how schools are phrasing it. So they want to attract more families who are sort of in between. Maybe they can afford to pay something, they can't afford the full price. And in some cases, it's a talent war. And in other cases, it's a matter of boosting their enrollment, because nationally speaking, there are fewer kids for these schools to recruit because of the drop in birth rate. There's all schools, public, private, are competing for students. So when you're charging $50,000 or $80,000 in tuition, offering a discount is a way that you can try and attract and retain some of those students who have increasing options to consider.
Okay, so if you're going to make financial aid or grants available to families that are making $500,000 a year, how sustainable is this? I mean, it might work for a year or 2 years, but is this a solution that can last beyond a few years?
Yeah, that's really the question. I mean, of course, for a lot of the schools that are offering some of the most generous offers, these are schools that have very large endowments. One of the schools we mentioned, Deerfield Academy, Massachusetts boarding school, their endowment's over $1 billion. So obviously they've got the resources, but the average endowment across private schools in the US is about 9 million. So it's a very different story for a lot of schools. And we did have a rare situation last year here in Manhattan where a school, Manhattan Country School, had to close down after it was known for offering sliding scale tuition. And after losing too many full-paying families, it did ultimately have to shut down.
Yeah, I
So
gotta wonder
there's
if it's just like if you're offering that, then does your elite status sort of evaporate?
Good question. Yeah, and
know?
I mean, these schools all feast off of their elite status.
Sort of self-defeating.
Yeah, I mean, for a lot of these schools, and this is what's so interesting, they are really being transparent. They're publishing this on their website, their income thresholds. And for them, they say it's about making sure that the best are coming to their schools. And this is a little bit echoing what you see at the college level. Increasingly, elite colleges are saying we have these, income thresholds where promising certain levels of tuition not going above a certain level, offering calculators, because they're basically saying, and we mentioned some families in our story who said, we know we can't afford it, so we're not going to even apply.
Right.
And these schools are trying to ensure that all families do apply, all students do apply if they're interested, and then if they get in,
so they can pick the best ones.
Yes.
Now, Scarlett mentioned a lot of these schools do go to the muni market
That's right.
to raise money. What's the reaction in the market in terms of investor reaction when one of the schools is doing this?
Yeah, it is. I mean, the discount rate of the amount of financial aid compared to full-paying families or the school's operating income, these are metrics that investors watch very closely. The private schools that borrow in the muni market, these deals are very, very niche, very specialized. And so investors really do apply a lot of scrutiny to them because of that, because they are so special. So it's something that for sure these schools will, or these investors will watch closely, depending on how it might impact applications.
Right.
It's really going to matter the specific school and the enrollment and the demand for that school.
I know every time you write about a school that's borrowing money, I notice how you include stats like the acceptance rate and the enrollment rate, because these matter to muni investors. It kind of tells the story of demand for this school and therefore whether it's a good credit risk, right?
Totally, yeah. And as long as students want to go to that school and families are paying to go to that school, then that's a good credit in a lot of ways. But what's going on in independent schools is following in a lot of ways what's going on with college, college levels and sort of the level of pressures we see there. So
I gotta wonder what the yields are like at some of these schools.
I mean, I'm sure once upon a time they were great, and like Aaron was telling us, because there's this demographic cliff that we're seeing at colleges, and now at the secondary level, it's coming down, and perhaps that's getting everyone worried.
Yeah, well, I would be worried too. So who knows?
Your kids are done with school, right? They've moved on.
Yeah,
from high school.
No, they're not.
No,
And
from
it's
high
just
school.
like-
From high school.
Well, certainly from high school,
Yeah.
but no, I'm still paying tuitions.
Right. So still lots of payments going on in the Tucker household, as well as the Fu household. So thank you so much, Erin. Really appreciate your joining
Thanks,
us.
Erin.
Thanks so much.
Erin Hudson, she's one of our Muni Bond reporters on how elite private schools offer aid to families making $500,000. I mean, this is such a hot
Just to
button
be clear,
issue.
I'm not in that category, so.
Okay. I didn't ask, but okay.
No, I just,
Yeah,
want
want
it
to
out
clarify? I got it.
The thing that's standing out to me, again, I got to go back to summer doldrums, that theme, because the volumes are kind of anemic.
Down
S&P
double digits,
500,
yeah.
22% below. This is the trading volume this time of day for the S&P 500, and the Dow 15% below the average trading volume for this time
So
of
do
day.
we not take that much into consideration, that the fact that NVIDIA is higher for the first time in 5, 6, 7, 8 days, 8 trading days? It's higher today, and this is on the eve of its earnings report tomorrow after the market closes. NVIDIA always has like a different earnings schedule than everyone else. It comes way late in the cycle.
Never could figure that out.
Yeah, I don't know. They like being special.
Well, they are special.
This is Bloomberg Intelligence on Bloomberg Radio.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
And I'm John Tucker in the Bloomberg studios. You're listening to Bloomberg Intelligence and watching us on YouTube. And just a few minutes ago, Bailey Lipschultz sitting down in the studio talking about initial public offerings, some of the companies that are coming to market. And the interesting thing about these companies that we're talking about right now is that they're not listing in Europe, and they are European companies, Bailey.
Yeah,
Who are we talking about?
We're talking about a Glasgow-based power and equipment service firm.
So when you have like a big event, you'll see Greco's trailers there, the generators, powering up your event.
Powering your event, they like kind of have they made their name working at the Glasgow Festival, but they also worked at the 2018 Winter Olympics in South Korea. At least at one of the F1 events, were using their equipment to power it. So Glasgow-based company, expected to go public here. They filed publicly yesterday. Could be valued at $15 billion. Excuse me. So one of the examples of European companies coming here alongside Finnish smart ring startup Aura Health.
Oh, okay.
The wearables? The wearables company. They have the rings that track your sleep, track your fitness. They've kind of like re-domiciled a bit. They have a dual headquarters, so maybe a bit less European, but European roots, we'll say, with the Finns. And then another one that we wrote about recently was London-based N-Scale, who wants to raise $3 billion in its IPO. They're also expected to come to market potentially as soon as next month. So that's three sizable deals north of $1 billion in fundraising each, $3 billion each in the terms of Aura and N-Scale that could go public September, October.
Okay, so they're not listing in Europe. Why?
Depends who you talk to. U.S. bankers, we have the deepest pools of capital, the best comparable valuations. That's really a big driver. If you're Aura and you're coming to market a ring maker that has a subscription model, okay, well, I want to be compared to some of those companies in the NASDAQ 100, maybe get included into the NASDAQ 100, whereas it's a bit sleepier on the other side of the pond. And then kind of the European angst has been, okay, well, there are rules that make it less attractive. There are a number of kind of issues. There's just not as vibrant of a market as there is in the U.S. All things considered, though, when you look at some of the volumes, it's not really even close. Assuming I know how to work the terminal properly, in Europe, European exchanges, $12 billion in proceeds year to date compares to $161 billion for the U.S. Obviously, SpaceX is half of that.
You know, I gotta, and this always comes up when we're talking to, especially with some of our London staff, but what can Europe do to catch up?
Not really much. I guess they are considering reforming rules to make it more attractive. The governments are lobbying to try to make key companies list there. Even if you just look at some of the companies who have debuted this year, Italian software company Bending Spoons, they own AOL. They raised almost $2 billion. They're up 45% year to date. Doncasters is a well-known company in Europe, a British engineering company. They're up 34%. They raised more than $1 billion in their IPO. So we're just seeing more quantum of capital here in the U.S. Obviously, there's so much potential passive money. So if you are able to go public and get included in the NASDAQ 100, the S&P 500, that's another appealing part of it.
Okay, the bankers, let's talk about the deals and what this means for the U.S. banks that are taking these companies public.
Across the world or across?
You can use any metric you want.
Well, I mean, with pretty much any U.S. deal, you should expect to see some combination of J.P. Morgan, Goldman Sachs, Morgan Stanley. That's kind of been the...
These are all, we follow just the insider look, something called the league tables, and it's very important for us and for the banks.
It's important for the banks. It's kind of when you think back to the whole SpaceX IPO, Goldman Sachs and Morgan Stanley were joint leads, but Goldman Sachs had the coveted lead left role, which meant their name was first on the branding. They could say in marketing materials, we were the ones who worked closest with Elon Musk to take SpaceX public. And that just goes such a long way when you look at marketing the next deal a la Anthropic or OpenAI from the banking perspective. And obviously it also plays out in the fees and it does play out in bonuses, which I know bankers really care about.
What's the appetite for IPOs? And I'm not just talking about Europe, but the United States as well. What does the market look like right now?
It's going to be busy. We're gearing up for a very busy stretch. Again, Agreco, Aura, SB Energy is a SoftBank-backed company that's expected to raise, $5-6 billion in its IPO. Obviously, Anthropic is the event we all are still working in the office, kind of waiting for that filing, because that's a company.
Just give me a guess, like what the parameters for that?
They're expected to raise more than SpaceX, so more than $75 billion in the IPO, and the expectation is the size will be likely bigger than SpaceX.
And the timing of all that?
We expect them to be public by early October. This could happen as soon as mid-September, late September. We're really looking kind of at mid-September through early October as kind of the fastest timing for Anthropic to go public. But I think for all intents and purposes, Anthropic should be a public company barring some great change by the second week of October.
And we're going to hold you to that. Bailey Lipschultz, the Bloomberg News senior equities reporter on some of the IPOs taking place, the European companies that are going to be listing in the United States in particular. As we close out, S&P 500, 21 points higher. Again, low volume day. The Dow Jones Industrial Average up 112 points. For our listeners in the U.S., reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121. Presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories, global business headlines are coming up right now. I'm John Tucker along with Scarlett Fu. You've been listening to Bloomberg Intelligence.
From ABC News, I'm Michelle Franzen. The divide between the U.S. and one of its top trading partners is deepening. Canada leaders detailing plans for retaliatory tariffs on U.S. goods set to begin September 8th. Canada's Finance Minister, François-Philippe Champagne, says the hikes will match the U.S. imposed 50% tariffs on certain Canadian imports already in effect.
We will meet the moment together.
ABC's Karen Travers has more on the brewing trade war.
Why is Canada doing this? Of course, we heard the Prime Minister say that they're in a trade war right now. They feel attacked and they have to respond. A senior Canadian government official said that they're doing this to level the playing field and protect Canadian companies, and that this is a necessary move. The president today said that of all the countries he deals with, Canada is the most difficult and unreasonable.
Fire crews in Nevada continuing to battle the Hawk Fire near Reno. More than 60,000 people have been evacuated northwest of Reno, and more than 15,000 acres have burned so far. Meantime, in Texas, a new blaze has exploded near Dallas, scorching 50,000 acres so far. In Massachusetts, prosecutors are expected to wrap up testimony from rebuttal witnesses today in the Lindsay Clancy trial. The mother is charged with killing her 3 children. Defense attorneys argue Clancy suffered from postpartum psychosis. ABC's Peter Harlambous says a forensic psychologist is on the stand today disputing the claim.
Tried to cast doubt on the argument that it was psychosis by highlighting that she only heard this voice in her head once, that her systems were kind of inconsistent with that she was more likely disassociating in those moments.
Closing arguments expected to begin this week. Pennsylvania's health department says 2 people have died in the state due to measles. There are the first deaths in the state from measles in 35 years. The CDC shows there are a record number of measles cases nationally for a second straight year, with 2,700 cases reported across 45 states. You're listening to ABC News. In Texas, the father of slain high school track star Austin Metcalf is speaking out in an ABC News exclusive interview on his son's killer, making a bid for a new trial. Carmelo Anthony was convicted of fatally stabbing Metcalf during a track meet last year. A judge rejected the defense request for a retrial. ABC's Aaron Katersky sat down with Jeff Metcalf and asked what he made of the verdict.
Did you get justice? No. There's no such thing. I got handed a life sentence. We don't ever get to see Austin again. We don't get to talk to him. We don't get to hug him.
Carmelo Anthony was sentenced to 35 years in prison. Target says it's removing a children's Halloween costume after it was widely criticized as racist. ABC's Sophie Flay explains.
The images of the costume are being compared to racist caricatures, evoking blackface. Target now acknowledges the costume should have never been for sale, saying, "As a company, we got this wrong, and we are deeply sorry. We know this is especially hurtful for our Black guests, team members, and partners. Removing the costume is an important first step, and we are looking closely at how this happened."
There may soon be a quicker way to get around L.A. An air taxi will be hovering around the city during the 2028 Olympics. Once approved by the FAA, it will fly between downtown Los Angeles and several other locations. Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Go Canada. Welcome to the Tuesday edition as Canadian Prime Minister Mark Carney matches U.S. tariffs dollar for dollar, doubling counter tariffs on steel and aluminum. We're going to get the breakdown from Bloomberg's Tyler Kendall. She's at the White House, also tracking the administration's economic actions against Iran on what is D+1 if you're keeping count. Trump endorsements being tested today once again with specials in South Carolina and Oklahoma. Runoff elections we'll be tracking and we'll discuss with our political panel as flock cameras, yes, I said it, becomes the next flashpoint on the campaign trail. Later, our conversation with Bloomberg opinion columnist Guada Mukunda on the Pentagon's culture of flouting the rules and what it means for safety, all after a look at Wall Street. Charlie Pellet is standing by at World Headquarters in New York with his read on the markets. How's it look, Charlie?
Right now, it looks like the Canadian Rockies, Joe Matthew. In the meantime, stocks are pushing hard, but it's been a choppy day. Canadian Prime Minister Mark Carney is matching dollar for dollar the new tariffs imposed by President Trump over the weekend, also announcing support programs for Canadian businesses hurt by the escalating trade war. Canada will be doubling its existing counter tariffs on U.S. steel and aluminum products to 50%. Now, among steel names today, a lot of them are actually higher. Nippon Steel, which owns U.S. Steel, up by 1.2%. Cleveland Cliffs up 0.8%. Nucor pushing higher by 0.6%. Trading lower right now, Steel Dynamics down by 0.6%. Stocks so higher as a decline in oil prices sends bond yields lower. Traders are awaiting NVIDIA's earnings after the close of trading tomorrow. NVIDIA right now up by 1.6%. S&P up 21 to 76.74, up by about 0.3%. We've got the Dow up 96, up by 0.2%. NASDAQ up 155 for NASDAQ, a gain there of 0.6%. The 2-year at 4.19%, the 10-year 4.64%, the 30-year 5.17%. Gold lower a little change, 46.48 the ounce, down under 0.1%. Crude now down by 3.4%. WTI 82.15 a barrel. Brent below 89 now at 88.76, a drop there of 3.7%. Two major potential catalysts for equities this week. NVIDIA's earnings tomorrow after the bell, and then Friday, Fed Chair Kevin Warsh speaks in Jackson Hole. As for the Federal Reserve and the interest rate outlook, Robert Sockin is chief economist at PGIM Credit. He was a guest this morning on Surveillance.
If they don't start in September, and they were willing to wait that long, I think that the probability they start in October is very low, just because it's so close to the midterm elections, and they might as well wait till December. Now, if they start in September and it's a path of rate hikes from there, I think they're fine with that, and that's a different story.
Robert Sockin of PGIM interviewed this morning on Surveillance. Recapping, stocks higher as oil sells off. WTI West Texas Intermediate down 3.3%. Brent crude down 3.7% now, 88.77 a barrel. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thank you so much. As we connect the dots between Washington and Wall Street, boys, there are a lot to cover today, and we've got the help of Charlie Pellet. We're going to be just fine. Producer James is back here in Washington. We're getting back to something closer to, well, not summer and August recess. We'll just slowly be trickling back in here, a little more each week. The school buses are rolling today, though. I saw the kids out on the lawn. It's got to be real. So thank you for joining us here on the Tuesday edition of Balance of Power. Yeah, crude oil prices lower again on what is D+1. Remembering yesterday was Economic D-Day for Iran, as noted by the Treasury Secretary, and that gives stocks a little bit of breathing room. Charlie will be back in about 15 minutes with more here on the Tuesday trade as we keep our eyes on what's happening at the White House. Another very busy day, so thank you for being with us on Bloomberg Radio and on YouTube, where you can find us right now by searching Bloomberg Business News Live. The word from Canada at the moment is, we will always call it Lake Ontario. This after the president introduced the concept of Lake America. The United States is giving serious consideration, he says, to changing the name of Lake Ontario to Lake America, and that we don't expect to be doing much business with Ontario any longer. Thank you for your attention to this matter. That was followed up by a map, in case you can't sort of visualize that. And if you're with us on YouTube, we can show you exactly what that would look like, taking time to put a red X through Lake Ontario and write Lake America on top of it. Which news organization will be first to call it Lake America? is one question we have, and which will be the first to be banned from the White House briefing room for not calling it Lake of America. The fact of the matter is the president's got himself into quite the sticky wicket here with our so-called neighbors to the north. I've been judging newscasts, by the way, on whether they use that cliche or not, and I welcome you to do the same. If we say it here, we will only say it ironically. Because it's dollar for dollar now, kids. We just heard from Mark Carney a little while ago here, and I thought we'd be starting with Iran today, but no, Canada it is, our other geopolitical, I won't say enemy. Dollar for dollar, the new tariffs imposed by President Trump over the weekend. Canada will double its existing counter tariffs on steel and aluminum products to 50%. American-made furniture, clothing, and apparel will also have new 50% tariffs applied, as will video game consoles. They're getting us at the heart of our culture. Video games, smartphones, and other electronics. This will affect about $20 billion worth of annual U.S. imports. Hey, you heard Mark Carney yesterday. He said this is for real. We're not holding on to the midterms, but then again, these don't take effect for a minute, so it's a little bit difficult to understand where we are. The fact of the matter is, Doug Ford has turned into an absolute soundbite machine, and the real foil, it seems, at least the public-facing one, for President Trump. Premier of Ontario, who's not going to call it Lake America, and incidentally will be our guest on the late edition of Balance of Power. I'm really looking forward to talking with him in a couple of moments, because Doug Ford is not holding back. In fact, the president called him out for the bluster yesterday after he said this.
No matter what President Trump sends our way, we'll have your backs. We will be there for you to protect your jobs and paychecks and stand up for Canada. The Prime Minister has my full support in this decision to walk away from a bad deal that would have hurt Canadian workers and undermined Canadian sovereignty.
Somehow we found the most boring sound cut that Doug Ford ever laid down. That was before he told the president to kiss his blank, and said much more than that. Donald Trump goes to Truth Social. Lots of bluster from Doug Ford, who was the premier of the Canadian province of Ontario, but better known as the less charismatic, intelligent, and overall unimpressive brother of the late, great Rob Ford. If you're too young to know, Google Rob Ford, as the president may have just gone ahead and instructed you. I don't even know what to do with any of this. These things don't take effect till, what, September 11? And the ones that we're proposing go into effect, it's January of 27. I need Tyler, who knows this stuff cold, and I guess we'll follow the bouncing ball right to the north lawn of the White House. Tyler, I didn't realize Doug Ford spoke without saying a swear. He was bleeped all over national media yesterday. Is he going to get on the phone with the president here or what?
Well, actually, it is important context to point out, Joe, that some of these regional leaders really do have negotiating power here, considering that the now new and latest tariffs from the U.S. side, those tariffs on nearly $20 billion worth of goods that went into effect when these trade talks collapsed, have to deal with allegations from the U.S. that Canada is discriminating against U.S. commerce. And that comes down to these individual local laws, regulations, whether that includes local liquor stores saying that they're not going to sell U.S. alcohol products, things like that. So yes, on one regard, of course, it is broad-based, and this has to deal with those high-level officials between Mark Carney's cabinet and President Trump's cabinet negotiating with each other. But then we have to keep in mind that there really is this jurisdictional purview that does go down and allows these other figures to really come into the conversation. We'll see where it goes from here because, Joe, as you've been outlining, it's really only been escalation at this point. We got the escalation from Canada. We can talk more about a flurry of posts from President Trump saying at this point that he's not happy with anyone when it comes to Canada.
Yeah. Has he posted about you today? I mean, I'm looking at Tyler. I can't count just since what? 8 o'clock, 6 in the morning. It's dozens, it looks like, of posts. I'm just rolling through the feed on the terminal here because it's not just Canada he's juggling. And it's interesting that we've turned away from the sort of military conversation with Iran. It's another economic warfare conversation, if I can use that term, separate from Canada. This is D+1, if you take Scott Bessent at his word that D-Day was yesterday. Has anything emerged here with this new pressure play in the Strait of Hormuz?
Well, I do have to add that if the president is listening, I think we would love for him to post it on Truth Social, because at this point we have hit all of these topics today. It has been nonstop out of the White House. When it comes to what the U.S. is doing in terms of the economic pressure from Iran, essentially we're hearing from the Treasury Secretary that there is caution here in acting too quick or too aggressively. And that is why you heard him question yesterday. He said he's not trying to blow up the economic order along those lines. And we're seeing the U.S. now lay out that there are these timelines for individual countries to act and cut their financial ties with Iran or face the U.S.'s threats of so-called secondary sanctions related to a variety of sectors, such as digital assets, or gold, aviation, shipping, also really importantly. But Joe, as you well know and cover every day, the biggest question here is what is this going to look like when it comes to China? And I have to say, I've been talking to a few people. The feeling in Washington from the administration is that they're not really expecting China to fully cut off financial ties with Iran, but perhaps the goal would be to get some sort of movement, including maybe having Beijing curb some of its imports of Iranian crude.
Yeah, wow, boy. By the way, I just was counting 27 posts since 6:58 a.m. I haven't posted anything today. Tyler, the President Xi is here on the 24th, right? That's fixed. That's happening.
Yep, we're now less than a month away. We have gotten those indications from the U.S. side. I believe we're still waiting on final confirmation from the Chinese president, though often China does not confirm these visits until just a day before. That happened when President Trump traveled to Beijing earlier this year. But this is expected to go as planned. There's a few different things on the agenda list, including when it comes to the pressure during the Iran conflict. We did get some pretty stark words out of China's foreign ministry earlier today, essentially threatening to retaliate if the U.S. does make good on its threats to put on this economic squeeze, saying that China is going to take its own action to protect its own interests. But there are broader issues here at play, Joe. Of course, we've heard from people familiar with the matter. The two sides are indeed looking to extend that trade truce, now set to expire on November 10th. So we're creeping closer to where we typically get that extension. It gets kicked down the road as they continue to talk about these key issues. The one thing that it appears that we do know, though, is that Xi Jinping isn't going to stop at the UN General Assembly, though we're expecting President Trump to do that in September.
Wow, amazing. So much to cover every day with Tyler Kendall. Looks beautiful out there. I want to just put down the picnic blanket and meet you for lunch. I'll bring the basket down, Tyler. One of these days we're going to do the show down there. I'm looking forward to that. Thank you, my friend. We'll let you get back inside where the news, of course, is happening. We'll check back with Tyler a bit later on in the program. I'm Joe Matthew. This is Balance of Power, only on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks higher. We've got oil declining. S&P 500 index right now at 76.72. We're up 19, up by about 0.3%. A decline in oil prices sending bond yields lower. Traders, meanwhile, are awaiting NVIDIA's earnings tomorrow after the close of trading. NVIDIA right now, part of a broader tech rally. NVIDIA up by 1.7%. NASDAQ up 0.6%. The NASDAQ 100 index up 0.7. And the SOX, the Philadelphia Stock Exchange Semiconductor Index, up now by 1.5%. We've got the VIX below 16. The 2-year, 4.19%. The 10-year, 4.64%. And the 30-year, 5.17%. Gold is down $12 the ounce, 46.38, down 0.3%. West Texas Intermediate crude, 82.26 a barrel. WTI down 3.2%. A barrel of Brent crude down 3.7%, below 89 now, 88.73 a barrel. Sources tell Bloomberg Alibaba Group Holding CEO Jack Ma has joined senior executives in picking up company stock to show support for its AI ambitions. ADRs of Alibaba up right now by about 0.3%. Recapping, Brent crude 88.74 a barrel, down 3.7%. S&P up 0.3 now, up higher by 21 to 76.73. I'm Charlie Pellett. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, many thanks. Always fun to compare notes on the markets with Charlie Pellett. We do it every day here, and he'll be back coming up in just about 20 minutes' time with more on the Tuesday trade. Looking at you, Bitcoin, topping $80,000 a little while ago. It's just at 79 right now, but up a hair as everybody tries to find some kind of a new hedge. Gold has been rising, and really interesting. It's not up at the moment, but has been on the rise with more folks looking at $5,000 again. We're going to have to get Miami Mike back in here because this is a market that is adjusting every day to policy coming out of Washington, not just earnings. And by the way, we're going to be talking about NVIDIA earnings tomorrow. If you don't already have that set aside for yourself, it's going to be an important one. We get some of the big cyber names too. CrowdStrike is going to be reporting this week. So hold on. More information is coming, which is what we're all about here on Balance of Power. Thanks for being with us on the Tuesday edition as we come to you live from Washington. You remember, it was back in July when these videos went all over social media of the Blue Angels doing this death-defying pass on the beach down in Pensacola. I stopped like everyone else to see if this was real. It looked like an AI video. This thing was, gosh, if you're with us on YouTube, we'll show it. There it is right now. I mean, they're like 2 feet over people's heads. Beach umbrellas come flying out of the ground. There's sand everywhere. Like, what the? Some people were screaming. Other people thought it was cool. It breached safety protocols, though. And by the way, it was not AI. This was real. Apparently, they have this thing in Pensacola called Breakfast with the Blue Angels. As soon as I heard about this, like, honey, we need to fly to Florida. I need to get a load of this. But the fact of the matter is, well, we think it's pretty cool looking. I mean, people were put in danger. Look at this thing. If you're not on YouTube, get there and back it up. CC's showing you right now. Death-defying. To the point where Captain Adam Bryan, who's commanded the Blue Angels since 2024, told reporters this was a breach of protocol. They never intend to fly over a crowd that low, and they were going to go back to review safety protocols. This is like something out of Top Gun, right? Buzzing the tower. And if you're Pete Hegseth, who grew up in the same generation, I guess, that I did, we were all raised with Top Gun, right? Your ego's writing checks your body can't cash. The problem is for Pete Hegseth, that's the point. That's the edge. That's what's cool. That's what's to aspire to, or so we have come to learn. Because everybody was left off the hook on this one. Remember? Sent umbrellas and beach chairs tumbling. Pete Hegseth posted on social media, quote, "The flyovers will continue until morale improves." It reminded us a little bit of that deal with the Apache helicopters. Remember they went up to Kid Rock's house? In some other breach of, he was out there at the pool. No, sir, nothing wrong here. That's America, bare-chested and ready for anything. So we were taken by Gautam Mukunda's column this morning on the terminal. And, in this first hour of Balance of Power, this is where we can have conversations like this. And this is why you join us every day on Bloomberg Radio. That's right. Top Gun is Pete Hegseth's, maybe his favorite documentary. It is mine too, but I don't run the Pentagon. And as Gautam writes, the incident highlights the importance of maintaining standards and upholding safety rules, even when they seem pointless or unpopular. There's more about this than just being upset with Pete Hegseth. You can extrapolate all kinds of ideas about leadership, not only in the military, but in the corporate space. This is why we all meet here every day on Bloomberg. In a 2008 management science paper, fascinating, Catherine Tinsley of Georgetown University's McDonough School of Business built a body of research on why organizations fail to learn from near misses. They found such events get filed as successes rather than failures averted by luck. And you know what that does? It causes you to make even riskier choices. Human nature. And he's with us right now, I'm happy to report. It's my first opportunity to spend some time with Gautam Mukunda, Bloomberg opinion contributor, lecturer at Yale School of Management. It's great to have you with us. Gautam, you Top Gun guy?
Great to be here.
Or just me?
I have seen Top Gun more times than I can count. I'm pretty sure I have memorized every line. So I might be as big a fan as you are.
All right, so this is a good place to have this conversation, maybe route as we come from similar history. There's a difference when you put on the uniform. This is not entertainment. And what you point out here, and the parallel I find fascinating between leadership in the military and leadership on the corporate level, this is human nature that we're trying to counteract, right?
Very much so. Keeping up standards is the part of being a leader's job that isn't fun, but it's all important, right? So the key thing about what happened in Pensacola is the Blue Angels themselves said this was not okay. This was a mistake that can never happen again. We need to figure out what went wrong and fix it. And then Pete Hegseth comes in and overrules them. That is, that's what sort of a bad leader would just sort of ignore things and let standards slip through inattention. This is a toxic leader, someone who takes the things that make an organization like the Blue Angels, like the United States Navy, so extraordinarily successful, the discipline, right? The ability to manage themselves and hold themselves to this kind of standard and say, I'm going to sabotage it because I think it's cool.
You say rules look pointless when they work, and that's the whole point, right? This whole, rule guys are boring. We're ripping our shirts off here and showing America for what it's worth. And then that creates its own backlash, and we get even harder and more strict rules as we go.
Yeah, I'm the first person to say that there are lots of rules and sort of bureaucratic thickets that build up over time that a good leader gets rid of.
Yep.
But the point is that a good leader understands the difference between the rules that matter and the rules that don't. And when the commander of the Blue Angels is telling you this is a problem, that's a pretty big indicator that that's actually a rule that matters. And it tells you that it takes a really, really bad leader in the Secretary of Defense to come in and overthrow it. And it's not just a one-off, right? We know this is his pattern over and over and over again. This is how he envisions sort of military leadership. And it's incredibly telling and explains a lot about what's happened at the Pentagon while he's been in charge.
Well, and the numbers speak for themselves. As you point out, the Blue Angels count 26 pilot deaths in the team's first 70 years. And some of those have been somewhat recent, if you follow the history of the Blue Angels, in the last 10 years or so. But this is a broader issue. I mentioned the Apache helicopters going to Kid Rock's house. Do we equate any of this culture to what's happening on the front lines with extended deployments, with morale concerns?
So I think we do, but I think the equation is that all of those things, the extended deployments, the morale concerns, those are the consequence of someone whose vision of strategy is basically blow stuff up and good things will happen, right? And everything that the Pentagon everything that Pete Hegseth keeps telling us about is, oh, we hit this target, we destroyed this thing. That is a child's view of war, right? Strategy, the military strategy is about the use of force to achieve political ends. And so blowing things up is not a goal. Blowing things up is a means. And it is quite clear that the means he's adopted aren't getting to any sort of meaningful political goal because, again, his view of these things is it's like Top Gun, right? Let's just do things that are fun and cool and exciting and get cheers. And we've all seen leaders like that in the corporate world, too. And I honestly can't think of a case where it's ever worked out well.
The flybys have been amazing this summer, Gautam. I don't know if you're in Washington, D.C., but we've been spoiled. This is just one way that it also manifests itself. But what does it mean if you're serving in this military? They're asking for a $1.5 trillion defense budget. We're obviously engaged with tens of thousands of men and women, Americans in the Middle East right now. And, you know, we're watching at least what's happening in Ukraine and said to be preparing for an eventual war with China. If this is the culture at the top, how does it trickle down?
So it trickles down in a lot of ways, right? So the military organizations succeed when they're disciplined. And this is a message from the top saying, right, stop being disciplined. So that's a problem. And sure, it'll get you cheers, it'll get you short-term popularity right up until you start losing wars because you're not disciplined, right? But it does go beyond that. We just saw the Pentagon get rid of the unit that had been created under the previous administration to learn about drone warfare in Ukraine and figure out what's happening there and import those learnings back into the rest of the armed forces. And instead, we've got a team that says they want to go back to basics. And Pete Hegseth, who sort of seems more focused on, you know, are people have beards or are they thin enough than do they know how to fight a 21st century warfare with autonomous weapons? I don't think your number of push-ups is going to help you a lot when drones are flying overhead 24/7. And this is the same type of pathology. And it's, you know, it's not just a Pete Hegseth thing. He's just like the most egregious example, right? Of someone whose vision of leadership is the guy who does the rah-rah thing and the cheers, but not the hard work of building institutions or thinking, right? Figuring out and learning from seeing the world and learning about what makes a difference. But if there's one thing that the management literature tells us about successful leaders learn. That swamps everything else.
Interesting. So we're talking about what's happening from the defense secretary down. How about from Pete Hegseth up? Does he not mirror the stylings of Donald Trump? Does this not start in the White House?
Of course it does. And this is, you know, Pete Hegseth played a defense commentator on television, which is why he got selected. Yeah. Remember that he was an unsuccessful junior officer, right? So this is not, we're not talking about George Marshall or Stan McChrystal. This is a guy who washed out and then had a role on Fox News and then got tapped for the job. And like, that is the style that Donald Trump, also a reality television star, he really liked, right? He always says he gets people on central casting. And so when they decided were they going to go into this war, you know, Tulsi, we had reporting today where Tulsi Gabbard was conveying the consensus estimate of American intelligence that this is not going to work. And Pete Hegseth was telling him this is going to be easy, we'll go fine. Is it all that surprising that Donald Trump went with the reality TV star who told him that he could get what he wanted easily instead of the people saying this is not going to work, it's going to be a disaster?
I think that's rhetorical. He teaches leadership at the Yale School of Management. He's author of Indispensable, When Leaders Really Matter. Gautam Mukunda, great to see you. Great to talk to you. Find the terminal, the column on the terminal, OPIN Go, or online at Bloomberg.com. I'm Joe Matthew. We'll assemble our panel next. This is Balance of Power, only available on Bloomberg Radio.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks higher. Oil is selling off, and right now the S&P 500 index is higher by 0.3%, up 24 and 76.77. Has been a choppy trading day, but for the most part, S&P very much in the green. We've got the Dow up 94 now, up 0.2%, and Nasdaq up 0.6%. The Nasdaq 100 index ahead of Nvidia earnings tomorrow, up 0.7%. Nvidia, by the way, up now by 1.9%. The SOX, the Philadelphia Stock Exchange's semiconductor index, holding on to a gain of 1.4%. The 2-year, 4.20%. The 10-year, 4.64%. And the 30-year, 5.17%. Gold is at $46.43 the ounce, down 0.2%. West Texas Intermediate crude, 82.35 a barrel. WTI down 3.1%. Barrel of Brent now below 89, 88.85, down 3.6%. United Airlines is adding 10 destinations in Europe and in Asia to its network next year, deploying Airbus's new long-range narrow-body airplanes, the 321 XLR, to help cash in on demand from Americans looking overseas for leisure. Bloomberg's Lisa Abramowitz caught up with United CEO Scott Kirby at the airline's Newark hub this morning, and she asked him for his outlook on the price of oil.
Given the closure of the Straits of Hormuz, I think oil has, while it's elevated, has been less elevated than it could have been. And I think we'll continue to see that, at least I hope, we'll continue to see that trend going forward. More and more oil getting to the market through other means.
United CEO Scott Kirby speaking with our Lisa Abramowitz this morning at Newark. Those new destinations, by the way, include Luxembourg, Marseille, as well as Ibiza and Valencia. A new destination in Asia will be Okinawa in Japan. UAL up today by 1.4%, Delta up 0.5%, and Southwest Airlines up by 0.3%. All of this as the price of crude oil declines. WTI down now by 3.2%. Recapping, stocks higher, S&P up 0.3%. That, Joe Matthew, is a Bloomberg Business Flash.
Wow, Charlie, we go into Ibiza or Valencia?
I can see me and you in the clubs all night long in Ibiza. Bring out the 100%. Foam. We will have some fun there, without a doubt.
The foam parties with Charlie Pellet. I didn't even know about that. All right, Charlie, that's a deal. I saw the interview earlier. They've got the lay-down flat beds, 757. Let's do this. Of course, we have to go to South Carolina first. That's where we turn in this hour one of Balance of Power. It's a runoff day, but not just South Carolina. We've got Oklahoma as well. More Trump endorsements are being tested. This is a big one, too, because, of course, we're talking about Darlene Graham in South Carolina, facing off against Congressman Ralph Norman for the Republican Senate nomination. Nobody got to 50%, so here we are now. And remembering, this is, of course, the seat once held by her late brother, Lindsey Graham. A lot of money being thrown around here, including MAGA money. Trump money was spent on this endorsement. And that's news because, well, we keep hearing he's not spending a dime to help Republicans running for election. MAGA Inc., Super PAC, spent more than $827,000 on text messages and phone calls for Darlene Graham. It is one of the biggest expenditures the entire cycle from the PAC. So the president knows he's got his name on the line here as well. In Ralph Norman's corner, and this really does look like it could go either way, you've got Nikki Haley. So once again, it's Trump versus Haley in South Carolina. She's put some money into this too, $700,000 with her aligned groups. Not even close to the overall tally for Darlene Graham, though. I mentioned the MAGA money. You can add $6 million as well from outside groups. This is where we start. We're going to get into the gubernatorial runoff in Oklahoma, and we're even going to grab the new third rail, the flock cameras, all in this next segment with our great panel, Bloomberg Politics contributors Rick Davis and Jeannie Shanzano. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center, and Rick is a partner at Stone Court Capital, our Republican strategist. Rick, I'm starting with you as someone who is steeped in Republican politics, especially in South Carolina, and no stranger, of course, to the Graham family. You were very close to Lindsey Graham, and we talked about the president's decision to tap Darlene Graham early on. This has been a bit of a challenged candidacy so far, particularly considering her debate performance when it came to geopolitics. What's on the line today, and how much will money have to say about this versus the Trump endorsement?
I think the Trump endorsement reigns supreme over this race right now. I mean, Darlene Graham did okay in the prior runoff. She was 8 points ahead of, Norman, but, 45% of the people voted that day for somebody else other than the two of them. So without the Trump endorsement, I think we'd be talking about a potential upset here. So you're right. I mean, this is all about Donald Trump today in South Carolina, and we'll see. I don't know if $800,000 in a week is going to make a difference. Obviously, money always helps, and voter contact is key to turnout. But this thing has been done on such a quick pace that voters are going to be going in and voting with very little information about Darlene Graham, and they know Norman. I mean, Ralph Norman ran for governor. He's recreating his campaign. He was in this race, so he's kind of the known entity. So Trump's going to have to beat the known entity today.
The known entity, but also has almost an incumbent feel. Jeannie, does the newcomer, the fresh face of Darlene Graham, help her cross the finish line?
I think, the problem that she's facing is that she is a fresh face, which means that she's not well known. Of course, South Carolinians loved Lindsey Graham, and that's really helps her. I think one of the most interesting things I heard that we forget often about our congressmen and women is that we did hear voters on the ground in South Carolina saying one thing they liked about her is that she was going to retain Lindsey Graham's staff. Because as much as Americans don't love Congress as a whole, they love their individual Congress people, and they love the constituent service that they give. So, those kinds of things do help her. But of course, she had a very bad debate performance. She doesn't have the experience. She's not well known. And that's why we see the president swooping in Friday night. That's why we see this, over $800,000 being spent. But this is going to come out to a, how can they get these people out? Can they get these people out? And certainly we would think that both Lindsey Graham and now Darlene, and of course Ralph Norman, they have good get out the vote apparatus in the state. So it's going to really be a fight there. And Joe, it is, like you said, also a huge question about Donald Trump's power. And we have seen the limits of that in South Carolina recently with his flubbed endorsement on the gubernatorial end of things. So, he, by one count, he has six people he has endorsed have lost. And that is putting him pretty close to the sort of weakest point in history for Donald Trump in endorsements, which was post-January 6th in 2022. He doesn't want to get there because, of course, it means we're moving beyond him, and he doesn't want that. So he is going all out for Darlene Graham because it helps him.
Well, as I mentioned, it's not just South Carolina. We've got the runoff in Oklahoma as well. Attorney General Gentner Drummond facing off against a former state senator by the name of Mike Mazzei. Drummond actually beat Mazzei in the primary, sort of the opposite of what we saw in South Carolina, but Mazzei is the one with Trump's backing in the endorsement here. Rick, if the Trump endorsement doesn't ring true in South Carolina and Oklahoma, where does it?
Look, I mean, Trump's having a hard time, right? His numbers are way down. There's not a single poll I've seen in the last 2 months that hasn't been bad news for Donald Trump compared to 60 days ago. And that reflects on voter turnout. That reflects on mobilizing voters. And so, and right now, when you see Donald Trump numbers go down, it's usually because Republicans are starting to lose faith. The reality is that Democrats were never supportive of Donald Trump, and independents have been whittled away over the last year and a half of his presidency, mostly running for cover because of the Iran war. And so you're down to basically how much strength does he have within the Republican rank and file, and that's going to be tested in Oklahoma because in this case, the Attorney General really should have a piece of cake walk-away victory, if not for Donald Trump getting involved on behalf of Mazzei. And so he's kind of setting up himself for potential failure just by playing in all these races, which, by the way, is very atypical. Typically, presidents don't get involved in every single campaign that's going on during a midterm.
Right. 47, was it? No, 27 posts since 6 o'clock this morning on Truth Social. I want to ask you both. This is where I'm supposed to ask you how data centers are playing into these campaigns, but I'm not. I'm going to ask you about the other data center. We've spent the last couple of weeks really getting our arms around how visceral the data center has become as a bipartisan, in many ways, populist issue. But there's another one out there. It's another kind of big brother story. It's not so much a NIMBY or abuse of resources story. It's an abuse of privacy. The flock cameras that are now being talked about openly in every public square. I didn't even know what these were, guys, until a couple of weeks ago. Now that I do, I'm seeing them everywhere. I see them at the intersection when I'm driving to work. I saw one hanging over me at the gas station the other day. These are license plate readers. They're on the ground in 49 states around the country, capturing 20 billion license plates a month, as the Wall Street Journal quantifies this morning, with dents, bumper stickers, the scratches on your bumper, all being included as identifying details. The company Flock gives this system to police who use this to track people and catch criminals. Of course, the inherent potential for abuse runs wild, and there are stories all the time of people being followed or worse by these cameras here. This is an issue spilling into the elections. Look no further than Michigan, where Abdul El Sayed just put up a new ad. If you're with us on Bloomberg Radio, he's holding the bars of what looks like a prison cell as he's talking. Let's watch and listen.
Hey, does it ever feel like you're in a cage, kind of stuck, being watched? Well, because you are. There's been this mass proliferation of flock cameras, any and everywhere. Little cameras watching your every move to collect information about you without you even noticing. That's all been part of a regime that's been pushed by, well, this guy.
Somebody must be doing something exactly right. But who would be complaining? Somebody whose privacy was violated. You can't have your privacy violated if you don't know your privacy is violated, right?
So this goes on, and you're going to be hearing a lot more about it, not just in that race. By the way, did they just do like a ripoff of Somebody's Watching Me? Rockwell? That's clever. Rick Davis and Jeannie Shanzano weigh in on this now, Jeannie. This is a privacy issue, but there's more to it than this. Why are people seizing on flock cameras? I bet your students are talking about them on campus. What do you think?
Yeah, they absolutely are. It turns out that Americans, big shock here, Joe, they don't like to be surveilled at every moment of their lives. And, this goes right back to the founding of the United States. There's nothing that brings us all together than our belief in freedom, our belief in liberty, and that is particularly privacy from government interference. And so Flock, I think they're worth almost $8.5 billion. You mentioned seeing them now that you're aware of them. 40% of law enforcement in our country have them. And this has become, the new data center, I suppose you could say, issue of the campaign. I heard a Republican commissioner said it is so bipartisan that when they pulled together a group of community members, it was a combination of work boots and Subarus in the parking lot, meaning it was left, right, and center. It didn't matter because nobody wants to be surveyed to this extent. And you have these groups like DFLOC, and of course, they are working very hard. And last I saw, 350,000 downloads of their map showing where these cameras are. If anybody wants to go join the DFLOC, they can do it. And, of course, the CEO of Flock called them a terrorist organization, then walked it back. But this is what, how people feel about this kind of technology. But it is a violation in many people's minds of their liberty, their freedom, their privacy, and their Fourth Amendment rights.
Rick, we've just got a minute. I want to hear you on this because we've got House Republicans up with legislation to prohibit the federal government from purchasing these cameras, Tim Burchett included. Bernie Sanders on the same side says stop AI mass surveillance, stop Flock. President Trump says this should be under review. 30 seconds, I apologize. Will Republicans tackle this in Congress?
Block Flock. That's my motto for the week. It's bipartisan. It's not just Republican. I think the president's trying to figure out what kind of political issue it is, and the reality is it's a community issue, it's a cultural issue, it's a privacy issue.
Yeah. I'll tell you where they're at in Alexandria at some point, Rick. I've been counting them. The block, the flock, says Rick Davis. We have not heard the end of this. We're going to do more on this with our panel, and we'll bring in some important voices on the flock. This is Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
China signals defiance as Canada claps back. Welcome to the Tuesday edition of Balance of Power as Canadian Prime Minister Mark Carney matches U.S. tariffs dollar for dollar, and President Xi of China threatens all necessary measures to protect its economic relationship with Iran. We're going to get the latest in a moment from Bloomberg's Tyler Kendall, who is live at the White House. We'll have insights from Congressman Gabe Amo, Democrat of Rhode Island, who is vice chair of the House Foreign Affairs Committee. with insights and analysis from our political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us for the hour, and it's all after a look at Wall Street. We start with the Tuesday trade right now, and Charlie Pellet at World Headquarters in New York. Hey, Charlie.
Oh, well, hello there, Joe Matthew. A clapback indeed. You nailed it. Canadian Prime Minister Mark Carney matching dollar for dollar the new tariffs imposed by President Trump over the weekend, announcing support for support programs for Canadian businesses that have been hurt by the escalating trade war. Canada is going to double its existing counter tariffs on U.S. steel and aluminum products to 50%. By the way, those steel companies actually trading higher right now. We have got Nippon Steel, the parent of U.S. Steel, up by just about 0.9%. Cleveland Cliffs right now gaining 1.3%, and Nucor up by about 0.8%. The Dow, the S&P, NASDAQ are all advancing today. S&P 500 index higher now by 22 points, up by about 0.3%. Dow Industrials up 100 now, up by about 0.2%. NASDAQ up 0.6%, and the NASDAQ 100 index now also higher by 0.6%. The SOX, the Philadelphia Stock Exchange's semiconductor index, up 1.3%. This ahead of NVIDIA earnings tomorrow after the close of trading. NVIDIA shares up now by 1.7%. The 2-year at 4.20%, the 10-year 4.64%, the 30-year 5.17%. Gold now lower by 0.2%, $46.41 the ounce, and West Texas Intermediate crude down 3.4%, $82.10 for a barrel of WTI. Bitcoin was above 80K, right now 79,144. Right now we got Bitcoin up about 0.3%. Recapping stocks higher, S&P up 22, up 0.3%. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, many thanks. We'll have more from Charlie Pellet on the markets in just about 20 minutes' time as we connect the dots here between Washington and Wall Street with a message of defiance today coming from both China and Canada, not always invoked in the same sentence. Of course, our trading partner Canada is responding to a tit-for-tat that we have been describing over the past couple of days following trade talks that fell apart over the weekend. China has a very different matter on what is now D+1 if you're following the administration's economic actions against Iran. Yesterday was projected by Treasury Secretary Scott Bessent as D-Day. And Xi Jinping does have some thoughts on the idea of secondary sanctions against Chinese entities that are doing business with and trading with Iran. Hours after the U.S. sanctioned dozens of these Chinese organizations and threatened to target more. Remember, the secretary said there would be more to come this week. Beijing responding, saying its relationship with Iran, quote, should not be disrupted or undermined, unquote, knowing, of course, that President Xi will be meeting with President Trump on the 24th of September, right here in the United States, here in Washington. As for Canada, a dollar-for-dollar match. That's the message from Mark Carney, the Prime Minister. Matching tariffs imposed by President Trump over the weekend, doubling existing counter tariffs on steel and aluminum to 50%. We heard from Doug Ford as well, the Premier of Ontario, now in his own tit-for-tat, a bit of rhetoric back and forth with President Trump, who called him out on Truth Social for bluster. Here's what he said yesterday.
No matter what President Trump sends our way, we'll have your backs. We will be there for you to protect your jobs and paychecks and stand up for Canada. The Prime Minister has my full support in this decision to walk away from a bad deal that would have hurt Canadian workers and undermined Canadian sovereignty.
We will be speaking with Premier Ford on the late edition of Balance of Power, and I hope you'll join us. That'll be at 5 p.m. Eastern. He usually comes packed with sound bites. But we first want to talk with Tyler Kendall. Bloomberg's White House correspondent is on the North Lawn right now tracking all of this. Tyler, I'm not sure even where to begin today, so why don't we just stick with Canada right now? Was this an administration prepared for reciprocal or counter tariffs back from Canada as well?
Well, Joe, it appeared that the president might have been gearing up for this action, one, because the Canadian Prime Minister had telegraphed as much. He did make good on his original threat to match the tariffs dollar for dollar, but just by the fact that we have seen a flurry of posts from President Trump today out on Truth Social in regard to the conflict with Canada and trade, in part saying in one of them, I deal with many countries and Canada is easily the most difficult and unreasonable. Of course, our own reporting has indicated that Canadian officials have alleged that the U.S. was changing the, quote, goalposts when it came to the differences in the trade agreement that ultimately derailed the deal getting through. But, Joe, I think evident by the fact that Canada's reciprocal tariffs are expected to go into effect on September 8th, the next round of escalation by the U.S. January 1st could lead to some negotiating room going forward.
Well, those two dates are awfully important. So this is clearly not a case closed. But your point about the Truth Social posts, I counted 27 since 6:58 a.m., Tyler, and one of them includes this idea the president is floating now, the U.S. giving serious consideration to changing the name of Lake Ontario to Lake America, he says, in that we don't expect doing much business with Ontario any longer. Is this a joke?
I would take the president probably at his word. If you're joining us on the television, you can see the map that he is issuing right there. We'll have to see how this ultimately goes from here. Of course, there are a lot of different leverage points, negotiating points, but this does play into the broader idea that there have been escalating tensions between President Trump and the Canadian Prime Minister, Mark Carney, in particular, keeping in mind that Mark Carney had campaigned on basically countering President Trump and the tariff war a couple of years ago. And we have seen just escalating tensions since then, whether that was his address at Davos, whether that was President Trump threatening tariffs over wildfire smoke. And this appears to be the latest escalation in what is essentially now a pretty sudden reversal. We thought we were getting very close to a deal. We had sources familiar telling us here at Bloomberg some of those levies were going to be lowered, but at the end of the day, it just couldn't get over the finish line.
Wow, really something. Tyler, I need to ask you about President Xi quickly. We're going to be talking in just a moment with the vice-ranking member, House Foreign Affairs Committee. Congressman Amo is with us from Rhode Island. So we have geopolitics on our minds here. President Xi, pretty clear about the idea of secondary sanctions and knowing that China would have to be part of this for the so-called D-Day, or I guess Operation, what are we calling it again? It's Operation Scofflaw, or for Outcast, that's what it is. The relationship with Iran, quote, should not be disrupted or undermined. China will take all necessary measures to safeguard its interests. What now, Tyler?
Seeming to imply that China is prepared to retaliate if the U.S. does make good on its threats to hold those countries that still have financial ties with Iran accountable. The backdrop here being that China remains the top importer of Iranian crude to the tune of 90% of Iran's oil exports go to Beijing. The Treasury Secretary was asked yesterday multiple times about whether this would apply to China. He didn't rule it out. He said that no one is going to be above this. I have to say, Joe, though, the people that I'm speaking to here in Washington don't believe that the administration thinks that China is going to cleanly cut financial ties with Iran, but perhaps this is seen as a negotiating tactic to help lower some of the leverage here, that China could maybe reduce its imports of Iranian crude, not cut them off completely, and that would still help the U.S. in its push to get Iran back to the negotiating table.
Tyler, thank you. Bloomberg's Washington correspondent with us live on the North Lawn of the White House. We'll let you know if there's more posting on Truth Social, because we haven't heard from or seen the president making public comment today, at least not yet, about these issues. But it is a great opportunity to spend some time on all of these issues with Congressman Gabe Amo back with us on Balance of Power here on Bloomberg, straight from Rhode Island's 1st District, the Democrat who is, in fact, vice-ranking member, as I mentioned, of the House Foreign Affairs Committee. It's great to see you, Congressman. Welcome back to Bloomberg TV and radio. From the great 1st District, from Woonsocket all the way down to Newport, as we've discussed, you are the epitome of the K-shaped economy in so many ways, and I want to get to some of these issues domestically, but as far as these go here, from your perch on the House Foreign Affairs Committee, have you been briefed on Operation Outcast? Did you hear that these Canadian tariffs were coming, and what should be Democrats' response?
Well, look, Congress has been on a district work period.
Yes, of course.
So I know as much now as I am at home as I do when we're here generally, because this administration has put Congress in the back burner.
and has not emphasized collaboration, cooperation, and really getting the consent of Congress to carry out its actions on a global stage. And what we see is governing by Truth Social and chaos to our north and certainly in Asia and across the world when the president continues this war in Iran that is raising the costs on the lives of the American people.
Well, the cost issue is a real one, and we'll, I'm sure, get into affordability with gas prices on the rise, food prices on the rise. But are you encouraged to see the president turn from military action to economic coercion? Is this the direction we should be taking?
Well, look, I'm not going to praise an arsonist for trying to put the fire out that they started. And the fact of the matter is, we are here because the president abandoned diplomacy with Iran and decided to go forward with an illegal war with Iran that has done nothing to make the world more stable and has only made the lives of Americans worse off. And so we were told about an economic D-Day.
That's right.
I don't know. I haven't seen one. I haven't seen anything of that nature. And in fact, as you just shared, China remains resolute in its vision of what should happen.
So should we be
forward.
putting secondary sanctions on Chinese buyers of Iranian oil?
Look, I think
what does that cause?
I think what we have is more piecemeal strategy from the administration. Instead of trying to understand what we're trying to get, we've had shifting rationale from the beginning, whether it was an imminent threat to dealing with a nuclear weapon on the horizon, to now, because of the situation that the Trump administration created, a Strait of Hormuz where we get unreliable reports about the level of openness it currently has. So again, taking this piecemeal instead of a macro strategy leads us to a situation where they are reaching and grasping at straws.
I'm glad that you mentioned the Truth Social. The president announcing today that the Strait of Hormuz has officially been demined. He made that announcement last week. Do you know what he's talking about?
I have no idea what he's talking about.
So was it mined and has it been demined?
And this is something that I'm seeking answers to immediately from this administration. Look, Congress will, at least the House, will return to town next week. And I'm demanding alongside my colleagues a full briefing and update on their activities, including the cost of their activities. I joined a letter with dozens of my colleagues asking for a full accounting of where we are and why the American people are feeling the pain that they are feeling at the gas pump, at the grocery store, as they're doing their back-to-school shopping.
You mentioned affordability, and of course we look at gas prices every day around here. We're at $4.09 a gallon nationally speaking. In the great state of Rhode Island, you're at $4.05. What the president is doing with Canada now, we're told, could make prices even higher. We took a look to just get a sense of Rhode Island's trade relationship with Canada because so many northern states have a robust one. And sure enough, more than 1,400 jobs at some 45 Canadian-owned companies doing business in the state. Cross-border trade, and this is really what we're talking about here, supports more than 25,000 Rhode Island jobs, according to the Canadian Consulate General in Boston. When you hear dollar-for-dollar tariffs, realizing they're not in place yet, what does that mean for home?
Well, it means that the hardworking people that I work for in Rhode Island are going to feel pain. I think about all the fishermen. That's a big one of our exports in Rhode Island, especially calamari, the calamari comeback state, as we were once referred to. That means a lot. All of these people who are working every day with higher costs because of this administration will suffer. And then what might not be reflected in those numbers is the impact on tourism. You know, you mentioned I have Newport in my district. I have the birthplace of the American.
When's the last time you saw a Canadian walking around?
Well, they're around, but I'll say the numbers are down. I've spoken with the tourism councils. I've spoken with leaders there who have said that the bad feelings, the animus between our nations has yielded less interest in coming down. You see it in tour bus numbers. You see it at all of our sites. So there is a secondary set of effects with the lack of good feeling between our nations. When you have the president saying that he wants to rename Lake Ontario, look,
you know somebody's showing up with legislation to do that next week.
He's a one-trick pony. We already did that thing. You know, the president has to step up to the plate and lead. And right now, all he's doing is causing more chaos. And who hurts? The American people every single time at their bank accounts and at their dinner tables when they're making these tough decisions.
Do you take heart in the fact that Canadian tariffs don't take effect till next month and those we are threatening don't take effect till January of 2027. Everybody climbs down from this, right? Have we not seen this movie?
Well, brinksmanship should not be the way we operate.
Yeah.
There are other ways to conduct our business. We have had a trade agreement that is now in peril in USMCA that certainly has been disregarded in this moment. So I would say to the Trump administration, it's time to lower the temperature. It's time to get to the table and let's figure out how we can continue to make the lives of Americans better. You know, everything from construction materials to appliances to agriculture.
Right.
And now, because the Canadians are well aware that we have an election on the horizon, we see this hurting states where people have already been hit by the tariff regime that we saw previously, in addition to the high cost of living driven by the higher cost of fertilizer, the higher cost of machinery, all of the things that may be passing through the Strait of Hormuz in a normal time, but aren't now.
When you're back next week, it's going to remind us of so many things left undone. What will happen between now and the midterms? Will we actually see a CR codified? Do we have to worry about a government shutdown?
Well, look, I hope that cooler heads prevail. The Senate came to a bipartisan agreement to take us through December 11th, which happens to be my birthday.
Hey.
And I'm hopeful that we can pass something in the House to avert a shutdown crisis. Those are never good for anybody. That's why during the last shutdown, I pushed forward a piece of legislation to lessen the impact on women and children, the WIC program that was affected by a shutdown. We can't have working people, have children who need to eat, have the families of my district and districts across America suffer because of the chaos of the Trump administration and Republican Congress. We have to fight for lower costs and do everything we can to stop the chaos.
Where are you on the request for this Pentagon? $1.5 trillion. You're on the budget committee as well, the mighty budget committee, which is pretty important in the time that we're walking into here. I realize we're not going to have regular order, but there will be a robust debate about the Pentagon. Many Democrats see that as a proxy on the war with Iran. Do you?
I think any dollar that I sign off on without having a full airing from this administration about where we are going and how we got here is me signing off on an illegal war that I never had an opportunity to vote on. In fact, voted to stop with war powers resolutions with my colleagues in the House and Senate. And so we need to have a robust conversation because I want to protect our troops. I will always work hard to protect our troops, but I will not continue the chaos. Full stop. And until this administration shows up with real numbers or real accounting and a way to stop this pain that the American people are facing, we can't have a real honest conversation about paying for this war.
This is like the nicest week of the year in Rhode Island. What are you doing in Washington, D.C.? You and I are like the only people here. Are you working?
I happen to be here for an event later this evening.
It wasn't IndyCar? I thought you were going to tell me it was the race. All right.
I've been to the Indy 500 though, but I wasn't here for the races.
All right. Well, I hope you get home for some calamari. That's what they call it on Federal Hill, right? I don't know. I still call it calamari with the marinara. Anyway, it's great to see you. My regards to the great state of Rhode Island with many friends and family. Thanks to Congressman Gabe Amo with us here. In the throes of recess, how about it? Live in Washington, we'll assemble our political panel next. Rick Davis and Jeannie Shanzano are on the way in, only on Bloomberg.
1 on Wall Street. We do check markets all day long here at Bloomberg. Stocks higher, oil lower. Right now, we've got the S&P 500 index up 16 to 76.68. That is a gain of just about 0.2%. Dow Industrials up 63 now, up by 0.1%. NASDAQ up 134 for the NASDAQ Composite Index, a gain of 0.5%. The SOX, the Philadelphia Stock Exchange's Semiconductor Index, up 1.1%. NVIDIA ahead of earnings, trading higher by 1.8%. NVIDIA reports tomorrow after the close of trading. The 2-year yield 4.20% with the 10-year, 4.64%, the 30-year, 5.17%. Spot gold down $10 the ounce, 46.41, down 0.2%. West Texas Intermediate crude oil 82.34 a barrel. WTI down 3.1%. A barrel of Brent 88.55. Brent crude down 3.9%. Bitcoin had been back above $80,000. It is little change now at 78,941. We're keeping an eye on shares of Dick's Sporting Goods. The stock plunging by 28.9%. It lowered its full-year outlook amid weakness in its recently acquired Foot Locker unit, overshadowing sales gains during the World Cup. Dick's bought Foot Locker last year for $2.4 billion. Nike, a major supplier to Dick's and Foot Locker, also trading lower. Again, we've got Dick's Sporting Goods down 29%. Nike shares lower now by 2.4%. Recapping, S&P up 16, up 0.2%. That, Joe Matthew, is a Bloomberg Business Flash.
Who is there left to sell Nike? I don't get it. There's just always, it's got a 3 handle now. Nike, at some point.
Yeah,
NKE. We'll see what happens.
Nike down 2.5%, but that the Dick's stock quote there. You once in a while, we have 100% reliability on what I see on the Bloomberg, but sometimes you look at it, Joe. I don't know if this has happened to you. You look at a number and you think, "Is that right?" And that's the initial reaction I had when I saw the Dick's quote there, but down 28.81% right now. So absolutely
whiz.
Yep, absolutely.
So Nike down in sympathy, as they say. Charlie, thank you so much. The great Charlie Pellet, the voice of Wall Street, will be back in just about 20 minutes with another check on the markets here. Looking forward to spending some time with our panel on this, because I'll tell you what, when the headline broke right before the late edition of Balance of Power late yesterday, this looked like a whopper. When you look beyond the headline, it's a little bit less intense when it comes to mail-in voting. The Supreme Court allowing the president's restrictions that he put forth in executive order on mail-in voting to proceed for now. But this is far from over, leaving uncertain whether these restrictions are legal or, in fact, will even be able to be used in this year's midterms. It's going back to the lower court here, remembering that a bunch of Democratic state attorneys general had challenged this EO that directed the Department of Homeland Security to compile lists of citizens eligible to vote. The U.S. Postal Service separately ordered to craft rules restricting ballots, I should say, to those on these state-submitted lists of eligible voters. It's a 6-3 ruling. We're going to get more on this, as we learned last evening from Greg Storr. But there's way more to this than the ruling. What the president is doing with the U.S. Postal Service is far more important, at least, again, for now. The New York Times spent some time on this with good reporting today. 4 weeks before the president put forth this executive order on mail-in ballots, he filed 4 nominations for vacancies on the Board of Governors at the U.S. Postal Service. Bucking history here and what has tended to happen in the past, all 4 were Republicans. There was the long-standing practice of nominating board members in bipartisan pairs. That's out the window. 4 Republicans now. 3 of them, interestingly, have cast doubt on who won the 2020 presidential election. So we have 2026 in mind. We also have 2028 in mind. And when you talk to lawmakers, as the Times did, about the confirmation process for these nominees and what they said in their questionnaires, it raises many questions now about the role that the Postal Service may or may not play in future elections in this country. It's where we start with our political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis join us now. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie, when you start reading through some of the biographical information on those who were appointed and their commentary about 2020, it's really something. You've got Jeffrey Brodsky, who is a co-founder of a management consultant firm, would not say who won the 2020 election. William Gallo, a retired commodities broker. Robert Stevens, a former top executive at Marvel. These are the folks. Then there was a fourth who withdrew his nomination for personal reasons. What is the president trying to do, Jeannie, with the post office?
He's trying to do what he's been doing since before he got back into office. He is trying to put his thumb on the scale of federal elections in every way he can. We've seen it with mid-decade redistricting. We're seeing it with the board, the post office. We're seeing it with the EO. The list goes on. And this has sparked so much fear among so many Americans because we all lived through January 6th. We all remember that the president will not be stopped in these attempts. And who did we rely on to protect us at that point? Well, we relied on the courts time after time after time in over 60 cases to strike down the Republican and the president's cases, and to agree that Joe Biden had fairly won the 2020 election. And we're facing that all over again. And now we've got a Supreme Court that at 6-3 is saying, not on the merits, but is saying that there hasn't been enough harm shown to these 23 states that filed. And so we're going to wait this thing out. And you've got the liberals turning around and saying, wait this out. Mail-in ballots go out in North Carolina next week. How long are we going to wait to see harm? So this is where we are. And his activities with the post office, you can call him that, are just another part and parcel of this story that we've been watching for, a decade now.
So is this really, Rick, an argument about 2028? We can't change the rules on mail-in ballots this close to November, can we?
Well, I think the president's intent was to change the rules on mail-in vote this election cycle. Yeah. He may be thwarted by the courts in order to do that. And showing harm is actually a little more complicated than just making a legal case. The harm would be if the Postal Service actually started limiting what ballots they could send out on mail-in ballots. But another federal case has actually banned them from implementing this program. So the Supreme Court basically said, look, if there's no implementation, there's no harm. And so it's not like they got to go find harm. They would actually have to have the U.S. Postal Service implement the program. So it's a little more complicated, I think, on the back end of this. But the bottom line is this president, for whatever reason, has defied sort of Republican orthodoxy, which is separation of national government versus state government. And we always side with state government. The best government is the government closest to the people. And so elections, according to the Constitution, are supposed to be administered through the state legislatures by the states. And Donald Trump doesn't like that concept. Every piece of legislation or executive order that he's tried to implement around elections has basically been federal, getting their nose under the tent of running elections, especially in any federal election. And so there's a fundamental issue here that's constitutional. There's an implementing issue that is, being prosecuted in the courts, and the Supreme Court will have to wait around. And to answer your original question, yeah, that probably means 2028.
Okay, but also, Rick, you've spoken about mail-in ballots and the role that they play within the Republican electoral process. You talk about Republican orthodoxy on federal versus state. This is something that Republicans have used to elect Republicans for years, particularly throughout southern states. In your state of Arizona that you worked in with John McCain for so many years, the president himself voted by mail. The extent to which he's seized on this, if we did everything that we wanted or that he wanted here in limiting mail-in ballots, would it not hurt Republicans?
Yeah, I think it hurts the system completely. And in many states, first of all states are different, right? That's the blessing and curse of of our political system. We have 50 states and they all have their own rules. That's the point. And in a state like Arizona, you learn how to deal with it. And frankly, Republicans were winning enormous amount of elections because they were able to identify their voters, track the process through mail-in ballots, and know whether they voted or not. And in many states like Arizona, the vast majority of people who vote are voting mail-in. I mean, probably 60 to 70% of Arizona voters, and a lot of those, if not more than half, are Republicans. And so there's not a political operative in the country who doesn't love mail-in ballots, because you actually can track the process of voting and you don't have to wait around for election day and hope for the best.
Wow. What's the Democratic answer to this, Jeannie? Do you sit back and watch it happen knowing that it might hurt Republicans more than your party?
You know, I think, sure, the Democrats can, but I think this is broader than either Republicans or Democrats. This is the president creating a problem that does not exist. The whole predicate for this is the president keeps telling people there is fraud in mail-in balloting. And the fact is there is not. As you mentioned, he himself votes by mail-in ballot, as did 47 million Americans in the last election, 1/3 of all ballots. It is so rare, Joe, that the Brennan Center for Justice determined that you're more likely statistically to be struck by lightning than to commit mail-in or voter fraud. The Brookings Institute did an extensive study, and they found there were only 4 documented cases of fraud in 10 million mail-in ballots. So this is what frustrates Americans about our government and, quite frankly, this president. We have so many issues to be addressing, whether it's flock cameras, whether it's data centers, whether it's a war in Iran, whether it's inflation, jobs, the list goes on. And you are talking about a problem that does not exist. Again, 4 in 10 million ballots of documented fraud. And that, to me, is really the real frustrating part of this, whether you're Republican or Democrat, quite frankly.
Boy. This is pretty amazing, Rick, and I don't know how the rank and file manage this. If the president continues to denigrate mail-in ballots and refer to them as the basis of fraud, what do you do if you're a Republican House member running for re-election? If you're a Republican senator hoping to get the votes that you need, in many cases, through the mail this November?
Yeah, I mean, you know, it's cringeworthy to see the president's posts on social media and comments in the public, because these are the people who actually have to rely on their voters. And a lot of Republican voters are in rural areas where getting to the polls are not easy. And so they have to, you know, hide behind the president on this. They're not going to argue with them. You don't see any Republican backlash from elected officials, but every single day they're out there, you know, whipping their campaigns to try and make sure that absentee ballots get to their voters and get turned in. And literally every week you get the update from the county election office, tells you who's voted. I mean, you can't get a better system than that as far as accountability.
How about that? Rick Davis and Jeannie Shanzano break it down, as always, our Bloomberg Politics contributors. When the court rules again, assuming that it will, we'll let you know here, of course, on Balance of Power. We've got much more to follow here. In fact, former Congressman Kevin Brady is going to join us. The latest standoff between the U.S. and Canada. It's all ahead here on Balance of Power, only on Bloomberg.
1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks higher. Oil is selling off. Got to begin with crude right now. West Texas Intermediate, 82.27 a barrel. It is down 3.2%. Barrel of Brent, the global benchmark, now back below $89, trading down by almost 4%. Bottom line here is oil declines. Stocks are higher. S&P up 13 right now, 76.66. That is a gain of 0.2%. Dow Industrials up 71, up 0.1%. NASDAQ up 126, up 0.5%. The NASDAQ 100 index up by 0.5%. And the SOX, the Philadelphia Stock Exchange's semiconductor index, up by 1.2%. All of this ahead of NVIDIA earnings after the bell tomorrow. Very closely watched by Wall Street. NVIDIA up now by 1.8%. 2-year, 4.20% for the 10-year, 4.64%. The 30-year, 5.17%. Gold now at a 3-month low. Right now we have got 3-month high, I should say. We've got gold trading little change now at 46.41 the ounce, down 0.2%. Crude, as we mentioned, big story there, down now by 3.3% on WTI, 82.21 a barrel. Canadian Prime Minister Mark Carney is matching President Trump's tariffs with a 50% tax on U.S. dairy and steel. Meanwhile, EWC, that is the iShares Canada ETF, up today by 0.8%. We'll have a whole lot more on Canada and trade coming up for you in just a moment here on Balance of Power. United adding 10 destinations in Europe and Asia to its network next year. Shares of UAL up by 1%. Another cross-Atlantic operator, Delta, trading higher by 0.3%. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, many thanks. We'll have more with Charlie Pellet, the voice of Wall Street, coming up at the top of the hour, 2 p.m. Eastern, as we kick off Bloomberg Business Week Daily. Thanks for joining us here on Balance of Power. We're live from Washington on Bloomberg TV and radio, connecting the dots between Wall Street and Washington. And there's a lot to connect today, with so much talk about tariffs, about sanctions, and about debt. We touched on some of these a bit earlier with the congressman from Rhode Island. But as this tit-for-tat reaches new levels between the United States and Canada, we wanted to seize on the moment with someone who is steeped in this relationship, in cross-border trade, and as well, the matter of tax and spending. As former chairman of the House Ways and Means Committee, a legend in Republican politics, former Congressman Kevin Brady, with us now from Texas. Mr. Chairman, it's great to see you. Welcome back to Bloomberg TV and radio. I think the last time we had a conversation,
things are going well.
Well, thank you. I hope your summer's been great. The last time I believe you were at this table with me here in Washington, we were joined by the two gentlemen who helped to negotiate the USMCA. And now that we have seen this relationship devolve to the point of dollar-for-dollar counter tariffs with Canada, I'm wondering if you see the opportunity for a deal here or an intractable situation with Canada.
Yeah, so look, there's no question. What occurred was a serious bump in the road, no doubt about that. But it's not necessarily a fatal one, in the sense that in the negotiations that had been occurring in the weeks before, there was certainly a seriousness of purpose demonstrated by both countries. They were tackling issues that matter, some of them long-standing trade irritants, some of them new issues that the U.S. has raised in this joint review of the U.S.-Mexico-Canada agreement. There was real concrete solutions moving forward, and the hope here was that this would, if not entirely clear the decks, really lay the foundation for an announcement on country-to-country discussions, negotiations between the U.S. and Canada that would lead ultimately to a bilateral agreement, and then have the three countries, including Mexico, sit down and work through some of the president's priorities on China, economic security, and supply chains. So one thing, Joe, I've learned in trade is it's a deal is never done till it's done. No matter how close and how certain it appeared to be, it didn't. But that doesn't necessarily mean that this has to devolve further. In fact, I think as we watch the elections in Canada here, about 6 weeks away, the midterms here in the United States, I think there will be an opportunity to come back because again, they had bridged the gap in pretty significant ways on some real substantive issues.
Well, yeah. So if you go back and read coverage from Thursday, Friday, even early Saturday, There was an expectation that a deal would be struck. Things fell apart, we understand, at the last minute. But these new tariffs don't take effect yet. Canada's take effect, I believe, the 8th of September. Ours would be by January 1st, 2027. Is this just some sort of high-stakes negotiation that's playing out in public?
Look, one thing we know about trade, it is the marriage of politics and economics. And all of trade is local. And so, look, it is not surprising for a country to view what the impact of a trade agreement is going to be back home and make decisions based on that. Every country does this. In this case, I think ultimately the goal should be to get to the negotiating rounds for the U.S.-Mexico-Canada agreement, because that agreement has become so vital to all three countries' economies, including the U.S. We visited before about this, but because of the trade agreement the president negotiated 6 years ago, Canada and Mexico today are now America's largest customers by far, our biggest investors in the United States, mainly in manufacturing, and our most important supplier. So this is a partnership unique in the world. It is the most consequential trade agreement in the world. It is worth millions of jobs back home here in the United States. And so I think you look across these three countries, our manufacturers, farmers, small business people want to see this review come to a conclusion in a positive way. And everyone hoped that the agreement they were discussing would jumpstart those discussions.
Yes, right. Well, I mean, look, as someone who was a key negotiator in the original USMCA, did you see this coming when the president chose to not reauthorize?
You know, not surprised, because he'd been signaling it for quite a while. One, his agreement is working. It is the gold standard of free trade agreements in the world, no question about it. But over those 6 years, you know, some of the issues were not enforced as the U.S. had hoped. There have been new issues evolving, including China's super aggressiveness, transshipment of goods, moving them through Mexico unfairly, issues like that needed to be raised. And so I think what was important, the president didn't withdraw. He simply said, unlike Canada and Mexico, I'm not going to renew it in its current form, and set up the negotiations with Mexico. So clearly there is a path here. Ambassador Greer has adopted sort of the same formula, the same model that's been used in these reciprocal trade agreements. It's a model the president's familiar with, because at the end of the day, I think Ambassador Greer hopes to take an agreement to the president by the end of the year, get that sign-off, negotiate the final details of it. I think the biggest impact of this may be a delay in that timetable.
Interesting. Yeah, you do wonder what Mexico thinks of this particular stop on the road here and how it might impact our longer-term negotiations. But all this is happening, Mr. Chairman, while lawmakers are out of town. We're in August recess right now, and they're going to be piling back next week with a lot to manage here, including trade, foreign policy with regard to Canada, with regard to Iran, of course. And then there's going to be the matter of budgeting for the new fiscal year, and we've got a continuing resolution that you can weigh in on if you want. But one thing that the White House appears to be seeking is some changes to capital gains. And I'm wondering your thoughts on this. As the former chairman of the Ways and Means Committee, you've had this argument before about indexing capital gains, as the president has reportedly suggested he would like to see. Is there an appetite for that in this Congress?
You know, I would hope so. Obviously, this is a very pro-growth issue, and we had wanted to lower the capital gains rate in TCJA. At the end of the day, sort of ran out of the money to do it, but there's no question about it. If you index it, you quit taxing people on inflation for their assets, which I think is a good principle, period. Secondly, it unlocks these assets, whether they're physical ones, stocks, other type of investments. That's good for the economy as well, creates new opportunities. You know, there is a cost to it always. On these issues, you've got to weigh the pro-growth outcome against what that tax cut cost. But at the end of the day, America, one of the reasons we have such a resilient economy and the largest in the world, we have an investment infrastructure in the tax code. It encourages investment by a lot of Americans, a lot of businesses, in a way that grows the economy. Capital gains is a big part of that. Those investment incentives that works.
Mm-hmm. But, you know, the bond market's been getting agitative, Mr. Chairman. Maybe you have, too. We're looking at the long bond has been above 5.2% here. The 10-year, we're told, is going to be at 5% at some point. It's just a question of when. And it all came after this realization that our federal debt was at $40 trillion. It looks like a typo even days after it was first published. As we try to get our heads around a number like that, is this the right time to be potentially lowering our capital gains revenue?
You know, actually, I think last time we lowered the rate, the revenue from capital gains actually grew. Sort of like as we did in 2017 when we lowered the corporate tax rate, tax revenue from those corporations grew. Economic growth really is a budget tool for you as long as you restrain spending. That's where we're failing in a big way. We've got record revenues coming in, but our spending's outpacing it. And the stunning number, I agree with you, 40 trillion just is a kick to the gut, I think. Secondly, it's not going to take care of itself. Congress is going to have to act to move forward, especially as we look at Social Security, Medicare, Medicaid, others moving toward serious insolvency issues here. So you've got to have that restraint. I did appreciate Republicans, I think, came up with $1.5 trillion in their recent permanence of the Tax Cuts and Jobs Act. A good start. They'd like to go farther. But at the end of the day, America really needs to tie our spending to the size of our economy and right size it over time to where we're not a financial risk going forward.
Well, of course, you've seen the Treasury Secretary get involved in the bond market, which has been somewhat controversial, and it hasn't made a big difference yet, realizing that he could still do a lot more buying here. We heard from Stanley Druckenmiller. Did you see this op-ed this morning, Mr. Chairman? Governments defending prices against fundamentals always lose, he says. That's Bessent's own mentor, Druckenmiller. The only variable, he writes, is how much they spend before conceding. Is this the right move right now?
You know, I think getting fiscal policy right is the only solution here. It's not going to come from the Fed. It will not come from Treasury or any administration, frankly. It's going to have to come from Congress. Setting guardrails around spending, putting in place enforceable spending caps. You know, and over time, you're not going to fix this problem immediately, but over time, right-sizing that government in a way that markets, more importantly, the country feels more secure. Joe, I have to tell you, my first 4 years in Congress, we balanced the budget every year. And I just assumed it would always be that way. But we've never seen a balanced budget since those days. So this is long overdue. I do think there are a lot of members in Congress, certainly my Republican colleagues, who this is what they wake up to. This is what scares them the most, this debt and deficit. So don't think all of Congress is ignoring this. I think there is a pretty strong crew of members who know we've really got to face this down.
Boy, until then, it's a continuing resolution, right? Nobody's crafting a budget between now and November.
Yeah, our budget process is broken, Joe. Has been for a long time. I would love to see budget reforms. I've seen them through the years get floated. They're really smart. They're really good. They should be bipartisan. But look, if the way our laws work, if we were a manufacturing plant, Congress would manufacture spending. That's how our budget's set up. If we want to manufacture reductions in efficiency, we got to retool the plant. That means rewriting how we do our whole budget. And I think that too is being considered by members of Congress who want to take a serious substantive look, like Jody Arrington, chairman of the Budget Committee, would be one. But there are others who are eager to join them.
Really interesting. You're paying $3.62 for a gallon of gas in Texas, which is quite a bit below the national average right now. In our remaining moment, Mr. Chairman, to what extent will affordability play into the election, the Senate election in the state of Texas?
You know, I think it already is. Look, affordability is a big reason President Trump won the presidency for his second term. Certainly a big reason Republicans maintain the majority as well. Certainly we as Republicans and they as a party will need to make that case very strongly in Texas and across the country.
good to see you and good to have you back, Mr. Chairman. I hope it's been a good summer, as I mentioned. Kevin Brady with us, the former chairman of the Ways and Means Committee, Republican from Texas, House of Representatives, and former negotiator of the USMCA. I'm Joe Matthew in Washington. Doug Ford joins us at 5 p.m. on the late edition of Balance of Power. Don't miss it on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everyone, live on Bloomberg TV, radio, YouTube, and Bloomberg Originals. I'm Tim Stenivek, along with Nora Melinda. She's Bloomberg Television Markets correspondent. She's here in the Bloomberg Business Week studio in for Carol Masser. Nora, we got a little bit of moves higher today, but the big thing is tomorrow, and that's NVIDIA earnings.
Absolutely. Also, getting some economic data tomorrow, PCE, but at the end of the week, everyone's going to essentially be focused on what's going on in Jackson Hole, and of course, what we hear from Kevin Warsh.
Well, before we get there, we're talking oil prices a little bit. They're down ever so slightly with the report that the U.S. would be returning diplomats to Middle East embassies. That's easing some concern about an escalation of the war in Iran. Charlie Pellet's going to have more in just a few minutes when it comes to these markets. Coming up this hour, billionaire investor Stanley Druckenmiller out with some harsh words for Treasury Secretary Scott Bessent. We've got the perfect guest with us to discuss. Eric Schatzker, he's going to be joining us in just a minute. And it was only a year ago that he had the Business Week cover story about the Treasury Secretary, and he interviewed Stan Druckenmiller for that story.
And then also staying in Washington, Kaylee Line sitting down with the chair and CEO and president of Northrop Grumman. We're going to bring that conversation to you all shortly.
And we've got the VP of Alexa and Echo at Amazon as the public and private companies continue to battle each other for dominance when it comes to AI. First up, though, a check on the day's trade and top business stories. Here he is, Charlie Pellet.
All right, I thank you very much, Tim and Nora. Do want to begin with word that we're just getting about Dolly Parton. The country singer, songwriter, and entertainer has died at age 80. That word from her son, entertainer Dolly Parton, dead at age 80. Stocks are moving higher. The Dow, the S&P, NASDAQ all advancing. This is oil prices decline. West Texas Intermediate crude now down by 3.3%, $82.21 a barrel. Barrel of Brent, $88.46, drop there of just over 4%. As oil declines, stocks are advancing. S&P right now up 20 points to 76.67. That is a gain of 0.2%. Dow Industrial is up 92, higher by 0.2%. We've got NASDAQ up 0.5%. And the NASDAQ 100 index higher by 0.4% ahead of NVIDIA earnings tomorrow. NVIDIA shares, they are advancing today, part of a broader tech rally up by 1.8%. 2-year, 4.20%. The 10-year, 4.64%. The 30-year, 5.17%. Gold down $6 the ounce, down 0.1%. West Texas Intermediate crude down 3.3%. WTI, 82.19 a barrel. Brent crude, 88.46. A drop there of 4%. So again, the Dow, the S&P, NASDAQ all advancing as oil declines. Canadian Prime Minister Mark Carney has matched dollar for dollar those new tariffs imposed by President Trump over the weekend. He also announced support programs for Canadian businesses hurt by the escalating trade war. Canada will double its existing counter tariffs on U.S. steel and aluminum products to 50%. Today we are seeing steel stocks advance. Shares of Nippon Steel, which is the owner of U.S. Steel, up by about 0.8%. Cleveland Cliffs up 1.7%. Also, shares of Nucor up by 1.1%. And should point out that the Canada ETF, the iShares Canada ETF, higher by 0.8%. Again, repeating the earlier headline we just brought you, country singer Dolly Parton, dead at age 80. Nora and Tim, that's a Bloomberg Business Flash.
All right, the loss of a legend. Charlie Pellet, thank you for that update. Well, it's a top story on Wall Street. It's one of the most read stories on the Bloomberg terminal. Billionaire Stanley Druckenmiller out with some harsh words for Treasury Secretary Scott Bessent. Druckenmiller writing in a Wall Street Journal opinion piece, quote, "Governments defending prices against fundamentals always lose. The only variable is how much they spend before conceding. The U.S. shouldn't put itself on the wrong side of that trade, not with the most important price in the world, and not when that price is trying to say the one thing Washington most needs to hear: let the bond market speak." Druckenmiller's comments coming off the back of Treasury last week announcing an increase in purchases of long-dated bonds. It's a move that markets are interpreting as an attempt to push down yields. We knew there was one person we wanted to talk to about this because it was just a year ago that he had the Bloomberg Business Week cover story about the Treasury Secretary. You can see the cover right there if you're watching us on TV or on YouTube. And for that story, he interviewed Stan Druckenmiller. That's Eric Schatzker. He's the editorial director of Bloomberg New Economy. He joins us here in the Bloomberg Business Week studio. Eric, I want to get into Druckenmiller's history with the Treasury Secretary, with George Soros.
Sure.
Before we do that, why is it such a big deal that he went to the Journal with this opinion piece?
Well, first of all, the Journal is the place that Stan Druckenmiller typically goes if he wants to make a public statement. So that part of it is not unusual, but he does not do this very often. So pay attention when he does. And why do we pay attention to Stan Druckenmiller? Because few people would argue that he is the best investor in modern history. Never a down year when he was running Duquesne Capital Management. He was George Soros's chief investment officer. He hired Scott Bessent in 1991. He sent Scott Bessent to England. It was on the basis of information, partly on the basis of information that Scott Bessent was providing, working for Soros Fund Management in the early 1990s, that Druckenmiller and Soros decided to bet against the British pound. They shorted it and broke the Bank of England. And it is that fundamental truth that governments defending prices against fundamentals always lose, that was proven there, and which Druckenmiller argues will once again be proven here.
So take us to today, and well, actually to last week, because
okay, so we do need, for the benefit of many, to review what sparked, right, this disagreement, at the very least, or this riposte from Stan Druckenmiller, which, by the way, you cannot not look at as anything but a harsh scolding, right? The mentor publicly admonishing his protege. And I would also add, for those who haven't read it, go and read it. If you're lucky enough to have a Bloomberg terminal, it's simple, NH space WSJ, put in Druckenmiller as a keyword, it'll come up. You can, of course, read it in the Wall Street Journal. You will look long and hard to find a piece of writing this savage and this devastating. I mean that. So, last week, the Treasury announces that it is going to double the size of its long-term bond buyback program from $2 billion to $4 billion. And then Bessent doubles down effectively and says, well, we might spend more than $4 billion. And Druckenmiller says $4 billion understates the gravity of this mistake. And I have, for my own purposes, broken it down into 4 component parts. This is how Druckenmiller dismantles the argument behind a long-term bond buyback program. Number 1, it's unwarranted. There is no crisis. Yes, yields are rising, but that is the market functioning the way it is supposed to function, right? Pricing in the growing risk of 2 things. 1, inflation, or more inflation. We have some already, obviously. And 2, the growing possibility of a U.S. government default. This is what the bond market does. This is not March of 2020. This is not the 2022 crisis in UK gilts, right, that cost Liz Truss her job as prime minister. There were, as Druckenmiller points out, no failed auctions, no dealer balance sheet seizure, no forced unwinds. Number 2, it's hypocritical. Who was more critical of quantitative easing? Maybe some people, but few more vocal and more aggressively so than Scott Bessent. And Druckenmiller points out that this is effectively a version of QE. And so what you have, what the other thing he hated about QE was that, Bessent that is, he made the case that it was a blurring of the lines between fiscal policy and monetary policy. And here you have the Treasury Department, the Treasury Secretary, usurping the authority of the Fed chairman. Number 3, going back to this idea of fundamentals, it violates one of the cardinal laws of the financial universe, right? Governments will always lose when they try to fight fundamentals. Again, I mentioned that this is exactly what Druckenmiller and George Soros proved when they bet against the Bank of England. And as Druckenmiller says, this is another useful quote to draw from this essay. Once markets believe Treasury is defending a price, every rise in yields becomes a test of official resolve, and the operations must grow to survive the tests. Well, that raises an inevitable question. If it's a fight, effectively, between the policymaker and the market, how much ammunition does the policymaker have? Not enough ammunition to defeat the market.
Well, it raises the question, and the journal piece doesn't go into this, but it raises the question about why the Treasury Secretary would do such a thing right now. You describe it essentially as out of character given his past comments, and I think it's fair to say, given his hedge fund history as well, why do something like this?
Well, the most obvious answer to that question is that it's becoming awfully expensive for the federal government to issue long-term debt. The federal government needs to finance its deficit and its debt. And doing so means issuing treasury bonds. Well, issuing treasury bonds when your yield is at 470 is a whole lot more expensive, a whole lot more costly to the government and ultimately to the US taxpayer than it was when yields were at 370. We could do the math, but let me just put it in Druckenmiller's words. The real problem is the fact that the government is running an outsized deficit. In fact, the nominal rate of growth, right, is actually higher than the yield on the 10-year Treasury. And he says that historically is an accommodative circumstance. If anything, the market should be pricing yields higher because it fuels, that financial accommodation or economic accommodation fuels inflation. And the reason this is the most read story on the Bloomberg, and the reason that this is transfixing Wall Street is because of the implications. And this is the fourth reason that Druckenmiller cites, or at least my interpretation of his reasons, is that it's hazardous, right? The long-term Treasury yield, as Stan says, is the most important price in the world. And furthermore, it is underpinned by central bank independence, the independence that was enshrined in the 1951 Treasury Fed Act. It is the bedrock of global financial markets. And Stan says, again, in this piece, U.S. policymakers built the wall between debt management and price management for a reason. This intervention, he is specifically referring to the buyback program, this intervention starts dissolving it. So it's not just like, we need to think about this in something other than just the short-term dynamics of the bond market.
Right.
Whether Scott Bessent will or will not win in his effort to bring down long-term yields. There are much bigger questions and much bigger implications at issue.
Well, when you think about Bessent and you think about Washington, do you think that Washington is remotely prepared for the economic and the political pain that would come with potentially allowing the bond market to set
You know
the price
the
in the
answer to
long
that
end?
question. No, of course, because it probably means cutting spending, right?
He makes the point in the piece that neither
total
party does it.
Right. Yes, exactly. Both Republicans and Democrats are guilty of this. Everybody has been kicking the can down the road. But now, with bond yields where they are, interest payments exceed the amount of defense spending. And defense spending vastly exceeds the amount of discretionary spending. So where can you cut? The only place, arguably, and I'm certainly not advocating for anything one way or the other, but the only place, arguably, to cut, says Druckenmiller, is entitlement reform. Nobody wants to undertake entitlement reform because it's so politically perilous. Yet where else do you cut if you need to reduce the deficit and restore fundamentals to a point where people have confidence in yields and aren't, gently, or maybe in some cases, not so gently, driving them higher.
Or, and I'm going to say something crazy, Eric, maybe increase revenues.
Well, that's another way of doing it. Of course, it's restoring fiscal balance to the equation.
But
there's no doubt here that, and Stan has been consistent on this for years and years and years, that he would prefer that the balance be restored by a spending cut. Once upon a time, you had options. Now, effectively, there are no options other than entitlement.
I want to make sure people go back and read the cover story for Business Week that you did on the Treasury Secretary a year ago, and reread it if you haven't read it in a year. But given your experience reporting that out, were you surprised to see this move from Treasury last week? And given your understanding of Scott Bessent's investing history, who he worked with.
I'm reluctant to opine because opining sounds like editorializing, and that's the last thing in the world that I'd like to be accused of. That he wanted to be an unconventional Treasury Secretary was, to me, self-evident. And thus, some of the announcements that he's made and some of the things that he has done are consistent with being an unconventional Treasury Secretary. He was almost in a unique position, coming from his background as a hedge fund manager and becoming a policymaker the way that he did. There's very little precedent for that. And as a macro investor, right, you're constantly wrestling with these kinds of questions, and you're constantly questioning, you're constantly doubting what policymakers do, playing the role of armchair quarterback and thinking to yourself, I could do that better if only I were in that seat. Well, now he's in that seat, and he is running some unconventional plays. There is no question about that. But some of these plays come with risks of their own. The thing that I do want to mention about this piece that I found so, as I described it earlier, right, as savage and devastating, it's because of that foundational relationship between Druckenmiller and Bessent, which you can't ignore when Stan chooses to write an essay about Treasury policy. And that, to me, what I read between the lines is a profound sense of disappointment. And Tim, you and I were talking about this earlier, because it's really something that, maybe I'm overstating the case here, but we've all been in a mentor-protege, teacher-pupil relationship in our lives. There's always been someone whom we've looked up to. And the hardest thing in the world to take is the moment when that person looks you in the eye and says, I'm really disappointed. And that's what I read here.
Eric, there's a reason we wanted to talk to you about this. You were the guy who wrote the story, and you've spoken to both of these men quite a bit over the past few years. Eric Schatzker, editorial director of Bloomberg New Economy. He joins us here in the Bloomberg Business Week studio. Check out his story from last year in Bessent We Trust, on the Bloomberg terminal and at Bloomberg.com. We stay in Washington, where the war in Iran is front and center, and weapon stockpiles front and center as well. We go now to Kayleigh Lyons. She's the Bloomberg Balance of Power co-anchor, in conversation right now with Northrop Grumman Chair, CEO, and President Kathy Warden.
And when you have an expectation to very dramatically increase capacity, one company trying to do that across multiple weapon systems obviously has limitations. So the government has sought more sources. And for tactical missiles, Northrop was not a primary provider. And we're getting the opportunity now to become a second source supplier for solid rocket motors in that area. We had focused more on strategic missiles, think bigger solid rocket motors. And now we are getting qualified to produce some of the smaller ones for products like PAC-3.
Do you see more room to grow in the munitions space specifically, since it seems that that is an area of acute focus for the Pentagon right now?
Yes, we believe that's going to be one of the fastest growing parts of our market, if not the fastest growing market. And we are positioned with capacity. I mentioned that 2 million square feet of manufacturing space. Some of that is dedicated to solid rocket motor production. And we had a head start there. We started that investment more than 3 years ago. So we've already doubled capacity. We have another plant that we are building today that will take capacity to about 3x what it was when we started this expansion. So that positions us, as we are signing these new contracts and becoming qualified to be a supplier, to be ready to go now.
Well, and I want to go back to your point about how sometimes there is one supplier of one key component. Is that the biggest challenge in scaling up so much of this, is specific bottlenecks in the supply chain such as that? And do you feel like you have enough visibility into the sub-tier parts of the supply chain right now?
We have been focused on increasing that visibility all the way down the supply chain. We've always had very good visibility to our first tier and even our second tier supply, but we now are down to the material level, the very commodities that our first and second tier suppliers are relying upon, and we're doing capacity planning with those suppliers as well, so that we can assure from the very basic parts, which in a solid rocket motor is chemicals, for instance, that we have enough supply to build all the way up to the manufactured product.
Well, and you're doing this work as a company, but what is the Pentagon asking of you in terms of its own visibility into that? Are they seeking information from you or giving you information?
It's a little bit of both. It is a partnership. It is mostly asking for the information that we have and then offering to supplement that, because they can see beyond our portfolio into the demands of other companies that are supplying them, and they have a fuller picture of what that supply ecosystem looks like in the aggregated demand.
Well, trying to get that fuller picture on the Pentagon side, the Deputy Defense Secretary Feinberg sent out a memo just last week asking for more specific cost and pricing data. And I wonder what your reaction to that was and whether or not it is asking for something overly burdensome for you and other companies, or if this is relatively on par with what Northrop already would be providing as it seeks a contract.
In most cases, we're already providing that data today, and we have systems set up that allow us to collect it, and we are all for transparency, and so we're happy to provide it. There are companies that don't have systems, they're called cost accounting systems, that collect that data and have auditability and transparency to the government for that data today. And so I am sure that from some in industry, you might hear that this is going to require them to take extra steps. For the most part, this is something that we already are structured to do.
Well, and let's talk about different contracts you may be doing that for. Northrop is competing right now for a Navy fighter. The FAXX could be awarded sometime soon. And I just wonder what you feel is the company's positioning right now in terms of being well positioned to potentially have to develop that program from the ground up while also trying to scale up everything else, B-21 included.
Yes. We've spent a lot of time looking at how we will execute the program, and I feel confident in our team's ability to do that with all of the other things that we have underway. For each team gets a dedicated set of individuals who are focused solely on executing that program, and at the same time, our company has resources that can surge to support aspects of our business like an FAXX program, which would have a steep ramp at the beginning. And that has worked very well for us. We perform well in those early days to get a program off to a running start. And in this case, we've ensured that we have suppliers ready to do the same, investing alongside of us and prepared to execute.
Well, can you broadly outline, and you don't have to get too specific, but what the Pentagon Defense Industrial Base experts have wanted to see from you in terms of sourcing material?
They have asked for transparency into our supply chain on most of our contracts, and we are providing that to them. And in many ways, that's something we already are doing ourselves. We want to make sure that that capacity exists, that we know exactly where it's coming from, and that we have price transparency so that we can negotiate on behalf of ourselves, but also the federal government in those engagements. What I will say is there are certain aspects of the supply chain. Take microelectronics, for instance, where we have some dependency on rare earths. We need government assistance in those areas because we aren't just working to build a supply chain. We need a supply chain that has national security resiliency built in. And if the economics do not support those minerals being mined, packaged, and available from trusted sources, we can't change that broader ecosystem alone as a company. The federal government can bring together tools in their toolbox that allow them to do that, whether it's just basic foreign policy, whether it's through laws and regulations, or whether it's through subsidies and financing to support those industries. So you see that happening, and that's really important to bolster the resiliency of our supply chain at the lowest level.
Well, because you raised rare earths and critical minerals, I wonder if you get concerned at all as you see, for example, the U.S. potentially threatening to secondary sanction Chinese banks over providing financial lifeline to Iran. If China could choose to retaliate by once again slapping export controls on those things, do you have stockpiles that you can draw upon? I just wonder at what point it would become mission critical that be an issue that be resolved for the sake of the defense industry.
We do have stockpiles that we can rely on, and we have a plan, more importantly, to remove those dependencies over time. And that is happening, as I said, in conjunction with steps the U.S. federal government is taking to enable an ecosystem of supply to exist outside of China.
I want to talk about the B-21 and the investment that you are making into that program. You've committed $2.5 billion through 2029. What gives you the confidence to make that investment? Is there a way in which this contract is structured to ensure that those orders are going to be there to provide protection of those dollars that you were putting in?
We have a clear demand signal from our customer that they will buy at that higher rate if we are able to produce. And we have an evaluation ongoing by the U.S. Air Force to determine a program of record size. Right now, it is at least 100 aircraft, and we anticipate that that may increase as a result of comments that have been made from COCOM commanders who have said, we need more B-21s. And so we wanted to go ahead and take the first step and demonstrate that we will commit the investment to increase the rate at which we produce to enable them to consider a larger program of record.
Is it the companies that should be bearing that burden, that financial risk of building out capacity such as that? Or should it be more reliant on the Pentagon itself providing that funding?
I believe it should be a partnership, and in the case of B-21 it is. We need a clear demand signal and one that the government will stand behind on a multi-year basis. What then they should expect of us is that we will commit the resources and make those investments, and then back to the government, we should expect a fair return for those investments. This discussion has been very prominent over the last 18 months in our negotiations, and I think we're very much aligned with the department on what we each need from each other and how these business deals should be constructed.
Well, and when we think about these new framework agreements that, of course, are longer in duration, has that changed the game for you, or because some of them are notional in nature, you have to wait until they translate into an actual firm contract with money behind it before you can really action it?
There has to be some trust. I mean, to your point, the intention is good. The contract is the contract. But at the end of the day, we have needed to have that trust. The U.S. federal government operates under annual appropriations. Sometimes those appropriations aren't let on time. And so we have had to lean in as an industry and sometimes finance the federal government to keep programs going. We've had to trust that annual appropriations will continue to support programs. And year after year, those decisions can and sometimes are revisited. So there is an element of trust, but there is that in any business. You have to project demand into the future. There are very few industries where you can get that contractually committed. If I were selling to consumers, no consumer is going to promise me that they're going to buy my goods 5 years, 10 years into the future either. So I don't see this industry as any different. We have to have confidence in that demand signal. And often that confidence comes not just through a contract, but understanding our product, what its use is, and whether that use is going to be enduring in the threat environment that our customers are going to face. And we make those commitments.
On appropriations, obviously this administration would like to see a lot more money appropriated to the Pentagon. $1.5 trillion is what they've asked for. They've also asked for billions of dollars in supplemental funding, and it's not clear whether or not either of those things has an immediate future on Capitol Hill. It's a very big question as to what Congress is going to approve, and of course we're coming up on a midterm election. The balance of power could very well change, and many of these agreements that we're talking about extend beyond just the length of a presidential term. So are you confident, frankly, that the government will be holding up its end of the bargain, even if power shifts?
I am, and it's because we've now seen over multiple administrations, Democrat and Republican alike, that there has been a reconciliation of national security interest to budget priorities, and it has looked pretty constant for the last decade or so in terms of where our priorities are, how that translates into programmatic funding and appropriations, and defense appropriations have been some of the most bipartisan bills when you look at voting. So I do have confidence that that demand signal is going to continue and be fairly steady. There's always going to be some shifts, and we've seen that for sure in each administration within the broader bounds of national security interest as to where their specialized priorities lie. And we need to be, as an industry, able to adapt to the threat environment as well as an administration's policies and priorities. But at the end of the day, we've seen more commonality than we have difference. And so I expect that's going to continue to be the case. And it's the foundation upon which we make assumptions and make business decisions.
Well, and of course, it's not just the U.S. defense budget that the president is interested in. He is encouraging other governments to invest more into their own defense industrial bases, NATO and European allies specifically. Does that open up opportunity internationally for Northrop Grumman? How are you thinking about that?
It does. We are seeing the most robust demand environment, not just in the United States, but globally, that we've seen in a very long time. And it is driven by this broader threat landscape. Europe has gone through quite a transformation in terms of focus on national security as a government spending priority. And we have seen that now endure since the Russian invasion of Ukraine, and expect that will continue to be the case. The Middle East has been a strong source of demand and is at an elevated level now, even considering recent events. And Asia has been a growing marketplace for us for years, and expect that to continue. So when you look across the globe, it's not just one area of strength that we're seeing in national security spending. It's very broad-based, and it's for common products. So that's another interesting dynamic. We can take a product line and it is applicable, whether it's missile defense, space. These are growing areas of interest all over the globe.
Well, so is it going to end up that it's a lot of joint ventures as all these different parts of the world are investing in their own defense industry? Is it going to be localized in some way and you have to work your way in? How do you envision it?
It is localized to some degree. We try to ensure that there's local content for business partners and suppliers in any country where we're selling. It's varying degrees. You know, sometimes we're building a product, designing, developing, and building it in the United States, and it's the integration that's happening with a local partner. Other times, it's pure co-development with an international partner, where from the beginning, we are working together to build the product. And then sometimes it's co-production, where we have designed a product and we will sell that IP to a partner to build in country. So all different types of models can work, but what we see is our customers in other countries want some sovereign content. They want to see jobs in their country. They want to see the ability to share in the economic gain of what they're spending on national security.
Well, as the administration is pushing for other countries to be thinking more critically about these things and spending more money, there's other initiatives that have come with Trump 2.0, including the Golden Dome. Where is that in the arc of idea from the president, PowerPoint presentation, to actual contracts and things getting real? Where are we in the arc?
It's very tangible. We have an architecture, we have programs, and we are executing on those programs. And, you know, when you think of Golden Dome, it's not a program like B-21 is a program. It is a collection of programs, some of which are new capabilities that don't exist today, and so they're being developed like a space-based interceptor. Others are buying more of things that we already are producing. And so we look in this area called Golden Dome, and I know there's a lot of mystery that's shrouding it because it is complex. It's not one thing that can be pointed to and described, and it's going to continue to evolve over time as the government looks at different products and how they might fit into the architecture. They'll make decisions on what they're going to buy, how much of any given product they're going to buy. So it's also not set in time what is Golden Dome, but a lot of progress has been made in the last 12 months.
What share do you realistically expect Northrop Grumman would get in that initiative?
There will be a lot of players because it is an architecture. No company is going to have the preponderance of the Golden Dome architecture, nor would we want that. It's a lot of work to be done in a fairly short period of time to get the Golden Dome architecture deployed. And so it is a many company effort, but we are a company that can participate in almost every aspect of the architecture. So we do expect to have a decent share at the end of the day.
And including in space-based interceptors, as you mentioned. Critics would say this may be more technologically possible now, but it still may not be cost-effective. Is the juice worth the squeeze? Is this something that the U.S. can afford at scale?
We believe it can be cost-effective, and you made an important point in the way you framed the question. Technology today has advanced to a degree that what may not have been possible, or I would argue was possible, but very expensive 10, 15 years ago, is much more affordable today. And that's the new information that needs to be incorporated into those who are analyzing space-based interceptors and the solutions that are being offered. And the approach that is being taken on Golden Dome is to allow for that prototyping and then demonstration before the government commits to a particular solution. And that makes a lot of sense.
As we're thinking about what the government is committing to or what it would like to be able to commit to, Golden Dome, things we've already discussed, building out more munitions capacity, investing in the nuclear triad. You want the submarine, Sentinel, B-21, as we talked about. Can it do all of these things realistically at the same time, or do there have to be trade-offs somewhere? And if so, where do you expect those hard trade-offs might be?
We believe that industry can provide the capacity and the people to do those things simultaneously. There has to be budget to support it, which is why this administration has asked for a $1.5 trillion defense budget. And to the extent that that is funded, then yes, all of these programs fit within that budget request. If that is not funded, then there are going to be priorities that need to be selected. And what we see is that the programs that we have are largely sitting in the base budget, which is a reflection that they are the priorities: continuing our nation's strategic deterrent, increasing munitions spending, supporting programs that are well underway in development and production. And so we feel well positioned, even if the base budget is what is funded this year, but we certainly recognize the need for more and are hopeful that Congress will find a path to at least support above the base budget. When you think about what's needed for ongoing operations, when you think about the impacts of inflation over the last 5 years, in real dollars, we're actually spending less on national security today than we were before the pandemic. And that's what the administration has recognized and wants to make up for with these significant increases in budget requests.
I'd like to talk about technology in our remaining moments before we turn things over to the audience. Where are the next technology areas that Northrop is excited about? We talked about space interceptors, but where else?
Asking me to pick a technology area that our team is most focused is like asking me to tell you which of my children I like better. I can't do that. And that's the beauty of our company and our industry. We serve a common purpose, which is national security, but we operate across a very wide spectrum of technologies, everything from microelectronics and the future of compute, including quantum computing, to areas in space that involve space exploration, space resiliency, which are new arts and missions being conducted in space. And then, of course, aerodynamics and the future of aviation are also changing. We call B-21 a sixth-generation aircraft, or FAXX a sixth-generation aircraft. That is the future of what our air platforms need to operate in. And that, too, is an evolving area of science and material science. So we are excited about all of those areas. There is no favorite child. But the important thing is, tech is advancing in all of these domains at a faster rate. And so our engineering organization is really delighted to be able to work on such a variety of things and be resourced, not just by us, but by the government to explore these future technologies.
Well, and there's new technology disruptors entering the defense space as well. Are they fundamentally competitors to you at the end of the day, or are they bringing additive capabilities that can work alongside you?
Both. And that has been the way this industry has operated. It's a bit unique. Most industries, you compete with companies, and you rarely partner with companies in your own industry who do similar things to what you do. Ours is different. We often find ourselves collaborating with big and small companies alike, companies that are older than us and companies that are much younger. And that's how it works. You have to be open to taking good ideas and technology from a wide variety of partners and embracing them into a solution for the good of our warfighter and the taxpayer. And we are very open to that. Everything doesn't have to be invented in Northrop Grumman for us to bring it forward in one of our solutions.
So is it mostly partnerships with these players then, or could you see Northrop Grumman at one point absorbing them, acquiring them?
We could see ourselves doing that. I'm not sure that in the near term serves the interest, right? There's a big market to be served, and more competition to serve it is a good thing. And we will compete vigorously with these companies while they're offering something different than us, but when we partner together, we will operate as complete teammates. And we know how to do that. It's how the industry works, and we embrace anyone who comes into the industry to do the same, because that's what's best for our customers.
And finally, how are you thinking as a CEO about AI, especially a CEO that has the cyber experience you do? Is this something that will just bring greater cost savings in a way in which you can take advantage of it, or is there real threat to the speed with which this technology is advancing?
We are seeing it both as a benefit, because we can use AI frontier models now to identify vulnerabilities, and then it becomes a responsibility for us to respond quickly to those, so we're having to scale our cyber operations. The good news is, in a company like ours, we have had a robust cybersecurity operation for a long period of time. We don't just have to defend ourselves against actors who might want to seek financial gain. We have to defend our information against adversaries like nation states who want to seek to get access to our designs and secrets. So we have had a very robust cybersecurity program. We're needing to scale it and make sure it can be responsive at a much higher rate of speed to what the frontier models are helping us to identify.
Okay, Kathy, I'll leave our conversation there. We're going to turn it over to the audience now. My colleagues will be coming around with microphones. If you could just state your name and
Well, there you have it. That was Kaylee Lines, Bloomberg Balance of Power co-anchor, in conversation with Northrop Grumman Chair, CEO, and President Kathy Warden. If you missed any of the conversation, you can check it out on the Bloomberg Terminal or at LiveGo on the Terminal. We also just heard from Kathy talking a little bit about AI. We're going to continue the AI conversation in just a minute. We're going to be speaking with the Vice President of Alexa and Echo at Amazon in just a few minutes. Before that, though, we're going to get an update on these markets on the NVIDIA earnings eve. Charlie Pellet is standing by. Hey, Charlie.
Hi, thank you very much, Tim. Indeed, NVIDIA reports after the bell tomorrow. Right now, looking at a gain of 2%. Just talking with the CEO of Northrop Grumman. Interesting day for the defense names. Northrop Grumman down by 1%. Lockheed Martin down by 1.1%. Boeing shares just about flat on the day. Stocks higher. A decline in oil prices sending bond yields lower as traders await NVIDIA's numbers after the bell tomorrow. S&P right now up 18. Gain there of 0.2%. Dow Industrials also higher by 0.2%. Nasdaq Composite up 0.5%. The Nasdaq 100 Index up by 0.5%. The SOX, the Philadelphia Stock Exchange's Semiconductor Index, up 1.3%. Your 2-year right now at 4.19%. The 10-year 4.64%. Down day for gold, tumbling 0.1%, 46.49 the ounce. While West Texas Intermediate crude, major story, crude selling off. WTI down 3%, 82.42 a barrel. Brent 88.64, drop there of 3.8%. Cannot ignore the move in Bitcoin. Right now today was trading above 80,000, 79,144 now on Bitcoin. United Airlines adding 10 destinations in Europe and Asia to its network next year. Shares of United up 1.5%. Transatlantic rivals Delta up 0.8%. American up by just about 0.1%. The world has lost a musical legend and a pioneer. Queen of Country Dolly Parton has died at age 80. Parton was a renowned entertainer, songwriter, and businesswoman who became one of America's most recognizable and beloved celebrities. Dolly Parton, dead at age 80. I'm Charlie Pellet, and that, Tim, is a Bloomberg Business Flash.
Hey, thank you for that update, Charlie. Do appreciate it. You might all recall a Business Week story. It was from a few months ago. It's by our own Brad Stone and Matt Day, who wrote about how Andy Jassy is rewriting Amazon's playbook for the AI age. In the piece, Brad and Matt write that after ChatGPT and Claude took off, Amazon rushed to catch up, and Amazon CEO actually engaged personally in the effort, firing off bug reports on early versions of the software. The result, at least with this particular effort, was that Alexa Plus can now respond to complex commands by turning on the lights, hailing an Uber, and making a restaurant reservation. Let's talk more about the new Alexa. Daniel Rausch is a Vice President of Alexa and Echo at Amazon. He joins us from Seattle. Daniel, good to have you on the program. You have been at Amazon for, wow, I mean, close to 20 years at this point. So you've seen a lot of iterations when it comes to different pieces of hardware at Amazon. I was around for the unveiling of the first Echo, and I don't know if I'm sure you remember that, but the commentary was like, this thing is not going to work. It's not going to take off. And it did the opposite. It totally took off. What is the Echo that you want designed for the future? What are you working on right now?
I think, well, first, thanks for having me on. I remember that announcement and launch as well. The Pringles can, as we would talk about. That tall form factor of that age. We want Echo hardware that matches this new, incredibly capable Alexa Plus experience. So, we re-architected Alexa Plus from the ground up to be deeply conversational. You can interact with her without repeating her name, for example. She can talk to you on any range of topics. She's much smarter. She's more personalized. And something we focused on, even from that early stage that you're talking about, is that Alexa gets things done. So Alexa Plus can get a whole host of things done. You talked about a few of them: book a table, hail a car, complete any Amazon order you can imagine, help you with your chemistry homework. So I think getting a customer all the way to done is what we've always thought was among the most magical things about Alexa, and we're really focused on with Alexa Plus.
Well, talk to us also a bit more about how you all are trying to work alongside or with, in Amazon. If you think about Alexa for shopping, how should Alexa essentially assist someone when it comes to shopping?
Yeah, it's great. We're seeing now hundreds of millions of customers engaging with our new Alexa experiences across the home and all of our new Echo hardware, but also in places like you're talking about, which is Alexa for shopping. You'll see Alexa right there in the bottom right corner of the Amazon shopping app, and she'll help you with any shopping journey. Often the more complicated ones are what I use her for. So, I've got a kid. Actually, my twins are going off to college. We're right in the middle of dropping them off, and we sort of gave the recommended dorm shopping list right to Alexa in the Amazon shopping app, helped cull our choices down, helped organize a basket, and helped get things done. So I think, we imagine that Alexa can be useful all across Amazon's consumer-facing applications and services, and we're seeing the results now. I think you might have seen it in this last quarterly earnings, some of the highlights, but that experience that you're talking about, using Alexa to help you shop, actually results in 40% bigger basket size. And it's because it just makes it that much easier. I think, Alexa for shopping is really the way we all want to shop. You just have some brilliant assistant helping you along the way, helping get the right things in your cart, helping you complete the transaction, getting things on your doorstep. Nothing could be easier.
Well, Amazon is also facing a very different competition right now. If you think about the likes of ChatGPT, Gemini, insert your chatbot there. Talk to me about how you really think about the landscape right now. Are you at all worried that maybe Amazon could lose its position as the place that people start their shopping search, given the fact that a lot of people tend to go to ChatGPT and others for that now?
Well, I think being able to get all the way through a shopping journey is what we're really focused on. So you can start with Alexa for shopping on broad product research. I was looking for like a new mountain bike. Hey, what are the things to consider? What's the difference between a mountain bike and a gravel bike? This is how tall I am. Is it a good choice for me? This is the kind of biking I do. And then helping you narrow down your choices and getting all the way to a transaction complete. I'm finished. It's on my doorstep. Reminded me to buy a new helmet, to go along with it, et cetera. It's different than just taking part of that journey. I think there are other, chat surfaces or search engines online that can help you with maybe just the top of that search, and they'll help you categorize bikes, or maybe the middle of the search and help you find some great brands. But being able to complete a journey end to end is what we're really focused on, and we're really proud of the experience that Alexa for shopping offers.
Listen, if you ever want to talk bikes, just give me a call. I will talk your ear off about bikes. We can do that another time. What in your view is Alexa not doing yet that you want Alexa to be able to do?
I mean, there are, one of the most common requests we get from customers is that they want Alexa more present throughout their day. I think, customers that get used to organizing the household, connecting their different family calendars to Alexa, say, on their Echo Show, and then being able to organize all the sports practices and the pickups and drop-offs and carpools and who has snack when and what days are the...
So they want it to be smarter.
Well, I think, this is what Alexa Plus can do at home, but then they want that more present with them on the go. So, I want to be able to have that same experience in my office at work or when I'm commuting to...
Are you building for that?
We imagine that we want Alexa with customers, more and more throughout the day. So I think, we talked about Alexa for shopping. I think it's a good example of how we imagine, certain journeys that Amazon already covers. We just imagine that we could do even more.
Super quickly, I'm also curious about the fact of how people sort of essentially think about Alexa and think about the idea of purchasing something on there as to whether or not you actually know that what you're looking for, whether it's an espresso machine cheaply, is that actually something that you want, or is it something that Amazon essentially helps its bottom line? Super quickly.
I mean, I think both are true, right? If you help customers with things like complicated shopping journeys, it's great for them because it gets something done and checked off their list, and it helps Amazon's bottom line as well. Here's a data point that'll help. Customers that try Alexa Plus attach to Prime 25% more. They subscribe to Prime at 25% increased rate, so that's good for both.
Daniel Rosh, Vice President of Alexa and Echo at Amazon. Daniel, always good to get you on the program. Please do come back soon. We appreciate it. Daniel joining us from Seattle. Coming up next on Bloomberg Business Week Daily, we're talking stocks on the move and, of course, a check on these markets. This is Bloomberg.